but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Monday to you both.
Hello.
Hola, V. How are you?
I'm good. I can't complain.
Good. Did you have a nice weekend?
I did. I did not do a whole lot. It was kind of an emotionally tiring week. Just gonna leave that there. So I just kind of laid low over the weekend.
What rises when you bake it? Like what's the
What, bread? Dough?
Okay, well, did your bread, deflate this weekend? Or something? You're okay?
Yeah, no, I'm good. Bears won. Chiefs won. Happy.
Are you sad that you didn't get a Taylor Swift halftime show though announcement?
No, she was never gonna do the halftime show. I mean,
if the Chiefs are there,
then it's
No.
just I don't want to get into it, but like it would be like
so sorry.
no, but it would just be like you had to go to something very important for your girlfriend,
Yeah.
but then you would have to worry about yourself. You would also be having to do like your live trading show. No. It was
Did
a
I
compliment.
really push a button here?
No, but I was just trying to explain it. I think I thought I was explaining it in
Mansplain
a normal
mansplain
way.
to
But
me.
like
Look
if
at
you
my
were
eyes.
trying to go to something for your girlfriend to watch
Yeah.
her shine, but then you also had to do like your Mike and his whiteboard show.
Yeah. I
like,
usually just don't get paid like $10 million.
you don't get paid to do
show
the
up to
Super
do
Bowl.
those things.
The artists don't get paid to do the Super
Really?
Bowl.
Is that true?
That is true. Artists do not get paid to do. They do it for exposure. She
Yeah,
doesn't. She
that's
doesn't need the
true.
exposure. But I was just sitting over
I'm
here
so
minding my
sorry.
business.
I'm so sorry.
You bring facts to win an argument. Really
I'm
rude.
so sorry. I pushed a button there. I'm really.
I hope John Mayer does the
I thought they announced it. They didn't announce it. Who's gonna
Well,
do
they
it?
probably
Bad Bunny.
Oh, it's Bad Bunny?
Yeah.
Oh, I didn't know that. I knew. I just saw that they were gonna announce
gonna
it.
make Brittany
so-
happy. She'll watch her first Super Bowl.
Yeah.
There you go.
Yeah.
There you go. That's exciting. So just watch sports and lay low. How about you? Did you play golf?
I did yesterday. It wasn't my best outing.
Oh no, what happened?
It's just Harborside. Harborside stinks.
I know it's a pretty course.
But it's always windy and you lose all your balls and it's just not.
You lose
end of
all
the
your
season,
balls.
the
You
grass
do lose all your balls.
6
yeah.
feet high.
It's impossible. It's impossible and it's expensive. Like it's just the only saving grace for Harborside is that it's 20 minutes away
For you.
from the city. Yes, for me. That's the only reason.
Yeah, and it's cool. It's like right on the lake, and
Yeah.
it's just sweeping views. Was
Yeah.
it crowded?
I mean, it's an old dump.
was.
Let's not.
Yeah.
I mean, like legit dump. I mean,
It was a landfill, and then they built the golf course on top of it. That is
Yes.
true.
yes.
But it wasn't not like a junkyard, but yeah, it was a landfill.
Yes. Yes. A landfill, not a dump.
Yes.
Landfill.
Yes.
Yes.
We used to call them dumps, but
Eh,
they're landfills now.
that's
A rose by any other name. A rose by any other name. Yes.
Yes. The other thing I did was I went to a ballet.
What the
I'm sorry.
front door is
You
going on?
went
with
to
you?
the
A matinee ballet.
Okay.
Matinee ballet?
Yeah, it was
At the
middle of the
Joffrey.
day.
For prime time.
Middle of the day. I missed the. Did I hear somebody try and chime in? I missed the Ryder Cup. I missed all of Saturday football.
Oh my God, you're in love.
It was.
Wow. Is this in game?
Wow.
This must be in game because if you're going to the ballet,
I remember when I went to the opera. It was at night, not a matinee. But I remember when I got dragged to the opera and I ended up marrying that woman. So tell us, please.
so it's the
tell us.
Joffrey?
Yeah, the Joffrey.
Yeah, the Joffrey. Wonderful company. Yeah, here.
It was.
What did you
nice.
wear?
I don't think I'm gonna be.
Was
doing
it
again.
modern or like contemporary?
Oh, I didn't do
What
the
was
opera again
what
either.
was
It was
the-
Carmen.
Oh, Carmen. Oh,
Yeah.
wow.
Yeah.
The opera, Carmen.
Well, but they.
But they
Yeah.
danced to the
Yes.
opera. Wow.
Yeah. It
Wow.
was.
This
quite the
Kumada of yours
experience.
is a dancer?
She was. Yes.
That is both of your testicles right in her purse.
Yeah.
Just
The-
right in there.
the issue was that I was told this was like an hour, hour and a half, maybe 2 hours. It was about 3 hours.
Oh, sure.
So it was a little bit more than I had.
She's not going to tell you the over to get you there. She's going to sell you the under.
Well, it was sold as, it's just like middle of the day, like we'll be done early, like,
They'll do a couple of twirls, bing, bang, boom, you're out
yeah,
of there.
yeah. And it was like after the first intermission, I was like, okay.
Intermission.
There were 2 intermissions, okay?
Wow.
There were 2 intermissions.
Wow.
So it was, yeah.
I'm surprised you did not fake appendicitis.
Yeah, it was, it was a fun experience.
Yes.
A one and done.
You should support the arts.
Yes.
Yes.
I won't be supporting again, but it was fun. I think I could do something theater related.
Okay.
LA just there's it's too like quiet and there's
Sure.
it's just,
Don't go to opera. That was bad too for
that
me.
would I don't know.
The lady behind me had on this huge like clock, not even a watch on her around her neck. She had this huge thing around it, and it
Was
was
she
ticking.
Flavor Flav? What are you?
Something like that. It kept ticking, like I could hear it ticking. It was bothering the shit out of me.
Wow.
And for the first time in my life, I had no cash in my pocket. So I went downstairs to get a drink, and they said it's cash only.
Ooh.
And I was like, you've got to be kidding me. I was like, this is impossible. So I had to watch it. Basically, I had enough money, like, to buy one drink that we sipped on between intermissions. That was horrible. I was stone sober watching the opera.
Who's this with? You didn't.
Chris.
Oh, it was.
Chris.
Well, I thought this
Chris.
was another one of your little.
No.
Because you're kind of skirted by the name a little bit.
No. I said I ended up marrying this one. Yeah.
Yes.
I've only been married twice, so this narrows it down.
It's the engagement that is the high tick.
Yeah,
That's the high tick. It's but the across the actual signing of the marriage license only twice.
True. This is true. Does it make me bad?
But how did your new clubs perform? Were you happy with their?
They're fantastic. Shout out to Tony from Mexico, my man.
Are you going to get them regripped?
No. They're
They're already dialed in. So
they're pretty dialed in.
Okay, I don't know. I haven't.
A little pulling a little bit on my drive.
Oh.
It's the new tech, It's
Sure.
so like aerodynamic. I'm kind of just swinging through it a little too much.
You're too powerful.
Too powerful, too strong, too powerful. Totally.
That's
Right.
what it is.
Yeah.
That's what it is.
Yeah.
That's what happens.
Yeah.
How was Michigan? How was hockey?
We played good in like the prelims. Like we were 2-0-1. All the games were by a goal. You know what I mean? Like, they were tight, good games.
Okay.
Kind of thing. If we well, obviously we tied one, so it was 3-3. But we were down 3-1, and we tied it, which was nice. The kids played good. But we lost immediately in the semifinals to Chuck E. Cheese of all people.
I'm sorry. I'm sorry.
What?
What? Charles Entertainment Cheese.
Yes. So the Detroit Lions are owned by the Icky family or whatever that who own like Chuck E.
I don't know
who
a
owned
lot about
Chuck E.
Detroit
Cheese.
sports. Okay.
They own Chuck E.
Really?
Yeah, I think. Oh, Little Caesar. Sorry, Little Caesar.
Little Caesar.
They own Little Caesar.
I,
I knew it was
Chuck E. Cheese. Chuck E.
I
Cheese
was
is
so
like dead.
confused by this.
I meant little. It's early. I meant Little Caesars.
I was like, I don't know anything about this.
And they support. They always have great teams. They always
Sure.
have really
Yes.
good teams
Yes.
At every level that they play at,
Yeah.
and they end up beating us 3-2.
Is it like NIL? Like, do they pay the little
They have
kid?
like triple A's. They got.
Oh, I know. Are they NIL? Are they getting
Yeah.
like sponsorship deals?
Yeah. They come all filled out. They
Playing.
got like the uniforms are on sty. They got a
Kids
lot
are
of
getting
sty.
HGH or something.
Everything they need to grow and be better. Yes, for sure. We lost them real quick, so I was able to get home early, and then I was able to do first call last night. So
Hey.
our loss is your win. Right.
There you go.
Yeah. So, but it was good. It was great. It was fun. Fun time.
You didn't bring us back any of the Michigan cider donuts?
No, but I never.
Come on, man.
No.
So like Holland, I was in Holland, Michigan, and in that.
Oh, I love Holland, Michigan. Holland State Park. I've camped there a couple times. Cute little state park. The downtown area is so nice. There's like a breakfast place. I can't remember the name of it that I like to. They're like little main streets.
Yeah.
So cute. They have the Tulip Festival.
Yeah.
Oh, it's a cute little town.
Yes, very, very cute little town, and a bunch of like flowers. There really are flowers.
Yeah, flowers everywhere, yeah.
Not just tulips, but like like
It's like Amsterdam, but
Yeah, like-
in the Midwest.
Yeah. Pumpkins everywhere, and they're still selling watermelons up there on the side of the road. And it's like kind of like the honor system too, like
Oh yeah, sure.
3 for $5, take what you want kind of thing. Every gas station has some sort of thing that they're selling.
They don't have the riffraff that we've got over here. You know?
No, and Ozempic they have not found Ozempic out there either yet.
Wow. Okay. Shots fired to the people of Michigan.
Yeah.
I'm so sorry. I just wanted a cider donut. I love apple cider donuts.
I didn't see any. I didn't have any.
You just weren't looking, man.
Yeah.
I wasn't.
That's
it was
what
nice,
I
good
want.
time, fun time. So,
Hey, we are getting a Buc-ee's in Oak Creek, Wisconsin.
where?
I read. Yeah.
Is that how close is that?
Yeah, it would be like the closest
How
one.
close will it be?
Yeah.
How close?
Like Oak Creek, Wisconsin, it's just like right over the border there, I think.
Okay.
It's
Is
not
it?
super far.
Because I passed by the Buc-ee's sign just before.
Yeah,
you
that
get
sounds
to
like 400 miles. Or
326
Yeah.
miles. Some things are worth the wait, and it says 326 miles to the next Buc-ee's or something.
Wait, where is that? What direction?
Just before you get into Illinois, somewhere.
That's some good marketing right there.
What's that?
That's some good marketing. You remember the exact.
Yeah.
Yeah.
326. Yeah. I'm good with numbers though.
Yeah.
Yeah.
You driving across the country, yeah, you see all the signs. But I've never been to a Buc-ee's. It's on my list.
Oh, you should go.
I've never.
Hey, it's an experience, and you must, even if you don't have to relieve yourself, you have to go to their bathroom.
Sure.
It's
They
I'm a
You been?
tiny lady. I
no,
always
no,
have
but
to
I've
pee.
heard your story of them
amazing.
pulling one by one the toilet paper sheets for you, and
No.
do they hand them under the stall for you?
No, for those who travel, Buc-ee's bathrooms, clean, beautiful, attendants are there. Somebody gets out, somebody goes in, make sure it's good, comes back out. Beautiful. It's beautiful.
That's
When you're
great.
on the road, it's beautiful.
That's great. Yeah, I've had to pee in some dicey places, and
Not if you're at a Buc-ee's.
it's hard if you're a lady, man. That hover has to be on point. You guys don't know nothing about that. Like you can pee in a bush,
No
in a
problem.
tree, on the
Anywhere.
side of the road. It's a whole.
We pee on a bush,
Yeah.
not in.
Yeah. Okay. Whatever. I don't know. I don't have the equipment. But yeah, you do you, I guess.
Yeah,
But
yeah.
we got a great show for you today. A lot of good quality content headed your way on this magnificent Monday as we round out the last couple of
90,
days.
90 minutes, about 83 miles, my Taiwanese sources just told me to get to your Buc-ee's that's going to be opening.
Oh, in Oak Creek, Wisconsin.
Yeah,
Yeah, it's great.
Even closer for me. I might just have to say, honey, I'm going to go get gas.
Yeah, I mean it won't be till like 2027 or something. So it's not like
Oh, is Chicago building it?
I don't know.
Are the same guys that are doing the expressway?
Yeah, maybe. I don't know.
Yeah.
But it's not like it's not going to be next month. But I'm still very excited to get some Bucky nuggets.
Just north of Racine, I'm told.
Yes.
Oh, cool.
So I have my info was correct.
Yes, yeah.
I am worried though about the Mars Cheese Castle and like how that would affect their because that's like the iconic destination. Like
Yeah.
that's what's right there.
You know, I passed by it.
I love the Cheese Castle. Don't you say anything bad about the Cheese Castle.
Both that and the Brat Stop, those are.
Overrated, right? Like,
Oh, I love the Brat Stop. I think it's perfect.
I
Cheese
tell you the truth, I
Castle.
don't think I've ever been.
To the Brat Stop?
Maybe like when I was your age. I mean, it's been decades.
I go every time I drive through.
Aren't you up there for the Ren Fair though? Like you're right there.
Yeah, right
you're
there. I pass
there.
by it all the time. I just don't.
Yeah.
Yeah.
Oh no, that place is packed at all times. I've been there at 11 a.m. and I've been there at 9 p.m. and it's
What the Cheese Castle or the Ren Fair?
No,
Go there
the
that
Brat
late.
Stop.
I'm just
Oh, the
kidding.
Brat Stop.
No, but those two places.
Sure, yeah,
Mars
that's
Cheese
what I'm
Ca-
saying.
it's just they have the perfect setup.
It's
Right
kind of like a
there.
little chokehold right there because there's an outlet mall.
Yes.
There's the Renaissance Fair. There's a Mars Cheese Castle, and there's the Brat Stop. Like it's just like you're doing too much. And there's like an Amazon massive warehouse right there too. So. Anyway, we got a great show for you today on this magnificent Monday as we finish out the month of September. It is legitimately going to be 86 degrees today, and I don't
Crazy,
know.
isn't
I
it?
don't know what to do with that. I was just like, it was so hot Saturday. I was just like, why is it? So it's almost October. Why is it so hot? But at the top of the 8
Global
o'clock
warming.
hour, we have an options jive,
Yes, we do.
maybe with Kai.
Yes, we have Kai in studio.
Oh, we do. We will have him in studio. Okay. Oh, that's good. Then at 8:40, we have the skinny on abstract applications. Dr. Jim in the house. Heteroscedasticity. It's hard to say. I have not had coffee. You say it.
Heteroscedasticity.
And a wide
Heteroscedasticity.
the name of the
Thank you.
thing. Yep. Mhm.
Well, Dr. Jim is on talking about H-Town. H-Town, that's what I'm calling it. Yeah. Then at 9 o'clock, we have a market measures, and you were reading it over this morning.
Yes.
You were impressed by the quality and the caliber of today's market measures. How many stocks actually follow the market?
Yes. Gonna be an interesting one.
That'll be an interesting one. All right,
Yeah, see if the rising tides lift all ships kind of thing.
Yeah.
Yeah.
And then we got live from the trade desk. If you have questions for the bats, yeah, you guys gonna take questions, calls, maybe?
We're gonna have
Time permitting.
time permitting, but we have Quentin coming on from the Tasty trade desk.
There you go.
We're gonna have Dan, or maybe even a surprise from Ryan Grace, who may
Wow.
he was in the house today.
Okay.
Already sick of his wife and the baby. After just a couple weeks, he's coming back to work. But he's going to give us a lowdown on crypto, and then we have Glenn from the Tasty FX team coming in to give us
What?
a
That is a
lowdown
lot
on.
of people for one segment.
We got a half an hour.
Oh, we got a lot of things
All
to
right.
talk about. There's
You
a
guys
lot
like
of
to hear
products
yourselves
trade.
talk, though, so.
Yep.
But it's crypto week
Yes.
here, so a lot of great stuff. Make sure you're following Tasty Trade on social media. Some stuff will be coming out if I could get those posts approved by compliance. That's neither here nor there, though.
Yes.
But we got a great show for you today. And Liz and Jenny are back, so that they're going to kick off at 10 a.m. So lots of good stuff. And they're going to have Dan on their show, again, tying in with Crypto Week. So
Very nice.
yeah, happiness all around. Hey, in the meantime, in between time, you guys want your daily dose?
Sure.
Hit me with my theme music. Let's go.
Our leading story,
today's
breaking
headlines.
news, across the wire. Our leading
This
story.
just in.
Top stories, jump in.
In today's headlines,
This just in.
Breaking news.
All right, everybody. Today's a magnificent Monday. It's September the 29th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Programming note, Tom and Bat will be at the live show Friday. There is still time to sign up. Tom will be at all remaining live shows. So that is LA, Charlotte, and
I got to drag him
Austin.
by the ear. He's gonna be
Yes.
there.
Yes, he will.
And he should be refreshed after a nice
Foliage weekend.
I spoke to him. He did survive.
He did survive.
Did you see the picture that he tweeted out of Corinne? It was very funny.
It was excellent.
She just had her head in her hands, and he's like, I just told her I'm going to be home every weekend now.
It was so good.
Thoughts and prayers for you, Corinne. Thoughts and prayers. But yes, you guys are gonna still do the shows. So if you would like to sign up, tastylive.com/events. Any earnings, or we're done?
PayX, and you still got Nike coming later this week. But
Okay.
Yeah,
PayX,
not a ton.
Well,
Like 2 more weeks.
okay, that's what I thought. I was like, I know we're close. It's like that weird time before
Yeah.
it starts again, but it's not quite
The
done.
banks and the airlines are usually the first ones. So when you start hearing about
That is true. Hey, we could be on the precipice of a government shutdown, yada yada yada. I don't really want to get into that, but what I do want to get into is if the government shuts down, we wouldn't get the employment situation on Friday. So I'm pointing that out because that's very relevant to what we do. And so bond traders say that a rally hinges on jobs data that is at risk because of the shutdown. The big question for bonds traders is in the days ahead whether the monthly U.S. job report will shake their already wavering conviction in another Fed interest rate cut. And that's what I want to talk about. It's just bonds and what we think is
Bonds
going to
up
happen
20,
this
up
week.
20 ticks. They go up
Okay.
another 20 ticks. This story will be on the back page. I mean,
Okay.
That's really what it comes down to. The market has a way of kind
it
of.
looks past all this.
Yeah.
It doesn't,
Doesn't care.
The
I
next
know.
3
But
or
I
4
know.
days.
But I know.
I know.
My friends Vecchio and Ilya will work on this and give you some insight.
Sure.
Be good.
Yes.
Sure. Okay. Just wanted to.
Bonds up 20 ticks. All you need to know right now: 16, 21 over 17. This will be a back page.
What is the expected move for the market though for this week?
Greater, and volatility is actually hanging in there at 17.41, only down 9 cents with the mini S&P's up 30
Yeah, but it
handles.
came in a full point on Friday.
And it came in a full point
I
on
mean,
Friday.
vol is
$73 expected move going into the end of the month, end of the week.
Anecdotally, just for bleeps and giggles, do you think the government shuts down? Well, they have until tomorrow at midnight to reach a deal.
I don't think it matters. But no, I don't think they'll extend it and come through some
Hail Mary or
they'll
something
print some more
to
money
kick
or
the
print
can
the
down the
number or
road,
raise
Yeah,
the
maybe.
number or whatever the case may be.
What do you think, Nikki?
I think they'll kick the can.
Yeah, all right. I was just curious.
That's just how it goes.
Hey, in other news, Americans have more money in stocks than ever, and economists say that's a bright red flag. Why do economists just hate everything? The amount of money that Americans have allocated to stocks is higher than ever before, and for us in our business, that's great. But there are some things that are overweighted, and everything is frothy. Market is at all-time highs. What is your advice?
So that's the half. I don't know, but that's the half full kind of look at this. You flip it on its ear here and say we have more money in the stock market than ever before, and markets are at highs, and the American public, for the majority that are in the market, have benefited from this huge rally. Now what? Could be like a good story. You know what I mean? Like, what do they do now? How are they mitigating? Where are they exactly in the market? As opposed to it's everybody's in, what now kind of thing. So
it's also just the overall size of the market and dollars available. I mean, you see those notes of cash balances at record highs too, and it's it's a
credit cards at record highs too.
Yeah, it's a function of more money and more things being out there too. I mean, you have to factor that in too. The market's up, what, 200% in the last couple years? 4 years, 5 years?
Yeah.
100%?
Bonkers.
I mean, that's what happens.
That's what happens.
Yeah, you have more money.
Here's something interesting. The European Central Bank said Friday that it would conduct new experiments next year about what could be achieved through a digital euro. It is a further step for a project that it sees as key for preserving the Eurozone's financial autonomy. Do you think of a digital? What is this?
What is that? What are you doing?
What are you doing?
Benaya, you spending $10 over there? that's the next thing. The government trying to spy.
See everything because it's visualized. They can see everything.
Yeah.
You're not a fan of a digital euro,
But I mean, no. Why would you want? Why would you want the government to control that?
But it's like a stable coin, and you say, it's
I
not
think
my area of expertise.
Stable coin's amazing.
So you're not conflating this with a stable coin. That's still backed by government.
Digital euro is just like having a euro.
Well,
right?
the dollar is backed by government, but stable coins are issued. You could
Dollar
issue them.
is backed by vibes.
That's true too.
The full faith of the U.S. government.
Yeah.
Vibes.
Euro's unchanged, up a couple of ticks, 185 ticks. Small move.
Anything happening in the yen or the pound or the Aussie dollar?
The yen is up.
Okay.
The yen is looking good this morning. Euro is strong as well.
Yen is up almost half percentage point off of its lows, right? I mean, it's 2 days off of its lows.
Yeah, but we had that trade from Fast Market on Friday.
Yes.
It's looking good.
Might be time to ring the register.
Yeah.
Hey, let's get to some commodities real fast. Oil prices slipped nearly 1% Monday after Iraq's Kurdistan region resumed crude oil exports via Turkey. Also, OPEC Plus plans another oil output hike in November, adding to global supplies. What's oil doing?
64.28. It's been chopping around the 63 to 64-ish range for a couple.
Down almost $1.50, right?
Yeah, down $1 today.
$1.40. And she had a 5-day rally, 4 or 5-day rally last week and selling off now. So everything continues to be, what I would say, cyclical in oil, right?
Yeah. It's been a nice trade off the 60 handle.
Yeah.
Are you trading like micro oil or?
Mikey likes to do the micros. I just sell put spreads.
Okay.
In oil futures /CL.
Okay.
But both of them are great. The micro crude is a great contract to
basically the same size, right? I mean, the spread versus the micro.
Yeah, I mean the micro futures, they trade on 100 notional, so it's 100 barrels. So it's an easier product to trade, compared to some of the other futures where you have different notionals.
Like
this is just like a stock, a $64 stock if you were buying 100 shares. it's the same sort of
Yeah,
risk and
it is.
movement.
Yeah.
You know, oil goes down $1.40, you lose
50-50 shot. Your spread, your vertical spread, very similar to the 100 shares. I mean, probably a little bit less than the 100 shares, but it moves in the same kind of way.
Yep.
Good one.
Okay.
Higher probability of success on your spread.
Yes.
Here's something interesting. What is the best way to use a leveraged ETF like Boyle for natural gas? I was like, I got the story for Nikki. Nikki loves leveraged ETFs.
I mean, these things are, but the best way to use it is to not use it.
I agree with you 100%.
I would just trade natty gas and trade, you know, the front contract.
But it's been so stagnant, not stagnant, but it's been such in a range. Like, don't you think that some traders want a little more juice, a little more action? So, which is why they use levered products. I know it's dangerous.
If you want to use them on a 1 week or 1 day time frame, sure. It's just that these products and anything that has any sort of leverage to it has some sort of risk in terms of backwardation or contango in those products. And with oil or with natty gas, when you look at the futures, you know, you have a 60 or 70 cent, which is, you know, 10, 20% of the product's value contango in the back. So every time this rolls, the futures roll, there's a loss to the product. And so oil over time, if you held this for a year or for, you know, 3 or 4 months, it's going to go down. And so, you know, you have to, if you're trading it, you have to be right in the short term to trade any of these products.
Yeah.
And all of them are like this. And a lot of them have different, you know, swaps built into them. They're not trading the actual products themselves.
Oh,
you gotta like.
It's more complex than if you have a 3-time leverage product, you think that it goes up 3 times as much or down at 3 times as much. It's not how it works. Really on a percentage basis. Plus, if you have to roll the futures in between there, you really sometimes don't even get the move that you played for. You could be right on direction and not get any of the movement that you need because of the drag that he just.
Yeah, but I like funny ticker names.
It is a good one. It is a good one.
Yes, it is a good one. I'll give you that.
I
Yes.
was like, oh, it's adorable. Okay. Well, thank you for giving some insight to that, because that is helpful. Hey, as I mentioned earlier, it is Crypto Week here. Tasty Live, so we'll be bringing in a rotating panel of crypto guests as we can try to rotate them in. But Kraken is in talks to raise funds at a $20 billion valuation. The funding would include a commitment of $200 to $300 million from a strategic investor. The crypto exchange then would be valued at $20 billion. That follows the company's $500 million fundraising round at a $15 billion valuation.
Those people are happy.
Just earlier this year.
Those people are happy. Mm-hmm. Kraken is aggressive, man. I got to give them.
That's bonkers.
I got to give them props. So.
But it's something is just so wonky about this, that Kraken is valued more by like $6 billion than what TikTok US is supposedly worth. Like, the math is not mathing.
So as a US, so we want to make it cheaper.
Yeah, I know, but it is just like the math is not.
You see, when you buy something, it's not. You don't make money on the sell, but now you make money on the buy.
Right.
You want to buy
Let's
it good.
Check in on some trending crypto tickers like Circle, Figure, and Bullish.
You can go to
Coinbase. Coinbase is up like $6 or $7.
And you can go to the big boy itself, Bitcoin, 113 and change. It was 109.
Yeah.
Oh, wow.
It was a $4,000 move.
What is going on?
It too's been pretty cyclical down
ETH
to
as
around.
well.
What's that?
ETH as well. Is up like
Ethereum as well. Yeah,
120.
you're right. 4,100 again. It got down to what, like under 4,000.
It was under 4,000 for a
low
day
as
or two.
3,900 or so, just under 3,900. So you've got some big moves to the upside in crypto, and everything I saw on Twitter was the demise of Bitcoin and Ethereum. Like it was
It's the same cycle. Every time Bitcoin goes down, it's dead.
And you mentioned that hodler, HODL.
HODL.
What is it?
See?
HODL.
Hold on for dear life.
Hold on.
Also-
That's right. Hold on
Yes,
for dear life.
I was trying to
Means,
teach.
Yes.
I saw the tweets come through, and then I was like, "What is this?"
He had a problem with it. He didn't quite.
I couldn't hear it. Is
No,
what I was
that's
like. You
fine.
know, like I was like
HODL.
saying, like is.
HODL.
I mean, I know my ears are bad. They're small and cute, but they're bad. I couldn't understand.
No, like back in the day for you, like a yodel.
Like I love
Yeah,
the yodel.
I know you do.
I love
I
the
know.
yodel.
I know
Better
what
than a
boomers
ding dong.
want. I know what boomers want. Yeah,
Yeah,
like
yeah.
a yodel.
Oh, yeah, you do,
But it's just
baby.
a hodl. So look, if you're a boomer who wants to take me away from all of this,
Well, make sure that you can afford it.
Yeah, that's right.
Whoever's watching.
right.
Be
That's
careful what you
Yeah,
ask
be
for.
careful what you ask for.
that's. Hey, keeping it moving. Deutsche Bank notices that the needle is getting dangerously close to the AI bubble. According to new reports, the money endlessly flowing in the AI space, whether it's NVIDIA announcing a $100 billion investment or data centers being built for $500 billion, basically Deutsche Bank says the massive inflow of cash between players in the AI space is the only thing keeping the U.S. out of a recession.
Yeah.
And I had never thought about it in that context or framing it that way.
Deutsche Bank better worry about cleaning their own houses. They've had some
Sure.
shady dealings in the
Sure.
past, so they should.
Sure, but I think it's an interesting theory. I think that it's something, I mean, is AI propping up the market? Is the bubble about to burst? Is
Everything
it propping
props
up
up
the
the market.
economy?
Yeah, everything props up the market, though. What's the next
What?
thing? Is gold propping up the market?
Campbell's soup isn't propping up the market. Like, you know what I'm saying? Like,
Well, it had a big move during COVID. So,
Yes.
I mean,
that
you
was
know.
5 years ago, baby.
I know. Well, that's what I'm saying. Is
When's the last time you ate a can of soup?
It's true.
Right?
Been a while.
What are you guys doing in like an NVIDIA, some AI place to start the week?
They're up. They're higher.
Yeah.
Nvidia's up around $2 or so.
Okay.
Yeah, everything. I mean, even the S&P's up 32 near their highs. I didn't see that coming last night. We were talking about that.
Yeah, well, we'll see what happens. Hey,
And you don't want to trade these like, there's going back to the, I mean, you don't want to trade. You can do whatever you want, but be careful about these. There's a lot of like, 1, 2, and 3 time bears for Nvidia and other and longs too.
Okay.
Be careful with those two. They have the same type of drag.
yeah, there's enough juice in NVIDIA, the regular
Yeah.
version, that you
Yeah.
don't need to,
you're
jack it
right.
up.
You're right.
News came out late Friday. Video game maker EA is in advanced talks to go private at a $50 billion valuation. Again, these numbers. I was like, you make video games. But it looks like
Good video game.
It's going to be like over $210 a share. I had the number. Someone tweeted it out this morning. But they're the video game publisher behind such titles as Battlefield and FC are in advanced talks to go private. A group of investors, including private equity firm Silver Lake and Saudi Arabia's Public Investment Fund, and Jared Kushner, he's in there too, are in talks to take the video game publisher private. And again, the offer, I think it's like $210 a share. So
204 right now, up about 10 or 11 bucks on EA. I think I took Katie down in EA for her first
I think that was her first
trade.
Yeah.
Trade. That's so every time I hear it, I cringe a little bit. I think it was in the 30 handle. It's over 200 now. So
It's a good job.
you're right though. It was down to $170 last week. So
Sure.
Yeah.
big move in EA.
And now that this is out there, it's untradeable. Like
Right.
Yeah.
I have a call diagonal spread in there that's obviously good into this move. I mean, it's been a
Why did you have a call diagonal? It just happened.
somebody from my YouTube chat gave me the trade. I mean,
Oh.
they hit the hit probability on those trades is like 80%. It's amazing.
Okay.
So it was just a long play. And
Oh, good for you.
we hit this, but now the markets stink. If you look at some of these markets, and we were looking at them on Friday on the close, because on Friday was when they first
Right. It came out like in the late afternoon.
yeah, and it moved from like 170 to 195 ish. It was up like $25. But these markets, you go out to November, and obviously the market's not open yet, so we got some time for these to tighten out. But the 180 strike at $1, $5.
Yeah,
It's
dude.
$4 wide, and even on the upside, like they're gonna price in the risk of the deal not happening. So even if you think,
I mean, Saudi Arabia's in there. What's not going to happen? I'm just kidding.
true, but they're like, there's no ARB here. Like this
You're
is,
deep in the money now. You're Nove 170, ARC 180.
yeah, my trade's over with. I'm gonna let it be. I'm gonna try and get out for like maybe $11. It's a
Right.
$10 wide call diagonal spread. I was trying to get 11 on Friday, but the markets are junk, and so you got to kind of just sit with it. But moving forward, if you're speculating on the deal happening or not happening, it's going to be priced in. So like if the number is 210, the 209 calls are going to trade at 95 cents. You know, like they're going to price in whatever the probability is that it's not going through.
Yeah, the risk is that it doesn't happen.
Is that it doesn't happen.
There's no upside really kind
Sure.
of.
Yeah.
Unless they sweeten the deal.
Yeah, you're not going to be at the open today. You're not going to be able to arb
No.
$1 out of this because you think you know that it's going
That
to
would be
out at
sweet.
210. The whole market, it's going to be all priced in as soon as these markets open, and the markets on the open are going to be junky. So
They're going to be wide.
definitely don't do a market order or anything.
Ooh.
Do you play any of these games?
I have not played a video game in quite some time.
Okay, that's good.
Proud of you, son.
Thank you. Battlefield might bring me back.
I saw an ad for it, like when I was just watching football this weekend, and I was
Yeah.
like, "What is this?"
Yeah, the last one was a disappointment. I tried it, and
My two son-in-laws still partake a little bit, I
yeah,
think.
In the video
I might
game?
dabble.
Yeah.
Yeah,
Find it odd.
just
Yeah.
curious.
Yeah, one of them's got a kid and a kid on the way. You got to stop that.
Right, yeah, you need to be a
you
partner
gotta
in the
get
home.
you.
That's fine. Okay. Hey, Meta said on Friday that it would offer an ad-free subscription option to Facebook and Instagram users in the UK in the coming weeks. The move will give users a choice between paying a monthly fee or continuing to use the services for free, but with targeted advertising. I kind of would advocate for this model in America because I find the ads, first of all, Instagram ads are good. They're really targeted. They're not like generic like the ads that you get on X, and I have bought more than my fair share of stuff on Instagram. But when I compare it to like TikTok, where that's more like there's not obviously you're being targeted for stuff, but you
Yeah.
just don't notice it as much. I just find that Instagram, it's intrusive to the experience of doom scrolling.
I feel like they would rather you not have a subscription for no ads.
Right, but the
They
EU's
want you to get
rules,
that.
right? But
Ads
the
are
EU's
way-
rule, this is
Yeah.
the loophole, so how Meta can still like operate.
Yeah.
But would you pay to use Instagram or Facebook or whatever
No.
if you didn't have to see ads though? But the ads are.
I know the ads.
I have to look. They got me. Like I'm an easy clicker. Like
Yeah.
on the ad kind of thing.
You got like the sugar daddy ones.
Whatever.
Like,
Yeah. Yes.
Yeah,
All of them.
Yeah,
All of them.
uh-huh.
All of them.
Yeah.
All of them. So for me, I can't wait till they launch this. I'm not going to do it because that would be like shooting off my foot.
Sure.
So I'm going to have my wife do it. So
I know, but it's not even available. It's not even an option, and the subscriptions are only priced at like £2.99 £2.99. But I was like, that seems very reasonable.
Well, I'm going to have to get a UK IP address.
Right.
There you
That's
go.
what
I will tell you, like, my ads are so specifically targeted. I got an ad for like a shirt the other day that just said lift weights and pet cats, and I was like,
It's everything you want.
so, I know, it was a
It's
cat.
perfect.
It was a cat doing like a barbell raise.
That's all you
But I
need.
was just
That's
like, and I
perfect.
was like, I really like that shirt.
Why don't you have that
I know,
shirt?
'cause
You need that shirt.
I don't need anything, but I was just like, it was just so randomly specific. But good job.
You see, you can realize that. I think the universe is telling me I need it.
I think our phone is just listening to me, but that's
Yes.
neither here nor there. What are you doing in Meta as a stock?
It's well, everything's up this morning. It seems like it's up about $5 or $6 to $749 and change. Nowhere near its highs of just around 800 or so. So Meta still has some room to go if you're looking at all-time highs.
Hey, Accenture, the consulting firm, plans on exiting staff who can't be reskilled on AI amid a restructuring strategy. Accenture says, all told, that could lead to layoffs of over 11,000 people. The global professional services company did report a 7% growth in revenue, and they have said that as of year to date, they've already reskilled 550,000 workers on the fundamentals of generative AI.
This
They made them
is
take a
discriminatory
course.
towards boomers.
Yeah, they made them-
The wording is
You're always
incredible.
BSing about like your generation, your thing, this, that. Here they are. They're trying to squeeze us out just because.
Reskilled is a word that
It's doing a lot of lifting.
that is an awesome use. That's incredible. That's incredible. Reskilled.
Reskilled.
All right.
Reskilled in AI. That's what you got to do.
Could you be reskilled in AI? You think? I don't know if you could be reskilled.
Vinny's reskilled. Did you see that picture he tweeted out of?
That was.
Also, could you not tag us in that? Like, it's like it doesn't have anything to do with the business. And then I was getting all these notifications, and I'm just like,
What do you mean?
What? I was like, but it doesn't. I was like, I don't need to be tagged in that. But thank you.
Well, he's using his skills that he's
That's
learning
fine. That's great.
to be possibly part of the production team one day, or sit
That's
across
true.
from
This is
Nick
good.
one
You could
day.
put this in his portfolio.
Okay.
Yeah.
Tesla is about to show a snapshot of its global sales as it does its deliveries this week, and Wall Street is more optimistic about the final numbers, even though as it worries. That's a bad sentence. I'm gonna start over. Even though, as the market worries about Tesla's decline, especially in markets like the EU.
This is as if we still continue to have all these negative stories, we will march higher in everything. I'm not just
Actually,
talking
this is
about
a
Tesla.
positive
The wall
story.
of
I
worry.
was sort of butchering it, but Wall Street said they're optimistic.
Well,
about
it's
the
ending
numbers.
on the 30th, which is on Tuesday. Their EV credits and everything.
Sure, yes.
Everything like that all these. The public is all in the stock market. If we continue to get these, like if we keep looking for something, it doesn't happen when you're looking for it. Like the market doesn't have its down move when you're looking for it.
Yeah.
It climbs the wall of worry, and that's what's continuing. Anyway, Tesla up $5, $4.45 and change.
That number expected to come out Wednesday or Thursday. Tesla does not set a
And I just looked here, Vanetta. I didn't tag us in this. How
No,
come it's going good? So-
I untagged us. That's how.
Oh, you untagged us. You can do that.
Yeah, that's how I
Do that.
Yeah.
Wow, you got
do
power,
that.
man. That's BS.
We removed ourselves.
That's really BS.
Myself for that.
Yeah.
Look, dude,
Our social
I was-
media
You
has
had a hat trick there. Did you see
I was
that?
drowning in comments and notifications for the week. I had literally worked like
Yeah.
2 hours cleaning out the inbox yesterday.
social has been reskilled.
So yeah,
now-
Social has been reskilled.
So now take-
so there you
take
go.
away your-
There you go.
your
You
control.
survived. You want a jab?
yeah. Hey, the FAA is going to let Boeing sign off on 737 Maxes and 787s after years of restrictions. They'd be like, "You be aight." So yay. What are you doing in Boeing? Don't
Blowing up $1. It's
Okay.
in the Trump basket, the government takeover basket.
Okay.
222 and change.
Tesla in there as well. Tesla's kind of is I think Elon's back in the good graces. So
We have no money for anything, but we got money for this.
yeah,
All right,
no
there
problem.
you go. United Airlines also getting FAA approval for Starlink Internet, talking about airlines, Musk, it's all coming together again. On its Boeing 737-300s, United said the FAA approved an amendment to Starlink supplemental type certificate for the Boeing 737, and they expect the inaugural flight to depart from the Newark, New York area. Good luck with that. Could be on its first commercial flight starting October 15th. But this would provide high-speed internet for free using Starlink services, which is great.
Yeah, because it's
doesn't
BS.
like
American Airlines, I'm looking at you. Last flight I was on, it was $18.
$18?
Yes.
Good Lord.
Right?
That's a lot. UAL.
Ridiculous.
Ridiculous. Ridiculous.
Redonkulous.
Yeah.
A UAL trading just under 99, which would make it up $1. It's up about 80 cents.
You'll never guess which food just got recalled again for being radioactive. What a time to be alive. I love everything about this.
Radioactive?
Yeah, shrimp. We got more radioactive
Yeah.
shrimp. This has never happened before, but
The
now
last
this
one
happens all
was
the time.
Thailand, right? Or
No, it was here. It was here. It was the Great Value shrimp from Walmart that was recalled for being radioactive. So we've already had,
How does it get radioactive?
again,
That's
so many
true.
questions. But this is a problem now that we have to deal with. So the U.S. food safety officials have issued multiple warnings over the past 5 weeks about shrimp on supermarket shelves that could be radioactive. But this week has seen even more recalls than usual, with 4 new warnings of radioactive shrimp for various brands that were issued on Sunday. The latest recalls for shrimp from Lawrence Wholesale, Southwind Foods, and Aquastar, distributed across
Lawrence
the
is
country.
Chicago, isn't that? Isn't Lawrence a Chicago?
I don't know, but the first recall were, like I said, was that Great Value frozen shrimp sold at Walmart. So radioactive shrimp in America, get into it.
Yeah, Lawrence Foods. It seems like it might be a.
Oh, we have one. I wonder if they look different. Like, are they like a different color or something?
The cause,
Yeah, they got
the
like
cause
two
of
tails.
the contamination is still unclear at this point. But
How do they get radioactive?
again, just
Like I can see if they said something like the water wasn't clean and
sure, like listeria or
Right,
E. coli
yeah,
or something.
yeah,
but
yeah.
yes, no, these yawns
radioactive.
are radioactive.
Yeah.
I wonder what you become. Like Spider-Man got hit by a radioactive spider. He became
Yeah.
Spider-Man.
Sure.
What do you become like
Bruce Banner, that was the gamma
Yeah,
ray. So
right.
that made I don't know.
become if you eat too much of these shrimp.
I don't know. So it's impacting so many places like Kroger's, Mariano's, King Soopers, Fry's, Foodsco, Food for Less, City Market, Baker's, Pick and Save, Ralph's, Smith. Don't eat shrimp.
So just don't order the shrimp for a couple weeks anywhere.
Don't eat scrimps right
Kids
now.
almost went to Red Lobster because that was close to where they were in Michigan. I'm glad. By the
Sure.
way, Michigan, great strip mall food eating. If you're that kind of person, I don't usually.
I'm from Indiana. Yeah, I know.
Yeah, you guys love that.
Yeah.
That's Dr. Jim's, hometown.
Yeah.
Michigan.
Yeah.
Michigan boy.
Depends
Hey.
on how good they're doing.
Just real fast.
That's
Just real fast, major manufacturers are hopping on the dirty soda trend.
Hop off.
From PepsiCo to Taco Bell, Utah-based drink chain Swig, made iconic by Secret Lives of Mormon Wives, cannot wait for the new season. So excited. Taylor Frankie Paul is going to be the Bachelorette, so
Same girl.
But the trend has moved. The trend has moved from restaurants to grocery stores, and normally just involves adding more stuff to soda. Americans are making drinks like healthcare is free, and it is not.
That is dirty. Is it dirty like what?
So dirty. So they'll add like cream to it, or like coconut milk, or they'll add like other things with like sugar or fat or other
No
stuff
alcohol?
to soda. No, because it's Utah. It's a Utah-based trend, so no alcohol.
Oh, I saw that
Swig,
on like,
yes.
the Girls of Utah, whatever it's called. I don't
The
remember.
Secret Lives of Mormon Wives.
That's it.
So,
The
right,
what?
yes,
They just
Swig.
make like their
Yeah.
Dirty
Yeah.
sodas, yeah. So they're drinking it in Utah, like 64
Because they can't
ounces.
have caffeine like from coffee. So
Right, but
like,
their
in the
only
morning,
vice is soda. So there's soda places everywhere.
Yeah.
So if you're a dentist, in Salt Lake City, you could just write your own checks, basically.
Yeah.
But it's coming to a store near you. So like a dirty Mountain Dew, a dirty mug, a dirty Pepsi. Now we can all
I guess.
look at Nikki's face.
Do they have diet dirty?
You could get diet dirty.
sugar-free dirty.
Free dirty?
You could get diet dirty. A keto dirty. I don't know about that.
Oh my
Hey, this
God.
is crazy, and it has never happened before, and even I am aware of it, and I don't really
Whoa.
follow baseball that closely. Congratulations to the Cleveland Guardians on winning the AL Central, the largest comeback in Major League Baseball history. An epic collapse by the Detroit Tigers. The Tigers were up 15 and a half games and
yeah.
just at various points of just dominant, like May, June, July, August, the Tigers are at the top, and then slowly but surely here come the Guardians, and 15 and a half games is diabolical.
Guardians is a horrible name.
Okay, well, they had to change it from the other horrible name. Take it up with your councilman. You don't even live in Ohio. So
Horrible name.
But you don't live I don't have a dog in this fight.
I don't have a dog in the fight either. I'm just saying it's a horrible name.
Okay, I don't know what to tell you. Okay.
Good job out of the
But
Guardians.
Congratulations. Also in MLB news, this is crazy. The Red Sox-Tigers game on Friday was partially shot with an iPhone 17 Pro as Apple tried to demonstrate its capability. People are mad, though, about the MLB postseason because, none of the games are on traditional TV. It's a weird patchwork of what you have to have as a subscription service to watch just baseball playoff games.
Well, if you're on YouTube watching the Glenview Titans, I do some of the color play-by-play, and we also use an iPhone, but I have to get a hotspot.
Your phone's not already a
Starlink.
hotspot? My phone's
Starlink.
a hotspot.
I'm gonna do it. I text Garrett this weekend. I'm figuring out what we do because our internet is just not good.
Yeah.
Oh, all right.
You gotta get the Starlink.
And I
Get the
tried that
little-
cut
little
water
piece.
See that little cut water?
Yeah, those will knock you on your ass. No, it
I
didn't.
think some of them are like 12 or 14.
Yeah.
The other ones are like 6 and 7. And not good. I didn't like
Yeah,
it.
like it.
Oh,
I didn't like it.
all right. Anything that can be done in Apple? Was it stock?
Oh,
Talk about
Apple. You want to get back to
255.
you want to get back to
Near
trading.
high.
Gonna get back to
Sorry,
stocks?
I was
Yeah,
in a
just
cup
sorry.
water
No, just vibes.
mood. 255, unchanged, but Apple is near its highs.
Okay.
Yes.
Nikki, I put this video in for you because I knew you were going golfing over the weekend. What's your over-under on how long it would take for you to learn how to do this? Watch this.
Oh,
that's pretty
that's
good.
impressive. That's impressive.
It could take a lifetime.
That would take a really long time. Is he using a ping pong ball? Yeah, it's got to be okay.
You know what? You just
Yeah.
have to hit that one. It's not as hard as you think there, son.
You got to get a little speed on it. I mean,
Yeah.
if you're using a ping pong ball,
Yeah.
you can't.
Or like one of those practice golf balls. Or
Yeah.
like,
Yeah.
Oh yeah, that would
yeah,
probably be better.
maybe. I don't know.
That would take me a very long time. That would take me a very long time. I think I would.
But never say never.
Yeah. I
You
don't
can
know.
get lucky. Good job, Eddie Panetta. We're going to take a quick 90-second break.
Yeah.
We're going to come back. We got confirm and send next. We're back in 90 seconds. Tasty Live. Thank you, V.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Nigga, we are back, son, and you know what that means. Time for a little bit more Tasty Live with confirm and send. But before we do, let's take a quick look at the market. E-mini S&Ps up 37 handles, trading near their highs, just about 3 ticks off their highs last night when we were on the show for first call. E-mini S&Ps are up around, I don't know, $4 to $6 tops all night. Caught a bid overnight. NASDAQ up 179. NASDAQ and the Russell are your leaders in the club. I guess they're all up around the same. Russell up 16. Russell was the weakest last night, basically unchanged. And the Dow up 200 and change. Volatility was in by 5 cents last night. It's in by 15 cents right now. 10 cents off its lows, even though the E-mini S&Ps are on their highs. I think if we got anything right, we said volatility would stay bid through most of the week with the unemployment number coming in. And it seems like that's the way it is right now. Volatility in less than 1% with the S&Ps over 6,700 to 6,733. Bonds up 19 ticks. Good move for bonds with everybody who is playing that kind of reversion to the mean in price, with bonds being soft for the last couple of days, either selling puts or looking for notes and bonds to rally. They both are rallying, although the notes are up a lot less than the bonds. Bitcoin was just over 113, just under 300 for the high today. It's 112, 800. Let's round up by 20 bucks or so. That's a 2.75% move after trading under 109 for a brief second this weekend. Ethereum, you pointed out, Nikki, just a moment ago. Ethereum making a nice move too, back over 4,100, 41.32 after trading under 4,000 for the last 72 hours or so. Oil's been on a tear to the upside the last 4 days, taking a little bit of a back seat now, down $1.29. Big, almost 2% move in that. Gold never goes down. You can see gold here just continues to go higher, up $33. It was actually almost $18, $20 higher than that earlier this morning. Nat gas down small. I mean, I'll mention palladium, although I think it's a very tough product to trade. It's also up $18, new highs in there. That's all I got, son.
Cancel crash.
Cancel
We
crash.
got Nvidia back up to 180. Amazon catching a little bit of a bid. Tesla is, nearing highs.
Cancel crash.
2%. That's all you get to the downside.
It's
3 days, and then you got buy the dip, and if you miss it, you're back at all-time highs, and then you got FOMO. And then you got FOMO. You look back and you say, well, why the hell didn't I buy that dip?
My neighbor did.
My neighbor, with
He told me.
He took out a second mortgage to buy the 2% dip.
He was hodl.
Yeah, he was hodling.
Right.
And now me.
Now me.
So
Look at
Johnny, no hodl.
No hodl. Here I am. Would you like to biggie size that? Or
Yeah. Would you like fries with that?
Confirm and send. Viewer emails Monday, September 29th. Man, September. 80 some odd degrees in Chicago.
Hey, tomorrow, SPX gets the market.
Oh, yeah, that's right.
Yeah, we give out $1,000.
Gonna be nice.
I hope it goes to Miss Katie McGurgle, our very own.
Don't think it can.
I know, but we're
We can give her we'll give her a plaque.
Yeah.
Like she won, we'll give her a plaque.
Yes.
Give her the cash.
Picture up on the wall here.
Picture up on the wall.
Yeah,
Picture up
yeah.
on the wall. First question, please, Beth, save me. If I'm long SVXY and VIX spikes, SVXY could go to zero and be terminated, gone forever. If that were to occur, what happens? Does my entire investment go to zero? What happens when VIX then reverts back to its mean? A couple of possible mistakes in here. What do you think here, son?
So it is a -1x. So
Inverse relationship.
It's an inverse relationship. So
volatility.
It theoretically could if you had like a massive move. I mean, you have to have over 100% move in volatility. In a very short period of time. We're talking
before it rolls.
Yes, before it rolls. So it'd have to be, I mean, going back to when we had Volmageddon, which was the XIV and TVIX, remember those two?
Sure.
Those were 2 or 3x leveraged. So you didn't need a huge move in volatility. You needed, the volatility was at like 10 or 11.
Sure.
And it goes up 30 or 40% to 15, 16.
Yes.
Which is,
a big percentage move.
A big percentage move, not a huge volatility move. I think the market was down like 30 points that day. It was like a nothing move in the market.
30 handles, yeah.
30 handles, which was like 1% at that
Yep.
time. But either way, with this, yes, if you had a explosion in volatility, we're talking about to like 35, 40 in a span of a day, you could see this happen. But, at -1x, you probably won't. That said, when volatility gets low, it's more risky to be in these products.
Yes.
I mean, it's free money until it's not.
It's free money until it's not.
And you got to be careful.
What would happen to your position if it reverts back? I mean, if you're still in it, you might make back.
Well, no, it would be gone.
No, if it hasn't expired yet or gone. What do you mean it would be gone? Say it.
If there was a massive vol explosion to 50, SVXY would go to zero. It would be gone.
Yes.
So and then even if it came back, I mean, if it goes to zero, it goes to zero. It doesn't stay at zero until volatility comes back.
No. It would be, the play would be over.
The play would be over. It goes to zero and it's over. But it's a very low,
It could go into the 30s. It's in the 50s now. It could easily go into the 30s on a big vol expansion.
Yeah, if vol were to go to 25 or 30, a
In an
50%
overnight play,
increase
yeah,
in
right.
volatility, this would go down 50%. If you
Right.
have the explosion volatility to, over 100% increase in volatility, then this goes to zero and it's gone. Bye-bye.
Very good. Next question, please.
So what's your take on locking in profits early? I'm up about 34% in a position in just 2 days. I feel like I'm violating my trading mechanics of managing and exiting at 50% or 21 days. Do you manage early? The question.
I manage early. 50 to 21 days is just a guideline. If you're up 34% in a relatively short period of time, like you're just saying here in 2 days, run like a thief in the night.
As good as it gets.
I mean, I don't know what you're questioning here. Now you'll be looking for new trades to do, and you might have more questions about those new trades, what you want to do in than this. But this, to me, this is a no-brainer. Don't even think about it.
Yeah, for sure. I mean, you're way ahead of the P&L curve.
Yes.
I mean, 34%, you would expect if you're in a winning trade around that 21-day mark is when you're closing positions. If it's a losing trade, you're rolling them. If you're at 34%, you're ahead of the curve by 2 weeks or more.
Yes.
I mean, if you're looking at 50% at 21 days on a 45-day entry, you're way ahead. You've probably, whatever you played for in terms of vol crush, time decay, directional assumption, if you sold put spread or a call spread or whatever, you've gotten paid on multiple of those.
Run, young buck, run.
Run. Take your money and run. Pat yourself on the back.
Good job out of you.
Yes.
Next one, please. What is the historical correlation between the U.S. dollar and equities? Good question.
That is a good question. Usually dollar down, market and stocks up is typically what it is.
Usually.
Doesn't happen every time.
Does not. Yes, usually. I don't know what.
When the dollar loses value, assets gain value. Generally.
Correct.
And so that's, you have the dollar is down 15, 20%.
Assets are up like the stock
15,
market,
20%.
gold, those type products. Yes. It's not an exact correlation. I don't even know if it's 65-ish percent.
Yeah.
But on a long-term, far view, you're 100% correct.
Yes.
On a tight one-day view,
Yeah.
it's probably 60-40, maybe. Can't go
Great.
from that tight time frame.
Yep.
Good question though. Next one, please.
So is October usually a more volatile month? I know the crashes in 1929, 87, 2008, and they began in October.
Yeah, I mean, I think we've done a bunch of studies on this that makes it fairly random for market outlook and volatility. But yeah, it's a skosh more volatile, and we're on. Like, you got to take, like, that's the first thing to look at or have some knowledge on. I always say some things are good to know, some things make you money. This is good to know. And then you look like where the market is right now. To Vanetta's point in a lot of her news articles, volatility is at not all-time lows, but recent lows. So volatility is at lows, markets are at high. You're going into October. Yeah, it makes a good guesstimate that you might have more volatility in October than we've had in August or September. Doesn't mean that the market can't perform just as well as it has in the previous months as it might in October. But sure.
The real question is, does it matter to you? Like, do you
no,
care about
no. Matter of fact,
seasonality or this month is
No.
up month,
No, it
traditionally
doesn't.
down month?
No, it doesn't
Santa
matter
Claus
to me. I don't even
rally.
think about it. I don't even know about it. I couldn't even give the statistics to it. But going back to the question that the person had just a moment ago, now you've covered a bunch of products. You might be saying, hey, I'm not going to be too aggressive with my future trades because October is going to give me some opportunities to get into trades a little bit, if you're selling premium, at a little higher premium than I would have. So, maybe that person's a little less aggressive. Maybe somebody who doesn't have positions is going to be more aggressive, saying, hey, you know what? This first product that moves, I'm going to jump in.
Very nice.
Next one, please. How much of your net lick will you put into a specific sector like AI?
Ooh. It's a tough question. I mean, do you loop like Apple into this or,
obscurity you get.
Yeah, like how far down? I mean, the NASDAQ, do you include all those stocks as AI stocks? I imagine in some fashion over the next couple years, they're all going to incorporate it in some way. I don't worry as much about what sector, and I think AI is too broad to really bucket into a handful of names. But I think just these stocks are very liquid. And so you're going to have a lot of positions in the chip names, in the Mag 7, in the high flyers, like your Oracle and IBM that have been moving. Like this is where volatility and liquidity is right now. And so, you got to go where that
so I don't
move towards that stuff.
No, you're 100% correct. I don't look at it as like sector. Like I trade a lot of NASDAQ stocks because they have higher implied volatility. But some of them I'm long, some of them are short, some of them I have defined risk trades on. Like you get your diversification not from the sector itself. Oh, I'm going to have X amount of percent in bonds. I'm going to have X amount of percent in the Dow. No. You don't get it from there. You get your diversification from the strategies that you use inside all of those sectors. So for me, it really doesn't matter. Now, I will, on some commodity products, say to myself, all right, I've got enough oil-related stocks in my portfolio, or I've got enough gold-related stocks in my portfolio. It's just not my place where I like to be. But in the market itself, I'm 80, 90% of my portfolio.
Those are much more correlated. Like
much more correlated.
The AI stocks, it's such a broad range of.
Yes.
Like is Coinbase AI? Is DraftKings AI? Those are going to have some sort of AI component to them.
Yep. So. Very good. Next one, please.
So last one. This Friday is the employment update. If VIX is low, below its historical mean, would you ever consider buying the one-day SPY straddle just to take a shot? The market has a big reaction.
So I remember when it was the unemployment number. Now it's, then I thought it went to the unemployment situation, and then it went to the report. Is it now update? I mean, I missed all these, okay?
I guess the real question
is this like the Guardians? Are we changing the
yes,
name?
It's just a different name.
Got it. List. Yes, VIX is historically lower than it's been, but I don't change my team here. I'm not looking to buy a one-day.
Never take a shot.
Yeah, take shots all the time. And if I was going to take a shot, I'd rather do it with volatility low than when volatility is high. So yes, this would be something I might consider. Will I do it? Probably not. I mean, unless volatility were to get to the crapola, I would rather take a directional bias shot one way or the other. But I like your idea of doing a one-day. Probably not in the SPY. I might go a little bit into SPX because it's cash settled. That makes it a little bit bigger. I might do it with defined risk because it's too big. But sure. Why not? Go for it.
You got a hunch? Why not?
Just don't bet a bunch. If you got a hunch, just keep your size.
It always comes down to sizing.
It always comes down to sizing. It sounds like a broken record here, but it's always sizing. All right, listen, that's our last question. Thank you so much for those questions. Appreciate all of you that participated. Keep them coming. We love getting them. We need them every day. So please send us more. We'll be back in 90 seconds. We've got an option jive next. We'll be back in 90 seconds. Tasty Live.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
So I started trading in the equities market when I was 18. Real basic ETFs, mutual funds. I didn't discover options and really Tasty Live until about 2012. It made sense to me from a risk perspective. And so I started trading and never really have looked back. The people you see that's who they are. They're trying to be as open and clear as they can with the trades that they're putting on. Teaching a methodology, like teaching the logic behind things. It is tried, true, and tested. They back it up with research. They share that research. It's not just trust us and do this. which is a very dangerous thing in the financial world. But learning about that in the Tasty universe, it starts to prove itself out, right? When you follow the methodology, you'll see those profits, and you'll understand why a position did what it did. Sometimes the market wins, and sometimes you have a 90% winner, and you don't know, why don't I do this every day, right? This is easy. But you kind of have to reset that and just go, okay, close the trade and move on to the next one, which is really what Tasty's about.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
It's options. Jive.
That's right, my son. It is time for an option jive as even the S&P sit up 33 in the orders. That's 75 cents. Option jive.
Option jive. Research corner. Couple things that have happened over the last couple weeks.
A little bit of a recap.
Yeah. Let's go. All right, so we had indices decline slightly. We should underline slightly because we had about a 2% down move in the beginning of last week. Marking their first losing week in 4. So we had core PC inflation came in at 2.9%, meeting expectations. And then NVIDIA, $100 billion in OpenAI. The numbers get bigger and bigger every single day.
So NVIDIA saved the 2% move to the downside?
They what?
NVIDIA saved the 2% move in the market to the downside?
Maybe. How many more $100 billions do they have to pump in there?
I don't know.
It seems.
But if, to those people who are waiting for the market to downtick, that was your downtick? Is that what you're telling me?
Yeah, it's 2%.
That's a tough one.
That's all you get.
Tough one.
Next slide here. So the government shutdown deadline is this week. Vanetta mentioned it this morning.
This week? Tomorrow.
It's tomorrow.
This
Aren't
week,
you scared?
Not yet.
Not yet.
No.
$7 billion per week is the potential economic impact. Who cares about that when you get $100 billion in a day from NVIDIA? 7 doesn't matter anymore.
True.
So you have manufacturing PMI Tuesday, you have services on Friday, and then you got the jobs report on Friday as well, which is in flux with the potential government shutdown as of tomorrow.
There you go. I don't know. What do you do with that? Volatility basically unchanged, so it's telling you big old nothing burger right now.
Chat drink.
Oh, sorry.
There you go. Next slide here. So just comparing the last 2 weeks, you had the S&P obviously up In the week prior, we were up about 1.2%, NASDAQ 2.2%. Last week, as volatile as it seemed and as scary as it was, a 0.3% down move, well inside the expected move, which is why volatility isn't up. We get that question all the time. Volatility is near the lows, and that's because when you have a 0.3% week, that's well inside the expected move.
Volatility is going to contract, yeah.
VIX at 16 is a 1% expected move on a day-to-day basis. We're getting basically nothing here on a week. So
that is correct.
No volatility here. Nothing outside of what was priced into markets.
Right.
Speaking of pricing into markets, the next slide, we're going to give you the expected move through the end of this week. So you got 78 points. I think this was done on Friday. So we're getting, 30, 40, maybe 50 handles of that today.
Sure.
Who knows with the way the market's acting right now. A 1% move, again, that's right in line with what the VIX is telling you. It's 1% move through the...
0.5% move today, 1% move, a little bit of time for 71 handles right now for the week. So maybe we're at the highest at the end of the week. We'll see what happens.
We got all-time highs to scrape at 20 more points, 25-ish, right at the expected move. So
I'm glad I'll be able to share that with you.
I'm sure we will share many market highs, in the days to come.
Willing, if everybody's willing, sure.
Yes. Next slide here. So looking at major assets and IVR. So you're looking at the S&P 500. You got bonds, euro. Euro volatility has been one of the highlights for me. I mean, you've had a chop between like 116 and 120-ish for the better part of the last couple months. You've been trading that range, whether it be via the tastyfx products or the futures themselves. Volatility there is not high when you compare it to an NVIDIA, but to itself is relatively high, and it's been a nice range-bound trade. 7% implied volatility on the euro, but has chopped around, so it's been a good trade there. Gold volatility has been through the roof, especially to the upside. Massive call skew there just because of how gold is moving. I mean, you're having a year's worth of a move in 3 weeks.
Yes.
When you look at gold volatility, 17, 18%, it tells you, that you would expect this sort of move over a year's time frame as opposed to 1 week, which is what you're getting. Bitcoin volatility increasing slightly as well. That's kind of interesting here. Maybe you see a little bit of that juice get pumped into the calls here with Bitcoin up a couple thousand here over the weekend.
Yes, very good. But Bitcoin was of all the tweets that I got that weren't related to a picture of my younger son with the 3 AI blondes, was about Bitcoin and the demise of Bitcoin.
It looked very real. It did.
It did look really did a good job.
It did look very
did a good job.
I mean, they looked significantly older than Vinny, so it was pretty. It was pretty clear.
It looked like a game.
Yeah. So it was. That was good. That was
Next one before we get in more trouble.
Yeah.
Interest rates. This is the one that's interesting.
Yes, interest rates have reversed a lot of the move since Powell. I mean, the down move that we saw in early part of September was on, Powell and rate cuts. We're kind of back to just under where we were prior to that. Does that spook you at all?
No, it didn't really spook me. In fact, on the show on Sunday, I should have just said they both were a buy, even the S&Ps and bonds. But I said, you know what? I think bonds are an easier buy than the market is an easier buy. But the market's up just as much, if not more, on a percentage basis than bonds. Again, a tough hold, but now you're going to get paid. What are you going to do with bonds at 116.14? They got up to 116.26 already this morning. So bonds having a nice rally, which means that the rates will go a little bit lower. But we'll see. We'll see. It is what it is. Place your bets.
Next slide here. So gold and silver, we had a good cherry picks last week on gold and silver as well. So if you're looking for more info on that, you can check that one out. So gold reached all-time highs. We're above 3,800 right now. We're at
38.5,
up 40 handles, and gold actually sold off like 10 or 15 points.
Silver got up to 47.40, which was an all-time high there too. They both look parabolic. They've beaten me up so much in the past.
You scared now?
What's that?
You scared now? You know, a little.
I'm respectful.
Yeah,
I'm respectful.
I took a little
I
spanking.
think silver's a better sale than gold, but I'm respectful.
Okay, that's fair.
I'm not. I'm not. These boys are. They got my number.
Yeah, silver has caught up in the last week or so. That move.
Silver seems a little short-term overbought, just on price. No, nothing else. Volatility's good in there, 47, but a very big product. So watch yourself.
I don't know how many years we've had a 40% move in gold and silver. That would be an interesting look.
That would be an interesting.
Might have to have the team look at that because that's
not too
that's
many. I would think.
I would not think there's that many occurrences. On the next slide here, looking at the gold silver ratio, we're right back to kind of the average that we've seen. You had the move above 100 that was really on gold moving higher. Silver was kind of flat at that point.
Right.
That was kind of the gold move. Now you're having silver catch up to that move, and we're back right in line here.
Now remember, Tom Mosley and I sold this starting at around 97, and if you're at 83 right now, or the average is 83, and you're somewhere around 80, you think that's a great sale.
That's a mega home run.
Mega home run. Well, it went to 110.
Yeah, and that was painful.
It's a really hard hold. I mean, really hard hold. And that's what, the difference between real trading and looking at something and saying, oh, this was a no-brainer to sell it, around 100, over 100, it was a no-brainer, load the flotola kind of thing. I can tell you, we had plenty of positions and it lasted way too long. And when you get back to a profit, you are nibbling to take this off, thinking it's going to go back up into that 100 area, back up into the high 90 area, and it never did. It really just kind of meandered for a moment and then fell out of bed. So very hard hold. It all comes down to what?
Sizing.
Bingo again.
And you probably got bigger size into the move to one.
Yes.
And then you write it down and you take some off. You're not keeping your full, tranche size into the 80 handle here. But it has finally kind of come back into line, which, if you were holding that assumption, which I think a lot of people were, you finally got paid.
Yes, you did.
And you're back to even. Now what?
Yeah, now what?
That's a big question. You short them both?
If you really got bigger,
you short them both. That would play into this.
That would work.
That would work
too.
Here.
Yep.
Next slide here. So looking at some of the biggest movers on the week, you've got Intel in there that has gone, straight up. EA is the takeover play, so that one's kind of done with at this point, just because.
I would even throw that out of there. But Intel is certainly in play. Just under $35. It was over $35 on Friday. 35.5. It's down $1 today, even though the market's higher.
The Oracle move was interesting because you had all the TikTok news kind of, and it's in that.
Oracle had good volatility contraction too. It got into the 50s from the high 70s. I'm talking about IV rank. It's in the 60s now.
Yeah, and FCX was another one that had kind of a binary event. I think there was some sort of mine somewhere that blew up or something.
Yeah. It was a big. It
was a huge move. 2-day move.
It was a huge move, and it was a huge. I think it was a pretty big catastrophe too. I think a
Yeah.
lot of people lost their lives. 35 and change is where it closed. 36 and change now. I had a couple people writing into me saying that they were looking to buy the dip in there. It was a 2-day move lower. I mean, the first day that the news came out, it was closed at 38, then it went down to around 34. So now it looks like it's going to flirt with 36.5. So maybe volatility will contract a little bit in there. You'll be able to get some cash out of that. So good job on those.
And getting on to the
weird ticker symbols, not your usual suspects.
Yeah, I mean this.
Ulta and.
It tells you that we've squeezed all we can out of the Googles and the Nvidias, and
where are we running to now?
Yeah, it's kind of like you're looking for stuff that's moving, and people looking at Intel, and you're getting into the bottom.
Get into the weeds a little bit.
Yeah, you're getting into the weeds a little bit here. It's usually kind of a frothy sign, but
yes,
we had a little bit of that pullback last week, and we talked about that last night, your INQs and your BEs, and some of those stocks, they didn't crash, but they came in a little bit, and volatility came in, which was a big.
Oh, I mean, like a BE. I mean, it hadn't had a downtick since August, going from like $30 to over $80, and Closed at $70-ish, traded into the mid 60s, and now it's going to be over $70, $72, up another $2 today. So there's play. There's play there.
So last slide here, Carnival. We forgot to look at that one this morning. It's up $1.50-ish here on earnings. They had earnings before the market opens today. Only real other earnings is Nike. That's tomorrow after the close. In the next couple of weeks, we're going to start getting into the earnings. The airlines and bank stocks are usually like our first stop for earnings.
Carnival Cruise Line continues to
it was going out of business, right?
Be funnel and make stocks.
Have you looked at Royal Caribbean? Oh, don't look at Royal Caribbean. Do you know what it's trading at right now?
120 or something.
Royal Caribbean?
Yeah.
It's at 330.
RCL.
So we can just let's just.
I'm sorry. I was quoting April. I apologize.
So back in 2021, when it was going out of business, it was 74. So it's about a 5-6x from it's out of business.
Don't bite the hand that might one day need a job from him. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. What comes up next?
We got the opening bell.
Yeah, that's right. We'll be back in 90 seconds.
Turn on the machines, baby.
Turn it back on. Even the S&P's up 33 and change.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily, covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
We we are back, son, in the opening bell here in less than a minute, about 40-ish seconds. Even the S&Ps are now up 25. They were just up around 33 before we took that break. NASDAQ up 124. Russell up 12. The Dow up 135, and volatility in by 10 cents. Bonds up 15, 116.16. And Bitcoin over, well, flirting with 113, 112.9. You got about 15 seconds before the market opens here.
That was my ode to Tom.
Oh, when he bangs on bangs on the table while everybody's talking.
Turn on the machines. Let's go.
They're going to turn those machines on in just about right.
There we go. And I don't have low ding.
Right now. And you do now. Oh, you got your ding.
Yeah, I got my ding back.
Good job. Good job out of you. As even the S&Ps open here, gold is up $42 or so, just a skosh, $10 off of their highs. Silver up just about 29 cents off of its highs that it made today of 47.41. It's just under 47 right now. Let's see what some of those movers are. I know you like to look at the S&P 100 or something like that. I have the high option volume list. APP up 16 and change. BABA up around 7. Meta up around 6.5. Tesla up just about 5. Reddit up around 4. Coin, more your usual suspects to the upside here. Nvidia up 3 and change. Palantir up around 3 or so. On the downside, not too many, but Netflix is down 7. No chill there. Netflix down 7, flirting with 112. I'm sorry, 1,200, 1203.5. Costco down 2 and change. Apple down $1.40. Usually don't see the market up half percentage point, and Apple a little bit lower. Apple with a high correlation to the market, but not recently, right? Kind of been.
It caught up in about a month.
In about a day.
Yeah, a month, day. It seemed like it was pretty quick there.
For sure.
Yeah, Intel down $1 and change here.
Yeah, it was down pre-market too. Intel down $1.41 or so after having a big move higher, as you can see here, from around 24 just a couple of weeks ago, over 36 and change. Now sitting there at down $1.37.
You want to look at those EA options just real quick?
Sure, we can do that.
Because there was
those who played Electronic Arts.
Yeah, and I got a couple emails too, and we talked about it this morning with Vanetta as well, with the takeover, or the take private, I should say.
Yes.
At around
definitely a takeover though. The price is significantly higher, right?
Oh yeah, I mean we're up $40 ish from where we were a couple days ago. But if you look at the options, and if you go even to like November, I mean you could look at shorter dated, but I'm just using November just to kind of show you this. I mean they're priced pretty much at parity. I mean you look at the 200 strike call, and it's fluctuating around here, but it's trading at about $8 ish, depending on where the markets are. I mean, you can see they're
even if you said $6, the stock is at 203 and change.
Yes.
The puts are no bid or 60 cents at 470. Untradable markets. The reason why the market is so wide is usually because the stock is so wide. That's not the reason right now. Like if you have options that are 30, 40 cents wide, usually you'll have the stock, 50, 75 cents wide, or maybe even wider than that. Right now, this is all about the takeover, and your in the money options are going to trade somewhere around parity. I know you have the November 170s. What do you do there? Do you put a nickel bid in for the 170 puts? Do you do nothing? Do you try to sell your...
Well, no, I'm on the call. So I'm long the 170 calls in November, and I'm short the 180.
I know you're on the call side.
Oh, yeah.
But your risk is to the downside, right?
Yes.
So if you bought the 180 puts, for argument's sake, at a nickel or a dime or whatever, your play is done.
Is done. Yes. You're closing the position, but not worrying about having to deal with the
puts might trade a lot tighter than those deep in the money calls are going to trade. Now, your $10 wide spread is probably, I know you were trying to sell it for $11 or something like that.
I figured you got to have that was Friday when we were trading at 190, 195-ish. You figure net on those positions, the difference between the November and the October options, there's got to be $1.
Yeah, but at 203 now
with the deal more out there, because the number wasn't released Friday. I think the number has been kind of, you could see it in the Ivy rank. It's at -9. But yeah, I don't think there's going to be much, if any, extrinsic value. It'll still be a good trade, but
It'll still be a great trade. I mean, it's going to go to its $10 mark for their $10.
so should I try? Let me try like 10 to 50. I'll see if I get filled here.
Oh, there you go. 10.53.
53.
Nice.
So,
That's the risk of the deal not going through.
Is 50 cents.
That's correct.
On that 10-point wide. Yep.
That's correct. Where can people see these trades?
Yes, so those will come through on the follow trade page on my account. We'll work on getting that.
Incorporating it together, yep.
If you have a name for us, I mean, the easy one is
We
just
could
the
do
back.
like naming rights or something like that.
Oh yeah, that we could do that, like a sponsorship.
Could it be like a sponsorship?
Yeah,
That's right.
that could work.
We could try something like that if you wanted to.
So those will come through shortly. We'll get all those in. Nvidia up $4 and change. That's a big.
Nvidia up $4 and change, yes sir. Nvidia
Does that hurt you? I felt that in your voice.
No. I don't have an Nvidia position right now, so no, it does not hurt me. IV rank of 5 and change. This would be a product, even though it has earnings on November 19th, that I would be trying to look for doing is something diagonal until I would see the monthly implied volatility. Look at November 44, October 38. I would never look to do something with so much vol differential between the two. Forget about 18 days. It's just I want this vol differential to be under 2. So if I was looking to do something in here, you might have to go all the way to December and do a December, November with a directional bias. At least you're buying December under by a point and selling November over by a point. Now that is probably going to increase over time because as you get closer to expiration, those November options probably expand a little bit more. So it almost puts a directional play in NVIDIA in November only and not even looking for something that's calendarized. But you can obviously do what you want.
That was a Celsius strangle. I think that was pre-us. So I don't know if you get any piece of that. I think I got to give half that to Mikey.
I don't get any of the...
Yeah, I don't know if you get any... Any
of the accolades?
No, I just meant monetarily. Like,
monetarily?
Yeah, because that was with my...
Other wife?
Yeah, my other wife.
Uh-huh.
I don't know if we could... We're not work wives.
We're not work wives. That would be weird. That would be weird. It was weird enough with Tom.
Yeah.
It'd be
It's a little too much. Yeah.
It'd be really weird.
Thing.
Yeah. We're going to have to come up with something else besides work wives. Yes. Uh-huh. That'd be just sick and wrong right now.
Anything else popping up to you? I mean, Bitcoin up at highs, gold at highs. Volatility basically unchanged here. That's kind of interesting.
Yeah. Even the S&P's up 24. I think if they go back up 34, you'll see maybe volatility contract a little bit here. I don't take too much. I think that was the best call that we made, obviously, last night, that volatility would stay bid into these plays. I'm trying to look around the whole market here. It doesn't seem like anything unusual in the overall market happening right now. Do we sit here?
I mean, volatility, it's unchanged. So I think maybe you get a little bit of more of this to the downside, 5-10 points. I mean, it's telling you kind of that it's, I don't know, feels like the high of the day is in. You said that too.
Yep. I did. All right. Well, listen.
You don't get any of that one either. That's UAL.
Taking some profits here on some trades.
Couple 2 tree.
Good job out of you. Very nice. So to that emailer who called in and said, "Hey, what do I do here in these plays? Blah blah blah." Take your profits and run.
Yeah.
Right? Why not? Seems prudent.
Yeah.
All right, you ready to take a quick 90-second break?
Yeah, sure.
Let's take a quick 90-second break and come back. We got more Tasty Live after this. What comes up next?
Oh, nothing says Mondays.
Nothing says Monday, and you get a piece of that now. You get to say that.
I'm excited.
Nothing says Monday like this, man. Dr. Jim is in the house. We'll be back in 90 seconds. It's Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Nicky, we are back, son, and you know what that means? Nothing, says Monday. That's right, like this man, the skinny on options. Abstract application, Mr. Monday himself. Dr. Jim, how are you?
Man, what's up, man? I'm watching the show. I'm seeing the morning stuff. It's not just coming from you now. Now I get it from the baby bat, too? Like, I don't think I can handle it.
No, he's right. No, I'm going to...
No, that's too many Batistas, man. That's too many Batistas.
I got to call it like I see it, Dr. Jim. You're right. I thought it was a little disrespectful in throwing that shade at you like that.
I'm just saying. I mean, I got a lot of riffraff from Tom, but I never got that. And
You're
so
right.
now it's like, okay, all right. I see how we're playing it. Okay.
No, I was saying Chicago's the riffraff. You know, the nice strip malls in Michigan that they don't have the riffraff. It's nice.
I think he's backpedaling here, Dr. Jim. I got to give you some props here.
He's 100% backpedaling. But I'll tell you what though. I'm totally on board with this selling the naming rights of the little trading deal you guys got going on in the morning. I mean, let's think about this.
What's
guys,
your bid?
Right?
What's your bid?
I'm
Jim?
just saying. All I'm saying is Sauce Grande's gone. I mean, the revenue's not going to create itself. Like, we got to think outside the box here. You know what I'm saying? So I think 100%.
We're thinking OnlyFans. We're thinking OnlyFans. We might just say each show host has to start their own OnlyFans. I think that's.
I don't know if I'd go that direction necessarily, but I do. I like the creativity. I like the fact that you are thinking outside the box. You know what's funny? Have you guys heard about when I heard you guys say that this morning? That made me think. Have you guys heard about this woman in California who, I guess, her whole job is she will name your baby for you.
Oh,
and she
saw
charges
that.
you. Yeah, like $30 grand. $30 grand.
Yeah, only in
name
California.
Your baby.
Yes. That's $30,000 she charged to name your baby.
That could be a good thing for Tom to do too. I feel like he could bless it too.
Yeah, Tom. Yeah, I think Your Majesty's a great name for your son, Jim. That's what I think. That's what's going to happen. No.
How do you get the prestige to be paid that much to do that though?
That's what I'm saying.
I guess you just ask.
Yeah, I guess.
You got to ask for the sale. That's what they tell you. All they can say is no.
Yeah.
It's a tough ask. Would you
that's
believe
crazy,
$30?
Yeah. That's just crazy. You know what's really funny? So here's a funny little story. So, I've got Penelope, who's my oldest, Eli.
How much did you pay for that name, Penelope?
Well, we didn't pay anything because it wasn't a thing 10 years ago. Like, it wasn't a thing yet, right?
I mean,
to pay for naming rights, it wasn't a thing until.
No, this is a 2025 deal. But you know what's so funny? So when we had Penelope, we didn't know if it was a boy or a girl because I wanted to keep her a surprise, like keep the fun, whatever. So Autumn and I both were so nervous because if it was going to be a girl, like we were dead set on Penelope, 100%, we were sure. But if it was a boy, we were not really sure. The front runner that we didn't love it. I mean, we liked it, but we weren't like in love with it. You know what the front runner was for a boy's name? You guys want to guess?
Jeremiah.
Panopoly.
That's a great guess because we did. Okay, so here's a clue.
I feel like it had to be like it had to be biblical.
Yes, we wanted there to be biblical roots. That's correct.
Anthony.
So you're on the right track. What?
Anthony.
No, there's no Anthony in the Bible. They didn't even have Italians.
Yeah.
They didn't even have Italians.
We didn't have Italians.
No, they didn't have Italians. No. We were gonna go with Solomon. That's what we were gonna go with. Which would have been. I mean, that's pretty strong.
Solomon
dude. That's
Schultz.
a strong name.
I don't know if I could do Solomon Schultz. I'm not gonna lie. I don't think I could do Solomon Schultz. I can't. I'm glad. And blessed as you are, you got Penelope, which I think is a beautiful name.
Solomon Schultz would be a good lawyer. It reminds me of like
100%. Like he's an ambulance chaser from day one.
Yeah. What's the show? The spinoff from Breaking Bad?
Better Call Saul. Better Call Saul.
Better Call Saul. That's you. That would basically be the new Better Call Saul. Be perfect. They'd have billboards all over St. Pete.
Yeah.
Call Saul Schultz. He got you out of this.
Oh boy.
Oh,
did you fall at work? Call Saul Schultz.
That's right. Million percent. Oh, that kid would have
been
been rolling. Oh, he would have been totally rolling.
Perfect.
Oh, that's so funny. But hey, did you guys see my Falcons yesterday?
See you what?
Hey, I did take Falcons in my confidence
I'm just saying they got off to a slow start, but they looked really good yesterday.
How'd you take the Falcons? How is that in the new lineup?
You've not been watching the show. I'm watching your stuff. You're not watching my stuff. I've been a Falcons fan from the beginning, dude.
But how did that come about?
The beginning of Monday.
Yeah, about
Last
20 minutes
Monday.
ago. About 20 minutes ago. Who's the quarterback for the Falcons again? Is it Michael Vick?
Michael Penix. Penix.
Yeah.
Yeah.
Yeah. No, he's a player, man.
I will give you this, Jim, because the Falcons were actually on my consideration of my new fandom. I chose the Bills. But the Falcons, it's a lovable team, young talent.
Bills didn't cover 16 points or something.
Well, I took the Saints plus 16 and a half.
Good job.
You always take a double-digit dog.
Always.
Double digits. Come on. It's NFL. Professionals. Nobody's getting blown out by 16.
You obviously haven't seen the Dolphins play this year.
That's true.
Oh, they're
That's
bad.
true.
They're real bad. They're real bad. All right, but hey, guys, I'm excited. I got to watch 2004 Red Sox highlights to get ready for the wild card round that starts tomorrow night. So are you guys ready to do some finance this morning?
Of course.
Man, let's do it. All right, so Beth, cue us on the title side. So Nick, Tony, I've done heteroskedasticity with you before, but Nick, I don't think I've ever done this with you before. Have we ever done heteroskedasticity together?
I don't think so. I
mean, it's not something that you would forget.
That's true. That's true. I'm excited. I'm excited for my first time. I can't contain myself.
This is honestly, this is what we do. This is the formal fancy term for what we do. And I was introduced to this idea during my doctoral studies, and it's a really fascinating thing that exists in the academic literature. But for us, as what we do every single day, it's actually like the thing that our whole network is kind of built on. So Beth, go ahead and cue us up on the title or on the introductory slide today. So one thing every trader can agree on, regardless of directional bias or favorite strategy, is that markets move and things change. But one underlying assumption of many theoretical models, including the Black-Scholes model, is that volatility is constant over time. I'm actually going to pause right there. Does that sound right to you? That a lot of these high-powered models that we use assume constant volatility?
It's certainly not right because volatility changes, but I would say it's the best we can do, right? I mean, you have to price volatility in some way. So volatility right now is everything that we know right now. And so, it is what it is, but obviously volatility can't be constant over time or won't be constant over time.
Well, that's what's fascinating, though, because you're 100% right. This is something that as active traders, we know this isn't right. Like, we know that in the actual markets, like, this is not how things behave. This is not how they move around. But what's really fascinating about research, the Tasty research guys and gals, they've got to do this. Whenever you're trying to build a research design to learn a little bit more about, the world in front of you, the trading world. I had to do this in academia. It's very, very difficult to do because real life is messy, man. Like the markets are messy, like everything is messy. So you always have to make concessions, here or there to try to fit some type of research design into a messy trading world, into a messy market, and make some sense of what's going on. You'll never get the full picture, but the idea is to kind of, put some bits and nuggets together so that we can make a little bit of sense of what's going on. So the fact that a lot of models actually assume constant volatility makes sense from a making concession standpoint, but we know that it doesn't make sense from an actual world standpoint. And so when volatility is not constant, all kinds of problems follow. And here's one good example. So there's something in regressionary analysis, which is something that the research team does quite a bit. It's something that a lot of statisticians will do, where one of the most common regressionary frameworks is what is called OLS, which stands for ordinary least squares. And you don't even need to know anything about that to really appreciate what's happening here, because when you have a non-constant volatility, an OLS model is no longer what's called blue. It's no longer the best linear unbiased estimator. That's a big problem. That's a big problem for reasons I don't want to get into, other than just identifying one of the major problems that comes when volatility is not constant. This model no longer produces the minimum variance results for you, which is also a big problem. And then lastly, the Gaussian properties will be in question if volatility is not constant. Now, the Gaussian properties, a Gaussian distribution is just a formal term for a normal distribution. So that is very relevant for us here. So the point that I wanted to make is, A, volatility is clearly not constant, but also B, once you lose that assumption, you have to really start making a lot of changes in a theoretical world. So heteroskedasticity is non-constant volatility. That's what it means. So Beth, let's go to the next slide. So the mathematics behind this. So now we are going to dig into the math a little bit here this morning. This is typically, Nick, where Tom would check out. So just so you kind of know.
Well, we're going to have a quiz after. So going forward, we're going to have a little quiz, and both my dad and myself have to answer the quiz and pass.
No, I like it. I'll start weaving that in.
Yeah, so we have to have a quiz at the end of this.
No, I like it, but this is the time where Tom would typically like go freshen up his iced tea. Probably see a couple of yawns, like things like that. So just if you want to follow in his footsteps, that's kind of what we would be looking for.
Dr. Jim,
So
he
the
was
basis-
just sleeping.
Yeah,
I mean,
with his eyes
100%,
open.
That's why
100%.
I had to fire him. It was
Yeah.
enough already with his napping during the show, so I had enough.
That's right. So the basis of heteroskedasticity relates to, going back to these statistical models, how does the error term actually behave in the statistical distribution? Now, I'm going to try to make this as clear as I possibly can for us, and I think what we're going to learn in the next couple of minutes is just how relevant this is for us. So the error term in any model, so this is the top line on the slide. So the error term E sub I, so the error term at point equals I in whatever the distribution is. It's just going to be equal to whatever the data point is, so X sub I, minus the expected value of that data point, which would be mu in this equation. So clearly, there's a deviation oftentimes from what the actual data point is and what it was expected to be. I mean, this is what we trade every single day, right? With expected moves and ranges and whatever else. And so the difference between those two, that's your error term. Okay. If you have homoskedasticity, which is going to kind of be the mirror image to heteroskedasticity, this would be constant volatility. This would be volatility where the variance, so the variance of the error term, so how the error term itself kind of deviates, the variance of the error term given the data point at xi is going to be equal to some constant number, so sigma squared. So that second line here is just to illustrate volatility is constant, right? It does not change. It remains the same over time. Okay. If you have a heteroskedastic world, though, so the bottom line, what that is telling us, the variance of the error term given X sub I, not only is it not constant, but it is actually a function of the data point itself. So in other words, the data point, the new data point that's coming into the world that we're trading, that itself is determining how the volatility should change. Do you guys think that that's a pretty realistic capturing of what's going on?
I'm just checking your math here, make sure the parentheses are in the right spot. What's the question, Dr. Jim?
Well, no, I mean, look at I tried to make this easy for you guys, but I realized I've got two Batistas now. I got to make it even easier.
There's not a lot of brain power
I'm going to go down
here.
even. Right.
I don't know,
So
you
next
know if you
time
spelled heteroskedasticity correctly.
I tried to take it down to the 5th grade. We're going to go down to the 3rd grade next week. Don't worry, it'll be all right. So
Please.
so the last line, the heteroskedasticity, what that is showing us, okay, the variance of the error term. So basically how the deviations move in the market, right?
Yes.
Not only are they not constant, but they're going to be determined by essentially the new information that comes into the market.
This is the cone.
So the new
Isn't
information.
this the cone you're talking about right now?
I mean, it can be the cone. Yeah. I mean, how the cone changes. So how the cone changes, right? Is that going to be dependent upon the new information that hits the market?
Sure.
This is supposed to be an easy question.
Yes, of course.
It's got to be. No, it's got to be. The answer is of course.
Of course. You get the answer, and then that is going to affect how the market prices that risk.
That's exactly right. That's exactly right. So when you think about a heteroskedastic world, it's like, all right, this makes so much more sense because I can't just blindly leave volatility constant, like throughout the day, throughout the week, throughout the quarter, whatever. It's like, I mean, here's another great example. Tomorrow is the end of the month, right? Tomorrow is the end of the month. It's the end of the quarter. Those are always, those always have the potential for a big day, like they always do. Just because you've got all the, the portfolio managers are cleaning up their books and whatever. You got window dressing, you got a little extra manipulation, whatever it is, right? It's going to generally be more active than like a September 7th or a September 3rd or whatever. And so it's kind of like, man, if we're going to just price volatility the same throughout a day like that, or any event for that matter, it just doesn't make any sense. And so the heteroskedastic world accounts for the differences of changing information as it comes in.
Makes
you guys
sense.
with me?
Yes.
Okay, so Beth, hit us on the next slide. So what this looks like visually now, right? So that's kind of the math. So now if we just look at this visually, hopefully this is going to make a lot of intuitive sense to not only us here, on the show, but the people that are watching, the people that are listening, right? If I'm in a homoscedastic world, then I'm going to see uniform deviations. It doesn't mean that we don't have deviations. It doesn't mean that there's never an error term, but just look at that kind of the rhythmic nature of what's happening, right? It's like a clock. It's like a pendulum swinging like equal distance on both sides. It still isn't necessarily saying you know what's going to happen, but it's just saying that things are pretty contained. Like things are very rhythmic and there's just not a lot of chaos. Okay, go to a heteroscedastic world. Now all of a sudden I've got non-uniform deviations. Now all of a sudden the error term itself, sometimes it's small, sometimes it's big. Sometimes the deviations are large and sometimes they're not so large. And so this, of course, right? This is what we're trading, is it not, gentlemen?
Yeah, it's the variable, it's the unknown, and the change moving forward.
That's where we try to make our money.
If we had uniform deviations, this whole thing would be a lot easier.
Well, it'll be a lot easier to see, hard to benefit from.
Yeah. In both, I mean, that's
right. What Tony just said right there is 100% right. It'd be easier to see. I don't know that it would necessarily be any easier to benefit from, but it would not be as, we wouldn't have any VIX spikes from 18 to 29. Like that would not happen, right?
Yeah,
but
all the things
side,
we play for wouldn't be in play. Changes,
exactly right.
the swings in volatility. I mean, it would be priced in. It would say, okay, this stock XYZ is going up $1 every day for the rest of eternity. I mean, that's what the uniform deviations is.
We would all be standing behind Tom in the unemployment line. Like that's what it would be. Like that's just the way that it would be. And we would all be kind of fighting over each other to join that woman in California on that little $30,000 a pop, like baby naming rights business.
That's right.
Because I mean, hey, it's 2025. People got a lot of extra funds, apparently.
Yeah, I guess so.
There you go. Yeah, that's right. And so, Beth, go to the next slide. So, why does this matter for us? I mean, you guys really hit it on the nose. But really, I'm going to take you gentlemen from theory to practice this morning, which, by the way, is every day on the Tasty Network at 2 o'clock Eastern, 1 o'clock Central.
I agree with that.
That's right. While non-constant volatility creates a problem for theoretical models and academics alike, it creates opportunities for us as practitioners in the market. And as over and over and over again, selling elevated volatility via implied volatility rank and playing volatility mean reversion has been empirically shown to be beneficial to premium sellers over time. And so really, if you guys ever want to like impress your friends, like when you guys are at like, your weekend parties together or whatever, like Tony, like when you're with all those hockey parents, right?
When he's in the sauna with the other, when he's in the sauna with the other hockey dads, he could talk about
and you need to impress
them.
When they ask you what you do for a living or you start talking about work, just be like, yeah, man, I'm just scalping a little heteroscedasticity. Like it's not a big deal.
That's what I was thinking.
It's nothing.
That's what I was thinking.
Yeah. So how did Vinny do last night? By the way, didn't he make it to the? Did he make it to the end?
We made it to the semifinals and quickly exited. Got beat out by Little Caesars.
Okay.
Beat us.
Way better than losing to Chuck E. Cheese.
Way better than losing to Chuck E. Cheese. But yes, Little Caesars Hockey Club took us down.
All right, there you go. Little Caesars. People sleeping on
One
Little
of our
Caesars,
players
man.
dislocated his shoulder. Very sad news.
They still do the $5 pizza, or is it now like a $10 pizza?
I think it's like a $7, like a $7 hot and ready.
That's the true
just
inflation.
A little 40% kicker on the top there.
Yeah.
It's nothing.
That's really what it is. When the Arizona iced tea, when that goes to $1.50, we're really screwed.
That's it.
It's when the Costco hot dog and Coke goes up. That's when we know it's up.
That too. That's another one.
Now that has been very homoscedastic over time. It has been incredibly constant. And so I got to take my hats off to the Costco owners.
Pump some volatility in the Costco hot dog price.
That's right. All right, let's get them a few takeaways. Man, I got Pedro Martinez highlights ready to go, man. In a market that is pretty random and unpredictable, hitching your wagon to direction only can be a tough trade, which is why we prefer to prioritize non-directional elements like time and volatility. And it is the presence of heteroscedasticity itself that makes trading volatility even possible.
Good job out of you.
Yeah.
I want you to give him a good job.
It was a great job.
In 10 years, I never got a great job. out of Nick. I guess you can stick around type of deal. A great job. Or you redeemed yourself from the morning. That's good.
It's a new regime. We give accolades.
Yeah, we appreciate it, okay?
We appreciate you, Dr. Jim.
I appreciate you.
We're going to take a quick 90-second break and come back. We got more Tasty Live with a market measure next. Back in 90 seconds with Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto. We got it. We get it.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Nikki, we are back, son. E-mini S&Ps are back also. They're back up 30, just about 10 handles off of their highs. NASDAQ up 223. Russell up 650. Dow down 18. Dow weak all day. Dow down 18. Volatility up 10 cents. Interesting. A few zero-day traders out there with the market really not doing too much. Probably not getting...
Since the open.
Since the opening, I
yeah.
apologize.
No.
Yes. If you're putting these trades on, you're usually doing them intraday, right?
Yes.
You're not doing them overnight. We had a little bit of rally. You've had about a $10 range on the E-mini S&Ps, but you have not had volatility contract yet, with the market up 33.
Yes, the dip has been bought.
Market measure coming at you.
Yes.
Sponsored. Go ahead.
Sponsored by the CBOE, but I wanted to clear up the air on some of the content that's coming up. So
Sure.
we have a quick little slide to pull up just on kind of the show times. Obviously, some things very fluid over the next couple months. Got lots of babies being born, some people coming back, some people going. And by going, I mean not on the show.
Because they have a leave of absence.
Because they have a leave of absence. This is a business here, people. So people take days off occasionally. Everything's fine. But we have daily dose. So every day up until 7:40, we come in for confirm and send. We have the trades from the research team on Thursday, if not a research segment there at 8 a.m. I mean, nothing changing there to the opening bell. Of course, you got market measure live from the trade desk and call-ins. We're still going to be doing those things. They're going to have a new little spin on them. So, just kind of same content with a little bit of a spin to it. Liz and Jenny, of course, after we get done. And then you've got Option Trading Concepts Live. Jamal is going to be taking my spot there. You're going to have a whole host of guests. Ryan, Glenn, Katie. It's still going to be the same old option.
He'll be doing that with Mike too, right?
Yeah, Mike and Jamal.
Mm-hmm.
Jamal's going to be taking my spot there. We're getting the new guys in, Gus and Errol at noon, so they're going to be going on for an hour. Some of the afternoon programming, once Chris gets back, will be kind of switched around a little bit, but we've got Jim coming in at 1 to do from theory to practice, and then engineering the trade with Jamal will be taking over that 145-ish spot. Trading charts with Tim Knight, so you got Tim Knight hanging around with us. And then we get into the last call, which we'll have like rotating guests on, give you a different perspective day to day. So it'll be a fun little change for us. And my dad has better lawyers now and has negotiated a contract 2 end to 10. So we will adjust. We will adjust. Overtime, Ilya and Dylan. Of course, when Vecchio gets back, we miss him. Love you, Vecchio, if you're listening. He will be back soon.
I hope the pregnancy went easy for you.
Yes.
Take a couple of weeks off because of the baby. Hope it went well.
Macro Money with Ilya. And then we got Dan and Shelly with the Tasty Crypto Show around.
I took 48 hours off, but that's just me.
And that's it. So show goes on. We will have some changes to the network fluidly throughout the next couple months.
And more to come, right? New segments coming, new ideas coming. I know we want to do a lot with the 0-day options. We want to do a little bit more with a larger count too. So we're going to get that all working. Just gives us a little bit of time.
Yes.
More to come. Fun stuff to come too.
Yes. Very good.
Beautiful. Good job out of you.
Now we can do your intro.
Market measure sponsored by the SIBO.
It's like you've done that a couple times before.
Once or twice. Once or twice. How many stocks actually follow the market?
An interesting one.
I'm going to say all of them.
Well, that is kind of, that is one of the key takeaways.
Sure.
So what we're going to be looking at, and just to give a preface here, when the market is up or down, it means that the majority of the stocks in that index are following that direction. Of course, you are weighted towards those bigger name stocks. You got your Mag 7s that really dictate a lot of that movement. But in general, market up, stocks up. Market down, stocks down.
Safe to say.
Yes, safe to say, and the data does back that up. So recent market moves have prompted traders to ask which stocks are tracking these trends and which are deviating, insights that could provide valuable trading edge. Today, we are going to do a research on what the majority looks like in the context of market moves and magnitude. So what we're going to kind of quantify is, okay, if the market's up X amount, how many of the stocks are up of the indices. So we're going to kind of quantify these moves as the market as a whole, as well as the stocks underneath the surface. So the study that we're looking at is we're going to be looking at SPY and all the S&P 500 components, and then we're going to look at the Qs and then the 100 stocks that are in the NASDAQ. We're going to jump to the next slide here to go to the study here. So then we're looking at the last 12 months of price data for all the components underneath the surface. So we bucketed the data in the daily percentage change in SPY and the Qs. So we're looking at any up day. So this is just like in general, the market up. We're going to look at the market up 1%. We're going to look at the market up 2%. And this is between 2 and 3%, of course. And then 3+%. So 3% and more is going to be in a bucket. And then we're looking at each one of those data points. We're going to look at that on the downside as well. So what we looked at was the probability that the S&P and the Qs made the probability of stocks, or the percentage of stocks that make up the S&P and the NASDAQ above that percentage move. We're going to look at the proportion of stocks that were up or down based on the movements in the S&P 500 and the Qs, and then the standard deviation or variation in the above two little buckets. So should be an interesting look. I mean, it's pretty intuitive. Markets up, stocks are going to be up, but we're going to kind of quantify what that number really is, and vice versa to the downside.
Beautiful.
So slide 3 here. So when we're looking at the S&P first, so we're looking at the S&P 500 here. When the S&P 500 was up, an average of around 70% of its components were up as well. So when the S&P was up more than 2% on the day, more than 80% of the stocks were up with little variation. It goes to show that if you have a big move to the upside, they're pretty much all going that way.
Yes.
If you have a big move to the downside, they're pretty much all going that way. When the S&P was down, you saw nearly the same proportions and probabilities as we saw here, but applied to the same size down move. So, of course, I mean, when the market's up, the stocks are up. You can see that as we get to bigger move to the upside, you're going to have bigger percentage of those stocks participating.
That makes sense, doesn't it?
Yeah. So getting to the next slide here, we look at the Qs. So when the Qs make small moves, about 25 to 30% of the time, and these any down days, any up days, you got to take it with a grain of salt, because that can be these inside moves, right? Like it's just telling you that, when things are green, it's pretty much the, majority of the basket here. So when the Qs move greater than 3% in either direction, over 92% of the components follow. So, of course, those big tail type moves, it's everything. Correlations go to 1. When you have these big moves in either direction, correlations go to 1. It doesn't matter. All things are participating in both the upside and downside moves.
Good job.
Do you have any questions on that?
No questions right yet. This seems like so far exactly what you would think.
Yeah.
For
the deviation is wider when you have these inside moves, which is intuitive as well.
Yes.
I mean, if you look at that 20% deviation, it basically tells you that, sometimes the market can be up, the NASDAQ can be up, and only 50% of the stocks are up.
Sure.
I mean, it's telling you that there's a wide range on any type move.
Any given Sunday.
Pretty much, yeah. When you get these tail sort of events, and when you think of this like a distribution, when you have the tail events on either side, it's all.
Mm-hmm.
It's all, everybody's involved.
Mm-hmm.
All the stocks.
The whole rising tide lifts all the ships kind of thing.
Yes. So getting on to the next slide here. So when expecting a 2% move in the market, which, is a relatively rare occurrence. I mean, that's on the tail type move.
You wouldn't think it would be a rare occurrence, but it is. 2% down or up? I'm just kidding.
That more so to the upside.
Yes. Yes.
But this is when your SPY hedges will be more effective than individual stock hedges, because the randomness of the stock movement comes into play here. If you're thinking, the point being, if you're thinking that the market is going to take a turn, you might as well trade the indices versus the single name stocks. If you look at, the recent move, and we'll just use last week, for example, the market was basically unchanged, and stocks like Apple and Tesla have been up huge.
Yes.
What it's telling you is if you're trying to play for a downside move in the market, it's best to just go to
the market,
to an SPY or QQQ,
right,
and do put diagonals or butterflies or sell call spreads or whatever, versus looking at Tesla and saying, I'm going to...
You're market leaders and you think the market's going to go lower, then that's not the way to go. You might as well just have the diversity of the S&P or the Qs or IWM.
Because they both move, the markets, all the stocks will kind of move in that direction.
Mm-hmm.
Not all of them, but the bulk of them will move in that direction. Picking the ones that move is a harder
You'll
game.
probably benefit from the move if you're a little bit more diversified with your pick, meaning an ETF, than if you were to go into a regular one stock. Your one-off is going to make it a lot harder.
Yes. And so if you're looking at just like high volatility, you're obviously going to get more of that in the Qs because there's a lot less diversity in that basket. There are only 100 names. They're all very highly correlated to the tech sector. And so, in bouts of volatility, you're typically seeing bigger moves in the NASDAQ versus S&P 500.
Good.
So the next slide here. So note the variation, the standard deviation in the proportion of stocks that follow the market direction was the smallest when the magnitude of the S&P 500 moves was the largest. Of course, this goes to exactly what we've been saying. Everything. If the market's up 2 or 3%, everything's up.
Sure.
If the market's down 2 or 3%, everything's down. Weaker moves in the S&P saw the majority of stocks follow the direction, but many went the opposite way. So like when you have these bigger moves to the downside, there are outliers where you have, flights to quality. When we're talking about being short the market and long Apple, that can be, that can go against you in both directions. A strong magnitude of move in the S&P saw nearly all stocks move in the same direction with little exception. So when you have big moves to the upside, everything goes to the upside. Couple takeaways to finish this off. So when the market was up or down, around 70% of the stocks in the S&P 500 and the Qs followed suit. Trend is your friend, I guess. As the size of the S&P and the Qs move increased up or down, so did the number of stocks that followed the move with few exceptions. So bigger moves, higher percentage of the stocks move in that direction. Down moves show stronger correlation than up moves. Fear is greater than greed. That's why they always say like correlations go to 1 when you have these big downside moves. It doesn't matter. Everybody's selling, so they kind of sell everything. Use 8 to 12% contrarian components for hedging strategies. So, if you're thinking that some of them are going to buck the trend, it's only going to be like 8 or 12% of the basket.
Right. Not going to be as diversified as you think it is. Yeah. Good little segment by the team there. Even the S&P's up 26. I do want to show you because the Dow is down around 50 points. You've got Home Depot down around 4 and change, Boeing down around 4, Goldman Sachs down almost 3, IBM, which has been on a tear, down around $1.60, and then the beloved Apple down $1.32. That's the only indice that's a little bit lower, trying to take the market a little bit lower. With the volatility is up a penny now, 17.51. We're going to take a quick 90-second break and come back. We got more Tasty Live. I think we have Quinn coming in first from the trade desk. We're going to have a couple of more guests come in for the end of the day, show you a bunch of features, and maybe some things to look at in places that you haven't looked before.
Sounds great to me.
We'll be back in 90 seconds. We got more Tasty Live after this.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock. And short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock. Like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options, profit, and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Nikki, we are back, son, and you know what that means? Well, we got a special guest in the room. Tell me who it is, son.
We got Q from the trade desk. Bring him in.
Road Warrior Q, too. What's up, my man?
Yeah, fellas, how's it going? Good morning.
Doing good. How are you?
We can't give him the dee-dee-dee. Do we have to retire that, too?
Yeah, everything gets retired.
Well, I would appreciate that if I could get that.
Oh, there you go.
We're going to make sure.
Wow.
I'm going to talk to the people out there, make sure you get that every single
Okay, Beth,
and you were supposed to give me a DDT.
I will.
Unless you want me to take that.
Boss, I didn't know. I will definitely. I will
I
definitely.
don't want to step on your toes here, all right?
Thank you. Okay, I didn't know my role.
The new regime is a team.
I got it. I love the team effort. Team effort.
Teamwork, I love it. All right, enough out of you guys.
Yes.
Top
It's
20
Quinn's
symbols.
time to shine.
There we go.
Enough out of you. Top 20 symbols going through the system, and their IVR as well. We've got Tesla at 27%, NVIDIA 7%, GLD 38%, IBIT 34%. Coming in at 5, you've got Amazon 28%, AMD 28%, Oracle 61%, Intel 58%. I'm surprised maybe that'll be a little bit higher after today's move. We got Robinhood 23%, Palantir 25%, Apple 19%, Microsoft 23%. Coming in at 13, we've got TQQQ at 22%, SLV at 53%, Micron 23%, MSTR 14%, GDX 49%, SoFi 26%, Coinbase 27%, and Goog with an L at 38%. Nothing too surprising there.
Yeah, nothing too surprising.
Yeah, pretty typical. And so what I want to do with this live from the trade desk segment is I want to come to you guys with some stuff that we see a lot on the desk that you guys might not necessarily talk about, because on the brokerage side we see a lot of different things that just don't necessarily apply to what you guys are talking about. And so today I wanted to go over trading in the money versus out of the money spreads. And so typically when we see customers trading vertical spreads, this doesn't really apply for like diagonals, synthetic covered calls, diagonals, and stuff like that. But for your regular vertical spread, like your put spread, call spread, stuff like that, you generally want to trade the out of the money options. And then this is because, one, there's more liquidity, and two, the biggest reason I think is the early assignment risk that you have with those in the money options, because typically they trade at the same price pretty much. If you're selling an in the money put spread versus buying the out of the money call spread, same strikes.
Put call parity.
Because of put call parity.
Yes.
Exactly. So that's something that we typically like to see customers do, is rather trade the out of the money options rather than the in the money options, especially due to that early assignment risk that you could have on that short option.
And the bid-ask differential too will be quite
a lot tighter.
Yeah, on the in-the-money options, the bid-ask is just the disseminated prices. Harder for you to figure out what the mid-price is. If you go in an out-of-the-money option, typically it's going to be pennies wide, a lot easier to figure out what mid-price is. So.
Yeah, and I was looking on SPY earlier at like 53 days out. Mm-hmm. If you're doing like the expected out-of-the-money call spread, if you're looking to buy that, rather than selling the out-of-the-money put spread, it's like the bid-ask spread on that put spread is like dollars wide. It's like $1.50 wide. And then, of course, on the out-of-the-money call spread, it's like 2 pennies wide.
Right. The other thing you got to worry about is dividend risk, because if you're selling in-the-money call spreads as like a downside hedge, you might not be aware of a dividend coming up, and you're at risk of that dividend, and your long call is not auto exercise. So like and that's across the board. There's no auto exercising of those options if you get exercised or if you get assigned on the short options. So the dividend risk comes into play a little bit. You might be out a couple bucks that you didn't, think you would be out.
Why take the unnecessary risk is really what it comes down to. You got a
exactly.
$5 spread on. You got $5 worth of risk. Forget about whether you bought it or sold it. It's irrelevant at what you sold it for. You got $5 worth of risk. All of a sudden, you're in an SPY that could have a dividend that's $150. Why make
exactly,
your risk $600?
Which just happened, and so we see a lot of customers get that early assignment. Let's say it started out of the money, now and it goes in the money.
It could be a positive spread. You could be up money on the spread. It doesn't. It's not. It doesn't care if you're up money or down money. You could turn a winner into
the dividend doesn't care about your P&L.
And on the flip side of that too, there's no dividend ARB anymore.
No.
I mean, it's all electronic. So I'm sure back in your day, you could, which was a million dinosaurs were
a long time ago. Yes.
You could sell in the money spreads and hope that essentially that some of those short calls would not be exercised.
Well, I would order. So if I was a market maker, and you were a market maker, Quinn, and I would say to you, "What's your market on a deep in the money spread?" You might say, $5 wide. Let's say you would say $4.98, $5, and I would say, "Buy it from you. I'll buy it from you 1,000 times." And then you would say to me, "What's your market on?" And I would say, $4.99, $5.01. And then you would say, well, I'm $5, but I would sell it to you at $5. We would scratch the trade 1,000 times, and then I would be able to intraday exercise those options, even though I had no position on. So that's the way we would do it.
You would take the dividend.
So I would trying to capture the dividend. So he would exercise his long options that he had intraday. I would exercise my long options that I had intraday. And we would hope that some poor customer, or I mean, not customer, prefer a professional because I want to get 1,000 of them through.
Well, just a leftover because you guys both have customers that are trading through you. So maybe he has 5 or 6 of them, you have 5 or 6 of them, and you hope that some batch of those 5 or 6
For no risk, people, you could try to make yourself a couple of grand.
Yeah, and then now through the OCC now it's all random exercises. Maybe not back in the day.
No, it's still it was random then too. But he would be the first one up on the wheel if I exercise 1,000.
But the customer has to call him and say, exercise mine.
Yeah,
that's a way different thing than now. It's all electronic, so it just happens automatically. So that stuff doesn't exist anymore.
Yeah, maybe tomorrow.
Yeah, the free money glitch only worked for when he was around.
For the boomers. I mean, we had
free money glitch.
Right.
That was the original.
That is the original free money glitch.
Yes.
We were entitled.
The dividend arb. Yeah, maybe tomorrow we'll get more into like when you're going to get assigned on dividend, because the assignment process is random, but when you get assigned is not random at all. There's certain scenarios. So I think we'll get more into that tomorrow on the next segment. And then also just some housekeeping tomorrow as well. We've got a webinar, live Q&A with the trade desk. You can sign up on tastytrade.com/events. I think, or tastytrade.com/demos. And I do all the demos. Like I do most of the demos. So that's my bad. Tastytrade.com/demos. This will be with Christian and Anthony, I think, if I remember correctly.
You are correct.
And yes, that will be a great one.
Recorded and sent out afterwards.
They're recorded and posted to the YouTube. We're working on actually sending it out just to everyone that signs up. That's something we're building out, but typically posted to the YouTube. And this will be really good because you could just random Q&A. Typically they're topic specific. Like last week I did a 0 DTE options one. That was super fun. Lots of people that joined. Got to place a lot of trades, talk about the different strategies and stuff like that. And then tomorrow we've just got live Q&A with the trade desk. So any questions that you got, just throw them in the chat there, and then we're there to answer them, show off the platform, all that good stuff.
Very nice.
Very nice.
Good job out of you, my friend.
All righty.
Well, thank you
very
Quinn.
much.
I'm going to let you do the next.
I will. I got a trade on an AMD while we were talking about that. AMD 28 IV rank. I sold the 140 puts out in November. I did them at 375. They're marked at like 3. They're right there. So
The
Nove 140s.
40 puts. The 375, 380 right now.
One standard deviation-ish,
Why'd you sell the puts in AMD? Just curious, stock up $3.
It was on the top symbols moving. Sure. I mean, IV rank at 28. It's not exactly high, but, you fall at VIX under 16.
And vol
and it hasn't. It also hasn't participated in the upside move that you've seen in a lot of the.
This would be the first day or so. Yes.
Yes, it's been chopping around kind of near this range. So
awesome. Good job. Good job.
Very good. Well, thank you, Q. We've got my next esteemed guest, Mr. G Money, Glenn, in the house with us.
Look at you representing the Bears.
Yeah, Victory Monday. How you doing?
Victory Monday.
Victory Monday. It's a good Monday.
Let's hope
2 and 2.
Let's hope you. Yes. Yeah.
That's a winning streak.
2 in a row. Yeah.
That's a winning streak.
Definitely a winning.
Why stop now?
Yeah.
I'm not nervous about my 8.5s, but.
Well, you sold those.
I did.
Yeah.
I did.
And not
That was a good
nervous.
sale.
Yeah. Feel bad about
Do you have to up your market there after 2 wins? Or do
for sure.
So you're giving more back if they want to buy it back.
Yes. They don't want to. They don't want to.
I'm seeing 9. I'm seeing 9.
You think 9? That's that.
I'm at 9. If you're
All right. I'll get back to you.
Call your mommy.
I'll crunch it.
Ask her if you can buy 9s. Make like you're back in junior high again. See what she says.
Very good. Glenn, what do you got for us today? You got TCFX.
And I met your mom on the road. Right here in Chicago. She came.
You like to remind me very frequently.
Yes, she was very nice. So I know her.
You keep her far away from him.
I try, but then every once in a while he hints that they're still in contact, and it just sends me spiraling.
It's Tom left. HR is still here. Okay.
You're a good egg, Glenn. You're a good egg.
You know, I'm already checking the LA weather for this weekend.
Awesome. Are you coming out with us?
Oh yeah, big.
Oh, that's
time.
great. I think it's actually gonna be a little bit cooler than is normally in LA for end of September, beginning.
78 and sunny.
Do they take you to dinner too? Do you get the dinner invite too?
I
or
do.
they-
I get Tony gets to take the leftovers to my hotel room.
We feed.
Oh, okay,
Yeah,
that's good.
they slide it under the door.
It's probably enough. I mean, for at least a meal and a half.
Yeah, no, it's good.
Yeah.
No, he gets first pick.
I know. He's a star.
I'm excited. But first, we've got an exciting week here for U.S. dollar markets. We get all the, the juicy headlines. Here we're focusing on government shutdown. Prediction markets pricing in a government shutdown this year. And we've got a deadline.
Maybe tomorrow.
approaching. Yep, we've got a deadline approaching of, I think, Wednesday, 12:01 a.m., so Tuesday overnight. We've got Trump meeting with congressional leaders this afternoon, and we're seeing a weaker dollar as a result. I crunched some numbers, did some recon into past government shutdowns, and over the past few, we've seen a consistent trend of gold moving higher and U.S. dollar moving a little weaker. So gold definitely the market to watch for government shutdowns, but U.S. dollar definitely in the story. So I looked at rolling correlations, what's most correlated to gold in the US dollar realm, and we're looking at dollar Japanese yen at 1 and dollar Swiss franc at 2. So I think there's a couple ways to play this. If you want to hop into the platform, we can take a look at those markets right now. We're already getting some of that move priced in of predicting a government shutdown. So we've seen gold rip higher. Who knew that was possible? We
So
love all-time
just
highs.
let me highlight too. So if you want to pull up a basket of the dollar, using the money sign and then DXY pulls up the dollar index, which is mostly weighted towards the euro and the Japanese yen. Those are I believe the two biggest components, right?
Yep. We're looking at around 50% euro
Of
and
the-
around 20% yen.
Okay, so it's about 70% of
And
the
then a
basket
little
is
sprinkle of everything else.
Yes, yes. So, and then you can actually trade the FX products on the left side of the platform. So, jumping back in here, you can see the little Tasty FX tab on the left side. You'll see all the most popular pairs at the top there, and you can click on whichever one you want to trade. You're thinking U.S. dollar, Japanese yen.
Yeah, so I think there are two ways to play this. If you think that this is a bit overdone, they'll figure it out. We got all the right guys in the right rooms. They'll shake hands. No government shutdown today.
See, we were talking about that as a
young man, I would think you'd be a little bit more fearful, Glenn.
No, come on,
Too wise.
just buying the dip.
Too wise.
Too wise. Makes
That's
sense.
what it
We are
is.
so going to shut down, and you are going to be pissed off.
I try.
What happens if we do shut down? Do you know what happens?
No clue.
Absolutely nothing.
Okay.
When was the last shutdown?
2019, I believe.
Okay.
People
You
lose.
survived
people
it,
lose,
right?
People
Where were you
lose
in
jobs, though,
2019?
right?
Where were you in 2019?
I was starting at Northwestern University.
Drinking some
Man,
beers in a
I think about 2019 all the time, Tony. Ugh.
Yeah, just wait another 5 or 6 more years. That itching will get even harder.
No, but people lose jobs, right? It's,
Yeah. No, don't.
They get their jobs paused.
Yeah, they get their
A
jobs
lot
paused. They get
a lot of government services.
I think
get
Congress
stalled.
they get like half their paycheck taken away or something like that.
They're not allowed to trade. Is what
During that time,
That's
during the
right,
government shutdown,
right?
they-
Which really cuts back on their income. That's why they.
So we're not getting a shut.
They quickly.
No, yeah,
come
Pelosi will figure it out.
Yeah, we'll figure it out.
So yeah, I mean, we have this likelihood priced in. If you think that that's overdone, there won't be a shutdown, and you're looking at those $2 markets.
And that kid, government people do lose their pay and stuff like that. When I meant absolutely nothing. I just meant in your small world, my small world.
Yes.
Right.
Yes.
So if you wanted to get long the dollar here, thinking that this won't shut down and we'll move right on to the next one, and you're looking at those two markets, I think dollar franc presents a pretty interesting price entry level because it's still getting hammered at those. I don't even know if we can call them 10-year lows anymore because we've been there for the past 2 months now.
I'm actually out. I closed out of this one. So
Nice. So yeah, we've had a decent uptick since the FOMC, but we still can't hold on to that 80 level. So that, I think, if you're taking the long dollar side, is interesting. And then if you think, yeah, we're 60% priced in, but we are shutting down, and we're shutting down for a long time, then I would perhaps look to that dollar-yen market. That's still pretty high. I mean, we're coming off of 150, which historically is still very high for the U.S. dollar. We've gotten a good 0.6% downtick today in favor of the Japanese yen, but a lot more historic room to fall there. So those are the markets I'd look at if we're thinking about government shutdown, dollar story. If you have on gold exposure and want to trade around it, I think these dollar markets are less volatile, perhaps an easier trade to manage if you're kind of day trading around some of these stories. But gold's where you're looking.
Very nice.
Very nice. Very nice.
All right.
Thank you, Mr. Glenn.
Thank you, guys.
That was
fun.
awesome. Thank you for coming on. So
Thank
who do we have next? We have my man. He's back. Mr. Ryan Grace. Good
What's
morning.
up, my dudes?
You snuck in there. I didn't even. You're like
The beard's a little longer too. Look at this.
I'm in dad mode, guys.
This is a dad.
Congratulations.
Yeah.
Congratulations. Thank you. It's one of the best things in life.
It is.
So tell us all about the little one real quick, and then we'll get to real business.
Yeah, he's on no schedule whatsoever. It's chaotic. My wife is struggling with some mental health issues at the moment. We're figuring it out. But life is good. No, it's exciting. It puts things into perspective, as you know.
Give us the name.
His name is Wyatt Frederick
Wyatt
Mansfield Grace.
I love it. I love it. It's like a Westworld.
It is.
Like,
it is.
I could see him as like a
like
cowboy.
Whiter. Yeah. Sure.
Yeah.
I like it.
I like
Very
that.
nice.
That's the goal. Yeah.
Good job out of you.
That's awesome.
And congratulations to the
Thanks, guys.
Yep.
Awesome.
Yep.
Will you
Yeah,
be
love
on
it.
today with Mikey and Jamal?
I will be on. It is Crypto Week here, guys, from a marketing perspective. We got a lot to talk about. We're going to be on all the shows. Dan's going to be on with Liz and Jenny. I'll be on OTCL. Dan will be on again this afternoon. You got me here today. We're everywhere.
It's awesome. Bitcoin is high of the session. Futures at 115 and change, but spots at just under 114, up 2,000 here. I mean, we got to the 109 handle. It's been something that even before you left, we've talked about kind of that 110-ish spot being kind of the bounce spot, and you're getting it today.
Yeah, getting the bounce after a correction here. I mean, over the last couple of
That was the
weeks.
correction?
I think so, short term. I mean,
How much more of a correction? You're talking about corrections. Market goes down 2%, and everybody freaks out. Bitcoin's down 10, 15%. That's a correction. That's a move.
Much bigger correction.
You know, these guys, it's never good.
It was a 1 week
Never
thing
good
is
enough.
what I'm trying to talk about.
Never
it
good
lasted, It lasted a week, and you're back at 115,000 now.
Yeah.
So.
Historically, throughout Bitcoin bull markets, and I know we don't have a ton of data to go off of, but your real corrections in there, the real buyable dips, right, outside of kind of a short-term trade, tend to be around 25 to 30%. So keep that in the back of your mind. Last time we saw that, we were down at about 75,000 in April off of those new all-time highs that we put in just prior to that. So those are what your real dips look like. If you do get that volatility in this market, it's not anything to be afraid of, in my opinion. You want to take advantage of it.
Yeah, April went from like 90, 95-ish down to 75-ish. So you had that. I mean, that was your big move.
Yep.
Ethereum as well, having a nice little bounce today, up to 41 and change. Did you scoopy some in the 3 handle?
Bought a little bit while I was away when we dipped underneath 4, but I am always trying to buy a little bit of a dip in there in terms of the longer term approach. And one of the things that we've added to the platform recently, if you want to jump over to the Invest tab, depending on whether you're on the desktop or the web, if you're on the web, on the Invest tab, you now have the ability to set up recurring crypto purchases. So if you want a dollar cost average in, get outside of this volatility of a long-term view, as many people do with crypto, there's a new feature in there. I know we've probably talked about it a little bit, but since I'm back, I've got to hit on it again, guys.
Yeah, so the reoccurring purchases, you can do them. I can't show that on this account, but we'll work on putting some together just to show that. But that's reoccurring purchases of any amount, so you can do whatever you want. The frequency is down.
Start with weekly. Yeah, you won't be able to do it by the hour, by the day, but weekly, monthly, set those up.
Awesome. Awesome. Very nice.
So yeah, to answer your question, I've been pretty active in there on the follow page, posting some trades as well. Solana has been an outlier in terms of some of the others that I've been looking at. But have some of the biggest movers for you guys. If you want to go there, you want to talk about anything else, happy to go anywhere.
Yeah, let's do the biggest movers. Let's see what we got there on our list here.
Yeah, taking a look here, the top 5 biggest movers, and as we know, these move pretty quickly, quite frequently, so they may have changed. But when I put this together, SUI, Avalanche, XRP, Bitcoin, Stellar Lumens, that's XLM there. Those are the biggest movers here on the day of those tokens that we track here were offered at Tasty Trade. So SUI up 2.5%, Avalanche, AVAX there up 2.3%, Bitcoin right around the same. And you can see down on the week, so hopefully starting this off on a good note, we'll see whether or not this continues. But I think a lot of this, again, has been driven by rates, driven by the dollar, right? If you just go back to the FOMC, the market was as dovish as you possibly could be in terms of interest rate expectations. 2-year yield got down to about 3.5. Dollar index, dollar's been weak. Glenn just talked about that. Starting to see that kind of roll back over. I think you fade that trend here in terms of the bounce in the dollar and the bounce in rates. I'm looking for rates to move lower here and looking for the dollar to move lower, and I think that supports crypto prices at large. Certainly what we've seen given the correlations in there. You've got an inverse correlation with rates and the dollar.
It didn't move the first day. It was not the first day when Powell took the stand. Market was up, bonds were moving higher, rates were coming down. Bitcoin was not participating. That was like the first $3,000 or $4,000 move that we've seen in the last like month or so. So you think that was just kind of just like a short blip, or was that, you know, more of that correlation maybe isn't as strong as it used to be?
Yeah, I mean, when I look at the last 30 days in there, it's still about 0.5, not super strong. But I think just in terms of short term, you look at how the market traded. The S&P, for example, traded into that Fed announcement for what it's worth. You're really at the bottom of the range in the 2-year yield there. You got that bounce. I'm just looking for that trend to continue, and that supports crypto prices. You're also in an environment where generally, as long as the economy holds up, crypto should do all right. It's not that environment where growth and inflation are collapsing, not even close to that. And so, you know, as long as you're not in that period, Bitcoin tends to trade pretty well. You got gold at all-time highs, and you look beyond gold too. Look at how silver, platinum, copper is starting to catch a bid. Commodities are starting to catch a bid. I don't know if I want to go there just yet
in general,
oil,
things.
but that to me reflects an environment in which I still want to be long crypto. If all that stuff was dumping and the dollar was really ripping higher, let's say breaking out above 98, I'm a little worried. Not at this point. I think you buy the dip.
Every cryptocurrency that we have is up. Like you talk about a rising, we just had a market measure on that. Everything seems to go up when it goes up, but they all seem to go down when they go down. Which is the most volatile ones?
Oh, of the stuff that we offer, the most volatile, if you just look at market cap, I guess outside of Doge, because Doge is going to be volatile, but a lot of these meme coins are where the real volatility is. So from a trading perspective, could be an opportunity there. Things like Pepe, others like HBAR, Hedera, you get some volatility in there. But yeah, it tends to be the smaller the market cap, the more that they move. But on the upside too, that's where when you're in that kind of altcoin season, you're seeing a little bit of a broadening too in terms of performance, where our outperformance relative to Bitcoin is starting to kind of widen out a little bit or broaden out a little bit. So in those environments, if you're in altcoin season, they can go up a lot more too.
Yeah, and we've on the show with Ryan and Mike and we've talked about like these products as kind of you can't really pick a winner. You got to kind of just sprinkle into the altcoins and trade them, because they move in different. They all kind of go the same direction, but the magnitude is what is kind of hard to play around. So you got to kind of be in them all in a little way.
Sprinkle the info.
Yeah. Trade small, trade off. Instead of going all in on one, you kind of spread it around a little bit, get the whole infield.
Good job.
Anything fun in the crypto space coming up that you're excited about?
Crypto Week here on Tasty Live. So every day this week, we're going to be talking about some of the new things that we've either released recently or we're in the process of releasing. We've got a lot of updates that are coming. Most recently, the ability to withdraw stablecoins has launched alongside recurring purchases. So excited about that. Just generally excited about the market environment that we're in. I think it's still a time where you want to be long here for now.
Good job out of you, my friend. Very nice to see you back. Congratulations on the little one. That's awesome. You and a family. That's great. We have a no gift policy here, otherwise I'd give you less.
Hey, understood.
But appreciate it. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with who comes up next?
Liz and Jenny, of course.
Peace.
Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Whew, let's make this quick. I gotta get going. I make $4.97 every second that I work, and if I don't clear $145,000 by the end of the day, I'm gonna go crazy.
Okay.
It's a cute dress. Where'd you get it?
Oh, thank you. H&M.
$23, 10% off sale.
That's pretty good.
Probably not worth more than $4 now. That's too bad. You got to be aware of these things. Everything has value.
Well, not everything is value.
Everything has value.
I am pretty sure I can name a couple of things that don't have value.
Go ahead, go for it.
Okay, caution.
5 cents.
Feebleness.
That's a sad one. $1.12.
I have a toughie for you.
All right.
What about us?
Me and you?
Yeah, did we have a price?
Yeah. 2 cents. We should have sold that one a long time ago.
2 cents?
Yeah, we could have made a lot of money on that one. Oops.
2 cents? I wouldn't even pick that up off the street.
Exactly. I think that's more on you than it is on me. Lord knows I'm trying. Hey, You know what, though? There's money to be made everywhere. Take you, for instance. Look at you. You're a young buck. What are you, like 37? I'm joking. How old are you?
I'm 26.
With your genetic makeup, you know, you're not putting on too much weight. I think you could sell those little lady eggs of yours and make quite a profit online. But I wouldn't wait too long. Next month, those would go down big time, especially if you keep eating the way you're eating. I gotta take off. Time is money.
Are you serious?
Yeah. Hey, look, can you get the check on this? I left my wallet in the car. I don't like to carry around bulky things. It slows me down.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on tastylive.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Dr. Jim Schultz, Central Michigan University. Number 51, because trading the Tasty Trade way, that is our minimum probability profit.
Kai Zan, University of North Carolina, Chapel Hill. Number 16, because 16 is 1 standard deviation on one side.
Brittany Sherrick, Bradley University. Number 15, because I like to carry a positive theta of 15 to make $15 a day. Whoop, whoop.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Tom versus Tony. Round 1. Trade. Massive volume. Killer trade. Surplus. Shoot. The fall. Volatility boost. Killer trade. Resistance. Straddle support. Order sold. You win.
Hello, everybody, and welcome to the Monday edition of the Liz and Jenny Show. My name is Liz Dierking. The two brunettes are Dan, our crypto man, and Jenny Andrews. Thank you so much for joining us, Dan. It's great to see you on a Monday morning.
It's great to see you both. I'm happy to be here, as always, ready to break down the crypto markets over the weekend. We had a lot going on, so I'm happy to be here. How are you two doing?
Fantastic. This is slowly becoming one of my favorite segments because you are educating us one day at a time.
Hey, that's all I can try and do. I don't know that I'm a good trader or anything, but I can help educate. So that's all I can promise.
What do you think of the big move in crypto over the weekend, Dan?
Yeah, so I thought that was
last night.
Yeah.
It was when I opened my account, everything was up.
Yeah, so it was really interesting because I feel like crypto is so bipolar. I guess as all markets are, but this is even more.
Bipolar.
Yeah.
It is bipolar. Yes.
It's so bipolar, right? And The last couple weeks, we had kind of the Fed announcement come out with the rate cuts. Initially was kind of a bullish sentiment, but quickly turned hawkish, I guess. So that had a little bit of an effect on crypto. Typically, I think this move down over the last week was we got below 110 on Bitcoin. I think that was due to leverage longs just getting washed out. We had run-ups in some of the altcoins. People got a little bit over-levered. And like I said, said before on the show, when that happens, usually we get these pullbacks, and that's a great time to hop in and maybe buy some of the fear there. So we got below 110 on Bitcoin. I think we touched like 108. The range I'm looking at is, to stay between 105 and 115 right now. So, obviously we had that recovery over the weekend. I think that was Asia and European markets kind of woke up and bought. So we're back up to 114 here. And yeah, we've kind of recovered from that initial drop of the last week, and was a good time to scale in, definitely to the majors, but also some of these altcoins that have been running recently. So like I said, I think it was just a little pullback based on some of that Fed data, some of the stuff that happened in the traditional finance markets, and looks like we recovered here, back up at 114 on Bitcoin.
So that's your current range would be 105, 115 ish.
Yeah, pretty much. I mean, that's we've been range bound there for the last couple weeks. I think the one thing that I want to bring up, and we covered this on the Tasty Crypto Show on Wednesday. We had a guest on, Greg, who's professional crypto options trader, does a bunch of volatility analysis on the crypto markets. I want to compare Bitcoin and gold. So let me get this up. Yeah, let me get this up on the trading view chart here and just show kind of how these two assets diverged over the last couple of months. So I'm looking at a 3-month chart on Bitcoin versus gold. Bitcoin is the blue line down here. Gold is the GLD ETF is the purple line. So gold is up 14%, and Bitcoin's only been up, or it's down 4.5% in the last 3 months. So we've seen this divergence, and the reason I call this out is because Bitcoin is looked at least I look at it, most of the market looks at it as a form of digital gold, right? So the fact that this divergence has happened and people have kind of been, rotating into gold, I think that there's a catch-up trade here, or it's at least something to look at, right? Because they're both supposed to trade relatively similarly. So that's where we called this out on the show, and I think it's kind of just an interesting divergence to look at. I wouldn't say like Bitcoin's for sure going to catch up or anything, but it's definitely a divergence based on it's looked at as a form of digital gold. Now, obviously, Bitcoin's a lot more risky. There's a lot smaller market. Other market structures, it's different than the commodity, but I look at it as a form of digital store of value, digital gold, and there's been this big divergence over the last couple months. So there might be a catch-up trade there.
Bitcoin's a lot more volatile, right? Like it's got a way higher volatility than your gold.
Yes, product. Yeah. So I've tracked the BVIV Volamex volatility index. It's the 30-day. It's basically the Bitcoin VIX.
Okay, that's cool.
It's been
BVIV.
Yeah.
The Bitcoin VIX. It's
basically the Bitcoin VIX index. Yep, and you can do 30 days, 60 days, 90 days. So you can kind of look at the relations over different tenors. It's been stuck in this like 30. It's been pretty low. It's been stuck in this like 35 to 30 to 40 range. So historically, it's been really low. Bitcoin volatility has come down a lot this cycle. So it's definitely more volatile than gold, obviously. But I don't know. Gold's been on a run the last couple years, so they trade pretty similarly in my opinion. But BVIV tracks the Bitcoin implied volatility. It's, as you can see here, this is year to date. It's just trended downwards, right? It's just got hammered, and there's a couple reasons for that. The Bitcoin ETF the Bitcoin ETFs and MicroStrategy has had a dampening effect on Bitcoin vol because they've been kind of like the buy. It's been like this perpetual buy for them, so it's kind of hammered down some of the volatility. And then I think we just got more flows into the space. So traditionally very volatile, can be very volatile. We definitely get these big swings than if you're comparing to traditional financial assets. But from what I can tell, Bitcoin vol has come down a lot over the last couple of years.
Okay, so Dan, can I ask you a quick question? Because the volatility has come down, does that mean that just kind of, I'm just extrapolating from, regular standard option contracts. So when the volatility comes down, that's saying it's priced, not really going to move. So does their range come in then when the volatility comes in?
Typically it does. That's why I think we've kind of seen this range bound between 100 and, over the last, let's look at 6 months here even, between 90 and 120. We've just kind of been in this range, 105 to 115 recently, the last couple months. Yeah, I think it has an effect like that. To your point, Liz, I also think because the market structure has changed from before previous cycles, you're seeing a lot more liquidity in the space. A lot more liquidity means deeper markets. It means like if big buyers want to come in and sell or vice versa, that the market can absorb it, right? There's other ways to get exposure. It all has an effect on kind of dampening the volatility of Bitcoin, right? So to your point, it does trade range bound. I still, we still get some over levered periods. It's still looked at as a risk, kind of a more risky asset. When we get these big sell-offs, usually people kind of that are speculating in altcoins or coins other than Bitcoin, they rotate back to Bitcoin. So that's why I kind of look at Bitcoin dominance. So BTC.D on TradingView is the chart. You can kind of see here that back in, let's go to the 3-month chart here. When sort of this altcoin season took effect, we started writing about it in our newsletter. We're looking at like beginning of August. You can see it. You see dominance has really trended downward, right? And what dominance means is like, share of the market, really, right? So people, 60% back in August, beginning of August, 60% of the market cap was Bitcoin, crypto market cap, and wow. you could see it's trended down, right? That coincides with ETF flows into ETH. It coincides with I wrote about altcoin season. You can kind of take a look at some of these indicators and see, where we are. So you could see it's kind of trended down, and then as the sell-off happened, right, last week, it's kind of popped up a little bit. So just indicators to take a look at and just see how the market reacts there.
Okay, Dan, so I love the Bitcoin gold comparison. Now, if we think they're going to converge, I know I would rather get long Bitcoin than short gold. But
I was going to say, with vol high in gold, is there some kind of pair where if you get long Bitcoin, you could just sell like calls or call spreads or something in gold because that vol is decent? Do you guys look at any pairs?
Yeah, I would. Those are the types of trades I would feel comfortable putting on if I'm kind of playing that Bitcoin catch-up trade. I'd probably look at the GLD kind of ETF, where we at, and then just see, maybe there is a trade to make, maybe out in the, I don't know, I'd probably go out to March.
Oh, you go pretty far out?
Yeah, I would go far out. I would go out like 180 days. And maybe like the 25 delta. You're basically playing for that risk reversal, right? So maybe like sell the 25 delta, call and finance like the Bitcoin ETF, finance like a call in the Bitcoin ETF, or play a 25 delta risk reversal. The other thing you can look at is GLV, I think is the gold. It's a gold volatility index. So GVZ.
Oh, GVZ, got it.
Yeah, so you could see
how high it is.
Yeah, so let's even look at year to date. It got, April, it went really high where we had that massive sell off in April. It's kind of popped back up here to 20. So yeah, typically, I don't know, maybe it goes higher, but you could take advantage of some of that that heightened volatility. And maybe to your point, we go a little bit closer dated and just kind of grab some of that premium. But
And Dan, I'm sorry to interrupt you, but I've got a question about Bitcoin. So you just looked at gold volatility, and I do love it because gold volatility, the pendulum swings in both directions for gold, meaning that when stock goes up, vol goes up. When stock goes down, vol goes up. So if you're getting any type of movement in gold, the vol pops up. Is Bitcoin the same thing? Where if it's up, vol's up. If it's down, vol's up. If it stays right there, vol comes in.
I don't really. Can you hold on? Are you saying that?
So with gold, gold is a very unique. Like you take the S&P 500, if the stock goes up, vol goes down, right? So like standard options. But with gold, even though it's moving up higher, you're watching it stair step up and up, can't stop, won't stop with gold. The implied volatility is still high. The gold is an asset that if you get movement in one direction or the other, implied volatility stays high. And I didn't know gold's volatility is low when gold is just staying right where it is. So I didn't know if Bitcoin was the same thing. So if you look at a chart, even with gold so high, if you said it was something else, I would say the volatility would be lower. But because it's gold, the volatility is going to be high.
Yeah. It's a good question. I mean, I definitely need to take a look at that a little bit more. I guess if I go to my chart of 30-day volatility for Bitcoin, I'm looking at last year, 2024. Price was running. It looks like Bitcoin vol was pretty elevated. And then since we've kind of been in this range over the last couple months, it's definitely come in. So I do think, but like I said, I think the structures are different, right? Like I think that Bitcoin's where we're at right now on Bitcoin with this like trend down to the 30s in volatility is due to the ETF, the dampening effects on volatility that the ETF flows have, and this MicroStrategy crypto treasury trade. That has a dampening effect on vol for Bitcoin. So typically we see it spike when there's a massive sell-off, right? Or unwind or leverages kind of leverage longs getting washed out. So I mean.
So it doesn't follow the same like commodity path as gold, but it's good. That's worth looking at, and I appreciate you.
I think like it's just interesting because the market structures are a little bit different. But the narrative or like the thesis is that Bitcoin's digital gold, right? So you can kind of look at it the same way, but I wouldn't say that they trade kind of similarly yet because just the market structures are different, right? It's just kind of a different asset class, but if we're looking at like move to safe haven assets, I would that ratio, that divergence between the two performances I showed earlier, that's kind of where I'd be looking to play, Dan,
I heard this morning the boys talking about, I don't know if it's new news, I'm usually the last to know, they were talking about the euro becoming a stable coin or the euro becoming was that new in the news that they were talking about it this morning?
Yeah, I feel like all this stablecoin news is pretty front and center for traditional finance, I guess, or traditional markets. I forget if it was Circle, one of the issuers, Circle maybe introduced the new euro stablecoin. Tether, if you're familiar, USDT Tether, which is the largest stablecoin, the first mover. They actually just announced their own stablecoin chain. So like now we're getting like our own stablecoin blockchains, right? So if you've ever interacted with blockchain networks, typically you have to pay fees in the native currency. Now everything's based in a stable pair, US dollar Tether, US dollar coin, or to your point, euro. I think we're beginning to see this kind of like convergence between the two. So.
Circle's up, over $8 today, and so I'm guessing that was because I saw it pre-market up. I'm guessing that was why it's moving.
Yeah, I think so. I was paying more attention to Plasma, which is the Tether one. This was a huge news in the space. This is obviously not on the platform, or it's Tether's chain. So people have been trading this token. XPL is the token. So Tether introduced their own stable chain. So this is like a blockchain network for stable coins. Circle, I guess Circle, if they were coming live with their US or their euro stable coin. So it's all kind of
So is Tether a competitor of Circle?
Yeah, I would consider it a competitor, but Tether's market cap is much bigger than Circle USDC. Tether, I think, owns over 50 or 60% of the stablecoin market cap, so it's just much bigger. It's really prominent in offshore markets. So most offshore traders are using BTC USDT pairs, right? They're not trading the fiat pair. Asia, Singapore, all use Tether, right? It's basically like the offshore US dollar. So yeah, it's a competitor.
If someone here on the Tasty platform wanted to play Tether, how would they do it?
You could go. I mean, this is what I was going up before. You could go buy this Plasma XPL. It's not on the platform. I'm just talking general news, right? You wouldn't be able to play Tether. Tether is not like, it's not listed in the States. It's not like recognized like Circle. They're getting there. They're working on their own U.S. regulated stablecoin. But Tether is the largest for, I guess, stablecoin market cap. So a lot of these issuers are trying to take a piece of the U.S. market and then move into other coins like euros and some of that. So yeah, there's been a ton of movement in stablecoins. I'm actually interviewing a stablecoin CEO later today on the Tasty Crypto Show. The coin is Athena. So Athena is their own stablecoin. It's confusing, right? Because there's Athena stablecoin and then Athena ENA, which is the chain. So I'm interviewing a CEO who is doing the crypto treasury trade where he acquired a public company and is buying up Athena and doing some of the DeFi stuff. So that should be pretty interesting. But yeah, stablecoins are
okay.
Yeah.
So when is this? This is today. You're interviewing him.
Today.
So live. Awesome.
Yeah.
Cool. Well, we'll tune in and listen to it.
All right. Well, Dan, we won't keep you because I know you're a busy guy, but we have 2 questions for you. Our questions of the day. If Dan the Crypto Man had to buy one thing today in the crypto space, what would it be?
Good question. I would probably buy some Ripple, and I would probably buy some Chainlink.
And Ripple is XRP.
XRP. Yep. I would buy Ripple and I'd buy Chainlink. Those are on the platform. I think we had a dip over the last week. Definitely 2 I would scale into.
Okay, so Ripple's XRP, but Chainlink, what I'm looking
Link.
on the platform.
Link.
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 L-I-N-K.
Yeah.
L-I-N-K. Okay.
Yeah, we have a couple new pairs coming to the platform too. So keep an eye out for some newly listed coins. We could talk about those, next time. But yeah, I'd look at Link. I'd look at XRP.
Okay. Awesome. Thank you very much, Dan, for your time. We appreciate it. We know you are very busy. Everybody tune in to see Dan today with interviewing the new CEO too. That's pretty exciting.
Yeah.
All right. Thanks so much, Dan.
Thank
We'll
you.
See you next month.
Bye.
We'll see you next week.
See you.
All right. Do you want to go right in the platform? Because I pulled up.
I know. I was watching you pull it up the whole time.
Oh, okay. So here, I pulled up Link right here. And you could check out this move today. Did you see that bar? The range it's had today, 19 to 25.
It's crazy. And then it came right back down to within its range. So you don't know if there was like one big buyer, one big seller in that range.
And that's Link. And then he mentioned Ripple, which is XRP.
That'll make the XRP army very happy, Dan. Dan's leading into the XRP army.
Now, we do not have IBIT and we do not have GLD. So I know
we have ETHA, though. We do have a crypto proxy.
We've got ETHA. But as far as, when he was talking about maybe selling a call in gold to buy a call in IBIT. I think we wouldn't sell a call, but maybe a call spread. I just wanted to look and see that sell a call to buy a call. It kind of like, if you're getting $3 for that, maybe here I can give up that the extrinsic value could cover the extrinsic value in that 63 call. So I see that IBIT 63 call has $3 extrinsic value. If I cover that extrinsic value with my call in gold, I can just buy this call. So basically you're outlaying, I'm spending $5.25 on this call, but I'm getting $3. So it's like I'm paying $2.25
I get what you're saying. It's very hard to do the spread in gold because that's not going to come off right away. Do you know what I'm saying? So
right.
The problem, and I appreciate where you're going with this because we can't sell a naked call in gold, and I don't know that I would let you sell a naked call in gold. But the issue is that one would come off and one wouldn't. If you're looking for that convergence, you and I both know that it's stock to stock. What do you think, Jenny, about doing? What price is GLD?
Well, what are you gonna say? A zebra? I mean, I think a zebra.
No. I was gonna say, I think I don't. Let me look at what price GLD is. I was gonna say notional to notional, just do stock to stock. GLD is 352. We sell one $352, and we buy 4 and 5 of those. 6
I
of those.
know, but we're not like that's not gonna make much. I mean, I guess like for demonstrational purposes, it makes sense.
Now, when
but
he's
it's never gonna.
when he's talking about a convergence coming back, you could do one side and not the other. You could say I'm getting long IBIT and not getting short gold because that still means they could come together.
Right. Now to your point of if we get $3 for that spread, that's not going to come off for a while. So if you're thinking, oh, I'll get $3 for that spread and close it at 50%, I'll get $1.50. Well, if I bought this in the money call, that's about $1.50 extrinsic value.
It's not bad, but once again, you're using, and I don't care because we have the capital to do it. You're using 700 and 700. You're using $1,400 to make what?
Well, you have a long call in IBIT.
No, I know, but to that I would rather. I would rather just buy that long call in IBIT than sell that. Personal opinion, if they think they're going to come together, I'd rather buy that long call in IBIT than sell and avoid the $700 in GLD.
Avoid the risk in GLD.
Yes.
Avoid the risk of the 700, and actually, right. So avoid the risk in the spread of GLD.
Get long IBIT. Get long IBIT.
I was trying to take advantage of the high rank in gold, but you know.
High rank in gold. Okay, so 1 second. It's got a high rank, correct. So high IVR, but it's still got a low implied volatility.
Right, compared to IBIT. So what Liz is referring to, so the rank is 39, meaning, it's the vol is high for itself, but the vol is only a 20% versus you go to IBIT and the vol is like double at least. So 49%, almost 50%, and also a 34 rank.
Yes.
Now, TP and I have talked about this. If you want like the 1-for-1 and you want stock but less capital, if you you could buy in the money, call an IBIT, and buy in the money, put in gold. But if you don't want the risk of both sides, if you don't want that pair, you could just do one or the other. Now, we were for a long time just selling puts in IBIT every week.
No, we would do Jade Lizard.
Oh, the Jade Lizard. And we kind of gotten away from that. Do you want to do just an 18-day Jade Lizard?
I do. And we were doing, it's kind of skewed, meaning that you're going to sell the call spread first and then buy something. And then you're going to sell there you go. So you've got 24 cents. Go buy a put for 24 cents.
And then sell a put for $1. So here we're getting, and I wonder if I can move it down a little bit. No. So here the call spread is $1. I'm using that 20 something cents to buy this put. So it doesn't, otherwise the buying power on this.
We were doing them. I know you're in the 18-day regular October. We were doing them in the 10 days.
We were doing weekly. I just didn't think I could get far enough. I'd be, 63.5 versus 62, $1.50 higher. I'm giving myself $1.50 in room on the put by going out the extra week.
Do it. Let's go with the 18-day. I think that's good. So that's neutral to bullish, taking advantage of the high implied volatility. We're actually following the mechanics. And Dan Kim, I really like the comparison between Bitcoin and gold. I really, truly did.
Oh, I did too. I did. And I'm curious, I wonder if they can see, he talked about people earlier getting out of Bitcoin and into more altcoins, and now they're seeing that change, maybe out of some altcoins and back into Bitcoin with the move down in Bitcoin. I wonder if they could see in the accounts, like if people are selling gold and buying Bitcoin, if they're taking profits in gold and putting that money into Bitcoin. I wonder if they could see that.
You're asking a question that I cannot answer.
I don't know. I didn't know. I didn't know if that's happening, if that'll start happening. Or if the people, I mean, honestly, in my opinion, the people who are in gold are probably, I don't want to say the people who are in gold are probably not going to pull their money out of gold to put it in Bitcoin. They're probably more.
I'm in both. So you're talking to somebody who's in both.
Well, I know you're in both, but you have taken off most of your long gold at these levels.
But I mean, I've taken off all my GLD at these levels. I am very long minors, very long minors.
Oh, okay. And so I thought you had gotten out of most of your gold.
I'm out of all my gold, like gold stuff. But
Yeah,
any
yeah.
type of mining thing, I'm good. And it's not GDX, to be honest with you, which is crazy. I've got Newmont mining. I've got some alternative miners. I've got a lot of that stuff because I couldn't. I'm out of all GLD because I had diagonal. At some point, I set myself out, being like, when is it going to stop? Right? Because But I am heavy into miners because I feel like those are lower priced.
See, it's interesting when I hear people around town, talk about what they're long, it's all the young people, it's all the younger people who are still in crypto, keep putting more in crypto, crypto. And it's all the older people who are still in gold. Like that's how
I teeter on both. I'm young and old at the same time.
It was so funny because in my, I'm in the fantasy chat now. So in the fantasy chat, some guy was talking about Gen Alpha.
What's
Gen
Alpha?
Exactly. So that's the new gen. So it's like if you're born between 2010 and 2025, Gen Alpha. So so that's the new
10. You'd be a 15-year-old.
So I was going to say, is it Gen Alpha that's just in crypto and not in gold? But no, it's the iGen. That's the gen before them too. Like our kids are iGen.
They are?
Yeah, the I generation. I'm pretty sure.
Hold on. You talk amongst yourselves. I'm Googling.
Well, Gen Alpha is the new gen, but I think our kids are iGen. Liz and I are not baby boomers. We're Gen X. We are. All right, anyway, I'm filled in IBIT. I'm filled in the IBIT Jade Lizard, kind of Jade Lizard.
They're Gen Z.
Oh, Gen Z. Then what's the iGen?
I've never even heard iGen. I think you made it up.
No, look up. What's iGen? Because
I get it. You don't have to spell it.
Look it up. What's the iGen? All right. Oh, and we were filled in a Lulu GTC. We had a short put spread in Lulu. The GTC hit this morning.
Yeah, push that stuff out in the IBIT, and I'll do it on the other side.
Did you find anything? What's iGen?
No.
No?
No.
I thought I thought Gen Z was like iGen.
The generation of between 1981 and 1995. It's the millennials that are iGen.
Oh, okay.
It's the millennials, right?
I guess.
Yes. Thank you so much. So in the chat, Dotter in the chat. So he's saying Gen Z and iGen are the same. So yes, thank you. I've never heard of iGen either.
It's like the information generation. They're the first generation that always had information at their fingertips from like the time they were little.
That was not us. We didn't have cell phones. We didn't have anything.
No, we weren't that. I thought our kids were. I thought our kids were the iGen.
Well, yeah, somebody's saying, so that might overlay something else. So, they have the generations. I think iGen does something else because it says 1995 to 2012. It says LGen, Jeffrey. So I don't know. Like I said, we appreciate all of the...
Yeah, thank you. Who's long crypto and who's long gold? There's some I'm gonna guess
it's me. I'm long both.
This is long both. It's those middle generations who are long both. It's like our generation is it's the Gen Xers who are long both, and then you've got in my neighborhood I've got the baby boomers who are just long gold, and I've got the millennials who are just long crypto, and it's the Gen X who are long both.
That's right.
All right. I pushed those out.
Spoons are only up 15.
I know.
Whoa, what's happening?
So today in SPX, I did the Jack Tucker, but on a smaller scale, like the 20 Delta iron condors, because I just couldn't. Sometimes I feel like doing just one side, but with the spoons were up 26. So with the up 26, I didn't want to do both. I didn't want to do just the put spread. So I did both sides, 20 Delta, $20 wide.
And I'm going to assume it's not off yet, right?
It wasn't off before the show started.
Yeah.
So no, I don't think it's off. I don't think it came off. Let's see what's going on Twitter. Let's see what people are doing today. Oh, look at Jackie. SPX 66.55 sell put spread victorious. Done for the day. 133 profit. Out of credit of 980 or so.
That's pretty good.
Yeah. Oh, so 133 out of 980.
That's pretty
So
good.
he got out very fast. So if he took in a credit of 980, he got out for like 15% or something.
So that's what, but when you have one side and not the other, so Jenny's got both sides on right now. When you have one side and not the other, all you need is a tiny pop to get out for a small credit.
Right. Which I usually like, but today when SPOOs were up 26, I thought I'll do both sides.
Yeah, true.
Bob on Fire sends in the earnings. This week's potential earnings, none today and none Wednesday, just a couple on Tuesday, Nike and ConAgra. And so this is the season of earnings setup season.
This is earnings setup season. We love it.
And we did one in Citigroup.
Yeah.
On Friday, and I did get a couple emails on it on earnings setup calendar, so we can walk through how to find them.
Yes, let's. I think we should. I want to go top down in Twitter too, because I think some other ones came in. I don't know.
Is this Carnival Cruise?
Which
Maybe
one?
It says Monday before the open. Let's see if Carnival Cruise is on the move.
I can't. That looks so small. I can't read it.
CCL down $1.50. Yeah, earnings today before the open.
Yeah. Okay. That was sneaky, wasn't it?
Monday morning. I know you said, did you say this month was like end of quarter, end of month? But
it's Tuesday. Tomorrow is end of quarter, end of month.
End of quarter, end of month. But I thought the big movers were when it actually happened at like the end of the week, where it was like expiration, end of quarter, or it's just end of quarter, end of month.
So the big one I was watching, and I'll never forget this because I was talking to Anton at the exact same time this was happening, end of quarter, end of month, and I believe it was September of last year. There was a huge move.
But do you remember what day of the week it was?
It was like a Wednesday.
Okay.
You can look back and see what it was. It wasn't a Friday because I usually have a cocktail in my hand.
And so it was September. So you didn't have a cocktail, so it wasn't a Friday.
I'm just kidding.
I'm going back just to see. Okay, it was a Monday.
Yeah, it was. I knew it wasn't a Friday. How about that?
That's why it was a Monday. That's why you didn't have a cocktail in your hand.
Yeah, it wasn't a Friday. So, but there's nothing is a guarantee. And I don't know, and Anthony and I were talking about it. We don't know when it happens, but something happened where they had to keep buying up. So SPX got bid up at the end of the day, and I made a decent amount of money on it. Like I wound up buying a call, and then I sold it, and I made like $1,000 on the call, and then I could have made $5 if I would have let it go.
I think June it ran up. One of them this year, and I think it was June, which was also a Monday, June 30th. I think June 30th it ran up at the end of the day. And now you can't just go look at the chart and see if it was up on the day. You'd have to look at the minute. You'd have to look at the minute chart for the end of the day.
Yeah, you have.
So we're not saying like run like SPOOs are going to just run up, but this was just like in the last 5 minutes of.
It was in the last minute.
Yeah.
So that's what I thought was so crazy about it. And I don't think lightning is going to strike twice. And there is no rhyme or reason with what happens, right?
Well, I mean, there might be a rhyme or reason. There might be some kind of roll that's happening.
No, but I don't, but there might be, but it didn't happen all the other end of quarter, end of months. Like I saw it that one time I was like, what the heck? And then I wrote it on a sheet being like end of quarter, end of month.
So tomorrow, basically what that means is tomorrow at the end of the day, at the very end of the day, but you'll see this. There's a tell. Here's what I want everyone to do. And what I want everyone to do is
not everyone. Nobody has to do anything.
But this is not a trade. This is not a trade. What I want people to look at, because we're not on air at the time. So at the end of the day today, in the last like 5 minutes, at 4, 3, 2, 1, look at the just out of the money call in SPX and see how much it is. And maybe it's $1.50. Then tomorrow, at the end of the day, at the same time, look at the just out of the money call, and I think it'll be like $5. Like
that's what I thought was crazy. Is it was so expensive, and it stayed expensive. It was almost like the market knew.
Yes, right. So something knows. It knows because I have seen that when you get like a normal day out of the money call in the last few minutes, SPX $1.50, and then you look at the end of month, end of quarter out of the money call in the last few minutes, $5, $6.
No, to be fair, I think I saw Kimberly in the chat. She said buy the dip until September 15th. September 15th-ish, and then short September 15th-ish, and then short the hell out of it. I said, okay, I like it, Kimberly. Just made me chuckle.
Okay, so I'm going to get back, make sure we get to everything. Nike, we'll look at that tomorrow. We might even have a Nike position.
And can we take a look at Royal Caribbean on the heels of Carnival too? I see that. Thank you.
Sure. Yeah, sure. And okay, Eric, happy Monday. IV rank dribbling back down to 13.9. I put a 7-lot iron condor at 14 delta. So he was further, 14 delta. I was like 20, 22, 65. And I made my call spread narrower just because if you look at like when you're buying, where he says 60 points wide, between the shorts and $25 wings. When you look at the option you're buying, the calls at some point become like not much different. So I was like, okay, I'll just make the call spread narrower and my put spread wider.
Yeah, agreed.
He collected 1540 in premium, set 50 point GTC. I put in a 25% GTC.
That's pretty good.
Frank, okay, pending home sales, Dallas Fed menu. Oh, I think my husband's in Dallas.
You think?
Yeah, okay, I'll give you somewhere in Texas. Yeah, he always goes to Dallas Fort Worth. That's where he goes. They have an office in Fort Worth. Okay, from the SIBO, Friday's option volume, 70 million contracts, 11% above average, recent levels. Calls leading puts 3-2. Give me a day where it says puts leading calls. It always says calls leading puts.
Well, I'm sure there are days when puts lead call, but we just don't read them. And then can you go top down too, Mikey? I agree with you.
I only drink on days that end with Y. And remember, ladies, you can't drink all day unless you start in the morning. Hey, that's funny, Mikey. Although I'm thinking tomorrow's the last day. I'm thinking of doing Sober October.
Good luck. I give you till, if you've ever seen the Seinfeld episode, I give her till October 5th. And she's like, I'm out. No, you don't drink too much. That's what I'm saying. It's not the end of the world. Like a glass of wine isn't going to hurt you.
No, I know, but I don't know. I thought about it. It's coming up. Sober.
Let me know if you do, because then I will pick up yours, just like the Friends episode when Phoebe picks up meat because Joey quits it. So I will pick up your drinking if you decide to quit it for Sober October.
Okay, and then this came in from the chat. Dan talked about WLFI and USD1.
I don't know what those are, so hopefully we can send that to Dan and maybe he can do something with it.
Yeah, right. Let's like retweet this.
So, I mean, Dan is a wealth of knowledge, but he says things that I don't really understand, right?
At Dan Cecilia. I'm going to see if he's on here. Dance. At Dan Cecilia.
You just wrote at Dance.
Dan Cecilia. He's got to be on here somewhere.
Yeah, well, we'll figure that out, but live on air.
I'll work on this. We'll work on this.
You just typed at Dance and then almost sent it.
No, but that's how he spells his Dan Cecilia. Maybe Cecilia, or is it C-I? Well, we'll figure this out. Well, and then we'll tag him on it. We'll tag him on it so he can answer.
Yeah. He might not be on Twitter.
I don't know. Maybe not. Okay. Do you want to get into some? Well, first you wanted to look at Royal Caribbean.
I do want to look at Royal Caribbean.
Hold on. RCL. See that move?
No, I didn't see that.
Because it was probably like the earnings were this morning. So Carnival's earnings were this morning. So like it was probably moving erratically. And Carnival too. Look at that. So up first. So open 32.50 and now 29.
Yeah.
Yeah.
Well, so they announced their earnings and then I'm sure they talked, and that's when things go awry.
Yeah. Does that make you want to sell like puts or downside ratio spreads because it like bounced up and now came down?
In Royal Caribbean, that's expensive.
CCL and 29. Nah, I'm not getting into Carnival at 29.
I don't want to get into this stuff. I actually want to close. I'm not channeling my inner Tom, but I'm not trading the cruise lines right now. I'm not trading cruise lines. Let's look for an earnings setup calendar. I think that sounds like a great idea.
Okay, before we do that, let's just talk about this. Do you want to close ZB? I want to look at a couple things.
Oh, and can we look at natural gas? Can we butterfly it off?
Well, we've got the working order in. It's still.
We're so close. I don't know. I don't know. Like we collected 33. We put in a 28 bid, and it's only 31. So we'd only be locking in $20. That's not enough. No, we're not going to do that yet. We're going to leave our 28 bid in. You just sit on it. Hold. Give it. I think by the end of the week, if natural gas stays up, this will be butterflied off. So what I was going to say, do we want to do the same thing with ZB? Butterfly it off? Oh, sure. Yeah, but I don't. The order in to do it. Right. So let's see. We collected 26 ticks or 20 hashtag 26 or whatever you want. We collected 26. So the 115, 116, hold on, ZBZ. It would be buying the 116, buying the 117, selling the 116. And we did this for 26. So put it in for 20. So let me see what each tick is. So 453, 437, 421, so $16. So if we did 26, then we'd be like, if we did 24, we'd lock in $32, or 23, we'd lock in about $50. Do it. Should we? Should we do that, or should we take our $85? I don't know. Take our $85. I wasn't sure. And I don't know, do these, when these expire, you actually take the ZB? Correct. That's what I'm saying. Take the $85. Because that's what I like about natural gas. Right. And natural gas expires and it just cash settles versus ZB expires and you take the bond. Yeah. Bonds will show up at your door. All right. So yeah, $85. I'm going to try to. I would take it. We just put this on Friday, so that's a quick 20% in over the weekend. Yeah, that's a quick turnaround. Mm-hmm. Okay, so we're trying to close that. Etha, we had a zebra. It was all out of the money, and we changed it to an in the money long call so that our Etha would, pick up. And I'm glad we did that. Yeah, because otherwise, our zebra wouldn't have picked up, I think, until 35. Mm-hmm. Yep. Mm-hmm. Okay, I mean, I think we're good at. I think we're good. One thing we're not in, which I think there's a lot of premium in here. I know we're not in Oklo. I know it's expensive, but so right before the show, I was looking at this. Just look at this strangle. So it's trading 117. Look at this strangle. Like you can get $5 on the 103, and you can get $5 on the And I'm not saying strangle. I'm not saying strangle because we'd have to turn it into an iron condor. But you can go, $32 up and get $5. Or 23. What am I? 20, 30, 40, 50. Oh, I'm only at the 40. I'm only at the 40. I'm only at the 40. So, and you're inside the expected move, by the way. So the implied volatility is telling you it's going to be a $24 move. Well, I mean, the reason the 120, we were just looking at different volatilities where we saw a 20 and then we saw a 50. This is 120. Yeah. So the reason the expected move is so big is because the vol is so high and the range is. What's funny, Jenny, is that, so you look at that, everything we saw was like a 34, 35, 36. This is a 37 IVR. So that means that the implied volatility in Oklo has been higher. Right. Yeah. Well, probably last week when it was running up, like the call skew was crazy. So I'm just thinking. I'm curious. Expected move. Go 95.90. Do a $5 wide. You want to get out of the way of the expected move. What can you get for the 95.90? Not $1. $1. Get $1 and $1. Let me just see $10 wide. Okay. 142. 152. That's fine. That's fine. You're 50 cents there. Yeah, $3.20. $3 and a $10 wide. It's not bad for an 18-day. Yeah. I don't mind it. I like being in Oklo. I like having it on our sheets. I just think like sometimes these movers and shakers get some decent premium, and then they then it's just it's something. And I don't want to say gift because this could be a loser, but like sometimes when that core weave and circle and all those like high flying stocks would get jacked up with premium, it was the decent play. Yeah. And I know the markets are a little wide, but. Honestly, like those new players, the core weave and circle, they're at the top of my list on P&L this year just because there was so much juice in those options. Yeah, no, I know what you mean.
So, and I feel like Oklo is getting like that, where there's just a lot of premium in these options.
It is getting like that.
All right, I'll push that out.
I already did. I pushed it through on both sides. While you were
Oh,
talking.
speedy. All right, we're trying to close our ZBL. I'll just let that work. Now,
Wait, hold on. There's something else I wanted to look at. No, not Intel. It was, the ETH is the other one. There was something that was 40%. Oh, take a look at RGTI, Rigatoni, the trade page.
to see if we could butterfly it off.
Yes. No, we can't though.
No, we took in we went, okay, so we took in $1.10. If we turn this into a butterfly, we'd pay $1. So we're only locking in $10.
We only have a $30 profit right now. So this is the true for every gimme there's a gotcha. You can take your $30 and close this trade. I don't know if it was a lot of capital, or we can use it and butterfly it off. I just wanted to look at it.
I mean, honestly, you could, if you buy the 23, then we took in $1.10. So then we're guaranteeing $35 if it stays above this, but we have the chance of making more.
I don't want it to go down.
Well, then we just leave it on for more than 30 bucks.
No, I don't want it to go down if there's any risk to the downside, because there is.
Just $1, not even 70 cents. Because you'd lock in 35 cents, you'd have 70 cents, you'd have 65 cents in risk.
Yeah, I don't know. I mean, if you could butterfly it off and take in a decent credit, I think I like that.
So I guess we'll just close it, take our $36.
Yeah, I mean, we might as well.
Or do I put in a GTC for 50%? No, it's going down. Let's just take our, close it. It wasn't really using much buying power. If we wanted to stay in this Rigetti, we could, we could going out to no if we're going through earnings.
You're going through earnings, yeah. I believe that's what's your assumption.
Your what?
I believe that was a what's your assumption.
I think so. So that was a quick trade. Okay.
Yeah, and I'm pushing everything out, so don't worry about it. You can keep.
And Citigroup, these were the those earnings setup calendars. Ooh. So one of them, you see it's moving far from it. You see what happens? The calls, the puts aren't really doing anything because it's not far from the puts, but it's the calls that are losing because Citigroup is moving farther from the calls.
Yeah.
Okay.
What is that call worth? What is that 105 call worth? 47 cents. Okay.
Yeah, it's still 47 cents.
Okay.
All right. So how do we find, we don't have a lot of time, but how do we find earnings calendars?
Oh, we're filled in ZB.
Oh, okay, good.
I'll push that stuff out. Go to the watch list. It's the usual cast of characters. It's going to be.
So I just am pulling this up to see. Okay, so October expiration is in October 17th and November expiration is the 21st. So basically you want to find on the watch list stocks where the earnings dates fall between October 17th and November 21st.
So you need the earnings date to be, and it gives the days.
Or before the November 21st.
Yeah. You want it to be under 53 days.
So all earnings. Oh, that's just that's just this week, I think. Let's go to tasty default.
Yeah, normal watch list.
And then earnings. So
there's your dates.
So so everything on here falls before the
before November something, right? So here we can look at IBM because it's IBM's not bad. Meta, Microsoft, they're all out of and Starbucks is usually one.
Starbucks, we have some short puts in Starbucks, but we could look at that. Apple's only $250, so not bad. And even Amazon at $220, it wouldn't be too much. Disney at $114 won't be too expensive.
Oh, I like Disney. Let's go to Disney first.
Okay, Disney. Trading 113. Now, 110 or 115.
What's the closest day at the monies? Oh, it's right. I would say 115 is closer to the at the monies.
Yeah. Okay, so if I buy the 115 in the 53-day, and then I'll look. Am I getting anything? I'm getting $2 for it in the 18-day. That's not bad.
That's not bad. I would press that button.
No, that's not bad. And again, how do we assess what this could be worth? If we still are right around here, when the 18-day expires, that 53-day will have 35 days. 35 days. So this
32.
That 115 is 285.
Well, you're paying more for it because you have bought something that's got a higher implied volatility. That doesn't necessarily work with the earnings setup calendars. We've talked about that before.
Right, but I guess it would have 3 more days, so probably be close to 309. But what we're planning for is this vol to keep increasing.
Yeah.
25 rank in Disney. It doesn't look as good as the Citigroup did.
Yeah, I mean, this doesn't look bad though. That's what we're used to. And if you want to make it more consistent, go to the 25-day instead of the 18-day.
Right, that's true. That's true. So then 310, if I move the expiration, 265.
It's exactly what we should see, because then in the 25 days, it's going to be worth 285. Sure, do it.
Okay. I mean, that's not that much. There's not that much to risk in an earnings setup calendar.
Oh, I can't believe Spoos are only up 13.
Well, it's not. They've had a pretty tight range, right?
I know, but it's still kind of nuts. Like they could go down in the day.
Well, I mean, they could, but I don't think it's been like a crazy day at all. Look at the range. It's mini.
It is mini. It is very mini.
665, 662, 30-point range. Not even 25-point range between the high and the low.
Yeah, I mean, I thought we were up so much this morning pre-market.
Yeah, I mean, this Mondays, thinking
the Dow and the Russell are both red.
When I was in the shower this morning, I thought to myself, it's Monday. We're not really moving much. I'm going to Jack Tucker it. And I was going to like level up. And, but then I couldn't pull the trigger. I did my little baby size.
She's pumping herself up.
I'm gonna get out there, and I'm gonna do so many of these SPX 0 DTEs. And then when I got in the platform and pushed the button, I was like, okay, I'll scale it back.
And good thing you didn't, because we're gonna go red on the day.
I still think that my puts are probably right there. It's probably right there.
What are your puts?
I'm not in that account, but I'll tell you. I'm gonna look at it. Let's see where they are. And they were the 20 delta put when I put them on.
I believe you.
Okay, SPX. Oh, it's gone. It's all gone.
Ooh, congratulations on your wealth.
I know. My puts were the 6650.
6650?
Uh-huh.
Oh yeah, they're right there.
But the whole trade is gone. I put in a GTC for 25%. So that was fast. Honestly, I didn't expect that. I expected it to be a loser right now.
Yeah, I mean, if you're looking on your phone, I would look at the platform too, because I still think it might be there.
No, it's gone. I could see. I had the working order, and then it's gone. It's closed. So 6650 were my puts at the time. Spoos were up 26. I don't know. It's off for 25%.
That's good.
Yeah. Let's see what Blue Wackadoo has to say. Maybe his are off too. Sometimes they'll chime in when they get filled. Frank, this comes from Lisa on YouTube. What are your management techniques for a zebra when stock breaks through the long strikes?
So that's the downside. That means that's the downside.
Mikey, I can't believe you have no faith in me.
Jenny, we've seen this. I mean, honestly, we've seen this movie 14 times.
Oh my gosh.
We've seen this movie 14 times.
Okay, here, we've got an example. Do you want to go through our example of what to do with a losing zebra?
Absolutely, but we've got about a minute and a half to do it.
Okay, I'm going to go to Exxon because I'm going to flip this. Exxon. Now, this is a zebra that was a wing zebra and we ratcheted. Now, with Exxon, it's at the longs. So she's saying when it goes through the longs or to the longs, and now those longs are all mostly extrinsic value, $6, and then
you have more extrinsic value in your longs than you do your shorts. This is when it all flips. So this is decision point. So keep in mind, a zebra is a stock replacement strategy. So when your longs become the at the monies, I say if you want to continue the long position, you have to reestablish. If you want to leave it right here, great. Right? Do you see what I'm saying? Like
when you don't want to throw any more money, if you don't want to throw any more money into it, then you can leave it. But if you don't want to throw more money, if you want to put more money into it and keep your long going, then you could reestablish.
So in ETHA, this exact same thing happened to us. We closed the zebra and bought one long call.
So let's look at what extrinsic value we have here. We have two of these, so $1.70 twice. So,
330. Yeah, 320.
Yeah, 340, and then that minus that dollar. So we've got like 250 extrinsic value. So we know we could close this whole thing and we're getting like 250 in extrinsic value back, and I can go buy a call with $1 in extrinsic value, and I'm just collecting more money than I'm outlaying, and just have a long call. That's what we did in ETHA. That's what we did.
You do this because the extrinsic value is working against you. If you leave the 1417 position on, you're not making money 1 for 1 until the stock gets back up above 117. You have to either reestablish the zebra or create a different position if you want to continue that stock position. Zebras are great when you put a bullish trade on and it goes your direction, then you ratchet it up. This situation, we did ratchet it up, but I think we should switch it to the long call.
Because you're not outlaying any capital, and now we only have $1 extrinsic value in it instead of 250. So we're getting 250 extrinsic value, and it has to go up so far to kick back in. Versus this long call will kick back in minus that $1, but we're getting that 250 in extrinsic value. I kind of like this, like adjusting a losing zebra to just a long call if we're not outlaying anything.
You're not outlaying any additional capital, and it doesn't have to go up as much. I actually do kind of like this, but you got to catch it. So the one thing I was going to say is you got to catch it when the longs become the at the monies.
Because that'll give you kind of the most extrinsic value. So now we didn't outlay any capital, but if Exxon turns around, it's going to pick back up sooner.
Right.
Okay, that's done, and we're out of time. It's 11.
I know. Fastest hour of the day, done and dusted. Everything is pushed out. I just pushed out the XOM. So we are done.
All right, everyone. Thanks for tuning in. Liz, have a wonderful afternoon. Everybody remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you live from the SIBO tomorrow.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
I think I've always been interested in finance. I have a degree in management and I took a lot of heavy finance classes, and I've always loved it, but I've always done passive investing. And so as I went through life, I decided that I needed to have a bit more control over my finances. I started to dabble in the options world when I opened up a brokerage account in probably 4 different companies, and none of them worked really well in terms of education until I got to Tasty. You know, and tastylive in particular because of the educational background that they tie in every single day on how to learn how to trade options. It started with the Where Do I Start series. It's outstanding. Tasty Bites, market measures, from theory to practice. I don't think there's a show that I don't like, to be honest. You know, that education piece is highly important. I found that Tasty offered that.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
What's up, everyone? Welcome back to the show. This is Options Trading Concepts Live. We are streaming live on YouTube. If you want to join us there, just head over to the Tasty Live channel. It's a new look. We got Jamal in the house. We got Ryan back. Fresh dad energy. How's it feel?
Feels good, yeah. Tired, sleepy, but generally I'm trying to come at it with a positive outlook. I'm excited. It's good. It's also good to be back. It's good to be back here. In the studio.
First kid, right? First kid.
That's right.
Yeah, I mean, you're not sleeping much right now.
Not much. Surprisingly though, last night I got a little bit of sleep, so I felt good coming in today.
Kid was born a month ago, right?
Yep.
Yeah, or this month. Sorry, earlier this month.
Yeah, September 2nd.
How is your diaper changing technique? How is?
I've gotten pretty good. Yeah, I'm efficient. I think the key is you've got to have everything ready to go before you dive in. You can't be looking for it.
No.
You might catch a shot. You know what I'm saying?
Well, I'm trying to think. So I got 3 kids. The last baby I had was born in 2012. It's been a minute. I'm curious. Because we used to have like. We had the wipes. You also have like ways to warm up the wipes too.
Yeah, I'll have one of those.
Okay, you have a wipes warmer. All right. Yep. See, the things haven't changed too much, Mikey.
High tech.
High tech. I mean, that's cool, man. I mean, having kids, it's fun. Since it's just us talking here, nobody else is listening. This is actually not the fun part for the guys. Like when you have a kid, they just, they sit there, they coo. The women love it because they feel needed. Us, we're like, you want to rough and rumble, and you can't do that right now.
Yeah, they don't do too much at this stage other than sleep and eat, and then you have to change them. Any advice that you have for me, Jamal?
Keep the kid at this stage as long as you can.
Yeah.
Because it only gets worse from here. If they don't listen to you, they talk back. This is the best time. Enjoy it. Enjoy it.
Yeah, that's what a lot of people have said. Is just really try to enjoy this time where it's hard work, but you're gonna look back and it's gonna be like, oh wow.
Yeah.
How did that go by so quickly?
Yeah, it will.
Amazing stuff. Love it. Love it. The gang is back together. Crypto. I mean, I was laughing this morning because I'm like, you're back. You got the new dad energy. The Bills are 4-0. Bitcoin's up 5%. Like this is going to be just high energy all around.
I went away. The market took a little bit of a dip here. Yeah. We can talk about the pullback, some of the drivers behind that, I think more macro related. But yeah, it's good to be back and kind of starting off hopefully on the right foot here with the bounce in the market. And to your point, Bills 4-0. I'm feeling good about that. Did you guys watch that Chiefs-Ravens game? My wife's from Annapolis, Maryland. I felt bad for the Ravens fans.
I mean, I thought that was going to be a massive game for Lamar after his little dud against Detroit, but they just got smoked again. So there might be a little shift here that we should be worried about if you're a Ravens fan.
Yeah, I'm not happy. I have Lamar in 2 leagues in fantasy. So, yeah, I'm a little worried about the hamstring situation. We'll see what happens. But, yeah, they got handled. I mean, seriously, it was you guys are 4-0. You're looking well. Bears pulled one out yesterday. We typically we lose those.
We have in the past.
Yes.
But times are changing.
It's pretty awesome. I liked it.
But yeah, it's been a good weekend, fun weekend all around. But the markets are back. Bitcoin up nicely. Markets were up significantly higher than they are now. Bitcoin has kind of held its line in the sand, up 5K in the Bitcoin futures. Just a quick market rundown before we dive in. E-minis up 12, NASDAQ up 100 only. Those numbers were closer to 3 times that earlier this morning. Dow and Russell down. Gold can't be stopped. It's absolutely insane, just skyrocketing higher, closer and closer to 4K in the futures. It feels like it's only a matter of time before that happens there. But silver following suit, up 1.2% as well. Both of these charts look insane. As for the downside, not much to speak about from the futures realm, but things can change pretty quickly. Oil down 2.3 points, down almost 3.5%, just over that. So seen a little sell-off there, but everything else is up and to the right, it feels like.
Yeah, up and to the right. I don't know about you guys. I'm not really interested in getting in front of this gold and silver move at the moment. I'd rather do it. If you're going to get short, I'd rather get short into the weakness. I mean, this is just so strong right now, and it's narrative flexibility. I mean, it doesn't matter if there's something that's supposed to typically be bad for gold or silver. They're going up. If there's something that's typically good for them, they're going up. So I'm just going to wait a little bit here.
Yeah, I tried to fade this move with a really long-term position in GLD. So I bought the 345, 335 diagonal spread, but my long option's out in December and the short one's out in November. So this move isn't great, but it's not really moving the position that much considering the long-term nature of it. But yeah, I hear you. I mean, it felt like a week ago that it was going to be at its high, and now we just keep plunging higher. So
yeah, no signs of slowing down. And I would even focus attention on, as you mentioned, silver, but look at the move in platinum as well. That looks like it's going to go to 2,000. It was 1,300 just a couple of weeks ago. Look at the move recently here in copper as well, /HG. You look at gold miners, GDX, junior miners, GDXJ. There's just really no signs that you're going to see any weakness here. I think, like you said, Jamal, you want to trade with the trend here. It's just not an environment in which you're going to see lower gold prices immediately. If anything, you're going to see the opposite of that. And I would argue, look at the move in the 2-year yield, the move in the dollar index here. You had that pop after everybody was as dovish as you possibly could be with the 2-year yield hitting 3.5% going into the FOMC meeting. You've got that kind of move that you want to fade now here. I think that trend to the downside continues, which should support metals and also should support crypto.
Gold's been one of my best winners on the year, mostly from being long. Like I mean, that's, and the few times I tried to short it earlier, didn't really work. So again, that's the main reason why I feel like the I feel. But to prove your point, like copper all of a sudden catching a bid once again now. It was really suffering right after the big sell-off, after what happened, and and then now all of a sudden it's starting to catch a bid again too. So you got to wonder at some point when this all slows down again. And again, it did slow down for several months there. I mean, you can look at the gold chart. It slowed down for a while. It was basically trading sideways, and now we're kind of bid again. So yeah, I have no position in either gold or silver right now, just kind of watching from the sidelines.
Yeah, I think when you think about this holistically, it feels like the E-minis and NASDAQ, more specifically the E-minis, having a hard time getting above the levels that we set last week, while the metals, crypto seem to be skyrocketing. Maybe this is smarter heads prevailing, saying, let's get out of this while we're at highs and move into something that we could see more sustained growth in. But yeah, crazy move, quick moves in a lot of these products, but not to be surprised with the move in crypto, specifically Bitcoin. All things considered, IV rank, implied volatility is on the lower end, but 5K, 6K a day is still well within the cards.
Mm-hmm.
Yeah, I think that's a great shout there. One thing to call out, and we'll see this as we go through some of the slides, really low volatility across the board. When we look at 30-day realized volatility in crypto, you can look at implied vols with IV ranks that are near zero here, depending on the time frame that you look at, but very low volatility going into a period of time where, at least historically, you do have a little bit of a seasonal component to it. For whatever reason, crypto has performed pretty well in October. We've joked about it being Uptober here on the show at times. So we'll see whether or not that continues. But again, I think the environment, the macro environment supports it. You certainly have interest rate cuts when you look at probabilities over the next couple of meetings here. That should support it. A growth in inflation kind of backdrop in the economy that should support it. And so we'll see if it's Uptober or not. But again, interestingly, vol has been very, very low, and you could see that shift quite dramatically here in the short term. We'll see.
Well, for the most part, I mean, this is probably the most, probably the lowest monthly vol in crypto, right? Ever maybe, because just of the adoption, right? Like, how long has it been since the ETFs now? Has it been 2 years already?
The Bitcoin ETF was approved and launched, I believe, in January of 2024. And then you got the ETH ETF maybe close to a year afterwards. Don't hold me to that exactly. But yeah, they've been around for some time. And to your point, Jamal, you've seen these massive fund flows into these products. I think it's taken away from some of the activity and some of the volatility that we've seen elsewhere in the crypto market at times, but also has definitely resulted in more muted volatility just given the profile of the investors, right? These billion-dollar flows that come in on a daily or more so weekly basis from large institutions, it's pretty sticky money. They're not here for the next 3 months, 6 months. They're here for the next 3 years, 6 years in terms of how those investors typically allocate.
Yeah, I'm just looking at the chart, and you go back to that this what basically touching all-time highs like on the 13th of August, right? 13th, 14th. We had a downturn since then. I don't know off the top of my head, what, 10 grand of downturn. Normally, like That could have been such a bigger, deeper drawdown, I feel like, 5 years ago in crypto, and everybody been like crypto winner and just like all this stuff, right? And now it's just like, oh, it's just a pullback, just like any other pullback that like in the market.
Yeah. You typically have seen, at least in this environment, in this bull market that we've been in crypto or in Bitcoin, you've seen those buyers show up almost every single time. And I will point out that historically, when you look at bull markets and you try to gauge what is a correction, a real correction in the market, historically they've been about 25 to 30%, and that's still within a bull market. Now that can certainly materialize into something that's a much larger drawdown. If it does, you do then see, or you have at least historically seen crypto go down 60, 70, 80% in some cases. I think, and maybe to the point you're alluding to here, that going forward, while you're still going to get that type of volatility, I don't think those drawdowns in Bitcoin necessarily are going to be 70%. Could get 50%, absolutely. Could we go from 100 to 50 back to 150? You could see that. That is the realized volatility that we experience. But I don't think that you get an environment now with the types of investors that are in this asset class where you have this forced liquidation and this deleveraging that takes you down to 20,000 from 100,000.
Would you call Bitcoin a child? Was it a toddler? Is it a teenager? What is it considered now, you think?
It's maturing, absolutely. But I think it's still early. It's in an adolescent stage, even though it's been around for, well over a decade at this point. But I think, again, it's still early. When you go back to the idea or the discussion that we've had around, okay, when were the ETFs launched? 2024. So you really haven't seen the participation that we're now starting to talk about on a more daily basis up until just a year, 2 years ago.
Yeah, I agree. I think the initial goal, we'll say, was Bitcoin hitting 100,000. We got that. And for me, that was more confirmation that this is likely going to be maybe a near-term floor or around that level. But like you're saying, it feels like it's been around forever, but it still hasn't been widely adopted and pushed through all of the levels that it could. And given all the issues with inflation and US dollar, everything, you could see this continue higher quite significantly. And there's a lot of smart people that are calling for multi-100K Bitcoin in a year, not even.
Yeah, I think this, and you're seeing early signs of it, but I think this just becomes, again, as it probably is for a lot of us that are trading on tastylive, this is just another asset class that as an investor you want to allocate some percentage of your capital to, right? There was a point in time where allocations to commodities and that profile of those exposures in your portfolio, that wasn't a thing, right? That was more Wall Street, that was over the counter, and that was very institutional. Now we have every ETF product under the sun, and even 5 years ago, there wasn't a way to get exposures to all commodities via ETFs. So you're seeing just a broadening of access. I think that continues with crypto. Up until recently, there really weren't any publicly traded crypto companies you could invest in. So that's, again, another sign of how early it is. You have a couple more that have gone public here recently, but prior to that, it was really just Coinbase. And you still don't really have broad-based regulation, right? We got some stablecoin legislation. There's some things that are making their way through Congress. But again, I think that speaks to how early it really is. And this is just an asset class that's going to ebb and flow based on more of the macro, what the liquidity profile globally looks like, what the Fed is doing. And it's something that you're going to want to probably have in your portfolio over the long term.
Absolutely. We are streaming live on YouTube. If you want to join us there, pop over to tastylive. I've got the Cherry Picks newsletter pinned at the top of the chat. Get that for free. I'll throw in the Tasty Crypto newsletter as well. Yet another free newsletter. Got to sign up. Every Saturday it comes out with an update on Wednesdays. And yeah, let's flip over to the slides. Let's see what Ryan's got for us from a crypto market update. We'll walk through all the sentiment, all the numbers here, and then we can pop over and get your questions answered along the right-hand side if you're joining us on YouTube. But yeah, crypto update. Ironically, it feels like not much has happened until today, the day that you returned.
Yeah, I was just going to say that. As I was going through these slides, the last time that I was on the show with you guys, I think was right towards the end of August. And The numbers haven't changed much. The volatility column here has gone down a bit. You'll see momentum on a kind of shorter term time frame here has shifted to bearish, as we've talked about. But you look at the month of September, not much has happened. You've had a pullback here. So as we look at some of the majors that we track in terms of the larger market cap tokens, Bitcoin popping up to 114, traded as low as, let's call it 108 and change, I believe. So there's your weekly performance. But what I want to focus on is that longer term or kind of intermediate term trend, more so 3 months and more. We look at the price momentum on a weekly and monthly basis, measure that through exponential moving averages, and when they cross over, pretty simple approach, but it keeps you on the right side of the trend. When you look at that on a 3-month basis in terms of performance, we're still in that bull market. I don't think anything's changed. You're going to get dips. I do believe that those are buyable dips. They have been up until this point. When that changes, you'll see that shift, and that's going to show up on the weekly. It's going to show up on the monthly. When that happens, we'll let everybody know. But ETH retook 4K. Solana dipped below 200, back above that. So again, the dip buyers are showing up. XRP is trading better. And what I do want to point out here is year to date versus Bitcoin, the way that we read these columns, Bitcoin's up 22% year to date. When we look at what's up against that on a relative basis, okay, ETH is up 4% versus that, so it's up 26% year to date. What you'll notice here versus what we've covered previously, at least with some of these majors, is you're starting to see a broadening of that outperformance. Whereas before we talked about it's Bitcoin over everything, Bitcoin market cap dominance. You're starting to see that shift, and you have seen that underway for a little while now since that pop in ETH where we got to new or near all-time highs. But that's starting to occur when we look at Bitcoin Cash, we look at XRP. You're seeing that in some cases in other pockets of the market as well. But that is one thing to point out here. Additionally, volatility is very, very low. But aside from that, not much has changed, guys. Again, I think this is something where you just stay on the right side of this trend for now. You're not going to be able to time the market perfectly. But this is, again, something that I want to be long and buy dips in this environment.
Yeah, and
sorry, you got.
We've covered Ethereum relative to Bitcoin, and like you said, Ryan, it was always Bitcoin over everything. But it's interesting to see Ethereum up 4% additional relative to Bitcoin, but also XRP. And I know we're going to talk about stablecoin, but seeing a lot more headlines around stablecoin, like with PayPal and the ability to send money back and forth through other apps. Is this the next wave that makes a lot of sense to permeate through our traditional finance and how we send cash back and forth?
Yeah, absolutely. The efficiencies gained from blockchain networks from a settlement perspective. You have crypto transfers here at Tasty Trade, for example. You have stablecoin funding. Recently, we just released the ability to withdraw stablecoins as well. That's instant 24/7. When that starts to permeate the entire financial system, which it was just dependent on legislation passing, which passed, you're now starting to see signs of that. It's no surprise that stablecoin or total stablecoin market cap is now about 260 billion. I think you're going to see that at $1 trillion, maybe more by the end of this decade. So I think that continues. That brings more and more activity on blockchain networks. That's certainly bullish for crypto in terms of asset prices, but the adoption of the technology, which drives those asset prices at the end of the day. And so that should continue. It's going to be volatile. It's probably going to be less volatile than it has been historically. But I think when you look at the stablecoin flows, you look at TVL and DeFi, are more people locking up capital to participate in DeFi activities on chain? Yes, those are all positive and bullish signs. And I would, again, expect that to continue. That is the kind of larger macro trend here when we look at flows.
First of all, I need that shirt. Bitcoin over everything. We need to make shirts like that for sure. Second of all, two things stand out to me on this. I'm actually surprised that ETH vol is not around the same as like XRP or Litecoin. I would figure that would be in the 40s. I mean, I would expect it to be higher than Bitcoin, 40 to 50. I'm surprised that it's like 63. Does that seem elevated, or is it just?
Well, to that point, Jamal, if we jump to slide 6, one thing I want to point out here, call out. In the performance dashboard, that ETH vol that you're seeing is an implied volatility. So we do have implied vols for a handful of tokens, Bitcoin, ETH, derived from the options market, as everybody knows. The rest of these are realized vols. But if we go to slide 6, which is going to be expected moves, is just one more back there, you'll see that we have the realized volatility for ETH, which is 48%.
Okay.
So to that point, to your point, it is right around where some of those other tokens are, and these are very, very low. When we look at the implied volatility, IV rank for ETH, it's close to zero, not quite. Bitcoin, a little bit lower there. But if you were to rank those realized volatilities, they are basically at zero. And where could they go? Well, we've seen ETH realized vol 70, 80%. So you could get a doubling, and that could happen very quickly. That takes your expected moves in many cases from 400 to 600, if not higher. We have a Bitcoin expected move on a $100,000 asset that's $5,700. That could easily be 10,000. We haven't been in that environment for a while, and people haven't really been as used to it. But I think it could certainly come back. But volatility is very, very low when we look at our vol dashboard here.
Yeah, and what's interesting about the vol is that we have seen it time and time again. When you get the big rips to the upside, that's when vol has expanded. So could be interesting if we do get that for sure.
I mean, that's really awesome. What does that remind you of? It reminds you of like gold and silver in a way, right? Like they're currencies, but they're almost kind of like commodities, but they're kind of like currencies at the same time in a way. So it's kind of fascinating to see that. I mean, they just operate differently than most of the asset classes we look at.
And I think that's really the reason why you're seeing the outperformance in gold and silver, right? That's an excellent point. A lot of times they're viewed as commodities, but you have to probably think about them more as currencies, given the interest rate drivers and what you're seeing is driving gold for sure here at this stage, especially ahead of these pending rate cuts. I think you're going to see the same thing over time, or you see flashes of it in the crypto market.
What a year where gold and crypto are outpacing the stock market. Like, just think about that.
Crazy.
What a year.
Yeah, I think if this is right, I've got gold up just in the last month, 12%. Year to date, gold is up 46%, Bitcoin's up 21%, but the Nasdaq's still up 17%.
Yeah.
You want to be long assets, guys.
And it doesn't matter which one.
Yeah, exactly.
Craziness.
So yeah, a couple more slides if you want to just hit on these for a second. But like we mentioned, not much has changed. Again, here you've got a dip. We have seen over the last month price momentum short-term flip bearish. As we typically see, you go through these, the larger market cap tokens tend to trade a little bit more constructively at times, or they have, versus some of the smaller cap stuff. So we're looking at some smaller cap tokens here, a little bit worse performance. You see more of that underperformance versus Bitcoin year to date. But in those environments where it just goes crazy, as we've talked about, we've seen some crazy shit happen, that outperformance can flip from down 65% versus Bitcoin to up 100% versus Bitcoin in terms of that relative performance. So just keep an eye on that. Going to, I think, slide number 5.
Wait, hold on. Before we go anywhere, hold on. I got questions, okay? Like, I know some of these really well. The other ones I don't. You got to tell me, Ryan. Like, I know Cardano, ADA, right? That's Cardano. I know SHIB. I know Link. I know Stellar. I don't know the other ones. What is AV? What is that?
So Aave is a DeFi protocol. That is a protocol that allows users to borrow and lend. So borrow against their cryptocurrency as collateral, lend and generate a yield on that. There's no third party or intermediary. It's person to person. It's permissionless and decentralized. And what's beautiful about that is it's all driven by smart contract logic. So you can essentially tap into these decentralized banking services or financial services using the collateral that you have, and it's all automated in terms of when loans are going to be liquidated, how it works from a risk perspective. That's the Aave protocol. And there's a couple others that are like that, but that's one of the biggest ones. And that's used by institutions. It's used by people all over the world. But it's used in a way where, for a lot of people, if they don't have physical property, they can't take a loan against their home if they don't have a home. This is a way, and this is when you look at DeFi, this is a way where if you have digital property, you have digital collateral, you can borrow against that. And the risk is all mitigated through smart contract logic. What do I mean by that? It's mitigated through code. So it's rules-based, it's objective. You can take out a loan, and it might be 50% of the collateral that you have. If a asset that you're borrowing against goes below a certain level, that's liquidated. So, the lender on the other side is protected. It's really interesting in terms of how all of this stuff works, and then you can borrow against your property, your collateral, you can use it elsewhere in DeFi. But that's what Aave is. It's a DeFi protocol. It's one of many that are out there.
God, he's so goddamn good, right? Can we get the applause button? Jesus Christ. That's great, dude. But that's amazing. Thank you. Come on.
Thanks.
Come on. This is why he runs crypto. This is why. I was just curious. There's some of these other ones I really haven't heard much about, but
we have a mix. So when you look at the offering at Tasty Trade, these are all the tokens that are supported by the third-party crypto service provider here, which is Zero Hash. And when you look at the tokens, it's a mix of these DeFi utility tokens or governance tokens that kind of in a way represent shares in the DeFi protocol or the ecosystem is probably the best way to think about it. If a DeFi protocol is a company, this is kind of like a share is probably the fair way to look at it. We also have tokens that are meme coins. So Shiba Inu or SHIB there. Chainlink is a protocol, that's an oracle. From a DeFi perspective, again, I think that's another one that you want to keep an eye on. It's had a little bit of a pullback here, but should we get regulation that allows them a lot more capital to participate in DeFi and really legitimizes it more so, I think there's a handful of these that real world use cases in that sense that should just benefit from that environment. Chainlink being one of them. Aptos is a blockchain. Sui is a blockchain. These are layer 1 networks. In some cases might be similar to Solana. So the use cases are the same in many ways. If we go to the next slide here, a handful of more DeFi tokens, Algorand, Compound, AVAX, that's Avalanche, that's another blockchain network. That's done pretty well here recently too. And then you have things like Pepe, which is just purely a meme coin on Ethereum. Maybe in a way you might think of it as Ethereum's Dogecoin, I suppose. But good mix of a lot of these. So welcome the questions, Jamal, because it's a lot going on.
Yeah, and we even have the Pepe the Frog image in the platform if you type in Pepe, which you just love to see.
There you go.
But yeah, a lot of these are moving. You can find these on the Taste Trade platform. If you just go to the crypto watch list, it'll list everything. You can sort by net change on the day. A lot of them are up over 1%. But to your point, Avalanche and Chainlink. Chainlink has a wide range the last couple of days. That thing's flying around.
Yeah, look at that. Wow.
Yeah, those are a couple I would keep on the radar. And, you even look at the performance momentum or price momentum in here, which, again, I like to track that using exponential moving averages and the crossovers over different time periods here. And that one, Avalanche, has held up a little bit better here. Doesn't mean that we can't flip to bearish on the daily, but, is neutral at the moment. Everything else here, though, again, has, at least short term, flip to a bearish trend short term, but I think the thing you want to keep an eye on is more so those weekly and monthly trends. As long as those hold up, I'm still pretty comfortable or confident in buying dips.
So is this essentially kind of your way at looking at them, obviously relative to Bitcoin, but just to see like how much they're veering off that path or what?
Yeah, I look at this as just a way, when we look at the price momentum, in an environment where, when you think about the tokens that we offer here, you can certainly go into the futures market, and the CME has some products that you can trade on both sides with the futures there. But we're talking about a market where generally it's long only. It's unlevered, at least in the spot market. Now, there's perpetual futures markets that are much bigger, and a lot of the trading activity does occur outside the U.S. So there is some leverage and some liquidation factors to consider there that can drive volatility at times. But what I'm getting at is that these all tend to move together and in the same direction. And so you really want to be on the right side of that market and then pick your flavor of volatility. You can price them against one another, and I've always talked about you want to price these in Bitcoin or you want to price them in ETH. If I'm looking at something that might be an alt to ETH, I might look at it priced in ETH. So if I'm looking at Solana versus ETH, I want to look at these from a relative price perspective or performance perspective and price Solana in ETH. That's going to tell me when I want to be long Solana versus ETH. Otherwise, I just stick with the majors, and that's where the capital flows. But price them in Bitcoin, you'll find relative opportunities for outperformance in certain market environments. But generally, you just want to be on the right side of the trend. And there are environments where it is going to go down, and it's going to go down a lot. And that's an environment where you're typically seeing a slowdown in the economy, calls for recession, which typically, we're already in that recession well after the fact. But that's the environment where inflation's falling, growth is falling. Get out of risk assets, get out of tech stocks, get out of crypto. That's not what we're in right now. But when you see that, you do not want to try to buy the dip in this. And that's how I use these momentum indicators. You could use a 90-day simple moving average if you want to. There is something to it. It might sound rudimentary, but with an asset like crypto at this stage, given how illiquid some of these tokens can be, you simply want to just be on the right side of that broader trend. You're going to get vol on a day-to-day basis, week-to-week basis, but I want to be on the right side of that multi-month trend, and that's really it. And when it flips, there's nothing you can do. Just get out.
Yeah, and I think with crypto and some very specific tech stocks, there is certainly an element of FOMO and fear that kind of perpetuates through those moves too. Like with crypto, when people, like right now, nobody's really mentioning crypto's price action. But if we get a couple more days like this where it goes from 115 to 120 to 125 to 130, it's going to be all over the news. People are going to be FOMOing in and out. It's going to be much more volatile. And that's when I would expect to see implied volatility and realized volatility go up. So certainly headline-driven, sentiment-driven, especially when you're getting big chunk moves like that.
And to your point, Mike, no one cares about it right now.
Yeah.
You have this, what I think is a great macro setup on the margin. You have the Fed cutting rates into kind of pro-growth, pro-inflation, at least here short-term environment that we're probably entering into or maybe already are in. And if you look at Google Trends, Bitcoin, I just searched this here, it is pretty much at the low going back to 2020.
Wow.
So you're at a 5-year low in terms of how they index this here. I've got a 16 for the Bitcoin term. I think, again, it just goes to show that nobody's really paying attention right now, though price action has been generally supportive or constructive more so.
Absolutely.
That's wild. I mean, and it's true. A lot of them, they move together, right? Like we've seen this for a while now. I wonder at what point there's a day, like, because think about it from the equity standpoint, right? Like NVIDIA, Apple, Amazon, they mostly kind of move together, but then eventually there's times where they separate because there's specific news, not necessarily industry, just specific news to that stock. I wonder at what point that happens where, Bitcoin is up 2%, but for whatever reason, ETH's down, things like that. I wonder at what point that happens, I think.
You've seen a bit more of that recently, and by recently, I would say the last 6 months or so. ETH and Bitcoin still generally trade together. I think the correlation there might be closer to like 0.8, 0.85, 0.9.
Mm-hmm.
But you absolutely have seen, and I think it's a function of where's the new money going. And within the crypto market, a lot of capital just kind of sloshes around, and you do have this FOMO bid at times. But that new money does not go into Dogecoin first. It goes into Bitcoin, and it's starting to go into ETH. As of the last couple of months. And so you have absolutely seen that, Jamal, where Bitcoin is up and these others are down. And for a while, there was that Bitcoin outperformance. Hence, Bitcoin over everything. When that signal flips, we'll let you know. That had been the narrative on this show. And yeah, I think you're only going to see that. There will be times where it kind of almost looks like, oh, there's a bid to safety in Bitcoin within the crypto market.
Yeah, and specifically with IBIT ETF here, you've got 34.4 million shares traded today. That's more than SPY, the Qs, all the Mag 7 stocks except for NVIDIA and Tesla. So seeing a ton of action there, especially relative to SPY and the Qs. So at least for today, Bitcoin is well in the spotlight.
I love it. I got a zebra on in this IBIT in November, so I've been sitting on that.
Yeah, it's a great trading vehicle. It's amazing. $64 price point. Even with volatility, implied volatility rank on the lower end here, you're still getting 50% all the way through the end of the options that are offered. So 50%, between 50 and 80% is kind of the wheelhouse we like to live in for options trading. And that just translates to when you're making rolls, you're getting $2, $3 every time you roll, as opposed to 50 cents or $1 in a lower EV environment.
Give the people what they want, man. They want something with direct exposure. This is it. This is, it's better than the bullshit that we got early on with some of those other things. Like, they were just stealing money, basically. This is actually legit. It actually follows Bitcoin. This is what you want.
Yeah, I like trading IBIT. I also like the opportunity to position into some longer dated stuff on the tail. You have that kind of upside crash risk in a sense. Doesn't mean that these will pay out, but when you could put on a 10-point spread for 4 cents, 5 cents, again, you need a massive, massive move. You basically need a doubling in the price of a Bitcoin or close to it from here over a 3-month period, which I think is extremely low probability. But in the same way that you can make massive amounts of money being long, upside tails in the VIX, when you get that crash scenario that does happen, probably more often than it's priced, that's an interesting position to have on, or just a trade, right? A bet, I suppose, to take a flyer on IBIT and have those options. That's nice.
Yeah, and especially when we have extremely low sentiment around Bitcoin in terms of the Google Trends information you gave us, like these leap options, Jan 2027, even like just super far out of the money, 100 strike trading for $600. If you pull up this on a chart and you view the option in a chart just by right-clicking on either the bid or ask here, you can see, like, if you bought that option for a couple $100, you're not playing for IBIT to go to 100 in the next couple of months. Obviously, that'd be great if it did, but you're playing for these upside velocity moves that multiply the price of this option, where here it's trading for $600 on the lower end of the range, but we've had these upside moves towards 65, 70, and when that happens, you see not only the option premium go up because IBIT's going up, but if that's paired with a broader implied volatility expansion, that's where you really get that tail premium, and that's what you're talking about. Like, you could get a move from 64 to 70 or 64 to 75 in a couple weeks. This option probably doubles in price.
I mean, look at where this option was priced, and I'd also go back to the option chain. Look at the open interest in there, but look at where this was priced when vol was, another 20 points higher than it is right now. This option's 3 times the price back in December of 2024.
Yeah. So yeah, plenty of opportunities in IBIT. I've got this year-long strangle on here. I just rolled into November recently, but this thing has been pretty amazing. We've got $2,000 in premium here, $2,600 in premium, and it's trading for $500. So that's just a reflection of implied volatility way overstating realized volatility when you consider the fact that even though we've had these choppy moves here, from the beginning of the year till now, IBIT's only up like 9 points, where it was projecting from an implied volatility standpoint a 30-point range through the year, and we're well within that. So,
and I do think there will be a day where you get that move in the same way that you see that in other asset classes, and you'll get paid to be long some of those options at some point. But when you look at where we are right now, there's a 50% premium when we compare 30-day realized volatility to 30-day implied volatility. Implied volatility of 36%, realized vol of only 24% in Bitcoin over the last 30 days. So you're getting paid even though vol continues to trend lower.
Yeah, and to your point, I fully expect that we get some kind of big upside move in the Bitcoin futures, Bitcoin, IBIT. But with this strategy, we always talk about, if you get tested on the upside, you can roll up the put and lean short. Here, like I've never had short delta here. If we get tested to the upside, I just move the entire thing up so that my short strike that's being tested on the call side now becomes my put strike that's tested on the downside, because I want to be able to take advantage of this out of the money premium. Even now with November, this 75 strike still trading for $1. I want to be able to capitalize on that out of the money call premium. I don't want to have short delta in here. So that's just kind of a shifting of what we talk about, where if you're tested on the upside, you can roll your put up, or you can just shift the whole thing up and offset your delta completely. Like, there's nothing wrong with that if that's what you want to, if that's where you want to lean with a trade like this.
Yeah, totally, that works.
Anything else on the slides?
We went through expected moves for a second. Talked about the low volatility environment. If we go to slide 5, just really quickly looking at relative performance, Bitcoin market cap dominance has come down over the last few months from about 64% to 58%. 3-month trend in there still has been one where we've seen the market cap of Bitcoin relative to the whole space come down. That means there's a bid in other tokens. We certainly just see that with the ETH BTC ratio up 58% in the last 3 months. So that's Ethereum priced in Bitcoin, almost at 400ths of a Bitcoin, not quite. Aside from that, I don't think much has changed here, guys. What I would keep an eye on is just, again, as an indicator for when you want to be long one asset over the other, is looking at something like Solana priced in Bitcoin, Solana priced in ETH. From a trading perspective, and you saw this over the last couple of months, for a while, Solana was underperforming ETH pretty significantly, and then that flipped, and that is your signal to go long Solana. It doesn't necessarily mean you have to short ETH. I wouldn't advise that, I suppose. But if you have to make a decision around, okay, I have X amount of dollars, where do I want to put those dollars? Even if it's just in these big three, Bitcoin, ETH, and Solana, there's going to be signs, and I think you just follow the market, the price action here, and use that as an indicator of when, okay, I want to be long Solana because it might go from 200 to 250, where ETH might also go up, but just not by as much or anywhere near it. The other thing I'd look at as a proxy for just the meme coin and altcoin space and the kind of higher vol, lower market cap stuff is Doge priced in Bitcoin. It's traded a lot better recently here, but again, not kind of kicking off any sign that we're in a full-blown kind of bull market outside of Bitcoin.
Yeah, and I love this analysis. We've talked about this almost every week that you've been on here, and a couple months ago, we had Bitcoin dominance at like 65%, if I remember correctly. And we were talking about what would happen if that got down to 60 or high 50s, like where's that capital going to go? And you called out Ethereum. This was when it was at like 2K, under 2K. Now that price has doubled. Solana is another one. So I think it's interesting to focus on those three, the big three, Bitcoin, Ethereum, Solana, and how the flows shift from one to another, especially when the Bitcoin dominance gets low or high, relatively speaking, because the other tokens are going to move. There's going to be volatility there. I think you have more of a structured shift when it comes to Bitcoin and Ethereum specifically, and then Solana kind of as that third string.
Yeah, and I think that'll be your sign for when it's probably safe to get into the water with some of these others. But, with limited amount of capital, finite amount of time, and so many things to track, I tend to just kind of hone in on those top three for my signals. But I do think, you look at that ETH BTC ratio. Okay, so Bitcoin is, let's call it 114, 115, somewhere above 100,000 right now. Could you get back to those all-time highs in the ETH BTC ratio, which is about, almost a tenth of a Bitcoin? So you get to a tenth of a Bitcoin at an ETH price right now, that implies a price closer to about $10,000 in ETH. It currently implies a higher price than that, but depending on what Bitcoin does as a function of how that ratio gets there, I would look for that as kind of my signal too. You start to trade those charts as well. Where is ETH relative to Bitcoin? That keeps you in or keeps you out of certain trades at times.
That's a good way to look at it. So wait, so you're saying the average is about a tenth, or is that like
that's the all-time high? Yeah. So for 3 years, the ETH BTC ratio was the trashiest chart that you could find. The trend was only down, and so that move, or even though you might have had outperformance, or you might have had a bounce in ETH at times, it's gone up over time. But if you were shorting Bitcoin against it, or just versus Bitcoin, you were much better off long BTC. When you look at where that was at one point in time, doesn't necessarily mean we get back there. But if people talk about or project, $1 million Bitcoin, $500,000 Bitcoin, a limited supply where you have unlimited money printing, I think in theory over multiple years you could probably get to higher prices, right? If you get there, well, where could ETH go? And to forecast that, I would just look at the ETH BTC ratio, and if I just look back on the chart in a market environment where it was rip-roaring bullish, you get back to, could it be 500s? Could it be 700s, 800s, a tenth? 800s was kind of the high, so close to a tenth in there. If you get to a tenth ETH Bitcoin ratio, then it implies a price, unless Bitcoin just collapses, which I don't think fits the the fund flows. You probably get to a price where ETH could get to 10, easy. And people think of this and it's like, oh, that's a big number. Well, it's because it's thousands. But we're talking about a $3, $4 stock going to $10.
Yeah.
I think it's entirely possible. There's no money in this. It's a $2-3 trillion, $4 trillion at best market cap for the whole space right now. Gold's like 12 trillion.
Yeah, I think there's plenty of opportunity, especially as the funds and flows continue higher. I think it makes all the sense in the world.
I mean, that's what makes these things safe, right? In general, right? Like it's the same thing. The reason why with people who have this huge put position on Apple, and it's like, why is Apple never going down? Dude, do you understand what you're asking for? And do you understand the means of which it's going to take for that to happen? Like, Apple's not dropping 20%. There's too many other things that would happen overall if that happened, right? So it's the adoption that helps make it easier and safer overall.
Absolutely. And we're still in relatively early stages of adoption.
Yeah. And like you said, Ryan, I mean, Bitcoin is similar to gold and silver in the sense that, you have a finite product. You have a definitely finite product in Bitcoin, and the funds keep going up. The money printer is burring. Like, it's just... I would be shocked if we just stayed at 100K for the next 3 years, 4 years. It just doesn't make sense mathematically.
Right. There will be trades on the short side. There will be market environments in which this doesn't work. But I want to just point something out. I know, it's maybe, kicking a dead horse, beating a dead horse sort of thing when I'm on the show at times. This is one of the best performing assets in the last 5 to 10 years. I'm looking at the 3-year performance. Bitcoin's up 482%. Gold is up 130%. The NASDAQ's up 114%. I don't think that's random, and I don't think that it's going to end anytime soon. Can you get corrections? Yes. You'll get the 20% pullback in the equity market at some point in time, and we'll be talking about the end of the world, as we typically are when volatility picks up.
Yeah.
But this is an environment where what's the path forward look like? Are we going to see austerity? Are we going to see a reduction in debt levels? Absolutely not. Now, you have demographic headwinds, but aside from that, you're just going to continue to see, in my opinion, the debasement of currencies. And so when you price any of these assets in those currencies, dollar or pick your favorite currency, the chart likely looks up and to the right. And when you have assets like gold and you have assets like Bitcoin, which in some cases can be viewed as a digital representation of gold, it has similar financial characteristics, I suppose. Not the same thing, but it's one way to think about it, I suppose. You're likely to see a continuous bid in some of these things, right? Let's put Bitcoin aside. It should be absolutely no surprise that gold is up 130% over the last 3 years, 100% in the last 5 years. I think that continues. It doesn't mean that it goes up every single year, every single month, and it's not going to go up in a straight line. But when you look at the forces behind why that is, you could or should be able to make a pretty strong case that you want to be invested in the market. That's my rant.
I like it.
I mean, do you guys actually kick dead horses in Western New York? I'm curious. You said it so smoothly. I'm just trying to make sure.
There are horses. Not many left. Not many left.
Not all. I mean, don't get it twisted. They do jump on tables that are on fire. But harming an animal, I don't think so.
Yeah, we just ride the horses, I guess.
So the velocity of this gold move, do you tie this to, like you've been saying, kind of a flight from the fiat currency world into, especially now, like I was surprised when we saw the gold move to the upside, I was like, okay, this must be a flight to something that's not US dollar based, but that wasn't necessarily paired with Bitcoin until now. I was hoping I would see Bitcoin rising alongside gold, which you're seeing today. But is this kind of the catch-up trade, or how do you view this move in gold relative to?
I think this is, to some extent, this is gold catching up to Bitcoin when you look at kind of multi-year performance. I think this is cracks in the system, right? If you go back to when Russian assets were seized, Russian central bank assets, not to get all political, but that was the start of significant outperformance in gold, significant outperformance in non-dollar assets or any kind of shift away from dollars. And it's not overnight, it's not immediate. But what it signals is that this dollar-based collateral system or dollar-based assets are not as pristine as everybody thought. It doesn't mean that the Bank of Japan is immediately going to move away from
dollars, or that there's even a system in which that, is feasible. But it's a signal more than anything. It's a very slow shift that's underway. And I think additionally, you have an over-indebted system, right? It doesn't really matter what country you pick. All governments have to make the same choice. There's really no way out, and that results in asset price inflation. You see that in CPI, you see that in other inflation metrics and indicators, but you see it extremely clearly in assets. And I think that's a lot of what you're seeing, right? There's a report, I think, that came out today that the Fed now holds $1 trillion. Now, that's obviously it's because the price of gold has gone up. $1 trillion in gold, right? How much does China hold? How much does Russia hold? How much have they been buying? How much does India, name any other country? It's not that they're moving away from a dollar system. Most debt is still denominated in dollars, as you know. But there's a shift underway. And I don't see how, since it started years ago, how that reverses anytime soon. And so I think you do get, over time, you get higher gold prices, you probably get higher Bitcoin prices, you get higher lumber prices.
I remember 2010, 2011 when gold and silver were last making huge moves like this. I mean, of course, it happened in 2020, but that was, that was a whole different time, right? Like a completely different reason. I don't really remember the reason in 2010, 2011, but I remember the moves, and that's part of the reason why. And I know people probably thought I was nuts at times when I was jumping on these upside call spreads in silver and gold recently. They're like, this guy's nuts. But I remember it. And they do move like that. They move like momentum names when this occurs for whatever the reason may be. So, yeah, I'm curious to see how it's going to end, though, because it will end, right? And by end, I'm not saying it's going to drop to 20, 30%. I'm just saying it's going to calm down. It's going to pull back. It's going to, probably flatline and just trade sideways. But that's not now. Right now, it's still continuing to go up and to the right for sure.
Yeah, and with GLD and SLV, I like the zebra, I like the diagonal spread, because when you look at these moves, and when you look at implied volatility specifically, we're looking at a GLD IV rank of almost 40, but the actual implied volatility is under 20%. That's a disconnect for me in terms of the velocity of the move that we've seen in GLD relative to the implied volatility that you're getting paid to take risk in there by selling premium. Same with SLV. SLV's higher implied volatility, but still 35% isn't that much at all when you consider the move that silver has had, specifically from 32 to 42. That's a 10-point move in 2 weeks. If you look at where a 10-point move is projected on the implied volatility spectrum, you're looking at a year out from now. Next September is where you have a plus minus 10-point move in either direction. So you're seeing realized volatility in both SLV, GLD, silver, and gold that is way outperforming implied. And, that's why I like leaning towards, and with silver specifically, I don't think I've placed any other trade other than a zebra, where you're getting that delta for cheap. Regardless of whether you're bullish or bearish, you can make that money on the upside or downside, and you can really limit your risk with a low IV product. IBIT's the opposite, though. IBIT's high implied volatility. We haven't seen the realized volatility yet, but as long as we continue to get that higher IV raw premium, you can do a lot more stuff there. You can mix together selling premium with buying leaps out of the money, getting that gamma move. You can do a lot of different things where GLD, SLV, I think you're kind of pigeonholed into specific strategies.
I think, though, on the flip side, there will be, to your point, a pullback. You have to look at, okay, what are the signals that I want to watch for that tell me, all right, that pullback is not just a dip here. And we saw that, right? If you go back to the Fed meeting mid-September, the market was as dovish as you could be in terms of the trends in the interest rate and the dollar. We've had a significant period of dollar weakness, and you saw the same thing if you look at the 2-year yield as a proxy. And so a 2-year yield gets down to about 3.5%, and dollar has been very, very weak. I guess you look at, conversely, euro strength on the other side of that. That bottomed out. Over the last couple of weeks here, you've seen that kind of counter trend bounce here, and now I think you're starting to see that trend resume. So you had the opportunity to buy the dip on something like silver for a second and gold. Same thing with Bitcoin. But I think if you do see that breakout in rates, and that could be because you're starting to see the market reprice the likelihood of Fed cuts, at least over a certain time period, because you have a stronger economy, right? But if we start to see rates break out above, call it 3 and 3/4, and you start to see the dollar really break out above 98 in the dollar index, or you start to see a further breakdown in the euro or any other currency against it, that might be the signal. But I don't really want to take an action on any of these, because you're going to get a juicy short in there. But right, can you hold it from 38 to 4 on gold? I don't know, right? And I'm just throwing out arbitrary levels, but those would be the indicators I'd look for from the rates and dollar perspective, because that's what's driving a lot of this.
So what's crazy, Ryan, is like a little bit of that happened last week. The dollar was up. I think the rates were up a little bit, and gold and silver were still going up. That seemed a little crazy to me, honestly, last week. I can't remember if I mentioned that towards the end of the week, but that was a little weird. And you're right, that should be your cue, but I'm not sure what it is right now. Like, for whatever reason, they're not obeying those laws.
Yeah, you saw a buyer step in. I mean, I think people have to chase too, right? To some extent, into month end. I myself personally have been looking for any opportunity to buy any pullback in gold, and you get them very, very quickly, and then it rips higher. Same thing in silver. I mean, you had one chance to maybe buy silver if you wanted to, right after I think it was during the press conference with Powell.
Right there.
And it's gone straight up since then, right? Big move to the downside really quickly, and then you saw the repricing of Fed funds and the probabilities, and it's gone straight up. Now, it's probably nearing overbought territory, right? I probably wouldn't chase it here, but those would, again, be the indicators that I'd look for.
You only get one shot. Do not miss your chance to blow. An opportunity comes once in a lifetime, okay?
That is true. And with that, it's already noon. That's kind of wild. Yeah, crypto's going nuts. E-minis, NASDAQ selling off even more than they were before. But you've got Bitcoin, silver, gold, all leading the charge here, it feels like, as people continue to pile into those asset classes. We'll see if we can get a continued move to the upside in Bitcoin. I would love to see heightened implied volatility. I would love to see this thing rip. I think we're all bullish in here. No crypto bears in this room.
For now.
For now. But thanks so much for joining us. Welcome back, Ryan. Great
Thank you,
to
guys.
have you back.
It's good to be on the show with you. Thank you.
Absolutely. If you want to follow us on Twitter, you can find us all there. I'm at Trader Mikey B. Jamal's at Jamal Chandler. Ryan is at Ryan Fred Grace. Give Tasty Crypto a follow as well. Again, I've got the Tasty Crypto newsletter pinned to the top of the YouTube chat. Go sign up for that for free. We got plenty more content coming your way on the YouTube channel as well as tastylive.com, so stay tuned. We'll be back same time, same place, 11 a.m. Central tomorrow. Peace.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade. If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Craig in New York City, what's up?
I just want to say, I've been with you since the very early days of Thinkorswim, and traded all kinds of markets here and there. And I got to say, I could be off so much worse if it wasn't for what you guys have sort of drilled into me over years and years and years. And so I just want to thank you, because you could have easily just taken the money and run when you sold Thinkorswim, and you didn't, and you started this. And you basically have just given me this full education in this thing that was completely foreign to me many, many years ago. And so even though I've lost money in the last few days, you've saved me a lot at the end of things. Like, losses could have been catastrophic, and they're not. So I appreciate you.
I hear you.
I appreciate you guys. Thanks so
Thank
much.
you, man, and I appreciate you holding on the line to say that to us. So thank you.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
All right, Katie, what is the Widowmaker?
The Widowmaker can be any spread that is volatile that might dink you if you're on the wrong side of it, but at tastylive, the Widowmaker historically has referred to a spread in natural gas futures and the seasonality of injection season and the storage around that. So it's typically a calendar spread that has the propensity to move between the March and April natural gas futures contracts.
What does tendies mean?
Tendies refers to ordering chicken nuggets at a restaurant when you're out watching the game with your boys or your girls, but tendies in the options trading world or the trading world refers to profits that you are taking on a position.
What is an offer? So the offer price is the price at which you can buy an option at, the bid being the price to sell at.
Well, what is going on, everybody, and welcome back to another always wonderful installment of Risk and Reward. We got an exciting show planned for you guys today. We got a little segment on this EA private equity acquisition. We're going to talk some broader private equity stuff, and then, of course, some live trading. I'm here, as always, with the wonderful co-host, Errol. Errol, how we feeling? What's going on?
How we feeling? I mean, we got a pop in the morning, then we got more of a sell-off. So I don't really know how I'm feeling. I think I'm feeling mixed emotions right now. I think the market is giving very mixed signals. So it almost looked like we wanted a new all-time high, maybe not. So somewhere in the middle.
Yeah, it has been kind of a convoluted morning. It looks like we're actually trying to go green to red right now on the day. We'll see if that flips over while we're on air here. But yeah, it was this morning. It seemed like things were going to go higher. I thought my hypothesis from last week was going to be right, that we would have this little breathing period to end out the week, and then fresh week, fresh attitudes would prop the market back up. Yeah, off open, it looked like that was going to be super validated, and right now it looks like it's super not. So
yeah,
we'll see what happens.
It really did almost look like it, right? I mean, I think overnight, whenever the futures market opened up Sunday night, we were on such an aggressive uptrend to the upside. I couldn't believe it. Thought we were going to be all-time highs at open. Maybe it's too soon to speak, though. Maybe we're all-time highs by the end of the week.
Yeah.
You never know.
Maybe by the end of the day, man. You never know in this market.
I'm giving it too much room.
Dan, these guys cracked me up, and then he said error and Gus. I know that autocorrect hit him.
Every single time I see error, my whole life, every time I see error, I've always seen it since I was a kid.
I go to, well, it happens to me, like if I'm texting you or if like I have to text your name, my phone always wants to autocorrect to make it say error. And in the same vein, actually, whenever I type Jermal's name, my phone always wants to correct it to be Jamal, as though his name is being spelled incorrectly. And I'm like, no, I know what I'm
talking about.
Gus must be feeling good about the Reds. Hell yeah, I am, Bob. Thank you for the opportunity to talk about the Reds. How about those Cincinnati Reds? We're going to shock the world. The Dodgers ain't. I'll save the language.
Oh, you know what? Hold on.
My mother listens. Oh, we made the playoffs.
Oh, no way.
Yeah, we backdoored into the playoffs over the weekend. The Mets completely collapsed the last month of the season.
Okay, that was the context heading.
Yeah, we were fighting for a spot with the Mets, and it really looked like we were going to lose it. We were down one game headed into the final series of the year, but then the Mets lost their series to the Marlins. Shout out Miami Marlins. I donated $50 to the Miami Marlins Foundation. I'm not kidding, because on behalf of the Cincinnati Reds and what they did for my organization. And then
what did they do?
They beat the Mets. The Mets had to lose that final game for us to get in, and then they beat them. And the Marlins had nothing to play for. They've been eliminated for a week. So yeah, shout out to the Marlins.
I thought that donation was to get a new pitcher or something.
Yeah. So I'm over the moon. It's great progress.
Okay.
Ohio. Gus was a smart man for moving to Chi-Town. I was in Texas more recently, Dan. I grew up in Ohio. Whole family's from there. Lived in Cincinnati till I was 14. Anyway, Brewers.
At least I'm not
invited
the only.
Reds in. That's true too.
Look. I'm a Michael Jordan fan, but at least I'm not the only Bron fan out here now. I felt a little alienated. I'm not gonna lie.
Oh, I think Jordan's the GOAT.
Oh,
if that's the argument.
Never mind. I am.
No, I'm from Cincy. I resent Cleveland. I'm a Rockets fan as far as the NBA is concerned.
Nah.
Anyway, just teasing. No, I know you are. I'm not messing with you. I'm just messing with you back, Dan. Okay, that's enough baseball talk. Let's dive into these slides. We're going to talk a little EA, and then we'll bounce over and look at some markets. Yes, metals continue to rip, Mikos. The metal environment is insane right now. You couldn't pay me to trade the metals before all this started happening, and you certainly couldn't pay me to trade them now.
Yeah.
So anyway, Electronic acquired, another pun I'm quite fond of.
I like it. I like
at
the puns.
the beginning of this. It's maybe not as good as Baba Booey, but
Baba Booey.
yeah, video game giant EA was just acquired by private equity in the largest leveraged buyout of all time. That's the main reason that it's worth consideration. Let's hop over. So first and foremost, here's all the details. $55 billion all-cash deal, which values EA at $210 per share, which, funny enough, it's still trading at like $202 right now. That's the those remaining $8 are the efficient market saying this thing might not get finalized. And that caused... Well, that $210 a share is 25% higher than their last close. When I say last close, I'm actually talking about Thursday, last close before this information became publicly available. The buying group includes Saudi Arabia's Public Investment Fund, Jared Kushner's Affinity Partners, and Silverlight Partners. And PIF, Saudi Arabia's Public Investment Fund, already has a 9.9% stake in EA, which they're going to now roll over into... I'm not exactly sure what the breakdown is and who's going to own what. The financing is $35.5 billion of equity and $19.5 billion of debt, with most of the debt being lent by JP Morgan. And it's the largest leveraged buyout in history. The previous one was when KKR bought TXU Corporation in 2007 for $45 billion. Inflation adjusted, that is definitely still much bigger than this, but this is the biggest in terms of raw dollar amounts. In the moment.
I was seeing who's owning EA here. I knew they were a massive. I mean, if you guys are playing any type of sports video games over the last 10 years, I mean, you're very familiar with the
EA Sports. It's in the game. Yeah, absolutely.
Yeah, right. So I was actually curious to see who these buyers were. Didn't know they were owned by Saudis. But I'm curious to see what they do with it, though.
Yes.
Like EA's brand been a little bit slower over the last 10 to 12 years. Maybe I could say the same with sports video games in general.
Sure. And yes, and EA also, as we're about to get into, they also have The Sims and Battlefield.
I didn't know that. You brought up The Sims earlier today.
I did not realize that The Sims was in their portfolio. I loosely knew that they were Battlefield. But if you asked me, though, I might have said Battlefield was like a Unity game or something. I don't know that I would have been sure it was EA. But yes, they also have The Sims, which is giant. Lots of people still play The Sims.
Massive. I think, you know what's funny? So Roblox got really popular in, I think it was 2020, 2021.
Roblox.
Was it that era where it like got super
like
popular?
COVID time is when it started to take off.
I forget when they IPO'd. I don't know if you could recall, but I forget when they IPO'd too. And I actually looked into Roblox a little bit more. I didn't recognize how much of a developed game it was.
Yeah.
And how much...
March 2021 is when they IPO'd.
2021, okay. It feels like it was yesterday. But, I mean, it's such a well-developed game. And, I mean, I think Roblox is actually going to be another game where there's going to be more developers heading into something like Roblox. The way the business model is set up.
Roblox is insanity. Roblox, the user-generated content UGC ability that is within Roblox. I actually just saw that the other day a private equity firm bought Grow a Garden, a game in Roblox.
Did they really?
For billions with a B? Yes.
So how did this so this is where I was.
I don't know. Okay, I don't know how it.
We're gonna have to bring in Dan and some of those and Shelly when they talk about the blockchain. But what I was always curious about was kind of what you just mentioned, doing that, but being able to purchase those things and having like that real intellectual property inside a video game. Like your land inside a video game has property value.
Yeah.
And I feel like the blockchain is going to, function somewhere in there.
Yeah, it's so insane. I have a close personal friend who for a long time has been a full-time developer for Minecraft servers. That's what he does. He owns and operates them, and he makes good money doing it. But right now, it's actually a big problem for him because the well's starting to run dry because all these kids are jumping to Roblox. And so he's actively working on figuring out how to do stuff in Roblox because that's the shift that you have to make. Like that whole dynamic is changing.
So it's almost like you have to learn a new language.
Yes.
It's like my opportunity here, I got to learn how to...
Yeah, but the big difference is that Minecraft, they push back on all these server owners who try to monetize and do these things. Microsoft isn't having it, and Roblox is the other way. They encourage it, and they give you the facilities to do it. So it's actually a whole lot easier to get into, is my understanding.
That's really funny. Something I've seen inside the Roblox game, I've seen people pay other people inside the Roblox game with Roblox dollars to then complete projects.
Robux.
I'm like, yes, Robux. It's there. Yes, sir. But it's just crazy that you can do contracting work.
Yeah.
And some people pay people real money to build them something. If they see something you like, wow, this person has skills. Hey, I'll Venmo you or PayPal, whatever, X amount to build X, Y, and Z. And I'm starting to just learn about this entire world. It's like a digital economy.
Yes. No, it is absolutely an entire digital economy. It's I mean, it's like what NFTs wanted to be almost. I mean, yes, it's like people, you own your games, and it's nutty. This sucks for gamers, though. Yes, Mikos, this is a great point. The leverage buyout means they will absolutely monetize even more. It's going to get insane with ads and P2P. Yes, absolutely. 100%. Ads are going to go up. Microtransactions are going to be absolutely everywhere.
Astronomical.
Yeah, they're going to try to squeeze every dime that they can out of this thing. Wonder how Jared's dad is doing in France. Oh, yes. To the point about Jared Kushner. Yes, Jared Kushner is involved. Actually, I stumbled across this morning because I was on Google Trends, as I am every morning, and Jared Kushner was trending in business and finance. And I was like, that's kind of strange, but it's not really him. It's the EA buyout. But anyway, yes, he is involved. All right, moving on. Here is the reasoning behind the deal for both parties, buyer perspective and seller perspective. On the buy side, they want to scale a portfolio of video games and the intellectual property that goes along with them. And owning that intellectual property is very important. When you own the Madden franchise, that's a big deal. The Sims franchise, those things carry weight. At Battlefield, same thing. Like Battlefield's in that kind of Call of Duty stage where no matter what they release at this point, there's a huge dedicated base of people that are going to go buy it. And also they want to bet on AI tools that can reduce development costs and boost profitability. So that kind of ties into our restructure away from quarterly pressure point in the seller perspective, which is that in order to make some large investments and take some bets on AI, you're going to have a period where your financials look bad for a good few years. And so taking off the having to appease shareholders every quarter and being able to actually jump fully into those investments is beneficial for both parties. And for the public investment fund from Saudi Arabia, they already have the 9.9% stake, as I alluded to earlier. And then also on EA's side of things, video games are very cyclical. So if they are acquired now, that will really increase their stability. And once again, video games, they typically release once a year, if that, sometimes longer gaps than that. And so
GTA would like to have a...
Yeah, no kidding. And so EA has to go quarters sometimes where they don't release a good video game and their numbers just look horrible. And so they're a little bit more sheltered from that now as well. And then also they get to protect and continue to oversee the development of their flagship franchises like EA Sports FC, which we like to call FIFA. I think most people would still call FIFA, Madden, The Sims, and Battlefield. So yeah, I mean, seems like a sensible arrangement for both parties when you go back and look at it like this. EA is like a slop factory. Yes, absolutely. A slop factory.
Slop. Yeah, I mean, it's been getting messy.
It is. I mean, yeah. I mean, like I know the. And then I know there's like a whole thing right now. I don't play them, but I know the new NCAA game is like just basically reskinned Madden. Like it was supposed to have different mechanics, and it just doesn't.
I've seen clips of it. It looks more cartoony, so I see they did that to try and make it feel more street ball-y, cartoony kind of feel, arcadey. I haven't played it myself.
Yeah, I know that I know that on the first one they did a whole new movement system and it felt distinctly different from Madden. But then I think that they have actually just used the Madden engine for 26 now, and people are upset about that. Nobody quote me on that.
You didn't play NCAA?
No, I don't do sports video games very much at all.
I'm surprised you didn't try it out though.
Yeah, I mean, I don't know. It's just not really. It's not really my thing. I mean, like 2K. I play some 2K. You never need to have the most recent 2K. Also, just buy like a 3-year-old 2K, and the park will still be popping, and you don't have to pay $60 for the one that's this year. It'll be overrun with hackers, but like they all are anyway. Just become the hackers.
They're all just green light.
Yeah. Become the hackers is my advice. That's as far as I'll go on that one. But it's you too are only $20 away from having auto green and people never being able to steal the ball from you.
You know what that reminds me of, real quick, just on the video games before you pivot, is the Call of Duty, the trigger, the scuffs. Remember the scuffs we would
with the paddles
before you can make them, like you had to hot wire and screw. You used to make your own custom.
Well, yeah, you used to. Modded controllers. What you're talking about. Yeah. I had a modded controller back in the day.
No way.
Yeah, that was
with the trigger on the back.
No, I didn't have the bumpers. I've never cared for the bumpers. I like squeeze the controller too hard when stuff happens, and I'll accidentally put inputs I don't want. So I do know bumpers. But yeah, I had a modded controller. It was like the goods, like you could rapid fire pistols and stuff like that.
I was gonna ask, what mod did you have on?
Yeah.
It was so I could use the FAL, like the M9.
There was better aim assist, and there was you could full auto pistols and things like that. But it was actually kind of finicky. I wound up not using it terribly much.
Yeah.
Anyway, closing out our topic here. Here's the move that EA took on this.
It wasn't quiet.
Yeah, no, not quite at all. The first big green candle is Friday when this news initially broke. And then, yeah, we've gotten another 5% move to the upside today, even off of those highs. So yeah, and potentially, like I said, it's trading at 202. This price is in 210. If this deal does go through, everybody will get liquidated at 210. So potentially still $8 of meat on the bone there for any interested parties. But again, you're talking their target date for this, by the way, their target date for finalization on this is first quarter 2027, or, and I'm quoting, at worst, first half of 2027. So we're talking about the full calendar year of 2026 going by before this would go through and people would get cashed out anyway. And there's a lot of regulatory stuff that has to happen in that time. So if you're confident enough to post up $200 on a bet that pays out 8 that this deal goes through, the meat is there on the bone for you.
Meat's there on the bone.
It's in the game. Yes, organic farming. Thank you. I was big into SimCity 2000 as a kid. Never went into The Sims or Second Life. Oh, I know Second Life was big. That's like slightly before I was playing video games, but I've seen The Office. But yeah, The Sims. Yes, people really like The Sims. I mean, there's like entire multi-million subscriber YouTube channels that are built on just playing The Sims.
They're literally Sim influencers.
Yeah, and I'll tell you what, The Sims, a big edge that they have is that Sims is a very popular video game among girls and women, and that's hard to do. Like, there's not a lot of video games that really fit that mold, but I know lots of girls who enjoy playing The Sims.
1000%. As you said that, I took my own personal cases, for example, and I was like, oh, snap. I don't think that's a coincidence. Literally, everyone that's introduced me to The Sims happened to be
it's mostly women that I've met.
My girlfriend
IRL.
loves The Sims.
Yeah.
She loves The Sims.
Yeah, it's like, and I'm not making a statement or a commentary on anything here. It's just cool. It's cool that The Sims is a video game that girls enjoy, and that's a really good profit driver for them. So, time value of money in action here. Yeah, precisely.
Hey, don't get it twisted, though. We hop on Call of Duty and we'd be top 3 on the scoreboard.
No, yeah, exactly. I haven't ever played Sims myself. I have like watched Sims YouTube a lot for sure, and like, because you can do all kinds of crazy stuff. Like, I remember distinctly some years ago watching a Sims video that was really funny, where he made the entire town centered around a casino, and his whole idea was just to try to keep all the citizens as poor as possible and giving all their money to the casino. And so he was like, it was like this whole thing. He was like, can I bankrupt an entire town by putting a casino in it?
He can't run for he can't be a poli-sci major. No thanks.
Well, you gotta kind of you gotta get devious with your Sims sometime, or the game will get a little boring. Plants vs. Zombies.
You know what's so funny that you're just saying though? Like, imagine there are certain people though at certain echelon levels where life is literally boring. So they're like, literally, like you say it as a joke, but I bet life gets boring to some people that are at such high levels.
Yeah.
Let's make a game out of this.
Yeah, I know. It's
and we get what's the game? The one that super popular.
Squid Game?
Squid Game.
Squid Game?
Exactly.
Used to like The Sims until it became my real life. Then it just felt like work. I prefer Plants vs. Zombies. Yeah, I guess that's kind of my thing too. Is like Sims, it does just sort of, it's why I won't, even though I've never worked in back of house food service, it's why I won't watch The Bear, the television show The Bear with Jeremy Allen White, where they all work in a restaurant.
I can't recall.
You've probably seen clips on social media before, but yeah, it's like the whole show is just they work in this super high-end restaurant, and it's like all the drama that goes into that, and they're trying to work their ways up and stuff. I think I've never seen it.
Is it like a reality TV show? Is it like, The Office? Is it that kind of vibe?
No, it's like a drama.
Okay.
I would say.
Okay.
I'm sure somebody in chat has watched it and could do better justice to me than that. But yeah, it's like I don't want to get home from work and then to relax, break out the TV show that is watching people stress out about work, and I'm stressing out about their fake work. I'm not going to do that. I'm not the target demographic, I guess. What's the play in EA? That sunflower is a little more indeterminate. I really don't know how I would like to attack this. On one hand, if you think that there's any chance the deal does not get finalized, then that's a massive angle, because this will drop all the way back to 170 range if sometime in the next 15 months something happens to pop the bubble on that deal. If you think it'll go through, then probably nothing, unless, like you said, you want to buy and hold a $200 bet to make $8 on it. Perhaps an options angle there if you want to figure out the date that the deal will be finalized, put your expiration after that and your strike price above 210 or something like that. You could maybe squeeze something out of it. But as far as upside moves, I mean, if we're pricing in 210 and sitting at 202 and we're 15 months away from that decision being made, I don't know if I really love it on either side.
Said you want it at those highs, be my guest.
Sorry for scratching my nose, guys. I know this is so unprofessional, but I am dying here. My nose is so itchy. I don't know what the deal is. Interesting that the bear was filled in the old Tasty building. What?
I was literally gonna say.
is that true? I mean, I
say this out loud.
I believe that. What?
I need to get up with the times. Can you remind me what that bear thing was?
What? The bear?
Yeah. What bear thing?
It's a TV show. It's called The Bear.
The Bear.
Yeah, The Bear. I do know that somebody here on our production team, feel free to chime in if you know who I'm talking about. I can't remember who exactly it was, but somebody ran into Jeremy Allen White in Chicago while they were filming that show one time. I do know that's a thing.
Was that actually?
I mean, if the pieces all connect here, I just don't know where.
That's why I'm a little bit more curious now.
Yeah, I'm curious too.
I'm gonna check it out. I see. Jeremy Allen White, very famous actor.
Yeah.
I recognize he was in there. Okay. We'll get into that.
Anyway, want to go platform on your
Yeah, we can jump over here to the platform. We'll check out some of the charts, and we'll check out some of the other positions that we have going on here. But we can do a quick rundown. The market ripping to all-time highs, or trying to at least again. And then we can see a couple trades that went through here too. We're actually going to start with this platform over here. Go through some of these trades. It's only right that we take a quick look at EA. IV rank is looking busted right now on EA with a negative 24. What is the options chains looking like? This looks like something that you might want to have a little bit more patience on post earnings. That's how I'm looking at EA right now. Baidu, guess we got Baidu on. This was after that the news with a lot of those Chinese companies. Still doing my best to be patient in there, kind of on the dance floor. The 130 strike's getting tested right now. Not much I can do in there. Then Oracle. I wanted to get involved in Oracle just because I felt a little left out, but we got to define risk on, put on an out-of-money put spread. $5 wide, sold an out-of-the-money call spread on QQQ. Need that one below 580. We're kind of sitting in the same position here just because we have sold off after we just put in another rally. So we really haven't been going anywhere over the last few days if we really think about it. And then UNH, been patient in UNH. You still sitting comfortably in UNH. I'm almost break even in there, but that's what's popping most in the portfolio.
I'm anything but impatient with UNH. I'll tell you what. I've
been scaling out of there.
I've been incredibly patient. No. I just mean I'm just sitting and waiting my turn.
Yeah.
Still doing okay on my UNH position. My calls are still in the red, amazingly, but my shares are.
Yeah.
I got my shares at like the bottom. It's so funny. I have 4 shares and they're up $300 in total. So that's 75 a share.
Nice.
So yeah, that's like sub 270.
Yeah.
I got my shares at 267. So.
You got a good price point on all those.
Yeah, pleased with that. But yeah, just waiting on those calls to come through. The positions I kind of outlined on Friday, my Accenture, my RGTI, all these things have just kind of started to come to fruition perfectly, which I'm happy about. Mm-hmm. Accenture especially is up big for me today. Kind of took a move back towards the upside. And then yeah, RGTI, I just need RGTI below 32. So yeah, I got that real close to the top.
It might come soon. I mean, we've been consolidating for a little bit after that massive run.
Yeah, I mean, yes, it could go over, but I would prefer we just stay here or come back down a little bit. I'm 25 DTE on that and my Amazon longs. So yeah, that's just still obscenely long delta. Having a good day today.
No, I know. When I see the rip in the I really thought we were getting all-time highs, and again, I don't want to speak too soon. We could get them, but we were close this morning. I did take a few trades this morning, which I'm going to go over here in a moment, and then look at some of these other levels that we'll look out for. What do we got? We got about a few hours left to market close here.
Yeah, Mr. Pillows, or David, to y'all's point, yes, I have done some research here, and it does appear that there were lots of scenes from the bear shot in the bottom floor of the old Tasty.
So that's right. That was.
Yeah.
Huh.
Yeah. And there's 2 other places on Fulton Market where they shot that I recognize. So, yeah, absolutely. That's interesting. Can't believe nobody's mentioned that to me before. I can't believe that nobody said that to me when I was being told the story about somebody running into Jeremy Allen White on Fulton Market.
Oh, you're telling me I can't believe I didn't know this the whole time.
You didn't know this show existed. You're way out of the loop.
Those conversations probably been going on. Obviously, I didn't catch on because I didn't even know the show existed. Right. No, with that being said, we're looking at NASDAQ right now. We took a couple trades this morning. We'll look at how the price action played out, but these are some of the levels of values that we're looking at heading into this week at least. And these levels of value, most of it is taken from a lot of the trading activity that occurred last week. So that's where a lot of the data is coming from. The first one that I was looking at this morning was there was really only one level of value left until a new all-time high. So I was like, okay, we could potentially get a short opportunity off of that. So that's what I was looking at this morning, and I'll show you the executions here in a little bit. I had to stop out and manage the risk. Let me go here, executions. There we go. So these were the levels of value that we were paying attention to. And if I go down to this 1 minute now, we can see how price will acknowledge or respond off of these levels in some fashion. It'll acknowledge its existence at those levels. And let me see.
Remind us how you find these value areas?
Oh, yes, volume profile, which is exactly what we're going to go over today, because after hindsight, too, on one of the positions that I got stopped out of, I should have re-entered short, and I'm not going to lie, I was actually looking at it, but I was on my phone. I didn't have my laptop open. I was like, I don't want to pull the trigger on this short because if I have to stop out, I'm going to feel like an idiot, and I knew I was going to have to talk about it later today on the segment, even though it would have worked out in hindsight now. But I remember looking there like, oh, this is a perfect short to hit short, but I was like, I'm not going to be able to manage this. That's my ability, and I'm going to have to come up here and confront exactly what happened if I do that. So with that being said, these levels are from something called a volume profile. And I'm going to use the price action that occurred today for the example for the volume profile, because I still think using the volume profile from today, from all the consolidation that we got, you could have used that as a tool to have more confidence and conviction in taking this short opportunity right here. And over here on the left-hand side, let's see if this didn't go away on me. I might have to find it again. I'm going to go down here to fixed range volume profile. And what I'm going to do, I'm going to go back as far as I want to take the data. So if I want to go back to market open, we're going to go back to 8:30. I'm at 8:29. I'm at 8:30 now. I'm going to take this tool. I'm going to click down, and I'm going to bring it to the current trading price right now. So you can see here, I'm going to take it to the current trading price, and it's going to produce value areas for me. It's going to show us the price levels in the market where most of the trading activity occurred. So this morning, before we had all of this volume trade right here, this did not exist before the sell-off. This volume was produced after all the consolidation. So we had a very top-heavy profile. That's what we're going to call it. A very top-heavy profile, meaning the bottom of the profile was very thin, with kind of this P-shape kind of look on the volume profile. And usually what that says is either new buyers aren't coming into the market, short sellers just got squeezed out, and then there's no new buyers coming into the market. Yeah. So with that being said, whenever something like that produces...
Binomial distribution.
Binomial distribution.
That's what it is.
Go. Here, let me look at this over here at the same time. Cool. So we were looking at that, right? And this happened after we already stopped out of the trade, but just looking at that, the price action wasn't very clean at this lower level of value, but we can see after about 30, 45 minutes, an hour, we got more volume produced at those levels. And whenever we get something like that, especially when it's on like a higher time frame level of value, it typically lets you know some type of directional move is probably going to come. And I didn't feel comfortable sitting in that move because I knew psychologically we were sitting at all-time highs. And then number two, we were consolidating for a while. So whenever it's a choppy market, you're going to lose confidence. And then also, price action was just getting extremely choppy. Like sometimes the manipulation, I hate using the word manipulation because everyone likes to use the word manipulation when something happens in the market that they didn't want to happen. But regardless of if you believe in manipulation or not, like price seems clearly manipulated at certain times, and you can't do anything but to manage your risk. But I would just say whenever the market is chopping up like barcode type action, that's when it's just like sit on your hands and don't do anything. And that was when we got the soft later in the day, and I was like, I can head in short now, maybe catch a piece of the move, or not just be emotional, sit on your hands, wait for the next opportunity. So it was kind of it was those emotions that I had to juggle with this morning. But we stopped out of this trade, but using the volume profile would have helped a little bit more. And again, yeah, those levels just come straight off of a volume profile. If I wore 3D glasses, could he see green and red? 3D glasses. Yes, from the lens, right? They're already like red and blue.
It's red and blue.
Red and blue?
Yeah.
Yeah. Red and blue glasses.
But it doesn't make you're not able to see. You can't see red though.
Still
doesn't fix it.
No.
Do 3D glasses work for you?
3D glasses do work.
Okay.
Maybe they don't work as best as they could if I could see colors though. Maybe they're not as vibrant.
Well, I know 3D, like something, at least in the context of like 3D glasses, the technology is basically just that there's a red picture and a blue picture that are playing slightly off of each other such that the like red picture looks like it's closer to you, right. And then it gets the 3D effect because you have the glasses. So yeah, I just didn't know if because you can't see red if that would...
No.
But I guess it all processes the same way.
It all processes the same way. But then again, I'm like, do I still see what I'm supposed to be seeing outside of those lenses? How will I ever know? But with that being said, the broker was not connected. So if you are looking to connect your broker to TradingView.
Oh, I was going to say.
That's funny. If you guys are looking to connect your broker to TradingView, this is how you would do it. I didn't mean for mine to be disconnected right now. Guess it undisconnected without me knowing. But you pull up that bottom tab, and then you can go down here and scroll to your favorite broker, which is obviously going to be tastytrade right here. And you're going to go ahead and click that. And then you can connect right to your broker. It'll load a little bit. I'm going to pull this off screen so you guys don't see my actual.
Yeah, and Jared, to your question, we're partnering with TradingView now, so that's why we have a little bit more leeway on using the TradingView charts here. Very exciting partnership. I'm amped about it because I like TradingView's charts a lot. Also, I always have. But yeah, no slaps on the wrist here. In fact, it's encouraged. Yeah, we enjoy it. Yeah, you guys use the taste charts. Thank God, Jared says. Yes.
Bear with me, guys. Like 2 more seconds. Give me with that 8-way factor. That 8 factor.
Oh yeah, we're super secure here. You know, we want somebody else linking your brokerage to your TradingView.
6, 9, 4. There we go.
But yeah, you can place trades straight in the TradingView platform. Ariel will showcase that here shortly, I'm sure. But yeah, it's all integrated. If you throw stop losses on, you can they'll populate in TradingView, things like that. You can trade tastytrade in TradingView, but you cannot use TradingView charts in tastytrade. Yes, Dan, to your point, jinx. we don't quite have that going on yet.
Oh my goodness.
Anyone know why we are bailing out Argentina? I know our farmers are too big to fail, but Argentina, I don't know. I have seen stuff about the Argentine bailout. I can't really speak to it any further than that. I was just in Argentina last Christmas. It's a beautiful place. Enjoyed it.
There we go.
There we go.
All right, guys, let me clean this up a little bit.
Yeah, bro, you got the dick and balls pattern.
I know. Bro, literally, as I said that, I looked at the screen. I'm like, what is going on? That's called a double distribution. It is actually what it's called.
It's the binomial distribution into consolidation pattern, guys.
That is what we call a double distribution, guys. Let me clean up these lines. Things will get a little bit more clear. I just don't like a messy chart. That's one thing that I hate. So even when I myself are marking up my charts, I'm like, all right, what can I remove? I hate a messy chart.
The emojis. I saw a post earlier today where somebody had gone crazy with the emojis. They had black holes that were abducting the share price at the top.
Oh, wow. Anyways, with that being said, I'm going to remove the volume profile real quick just so we can cover a couple of the positions that I took today, because that's the reality of trading. Whenever you're trading directionally, you're going to have to know how to stop out of your positions. If you get stopped out and the position keeps running in the favor of which you thought it was going to run in, it's okay. It's just the nature of trading. It's just how it's done, but you have to manage your risk. So this morning, we were looking to get short this morning at this value area low of 24,940. I had my risk at the highs. We stopped out a couple times. And then whenever we started to kind of quote unquote disrespect that level, then I took my foot off the gas and I told myself I wasn't going to take any more trades at that level. And we will come back around until we find another key area of interest that we want to get involved in.
I mean, you're not thinking upside here in the lower value range?
Down right here?
No, I'm saying like where we're at right now, presently.
Presently? Here, we'll get over onto that one here in a quick second, because I do have some thoughts about that one, actually.
Okay.
But no, I mean, but just real quick, had to stop out of these positions. We eventually get that directional move that we were looking for. And this is one that it would have been a little bit more obvious if you use the fixed range volume profile from this morning unto when that consolidation started. Sometimes it's not obvious until after the fact. Like, you wouldn't have really ever known this level of value was sitting there, and you could have used it as a point of reference until this developed, right? Like, you would have never known. This wasn't there until after the market began to be super, you know what I'm saying? So there are some opportunities that don't show itself until after the fact. Like, you could have never been here at market open. You could have never known that opportunity was going to develop after an hour or two. the way that I kind of look at it is like, let the market show its hand sometimes. Like,
Yeah.
if you don't have a clear read, let the market show its hand, and then you will be able to like, okay, I see how I'm going to execute on this.
Well, yeah, and that just is a drop in the bucket of the broader difficulties of using backwards-looking metrics to try to predict the future, which is what we do all the time. That is what being a trader is, and so it's not, that's not something that's unique to this by any stretch of the imagination. Sometimes,
100%.
like you said, you got to let the market show its hand to see what's going on.
You can just wait for more information until you feel that conviction or confidence to actually, take that trade that you're looking for. But now we're down to the next level of value. I was gonna dip buy off this level of value for a quick second. It was another moment where I was like, just be disciplined. That's not even my setup, so I just got out of it for a couple bucks. But those are all the trades that we're taking today, and then now we're trading in this level of value. And yeah, I think you were kind of alluding to shifting to another level of value, right?
Yeah.
And I mean, right now we're trading. We're chopping around sideways. It's like noon. We have the market closes at 3. We have 2.5 hours left to market open. It's one of those things where volatility is kind of dying, so opportunity doesn't even look very attractive right now. You know what I mean?
Sure. Yeah.
But to that point, this level of value will 100% be something that we'll keep an eye on through the rest of the week, because it will be relevant for the rest of the week. Because these higher time frame value areas, again, this data is taken from all of last week. So these won't be irrelevant until the end of this week. And then we'll use the data from this week to trade for next week and so on and so forth. So right now, I mean, I'm hoping we've sold off so much. I mean, potential longs down here at this value area low is not very far-fetched. So 24,790, that's not very far-fetched. But now it's like we got to let the market come to us and wait for that. But other than that, I don't think anything else really stands out from what has happened today.
Yeah, I mean, I don't have any new positions that I've put on today.
Yeah.
I do have some that I'm thinking about closing.
I know if we have some extra time, we can look at some products like gold too, or
yeah, we certainly.
Not a big metals guy, huh? I'm not.
I'm not either.
Not
but
either.
We certainly should do a rundown of these metals though, because it's insanity.
Yeah,
what
I know gold has just been going ballistic right now. The dollar is weakening, gold is strong.
Yeah, you want to pull it up?
Strong. Yeah, let me pull it up.
Yeah, so strange. Like, I mean, I've said this 100 times over now, it feels like, but so strange to have gold moving this much alongside the market. I mean, usually it's, something that you kind of use as a hedge against fear or against worse market conditions. But yeah, gold just on a tear. Yeah, I was going to say we need a wider time frame. I mean, look at this. Look at this. It looks like Palantir, man.
Oh.
It's so crazy.
No, I know. Gold. This was another market that I've had such a difficult
Anyone have any
time getting
physical
involved
gold?
with.
Let me know if you have some physical gold, if you feel comfortable sharing that information. But I'm curious if anybody's bag holding some physical gold.
Do you keep any precious metals?
No. I mean, this is like.
And then also, where do you live again?
I mean, this is like 4 ounces of gold or something. It's substantial.
That's a nice one. I keep that.
I keep the. I check in every now and then. I forget the exact weight. Actually, I have to throw it on my scale.
Oh, that's a nice ring.
When I'm at home again, but it's appreciated like 50% since I bought it. Like just in the pure and the value of the gold in it. So yeah, I guess I got like the pirate thing going on. That's what pirates always say is you got to wear gold earrings that are enough to pay for a coffin, because if you die at sea and then you gotta just get buried somewhere.
You're about to get a nice coffin, bro.
Yeah, exactly. So if I ever die and nobody knows what to do with me, I can pay for my coffin with the ring. Got some from my grandma years ago, chilling in a safe. Let us know and let you know your address and where you keep it. Yeah, safe combination, maybe 2 if we're throwing that out. Yeah, I have some silver. I have some tangible silver that my grandpa gave to me. That's around, but very little. Just 1800 gold coins. Have gold in my basement. I'm at 1600 Pennsylvania Avenue, Washington D.C. Anyone know the Fort Knox address? Premium and open. Looks amazing. Let's take a look at that. Open. Let me reread the thesis here before I say what I'm thinking about saying. Is it just me?
I don't think I needed to confirm this for anybody, but gold is looking a little overbought by many metrics.
7 strike is 100 premium for 600 total risk at the 7 strike.
The nearest level of value, value area high looks like it's sitting at 3,815 on gold right now.
Wanted to start a new trade in gold, but there's no pullback. Yeah, I know. How are you supposed to trade this? I mean, you could play downside and get killed over and over if you're a little sadistic or something. If that's what you're into, I won't judge.
I mean, it does feel the same as Nasdaq.
Yeah,
it really does. I mean, when
true.
I just read that comment, that was me the last couple weeks. So.
Premium and open. I mean, yes, is the answer. This is still pretty juicy premium and open. I assume you're talking call side premium with how inflated we are here. But yeah, I don't know. Open. This one's just interesting. I don't know if I would want to touch this because I mean, on one hand, like I could easily see this thing just crater to like floor. Like I mean, how much of this move? Open? Yeah, open. Like how much of this move is actually substantiated and how much of it is hype? Because I do understand that open is like slightly less of a meme stock than everything else that's getting grouped off with at this point. Like there is some type of front-running rates angle with open. But at the same time, like I feel like some hype has to be injected in this. I think if it traded at fundamentals, it would be lower, much lower. But on the other hand, it's like been kind of one of the most hyped stocks in this niche. I mean, we started pumping this thing initially in the middle of July, and we've managed to sustain that all the way until now. We're almost at October. So, yeah, I mean, which side do you play? I mean, this thing is scary to me.
Yeah, that one's a difficult one.
Gold to 7,000.
Our gold price is being affected by 401ks.
Interesting question.
Let's go back to gold.
Maybe. I hadn't thought about that angle at all.
No, yeah. I mean, looking at gold, it looks like the predominant trading activity.
I don't want to just throw out a take. I would have to take some time to come up with an educated opinion to give on that. But like maybe is my answer is 401ks affecting gold.
It might.
From 1979 to 1980, gold went up fourfold. We 4x'd gold 1979 to 1980.
Yeah, no, gold is an absolute beast. I mean, gold right now especially feels like something you just have to be patient for and wait for those pullbacks. I mean, you can buy the longs if you want to, but it just feels like there's too much risk on the table for my liking, at least.
Yeah, but I mean, hey, maybe if we're in another 1979, 1980, you're just gonna regret you didn't buy it the whole time.
I know.
I suspect gold prices are more affected by foreign government stockpiling it. That sounds valid also.
I was actually taking a look at Tesla, too. Tesla's an interesting one. Tesla looks like it's trying to be primed for some type of breakout, but it kind of looks like Tesla breakout is struggling a little bit. So will Tesla come to higher highs or not? I was using the volume profile.
I don't understand how somehow every time I check Tesla, it's like $50 different from the last time I checked on it. It's so funny.
That's how you know.
I looked at this like last week, and it's like, oh yeah, we're just right around 400, and then suddenly we're here somehow. I don't know how it happened.
No, I mean, it's an absolute beast. I mean, the whole year, we can go all the way back to March. This thing put in its low, and I mean, it hasn't seen those prices since. So with that being said, it's looking like it wants to test its prices from last December. Last December, we were trading around 482. Right now, we're trading 441.
Yeah,
and at those levels.
And we discussed a lot at the time how resilient Tesla was to Liberation Day and all that. That was a big part of it as well, and it kind of got a head start from the jump.
Yeah.
But yeah, it's still not at one-year highs. I mean, it touched 488 last December.
Yeah.
So closing in on them though, or it could just stay at this level for another few weeks. It would be fine also.
Bob, I know you've been I've been telling you gold is gonna moon. I'm like, yeah, but gold never picked me up. Gold never pulled back to pick me up on the ride.
It's true.
It left without me.
I'm selling IV on the moves until earnings on Tesla. I think that's probably one of the best ways I could think of to attack this, Jared. Yeah, because IV on the moves. If you're looking to trade IV, look no further than Tesla. That is for sure.
Looking at some oil too. We can load some oil in here.
Yeah, I was gonna say I saw the oil.
That crude market is a different beast. I'm not even gonna lie. That crude oil market is a different beast.
Yeah. If oil is like metals, like I can kind of get around on. Like I will trade some metals. It's just like once or twice a year sort of thing. I don't know if I have ever traded oil ever once. Maybe some USO. I might have had done some USO stuff like 2020, 2021 time when oil was at zero, basically. But I don't. Oil is like, I mean, oil feels like Forex to me. It feels like Forex or crypto, or like it's this entire other thing that I would need to learn to keep up with. It's crazy, and it has so much to do with the world and geopolitics and wars. I don't got time. I don't have the time to keep up with oil. I respect anybody who manages to trade this.
Oil's a beast. Oil just kind of feels like, especially keeping up with the headlines, it feels like I have a gray hair on my head right now as we speak, guys.
Yes. No, yeah.
It's right here.
For real.
Every time I brush my hair, I'm like, how is there a gray hair in my head? I'm going to have a few more if I start trading crude oil.
No, yeah. And if you can, and the thing with oil too is it's always like, I mean, yeah, I'm not going to beat the headlines. Like, you look at this and it's like, oh man, like, you know, if you saw this and you didn't know what it was and you just were thinking about it like in an options context, you'd be like, oh man, this volatility is really juicy. Like, what if you caught this 74 move that fell all the way down to 61.50? What if you caught the run up to that when it ran from 60 straight up to 68? Like, that would be so good. That's so much. But you're talking about like front running the news, and in most cases with that is what it feels like to me. Somebody can correct me if I'm wrong. To catch the full extent of those moves, you'd like need to know the news before it breaks, and we just don't. Nobody does. Flies buzzing around. XLE is a portfolio diversifier. Yeah, that's valid. That's totally valid. And I'm not hating on anybody who does trade oil. If anything, I am commending you for being able to do it. And yes, I do think having a little bit in a long-term portfolio is wise as a diversification asset for sure. I have my toddler pants on today, getting into it. Oh, CL, I see. That was a follow-up. Oil and nat gas, big boy stuff.
No, I mean, it really is.
It is. I mean, it is. And I am just a little boy. I don't. Yeah.
It's a large product, but I mean, that is an unforgiving product because some of the moves it makes to the upside and downside, I mean, it doesn't let go.
Yeah. Well, yeah, and stuff just happens too. Right. Somebody bombs somebody else, and then suddenly oil has this giant move that you're just not pricing in at all. It's
pretty much.
Did Errol do a live MNQ trade yet? Have you?
We didn't place any trades today live, Sunflower. Only thing.
It's unbelievable. This guy.
I know. No live trades.
Usually he shorts and gets stopped out before the time we're off stream.
I know. Hey, last time we did get the opportunity to manage our position live, but we didn't get to take any trades live. It's going to be difficult. Look, it's going to be difficult to take trades live just because it's so time-based, right? Like most of the trade opportunities are going to come in the morning. I would say about 80, maybe 70% of them, and then I would say 30% of them might come between 1 and 3 o'clock. Maybe 12 and 2. I don't really like trading the last hour. So maybe we get, lucky to get more live opportunities here.
Do you have any thoughts on the Nike earnings after the close today?
Nike earnings after the close. I don't really have any thoughts. I think Nike is becoming a little bit more irrelevant in my day-to-day life. Nike was a brand that was like such a staple growing up, and it's lost relevance. I don't know if it's because I'm not a student athlete anymore, why it's lost relevance.
I think it's just the competition has improved.
Maybe that's
the thing to me. Yeah. Like, it used to just be like, I mean, I feel like even just as recently as, when I was a kid or like in middle school, it was like Nike, Under Armour, Adidas were the three athletic brands. Right. And, you wouldn't even, especially guys at that time weren't even considering like Lulu or
when we were growing up, it was though big three, 1,000%. It almost was like Nike, Under Armour, and Adidas were kind of a toss-up, but I feel like Adidas kind of.
You got a sprinkle of Reebok in there, like a little bit.
A sprinkle of Reebok, but we live the same reality, literally.
Yeah.
We have so many close experiences, it's not even funny.
Yeah, and so I feel like it was just those four for a time, and now things have just diversified out so much. I mean, there's just like whatever niche of athleta you find yourself in, there is clothes made specifically for you. Like you want, you're a lifter. Like say you kind of are athletic in the way that you and I are athletic right now, like just daily weightlifting, and that's kind of it. There's Gymshark for that.
True. I am a little bit.
What's the one? Young LA. There's Young LA for that. So you can go to those places specifically instead of just needing to get some Nike shorts. You can get some cool, you can get some cool lifted shorts that got the cool phone pocket on the side. Like all this stuff. There's really pointed. Yeah, the competition's just 100%. More fierce, I think.
You know what I think helped change the environment of athletics? It was just the aesthetics of it, I feel like, and then social media. Like with Lulu, Aritzia, Alo, like those things are really popping off because it's built such an online culture and community around those type of brands.
Yeah, Viore.
Right, 100%. But we definitely seen the switch in that type of clothing.
Yeah, I'm slightly bearish on these earnings. Is my take.
Is that, and that's after the bell? Was that?
Yeah, that's after the bell today. I don't think I'm going to wind up placing a trade. If anything, I think that I will wait until after and see if I want to try to trade something on the rebound.
Right.
But yeah, I don't know. I mean, like we were just saying. I mean, Nike is kind of falling off. Holistically, the competition keeps getting more fierce. They were running back up after Liberation Day, and they took this big gap. I believe that was their Q2 earnings call. They took this giant gap up straight from, 62 up to 69. Ripped that, and then all of a sudden they're in the news cycle again. Oh, Nike's on the comeback, and then quietly we've just fell right back down to even below that post-earnings level from last earnings call. The excitement's just not there. This thing's been dying, I mean, in a share price context forever. I mean, you can scroll back and back, and it feels like the line just keeps getting higher and higher. So yeah, I mean, I think they're too big to fail. I don't think that they're going anywhere, but I do kind of expect disappointment, especially with how good their last earnings call was. Yeah, I don't know. And again, this is all sort of just vibes. This is sort of a baseless claim, but I feel like anytime you're evaluating earnings, like vibes are an important part of that calculus. Might be a pullback in SPUs from government shutdown. Oh, government shutdown. Great shout.
What was the context on the government shutdown? Is that just is it semantics right now? Or?
I mean, it's going to shut down on Wednesday, like more than likely, but holistically, government shutdowns kind of are semantics to me. I mean, we've had a few before, like in our lifetime. I can remember them happening, and I mean, it's not good, but it always seems to just get worked out. But yes, it does. The government shutdown does seem probable. I would expect that to hurt the market a little bit, but also like it's really hard to hurt this market, it seems. So I'm interested to see what will happen with that and how that'll all play out. But yes, I mean, if anything, you have to expect a pullback, right? There's no way we go higher off a government shutdown, right? Surely.
There's no way.
Surely there's no way that happens, right? Right? I don't know. Asics gel running shoes. Yeah. That's Asics is another great brand to shout out. Brooks. My parents love their Brooks running shoes.
I got my first pair of Asics last summer. Maybe worn them quite a few times. My most comfortable pair of shoes. I used to be a hater. I used to be an Asics hater.
Well, yeah, and shoes especially. Like when you broaden out just into the shoe niche, I mean, holy cow, there's so many shoes. There's Asics, there's Brooks, there's On Clouds, I mean, you got everything in the world. Puma is making a resurgence right now.
Oh, Puma.
Skechers exist.
Skechers gotten a little bit better. Skechers got a stigma from back.
New Balance. I'm wearing New Balances right now.
New Balances are goated.
New Balance is kind of my go-to shoe
are fire.
at this time.
Yeah. Those made an absurd comeback over the last decade.
They have. I got into them because I had some New Balance baseball cleats when I was in high school, and I loved them. And I was like, man, are all their shoes this great? And they just are.
I would wear my soccer cleats for like football or baseball. I was that soccer guy with the soccer cleats. It's making a difference for you know what I mean?
Yeah, there was lots of football cleats in the baseball field for sure.
I'm so old. I used to wear Puma.
Hey,
what's a Kegel hat?
I don't know what that is.
Okay.
I can't say I know what that is. A Kegel hat? Let me see. Have I seen one before?
Kegel hat. Brooks makes great shoes. Never heard of Brooks before. Gold Cuban chain cranking run DMC.
Oh, I see. I have.
Gold Cuban chain.
I've seen these before.
Thought I was thug. You were thug. You were, brother. You were. Brooks is a Warren Buffett company. Okay. Hoka's super popular. I mean, they look like you're walking on clouds. I'm not even gonna lie.
Hoka's. Great shout on the Hoka. Sorry.
Oh, is that how it is? Hoka's? Hoka?
I don't know.
Whatever it is. No, yeah, they look mad comfortable. I mean, they literally look like you're walking on a cloud. Never even wore them for myself, but just from a visual aspect, it looks like you're walking on a cloud. So.
Yeah, Chase loves On Clouds. I've heard from him only great things. Yeah, we gave Reebok their shout out earlier, and then Hoka's or Hoka's. I don't know how you pronounce that, but those are getting really popular. I see those around all the time.
Oh yeah, Jared is definitely from our time though. Just that one verbiage. I remember if you didn't wear Under Armour, you were a scrub.
That's true.
I haven't heard that name scrub in a minute. We used to say that growing up all the time. Bring scrub back.
That's true. That's true.
That's how I know you're not.
And that is true too. I can remember actually as we've been having this whole conversation, I've been thinking about this one party that I went to in 7th grade. This birthday party. It was a lot of fun, and I have good memories from it. But I can just remember the pictures from it are like the most cringe childhood pictures of me if I look back at them now, because I was wearing just a gray dry fit Under Armour athletic shirt with a giant Under Armour logo in the middle and basketball shorts. And we all were though. I mean, that was just what you did. You rocked that with the Nike Elites, and that was fit. That was fire.
You're forgetting some of the details.
What is
Nike Elites with the Sperry's.
Oh yeah, I don't think I was rocking the Sperry's.
Okay, that was a little bit of a trend at the time with the cargo pants.
We were doing
shorts,
something active. It was like an outdoor, like a whole party, like this outdoor area. We had to like they had a mechanical bull and a basketball court and
at school,
all kinds of stuff. No, it was somebody's birthday party. This is when I was at private school and parents had some money to throw around. I've been to some birthday parties.
Sounds pretty lit.
It was a lot of fun. But yeah, I can just think of the pictures of me from that night in my head right now. Scrub really was such a great derogatory term. It's true. I haggle with Walmart employees over $3 Georgia t-shirts. Oh, remember the double-laced ones? Are we talking shoes or are we talking Nike Elites? Because I remember the double-layered Nike Elites.
Double-laced Sperry's?
Double-laced Sperry's? Could be. No way, y'all two. No. That's what we're saying is that scrub. We feel like scrub is our word.
Like scrub is our word. Like I haven't heard our generation.
I remember when scrub got invented. I'm not 14.
Gus, I bet we see because TikTok comments TikTokify everything. All new trends start from TikTok, guys. I'm telling you.
It's true.
It starts from TikTok.
It's true.
Almost everyone, but I bet scrub gets popular again once the TikTok comments pick it up. I wonder if Scrub goes around, but we haven't heard it in a minute.
No, yeah.
I don't want no Scrub. You see what I'm saying? Like, that was such a term, especially in basketball. Like, all right. What's
Reeboks, double-laced Reeboks. I can't say I remember double-laced Reeboks.
Suaves are the best.
Double-laced.
Never heard of Suaves.
Oh, yeah, I know what you're talking about with these double-laced shoes. I remember seeing these. I definitely never owned a pair like this. But yes. Okay. That's a good pull. I did not remember those at all. Remember the DC shoes? Everybody was really into DC stuff for a little while.
That was very skater vibes, right?
Yeah.
And
DC.
remember the Cyruses?
Yes, I do.
I went through an era.
Really?
I had the Cyruses with skinny jeans. I was skinny and everything. My dad was like, please get out of this immediately.
Oh, that's hilarious. How about Clutch? That's so Clutch.
Oh, yeah.
I say that. I still say that.
Yeah.
I think Clutch is still culturally viable. Starburys. Lisa Lopez? Ease up on those Walmart employees. They have to survive the fluorescent lights.
When I was at Walmart, I was.
Oh, Scrub was a hit song by TLC. I'm being informed. 25 years old. That is certainly before my time. Yes, you guys are correct. See, okay, we're just talking about different things. I don't think of any song when I think of Scrub. All right, you guys are giving me some listening material for when we get off air here. Have to give this a listen.
Hey, Matt was wearing the Cyruses.
Osiris's.
I'm telling you.
Oh man. Oh, the Reebok pumps. I do know of the Reebok pumps. Obviously, that's before my time also. But yeah, the Reebok, and you'd press a button on the back and like pump them up to jump higher.
Yes.
It's like the thing.
Just go hit calves.
I don't want no Scrub.
Scrubs
was a nickname for broken men. Yeah, no, Scrub is like. That's not like how I would define it. Like that sounds like incel. that sounds like the modern interpretation of incel. But like Scrub just means you suck at something.
Yeah,
it's like.
You're a scrub.
Yeah, bro.
You know, it's like
you see a guy miss a layup, you're like, man, that guy's a scrub. That guy's buns at basketball.
Yeah.
Duck. Yeah, he's a duck.
Scrub is a guy that thinks he's fly and is also known as Busta.
A Busta. Scrub and Busta are synonymous. Is what I'm learning here. This is great, guys. I learned so much. I learned so much about the '90s every time I come out.
I learned all these terms from my older brother growing up. Like I just remember being called 13 years older than me, just blocking my stuff, just calling me a scrub. We're like, you bum, and it forced me to get better. Just get called a scrub and a bum.
Yeah, you got to. That's obligatory Big Brother stuff. Anyway, we're kind of out of time here. You got anything else?
No, nothing else on our end. The market has been extremely slow and choppy, like watching paint dry this whole last hour. So sorry about that, guys. Hope we had more action, but no. Anything else on your end, brother?
Well, Scrub is a broke dude trying to run game on high-class women, says Dan. We're just quoting the TLC song. I gathered that organic farming was quoting the song here. There was too much rhyming. But I don't know what's quotes and what's not.
No.
I will say that. So I will leave you with that. Thank you for the education, everybody. Be sure that you have your next 90s topic to educate Errol and I on ready to go tomorrow at noon. Hey. We will be back. Anyway, you can take us out.
No. I was just gonna say, just wait till we come back with our songs, guys. You want to make fun of us in the 90s? Hey, it would be too complete.
You guys about to listen to some Key Glock.
Yeah, you better. No, that's gonna wrap it up for today's segment. Data Trader Dan, Jared, everybody else, thanks for taking the time to hang out with us, and we'll catch you guys in the next one. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show. Welcome to the broadcast. Welcome to the Monday edition of what it is that we are trying to do, man. Welcome to the dawn of a new era edition of what it is that we are trying to do, man. It's like, it's a lot of things, man. Like, it's exciting, it's sad, it's like melancholy, it's like, you know, kind of new and novel, and also kind of like really sad and like all that kind of stuff. But man, you guys are here. You guys are here with me. We get to do this thing together, and we will find a new equilibrium point here on the other side as we now set out the creator out to pasture, and we look for new exciting times on the horizon. But thank you guys so much for being here and supporting me, supporting the show, supporting the network, man. It is only because of you all that we can do what we do. Like, it really, truly is only because of you guys that we're able to be here. And so thank you guys so much. If you're watching over on the Tasty Live network, I would actually bounce it over to YouTube. If it's live, if it's real time, if it's, Monday, September 29th, right around 2 o'clock Eastern, give or take maybe a couple of hours. If you pop into the YouTube chat, then you can join the conversation with your brethren who are also watching the program. Man, everybody celebrates today. There's no commiserating today. We are all celebrating, and it is a good time had by most. So, with all the newness, a little housekeeping here on the horizon. So, number one, you guys are now going to get, whether you like it or not, you guys are now going to get From Theory to Practice every single day, right? That's more Dr. Jim. Now, you've already had too much Dr. Jim coming into this moment, so I am kind of the bearer of bad news. You are now going to get more Dr. Jim. So it's going to be Monday through Friday from 2 o'clock to 2:45 Eastern, 1 o'clock to 1:45 Central. That means that today's assignment is being sunsetted because E and Gus are now taking over Risk and Return. And so you don't get Dr. Jim and you don't get E together, at least not on the regular, but you do get more E with Gus and you get more Dr. Jim solo, which is good because I don't really want to drag down other people's comedic abilities and make them kind of be B- along with me. It's like, no, that's kind of our lane. Like, we've kind of really perfected that B- lane. So we'll keep riding solo, kind of Jason Derulo style and kind of do it that way. So more Dr. Jim by himself, which might be good, it might be bad, I don't know, but it's Monday through Friday now. And then the second thing is, I want to challenge us. I really want to challenge us here in this kind of new era to maybe start to do some different things. Like, let's branch out. Like, let's bring Glenn back on the show. Let's do some FX. Like, maybe we are going to join the crypto bros. Maybe you are going to see me slanging some Ethereum. Maybe you are going to see me slanging some Bitcoin. Right? I mean, it's never going to be my tried and true, that's for sure, but let's push the envelope a little bit. Let's push the envelope a little bit. Let's challenge ourselves. And so that's all coming on down the chutes. And then, of course, you guys are going to see more educational content from me to kind of start off the beginning of the show, starting later this week, or I guess continuing later this week, because we already started it a few weeks ago. But we're going to do a little deep dive into Delta Wednesday, Thursday, and Friday of this week, because again, we've got so many new people that are finding us. We've got so many new people that are kind of joining the ranks. And, it's fun. I mean, the live show is the live show. Like, I will never, nothing can replace this. Nothing can replace being in the chat. Nothing can replace, looking at all of my awful trades. Nothing can replace giving you guys an opportunity to fade me in real time and make some real money. Nothing will replace that. But we want to challenge ourselves. We want to push the envelope a little bit. So that's what we're going to do. And of course, we have, I don't know, John, do you have the art card ready for the Detroit show? I kind of sprung that on. You may not have it ready. But Detroit, which is in 2.5 weeks. So in 2.5 weeks, almost 3 weeks, we're going to be at, I believe, the Magic Stick. And I grew up in Detroit. I grew up on the east side of Detroit, in the eastern suburbs. I'm from East Point, Michigan. And so maybe you've seen the movie 10 Mile. I grew up on 8 Mile And so I grew up 2 miles away from, maybe not exactly 2 miles, but I grew up maybe 15 minutes away from where that movie was largely filmed. And so my parents still live there. Like, I'll get to see my mom and dad. I don't think they'll make it out to the show necessarily, but I'll get to hang out with them, over the weekend. So it's going to be amazing. But guys, you can still sign up for free. tastylive.com/events. It's totally free. We need bodies in the seats, man. We need heartbeats in the room. Like, that's what they're counting now. They're counting eyeballs. They're counting heartbeats. They're counting bodies, right? And so just get to that event. Bring your friends, bring your family members, bring your foes. I really don't care. Just come to the event. You might even learn some things, right? Which will be a good time. It's going to be a crash course live, and it's going to be amazing. So thank you, John, for bringing that up on the screen. So that's in 2.5 weeks. All right. So, man, let's do it. Let's go into the market. So, John, bring us into the market. We still got a market? Man, I don't know, guys. So hold on. John, bring me back. Bring me back to the soapbox. Listen, guys. Before we get into the market, guys, this is not good. So look, I've been trading for a long time. Started in 2007. I've been through a lot of things, man. I've been through the great financial crisis. I did my dissertation on the internet bubble. Like, I've been through a lot of stuff. All I'm going to say is the government shutdown tomorrow night. We've never seen anything like this before. The government shutdown that is slated for tomorrow night, if they can't get their act together, this is the most important government shutdown in the history of the financial markets. And I just don't think they're going to be able to work it out. Now, I know that they've always worked it out at the 11th hour, the previous 1,500 times. But this time, I don't know, man. I really, really think this could be the end. I really, really think the apocalypse is right around the corner. So that's the bad news. The good news, because there's always a gimme that go alongside the gotcha. The good news is you have time. The good news is if you've got an Amazon Prime membership, you can get the bunker materials in your driveway today. And if you don't get it done, that's on you because you have been warned. So, all right, John, bring us back into the market now, since it is the final, the final countdown, I guess. All right, let's take a look. What's going on? We got EME S&P's up 12, up 13, heading into the apocalyptic moment of the government shutdown tomorrow night. There's actually a 0 delta that the government will shut down tomorrow night. I would bet everything I have on it. I'm sure you probably could actually wager on this. So maybe I wouldn't do that necessarily explicitly, but you can go on like a prediction market. You can go on like a whatever. You could probably put some cash behind this. There's no way they're going to shut it down. There's no way. NASDAQ got the risk-free instrument up 118, which is, that's the NASDAQ futures. It's an extremely high-risk product, but we know that on the streets, it's basically a UST bill. Boomers are down 26, and you got the Russell 2000 futures index down 1 on the day. You got bonds are up 27. You got notes are up 8.5. You got oil getting slapped around a little bit, down $2.60. UB40 up, gold up again, another 47 points. Man, look at the Hunt Brothers up 28 cents. Man, metals. Man, look at that. That's crazy stuff, man. It is some crazy, crazy stuff. I remember silver was 28 like 4 months ago. Now, that is a run. Like, that is a run for the ages. And, man, those fat tails in the leptocritic distribution, they mean something. They 100% mean something. Got volatility up, even with the market strong, so that's a little bit interesting. Volatility futures up 20 cents. And then, of course, you've got spot volatility, the old VIX, up 77 cents on a pretty strong day in the market. It's pretty interesting. Market up, volatility up. You don't normally see that. Normally, you're going to see kind of an inverse relationship between the two. It's pretty reliably inverse, actually. If you look at a correlation between, can we look at this really quick? If I bring up like a watch list, I think we can look at this really quick. Let's see. If I go to a watch list and I go to Tom's watch list, who? No, let's go to like Tasty Default. Tasty Default. Let's see here. If I sort this by, let's see. Oh, here we go. Oh, so it's telling me that the correlation between VIX and this is what I was looking for. The correlation between SPY and VIX is telling me right now that it's uncorrelated. That doesn't feel right. That feels like maybe that needs to be updated because I'm assuming that it's mostly going to be negatively correlated. I would have expected to see minus 0.8, minus 0.9, maybe even minus 0.95. The research team has looked at this a million different times. And so I'm going to say that reliably the correlation between the VIX and SPY is going to be around negative 0.8 to negative 0.95 most of the time. And so to see a market where you have, market prices up and volatility up, that's not typically what happens. That's going to be a little bit more uncommon, let's say. And so that's pretty interesting. And it could be, it could be the market speaking to us, man. It could be the market saying, listen, I mean, tomorrow, it's just not good. Like, it is not good as the market climbs higher, but volatility follows suit. And sorry, what I want to do though today, man, we got a lot to do. So I see you guys in the chat though, man. Look at you guys. I see you guys, man. You guys are absolutely supporting us. You guys are here. Man, look at you guys. Dan's in the house. Ash Finn's in the house. Man, Theta Trader's even in the house, man. I appreciate you. Look at Bob Sala's in the house. Man, good stuff. I appreciate you guys so much. And so let me see. Where are we at? Where was my hold on. Where was that? There we go. Scram everything in the house. Paul Heyman's in the house, man. Sam L's in the house. Man, I appreciate you guys. All right, let's go ahead. So a couple things. So number one, I mean, Best Buy, we're getting smoked. Man, but look at Chipotle. Guys, look at this. Chipotle back over 40. I mean, this is some good stuff. Now we got in at 50, so we got a little ways to go. Like, we got a little work cut out for us here, but we're not wrong. We're just a little bit early, right? And so Chipotle up 9 cents. And so we've got our 100 shares, and they're about as stale as the chips at Chipotle. Like, it's pretty much even money between the two at this point. Our long shares relative to the chips that you could get on any given day at Chipotle, they're going to have about the same level of staleness. And so Chipotle will do nothing. We'll sit tight and just kind of continue to stew in the bathtub of filth. That is Chipotle. But look at Costco, man. We did this trade while we were in the studio on Thursday of last week. Let me bring up my chains here really quick. We did this trade on 9/25. I was in the studio, for Tom's last day. And we did this to pay homage to Tom. And look at that. He took us down one last time. Like, on his way out the door, one final little kidney punch. Like, see you later. Best of luck to you. And so Costco getting crushed. And so we are long at 935, 945. Now, the good news about this, there's nothing left in the spread, of course. It's only selling for 75 or 77 cents. I mean, you could take it off. You could save the 75 or 77 cents. I wouldn't necessarily have a problem with that. I think that would be okay. It's not typically the way that I'm going to handle my spreads. And so I'm going to try to maintain at least a wee little bit of consistency, moving forward here. And so we'll sit tight. We've got 4 days left. It's a $900 stock, right? So don't forget that, for this thing to move $20 is not a big move. That's like a 3%. That's like a 2.5% move in one day. Right. And I mean, it's not only do we have the most important government shutdown in the history of government shutdowns, but let's just say, again, we're probably not going to make it. But hypothetically, if we get to the other side, we've got the most important NFP print that the financial markets have ever seen coming up on Friday. And so between these two things, there could be a little bit of explosiveness to the upside. So if Costco follows suit with the market going higher, then this spread could be, it could be revived. It could be resuscitated. And so we'll sit tight and, we'll see what happens. But again, this is where position sizing on entry is so important, right? So just a quick little comment about position sizing on entry. You never want to put yourself in a position to where you're sweating out the next tick. You're sweating out the next dollar. Like, you need the next 5 points to move in your favor. If you ever find yourself in that spot, which I have found myself in that spot many more times than I care to admit publicly, you probably have too. If you've traded long enough, it's almost like a rite of passage, honestly. I wish we could all just be robotic. I wish we could all just be super buttoned up and I'm going to follow the formulas. I'm going to follow the textbook. I got my plan. I got my this. I got my that. And I'm just going to execute. It's like, man, the markets are messy. I mean, I talked about this with Nick and Tony this morning with the skinny on options abstract applications with heteroscedasticity, kind of talking about non-constant volatility relative to constant volatility, and talking about kind of the messiness of markets when you move off of these models. Like, the models are great and the theories are great and the research is great and all that stuff is very important. But the reality is nothing will ever capture real life or real trading quite like real life and real trading. And so it's important to have these things to give us more information and make more informed decisions. But still, it's messy, man. It's messy. And so you never want to be in a situation, but this is avoidable. Like, to me, this type of messiness is completely self-inflicted. Like, if you put yourself in a position, and again, I'm speaking from experience here. I'm not speaking about something I have no experience with. If you ever put yourself in a position to where the next 5 points or this defined risk strategy is make or break, this is it, it's all riding on this trade, that's a really, really, really high risk maneuver, extremely high risk maneuver. And I'm going to say 999 times out of 1,000, if not 1,000 out of 1,000, it's not necessary. Like, you kind of, you're prioritizing the right now, at the expense of the 3 months from now, 6 months from now, your trading and investing career. And I know that's difficult to do sometimes when things aren't going well. You kind of want something to right the ship, whatever. Like, I've been there. I got it. I understand. But by and large, the more regularly that you can control your position sizing, like we've done here on Costco, to put yourself in a position where it's like, hey, I've got the flexibility. If this thing doesn't come back, it's okay. Like, if this trade doesn't come back, I'm going to be just fine. That's the situation you want to be in 999 times out of 1,000, right? That's what we should be striving for. And again, within the messiness of the markets, that's controllable. That is within your control, and you got to control what you can control. And so anyway, I digress. So there's Chipotle and a quick little soapbox edition for you guys. Happy Magenta Monday, by the way. We broke out the magenta shirt, and this is our #1 shirt. So you'll probably see it, 2 more times this week. And so I would be ready for that. And so Costco, we sit tight, we do nothing. GDX, we might have to adjust that in a minute. I kind of want to focus on a couple other trades that we have on. I want to spend time on that. And then, of course, I want to get to you guys. I see you guys, man. I'm just glancing over there with the multifocal contacts, which we got a new brand in today. So I don't know. It might be an uptick. It might be a downtick. I'm not exactly sure. I can kind of see you guys, and so that's good. But I see you guys trolling me on Wolf. And so those will be some instant blocks. But then you've got, I see you guys, man. Look at you guys, man. Look at Stefan. More Dr. Jim? More B- humor? Yes, please. Well, you're getting it, man. Whether you want it or not, it's coming your way. And so, like, there's a threshold, right? Like, there's a limit, and we're way past that limit. Like, this is no different, really, than when you put on a directional. This is exactly what this is like. The new Dr. Jim schedule, Monday through Friday, this is 100% what it's like. You put on a directional trade, right? And it's purely directional. There's no premium. There's no strategy. It's just like, hey, I think it's going up. I think it's going down. Using charts, using volume profile, whatever you want. Tea leaves, right? The way the wind's blowing, the sun in the sky, whatever you use, it doesn't matter. Put on a trade. It doesn't work. Now you've got to stop. Whether it's in the actual platform or it's in your head, you've got to level, right? You've got a level where you're like, all right, if it gets this level, I'm getting out. So then it runs down that level like pretty quickly. And you're like, I'm going to give it a little bit more time. So maybe you move the stop, again, either physically or mentally, it doesn't matter. You move the stop and it runs down there. You move the stop again and it runs down there. And so you're going to get to a certain point where it's so far beyond your original stop, you're like, it's just part of me now. Like, it's just like you're way beyond where you ever thought you were going to get with this position. But now it's just become one with you. That's exactly what having more Dr. Jim throughout the week is going to feel like for you. It's not a positive thing. It's not necessarily a positive thing at all, but it's just one with you. And you can't necessarily separate the two. And so welcome aboard. I'm so glad that you're here. And so, but anyway, let's go back to what we're trying to do. So let's go into hymns though. So if I get into hymns, I'm thinking, let's roll up this put size. So hymns has gotten away from us. Hymns is up to 60. We've got a 44.50 strangle on. We've got earnings coming up on November 3rd. And so I don't necessarily want to hold this trade longer than November 3rd. But at the same time, just looking at this, I'm like, all right, if I can go ahead and if I can get into, stay in the same cycle, what can we get if we just roll up the 44 up to 50? Like, if I roll the 44 up to 50, man, I can pick up another $1.70. Now I'll have a straddle on, so I'm going to give up that precious real estate between the short strikes. But, when a trade is not working and you're in defense mode, you're in defensive position, you've kind of got to put that stuff on the wayside. You've kind of got to put that stuff on the shelf. Like, now I'm trying to improve my break-even points. I'm trying to bring in more credit, which is going to give me a little bit more to work with from a credit standpoint. And I'm willing to give up that real estate. Now, you guys know I tend to be more patient than some of my own brethren on the network when it comes to making adjustments. But now that, we're $10 in the money on the call side, it's probably time to make an adjustment. And you could, of course, make the case, should have made the adjustment earlier, should have done this, should have done that. And hey, all I can say is the rearview mirror, it's batting like, Roman Anthony's batting like 450. The rearview mirror is batting like 425. So it's just slightly behind Roman Anthony, which is where most, ball players are going to be these days. And so if I go ahead and, which by the way, Merry Bo Sox Eve to you guys. Red Sox Yankees tomorrow in the playoffs. Garrett Crochet. Man, I couldn't feel better. Could not feel better about this. And so I just gave the kiss of death to the Red Sox. But let's go ahead. Let's roll up this 44 put. Let's roll it up to the 50. Yeah, we can do it for $1.85. That's not too bad. So let's roll this guy up. Yeah, boom, there you go. Fill there $1.85. Perfect. All right, so we're filled there $1.85. We rolled up the him strategy. The other two things I want to do, and then I'm going to get to you guys, man. I'm going to see where you guys are at. Looking at a couple of things, we've got Oscar and we've got UNH. And so Oscar, one of you guys brought me Oscar, so thank you guys so much. I can't remember who it was. I mean, it's so long ago, and so many things have happened. I mean, I was in Chicago, I'm back in St. Pete, this and that. We went to Legoland, by the way. Legoland was amazing. It's so funny about Legoland, though. Well, I shared this last week when I was in the studio, but my kids are not theme park kids. Like, they're water park kids, but they're not really theme park kids. But I rode the rides, and so that was good. But if I go into Oscar, I mean, there's not too much to say about this. We've got a strangle on. We're inside of 21 days to go. We're right there at about 50% of max profit. And so there's not too much to do at all here, really. And so 203 was our trade price. The mark price is 104, 107 now apparently. And so that's right around 50% of max profit. Not exactly at 50% of max profit. So if we were outside of 21 days, I might sit tight. I might do nothing. But the fact that we're inside of 21 days to go, and it's like, well, I've got a profit on my hands. It's one thing to lose money. It's one thing to put on a trade and it doesn't work. That's always a difficult feeling. And that's always kind of like, what did I do? You know what a worse feeling is? When you have a trade on that hits a profit target that you have, or is very close to it, it's economically significant, like it's checking all the boxes, and then you let it get away from you. And then you don't take it off and it turns into a loser. I've been there many times too, and that is not fun. That is not fun at all. And so I think for the Oscar trade, let's go ahead and take this guy off. So thank you again for whoever brought I know that wasn't me. So thank you for the Oscar trade. Oscar's funny because if you guys saw the show this morning, I talked about how if Penelope had been a boy when we had Penelope, we would have probably named him Solomon. But a close second was actually Oscar, and so that was another name that was in the running. And so Solomon Schultz, Oscar Schultz. We obviously it was a girl, so we named her Penelope, which we were both in love with. But then by the time we had Eli, Solomon had gone by the wayside. Like Oscar was old news, man, and Elijah was it was perfect. And so it's funny, man. It's funny. The Lord works in mysterious ways. There is no doubt about that. And so let's go ahead, man. I'm trying to get filled on this Oscar trade. Who gave me this Oscar trade? This thing is a little craptacular for my liking. I can't get filled on this closing trade in Oscar. $1.13? Man. All right, so we finally got filled at $1.13. So there you go. And then the last thing I want to do really quick is UNH. So you can see we're up about $1 on UNH, which is it's not a ton. We're not at our profit target, but we are at a level of economic significance for sure. And we're inside of 21 days to go. So again, this is another situation where you're like, hey, Jim, I like the trade. I want to stay in the trade. Whatever. It's working, all those things. Hey, go for it, right? I don't love it though, because again, you're getting closer to expiration. You have a bigger probability of it getting away from you. Now, because it's defined risk, you don't have the gamma risk that you would with a naked position, like we had with Oscar with the strangle. And so it is a different situation. And so, I don't like leaving either trade on, but to be perfectly frank and be perfectly Frankie Walsh with you all, I don't hate leaving this one on as much as I would necessarily hate the Oscar trade. And so if you want to push your chips in the middle for, kind of a bigger score, I would do it on UNH. I would not do it on Oscar. I don't like doing it on either, to be honest with you all, but if I have to pick and choose, that's what I would do here. So let's see. If I go to UNH, let's go ahead and take this guy off though. And then I feel like we should trade the shutdown though. I feel like we should do something. Maybe we'll do that tomorrow. It's going to be so different for me, by the way. So you guys got to bear with me, right? Bear with me as we, we're making changes. We're challenging ourselves. We're doing some new things. Like, it's going to be fun. It's going to be fun. And we're going to pivot. Like, we're going to pivot. We're going to change our mind. We're going to try new things, whatever. Well, one of the things for me personally is it's still going to take some getting used to have the Wednesday show. Like, that's going to be so nice because the continuity, right? Like the connectedness from one show to the next is going to be that much more amplified, which is really great because again, a lot of times on Wednesdays, you've got like Fed days and things like that. And so it's really, really amazing that we're going to have that continuity from Monday through Friday. So I'm very excited about that. And I know a lot of you guys and gals out there, like you're watching the show on a regular basis. A lot of you are popping in daily, which is amazing. Like I can't tell you how humbled I am that so many of you guys watch the show every single day or almost every single day. And that's amazing. And so the fact that we've got Monday through Friday now, I think it's going to be good. I think it's going to be an uptick for sure. And so I'm very excited about that. But all right, so we did Oscar and we did UNH. I'm going to hold off on anything new because we had to get caught up on some housekeeping. And man, I want to see where you guys are at, though. Man, look at you guys. Where are you guys at? Man, Gregor V Dub. Man, I appreciate it. I'm going to surprise and delight a couple of people in the middle. Gregor V. Dub says, Dr. Jim, we are so happy that the Tasty schedule includes more of you. Well, it's just kind of like, it's kind of like when you've got a baseball team, right? And it's like, you've run out of the star pitchers. Like the ace, you already used him. The second guy, you already used him. The closer's gone. The setup guy's gone. And you look out into the bullpen and it's like, man, we need somebody to just eat some innings. Like, I need somebody to just take them out. Like, who we got back there? You got Dr. Jim back there. Like, he's not our first choice. He's not our second choice. He's not even our seventh or eighth choice, but he's there, right? And so let's bring him in to eat some more innings. And so that's what you got. And so, but I appreciate you there, Gregor V. Dub. I appreciate you a lot, my friend. And so, but let's see, where are we at? Oh, I see. Well, Sam Hutton in the house. What's going on there, Sam? So Sam Hutton, with the absolute power move, the single word comment. Sam Hutton just says kurtosis. Let's have a little discussion about kurtosis. So kurtosis is amazing because kurtosis is actually one of the other things that drives what we do. Like when you see like the studies and you see the research and you see all the empirical findings that are like, man, selling premium is so effective and doing this is so effective and whatever. I mean, the implied volatility rank and some of the things we alluded to this morning on the show with Tony and Nick, I think are driving part of that train for sure, but it's not the only driver of the train. I actually feel personally and professionally that kurtosis is a big, big part of what we do because with positive kurtosis, just follow me verbally through the forest. I've gone over this before. Like if you search, Tasty, Dr. Jim, kurtosis, you'll probably find a bunch of segments I've done before with like slides and graphs and distributions and whatever. But the kurtosis that exists and has been shown and exhibited in the financial markets. I mean, you see it in the equity markets, you see it in the metals markets, like it's all over the place. The kurtosis, when people look at kurtosis, they typically think about the fat tails in the distribution. They typically think about the heightened outlier risk, and that's true. That is absolutely a part of the puzzle. But one piece, and I would argue the bigger piece that often gets overlooked is the fact that when you have positive kurtosis, in fact, here, we don't have a slide, but we do have the Final Jeopardy pen. So if you look at kurtosis, right? Like if I look at like a normal distribution, so that's going to look like that, let's say, right? Again, it's not drawing to scale, but it's not too bad actually. That's a normal distribution. If I look at a distribution with positive kurtosis, it's actually going to look like this. The tails are going to be fatter, but the middle is going to be a bigger peak. And again, that's not perfectly drawn to scale. That looks like it has kind of some positive skew to it. And so it's not perfectly symmetric, so bear with me. But that gets the basic idea, right? So it's like, all right, the fat tails, they get the spotlight. They get all the press. Like they get all the airtime. But man, people are sleeping on that peak distribution. People are sleeping on the fact that means there's more observations around the mean. Or put in more practical terms, that means the market typically just meanders around where it is a lot of the time. Right now, again, when it gets on its horse, it gets on its horse. And you've got to have a plan for those outlier moves and like, the metals run and the market run and whatever. But man, there's so much opportunity around that mean. And so how do you take advantage of that? You take advantage of that with short premium. You take advantage of that with staying small. You take advantage of that, a number of different ways. And so kurtosis, Sam Hutton, you may not have known how powerful your comment is, man, but that's some good stuff. I appreciate you being here. I don't remember you popping in the chat before. And so thank you for being here, my friend. I appreciate you so much. All right, let's see. Wait. Let's go back to the beginning. Man, look at you guys. You guys are amazing. Look at you guys. Or Daniel says, I'm not digging the pink polo. Yeah, Autumn likes it on me. She thinks it might be my number one too. And so I'm going to put Autumn's opinion just slightly above Orgenu's opinion. And so that's how I'm viewing the world, even through some multifocals, which it's not that great. And so let's see, where are we at though? Where am I at? All right, where are you guys at? Let's get to the very beginning. All right, Brian Dowdy's in the house. Hey, Dr. J, do we get from theory to practice Monday through Friday now? You do, as I announced. And so again, I'm from your neck of the woods and from your vantage point, that could be a gimme, it could be a gotcha. They tend to go together. And so that's what you get. So Scramble Everything says, today I'm surprised and delighted by Dr. Jim's new live content rather than replays. It's a wonderful time to be alive as we prepare for the greatest shutdown of the government in world history. That's what I'm saying, right? Scramble Everything knows, man. He knows. He's been around the block. Like, Scramble Everything. So I appreciate you, man. Thanks for being here for the live show. But I was traveling in Legoland and Tom's Last Day and stuff like that. But right? This is not good, man. Like, this is not good. We've got, 38 hours left? 40 hours left? Whatever? 30 hours left? Like, it's not much time. But again, with an Amazon Prime membership and like a nearby like Walmart or Target or whatever, like you should be able to get the things that you need to fashion together, some bunker type materials. And so I would definitely do that. But let's see, Paul Heyman, Black Swan event. Was Tom leaving Tasty? What was the delta again? I mean, the positive kurtosis, Paul, it's everywhere. Like it's not just in the markets, it's in our daily lives. That was certainly a fat tail event. That was certainly, an outlier move. There's no question about that. But we press on, we move forward. And it's the same thing you have to do. Like when you get an outlier move that runs against you, what do? Do you just close up shop? Do you just call it a day? No, of course not. You battle back. Like, of course not. You follow the protocol, right? And now you start to get back in the game and you're trying to take advantage of the things happening around the mean. That's exactly what we're doing. And so thanks for being here there, Paul. I appreciate you, my friend. And I think I owe you an email. In fact, I'm pretty sure that I do. Daniel Perkins, hey, Dr. Jim, I'm bumming over Tom. All I see is gotchas. You got any gummies for me? I don't have any gummies for you, but I might have some gimmies for you. Right? I think, it's going to be a challenge. It's going to be a challenge, right? And so what are you going to do? Are you going to rise to the challenge or are you going to kind of, buck down from the challenge? I mean, that's up to me. That's up to you. That's up to all of us. And so I think we're going to be okay. I do, as long as we stick together. And so Samuel, but thank you, Daniel, for being here, of course. Samuel, happy Monday, Doc. Your boss, Tom, might be leaving Tasty Trade, but don't worry. The P&L Bros still need their daily dose of underappreciated Doc magic and B- humor to limp into the week. That is correct. That is correct. But man, look at us. The P&L Open Bros got nothing on us. Look at this. Best Buy only down 975. Chipotle only down 983. Right? Starbucks only down 681. Right? I mean, look at this, man. We are not even in 4 digits anymore. I thought we were in like 4 digits across the board in these positions. Right? And so now we're long Best Buy, we're long Chipotle, we're long Starbucks, and we're coming for the Best Buy Bros, man. We're just coming for them, each and every one of them. And so let's see. Ordanu, greetings from Italy, Dr. J. I hope you had a wonderful weekend. I did. I definitely did. Scrum everything in the house. Let's see. Jared Kramer's in the house. What's going on there, Jared Kramer? Man, look at you. I appreciate you so much. Jared Kramer says, it's time for Dr. Jim. Let's go, man. I appreciate you so much. Wolf in the house. Hey, Dr. J. That's such a funny username because I know you're trolling me with that. That's amazing. And so, because those are 2 different ticker symbols, I think I've lost money equally on both. Or maybe I made money on Wolf, WULF, but I'm not sure. Ash Finn's in the house. What's going on there, Ash? I appreciate you, my friend, so much. Thanks for being here. And I'm glad you reached out last week, and hopefully that was helpful for you. Sam Hutton. Oh, yes, Sam Hutton in the house. What's going on there, Sam Hutton? Appreciate you. Sam L says Costco posted solid earnings, but the stock's still down. No stress. Thanks to their return policy, even your P&L is guaranteed. Full refund, no questions asked. Yeah, I remember. I went to Costco to test out their return policy because to me, nothing can top Amazon, right? Their return policy is second to none. But Costco is maybe a close second now because, I mean, we took like a $700 piano that we bought the kids, like this electric piano or whatever. There was a problem with one of the keys. It was stuck or something. It was something crazy. And so Autumn's like, hey, we got to send this back to Costco. And I'm like, well, I'll do it. I kind of want to see what happens. So I went there, went up to the counter, and I explained to the guy what was going on, like briefly. Like it was so brief. I couldn't even finish. And he was like, here's your money back. In fact, and here's a coupon for a free hot dog and Coke today. I was like, man, this is pretty good. Like that was not even like no quarreling, like no quabbling, but I actually got more than I came for. I'm like, that's pretty awesome. And so, yeah, I would say the Costco return policy is quite solid. It's quite solid indeed. And so Tiago is in the house. What's up, Tiago? Appreciate you, my friend. Thank you so much. And let's see, where are we at? Sergio, greetings, Dr. Jim. You halted Wolf. Oh, is Wolf halted today? That'd be so funny. It may not be anymore, but it's still halted today. Wait a minute. Wolf is $14 today? Hold on. You guys didn't tell me about this? Wow. Wait a minute. Stop the show. I mean, keep rolling the tapes. But hold on. Let me look at a daily chart of Wolf. This thing, what is going on? This is nuts. This thing was $1. This thing was like 60 cents and we got out of it because we were getting crushed. And now it shot up to 20 something dollars. Like what's going on out there, guys? Let me know in the chat. Like, you may not make it and I may not get to you by the end of the show. In fact, I won't. But let me know anyway, because I'll cruise after the show. I'm very curious now what happened in Wolf. That's crazy. and now it's halted. Man, look at you guys out there just slanging some wolf. Man, I like it. And so Jerry Kramer says, we selling some IV on Tesla today. I'm feeling it. Don't they have their like deliveries coming up today or tomorrow or something? And so Tesla at 443. Today, I guess it was all the way up to 450. Now it's back down to 443. Yeah, the IV rank is 28. This is a good stock to trade. Yeah, this actually is. I wasn't going to do anything today, but I don't know. Maybe we do a little something there, Jared. They've got earnings coming up in a few weeks. I'm gonna wait. Yeah, I'm gonna sit tight. I'm gonna sit tight on Tesla. We've made a couple of adjustments today. I feel good about the rest of the portfolio. We'll get things, obviously again with 5 days a week, and we've got a lot more opportunities to get some things going, so we don't have to worry about that. But let's see. Now, is Nike earnings today? Wow. Let's see here. Nike earnings today. I see you, Theta Trader, by the way. Says Dr. Jim, just popping in now, and I have to get ready for work once again, because how else am I going to obtain monies to burn for option premium? That's correct. Is Nike today? Let me see here. 9:30. Oh, Nike's tomorrow. All right, I'll pass on Nike, but maybe we'll do it tomorrow. So remind me tomorrow there, Jared, and maybe we'll do a little something. But let's see. Sam Hutton in the house. Dan Duquesne in the house. What's going on there, Dan? Appreciate you so much. Pat Man in the house. What's going on there, Pat Man? Scramble Everything says, how are we going to get new types of food in Chicago now? Sauce bringing the invention of the sandwich there and things like that. Yes, again, it's every man for himself now, right? We've just got to forage like back in like the 17th century, maybe like the 7th century. They probably weren't foraging in the 17th century. But if you go back into the history books, wherever that might be, like we've just got to get back to hunting and gathering. Like we can't depend on the sauce to lead us to the next, sandwich shop. We can't depend on the sauce to lead us to the next, gluten-free muffin establishment. We got to find it for ourselves. And so that's just, it's evolution, man. What can I say? And so let's see. Miko says, right on, brother Jim. Brother Jim, I appreciate you there, brother Mikos. It's sad, but at least we still have you. Yeah, and you've got more of me, right? So not only do you have the same amount of me, you have more of me, right? And so again, I do not take it personally. If you were chalking that up as a gotcha, I understand, but it is the way that it's going to be. And so let's see. Oh, Joel James is in the house. Dr. Jim, SoFi looking good for a trade. Maybe not today, but let me know what you think. The IVR is creeping up. Yeah, let's take a look at it, man. SoFi, 25 IV rank. That's not too bad. You've got the stock at 27. Weren't they a lot higher before? So the earnings are on November 4th. That's a little bit dicey, but maybe we could do a little something. Let me look at a chart of SoFi. Let me go back like a year. It was up over 30. Did they split or something? For some reason, I want to say they were like in the hundreds, but apparently not. But I could easily be misremembering. That happens frequently. And so, yeah, SoFi at 27. Ivy Rank at 26. Yeah, I mean, are the weekly options any good in here? Wow, the weekly options are actually not bad. So the weekly options are only 5 cents wide, 6 cents wide. So I don't want to mix it up with earnings, right there, Joel, because that just muddies the waters, in my opinion. But now we can slide into a cycle where normally we're doing monthly. But, if you ever like a trade, check the weeklies. If the weeklies are decent, then you can go for it. And I mean, 5 cents wide on the weeklies on a $30 stock, is it amazing? No, it's not amazing. But is it something that would, completely make it, null and void? I don't think it's that either. And so since you have IV rank of 26, that's not too bad. Given the fact that the VIX is, it's climbing today, which is good as a premium seller, but it's still relatively low. I still can't believe Wolf. I see this over in the corner, man. Look at this. Guys, that's crazy. And you guys nobody told me about that. Nobody said a peep. And I thought you guys had my back. So I guess it really is every man for himself. But SoFi at 27. I don't know, man. Let's do a little something there, Joel. I like it. Maybe we'll do a strangle. Let's see if I go in, there's only 32 days to go. So, what if I sell a 25 and a 31? I'll pick up, $2.32, right? The pop is 61. The P50 is going to be about 70, give or take. It's floating around as the market moves around. My theta is nice and positive. The buying power effect is very, very low. So this could be a good option for somebody with a smaller account. Now the IV index of 75%, that means it's going to move. This guy's not just going to sit there. This isn't Procter & Gamble, right? This isn't, General Electric, although I think General Electric's up like 1,000,000% in the last few years. But this isn't, this isn't Kraft, right? Like this thing's gonna move. I don't even know if Kraft is still in business, but this thing's gonna move, right? So you got to understand what you're signing up for. And so that's obviously, the case here. But I like it there, Joel. Let's do it. I wasn't gonna do anything today, but hey, you guys bring me a good trade. It makes sense. We can do a little something. And so let's go at 231. We got filled there at 231, so that's some good stuff. All right, so we're in SoFi. So that's good. Thank you there, Joel. I appreciate you. And then Dan Duquesne says, more Dr. Jim. Thank the heavens. And so, yes, my friend. And that, of course, is a good place to place your Thanksgiving. And so Sam L, Nike earnings trade, just do it. We'll do it tomorrow. Let's see, Sam. Oh, Sam Hutton says, can we talk about the failure of the markets to realize the symmetric risk in Bitcoin? Look at the IV smile on Bitcoin futures or the symmetric risk on Bitcoin futures, then compared to the newly listed ETFs. Man, I haven't looked at, again, the crypto space, that's going to be a challenge for me. Like, that's going to be new to me. To this point, we've just kind of thrown some playful jabs at the crypto bros. Like we would never consider ourselves to be one of the crypto bros. And so we might be stepping into that circle here pretty soon. Maybe we'll bring Dan on the show. Dan's a crypto guy, right? And so it's like, man, like if you want to do something brand new, it's like, man, learn from somebody who's already done it. Learn from somebody who's currently doing it. And so I'm like, rather than us just like reaching in the dark, let's bring Dan on the show. Maybe I'll bring Crypto Dan on the show, and maybe we'll do a little something. And so I'm gonna pause on that. I think you bring up some really, really fair points. And then, if we're gonna trade crypto, we don't have to trade it to the upside. We can trade it to the downside. Like we can trade it from the dark side. Nobody says we have to be long crypto. We can be short crypto and just get completely blown out. And so that, and so well, you gotta wait and see, man. You gotta tune in, right, to see what we're gonna do. But Sam, I appreciate you. Appreciate you. Ash says you need that full hour. Hey, you never know, man. You never know what's gonna happen. Again, it's like when you look out in that bullpen and you've already used all the strong arms, you've already run all the horses. Dr. Jim's always out there, man. Dr. Jim is always out there. And so you just got to tune in. You never know what could happen. And so let's see. Where are we at? Oscar. Man, you guys are the best. You guys are the best. Scramble Everything says, whoa. Are we going to DCA and average down the humor grade to C+? See, now you guys are thinking outside the box. This is what I'm talking about, right? I've got to challenge myself. You've got to challenge yourself. I'm going to challenge myself with some new things, some crypto, some FX. Let's do some new strategies. Let's break out a Fibonacci retracement. All right, let's not get carried away. But you guys get the idea. You guys have to challenge yourself. Right? I want you guys to challenge yourself. So now you're DCAing the humor. That's what I'm talking about. Like the average is going to be right around CC+, right? Because you're starting at B-, like that's your best possible price. And then you're just averaging down from there. And so you're probably going to be kind of end up with like a C, maybe a C+. And so that's some good stuff though, man. And so let's see. Brian says, I thought we might get a Monday through Friday. And so let's see. Man, you guys are, I can't. You guys are amazing. Sunflower, you can never get too much. Dr. Jim, man, I appreciate you. Nice math flex this morning, by the way. Yeah, we had to do a little something. You gotta keep the Batistas in check. Otherwise, they're gonna think they're running the place. Like you gotta kind of let the Batistas know, they're the same as all the rest of us. Like we're all just commoners. We're all just peasants, right? Now the Sas Grande is gone. We're all on the same level. So you got to keep the Batistas in check. Otherwise, again, the next thing you know, we got terrazzo floors all throughout the studio. Right? Like the next thing you know, like it's cannolis every day for lunch. Like that's not okay, man. Like once in a while we can do those kind of things, but not every day. And so you got to keep them in check. But man, I appreciate you guys. I got to go. I can't believe it. I can't believe we're out of time. That's crazy. It's so fast, man. You guys, it's crazy stuff. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter or X, whatever you call it. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal come up next with engineering the trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs. 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
What's going on, everybody? Cannabis stocks are getting a little lift today. Yeah, I know. A lot of puns you can insert there, but we'll talk about what's going on. Netflix was on the move today, and there's a lot of rumors about what their next move might be, so we'll talk about that. And finally, everybody's talking about a government shutdown. We'll analyze what you really should be thinking about here. Everybody thinks the market's going to tank. I'm here to tell you differently. So we'll talk about those three things and more. Talk about the state of the markets right now as we're heading into a big jobs report coming up on Friday. And I think I might have some risk management to do because I got a lot of strangles on. Welcome to the most dangerous show on the Tasty Live Networks, folks. It's Engineering the Trade, and I'm your host, Jamal Chandler. Hope you all had a great weekend. I had a phenomenal weekend. Phenomenal. Friday night, hung out with some friends, nearby festival going on, music, food, you know, the like. Did that on Friday. Saturday, went to, well, you know what, first, so it was really cool because on Saturday, my youngest son, I've told you a bunch of times, really into sports, really into basketball and football right now. And though it's football season, which I'll get to in a second, we do got to start working some basketball stuff in here. I mean, we're already at October. Wednesday's October. And so that means that basketball tryouts are coming up soon. So we got to get them ready a little bit. You know, we've been doing a little basketball stuff here and there. If you've heard me talk on this show about kids sports, which you probably have quite a bit, there's a lot going on in our country with regard to kids sports, right? I mean, you guys all know it. You guys might even be dealing with it. Kids doing travel sports and just all this, you know. A lot of times you don't have to do it. Really don't. You really don't have to subject yourself to a team that's going to take up your whole entire weekend and all you're going to do is complain about it. And I know because I've been through that. You know, I got multiple kids. I did it with my oldest kid. And with my youngest, we've done things a little bit differently. We actually take them, I've gotten to know people, so we try to take them to other ways of doing workouts. Well, this weekend, as a 7th grader, he played with some older kids. And I got to tell you, I couldn't be more proud of the dude, the way he went about his business and handled it. It was pretty awesome, man. I mean, he was playing kids like that were 3 grades older than him, and I think we're going to create a little monster here. I think we are. He was really impressive. Again, he didn't do a whole lot, but it was the fact that he never backed down. He never buckled to the pressure that the older kids were putting on. It was really fun to watch. Fast forward to yesterday, we had another game. Our team's undefeated, folks. 5-0 football team right now. My kids' team, 12U. It was pretty awesome, man. Another game. I can't believe what I was seeing. I mean, they were double and triple teaming my kid. No joke. Like, I'm going to have to start showing you guys some of the videos sometimes. It's funny to watch them put that much focus and energy on a player. It's a trip. Literally had 3 kids surrounding her. I'm not lying to you. I couldn't believe it. I mean, I know my kid's big. I know he's strong, but holy cow. That's pretty funny. Let's pull up some slides. Let's talk about what's going on today, people. Oh, gosh, I got to tell you, who cares? Blacklist, your mom cares. That's who cares, in case you were wondering. Clown on the chat. Guys, cannabis stocks are making moves today, and they were most of them were going higher. There is talk about reclassification of marijuana. Now, we've heard this quite a bit for a while, but until these stocks, I mean, I'll tell you what. If you really believe that that's coming at some point or another, it probably doesn't hurt to get like a couple of these in the portfolio. I mean, these stocks are really small at this point. Tilray's of the world, Aurora Cannabis. I mean, these things are, very low value compared to where they used to be. Tilray's $1 and change. I just happened to look it up. I didn't even realize. But we're going to continue to always hear about speculation about whether there's going to be reclassification, right? Is this the next thing to jump on? I don't know the answer to that. But I got to say, I mean, a lot of these are fairly low price and fairly cheap. You probably could just buy it and hold it. What's the big deal? I mean, especially something like Tilray, which is $1 and change. It's not going to set you back in any way, shape, or form. So, maybe it's worth a wander into some of these. I know a lot of people like the MSOS ETF. I think one thing you got to do about that with any ETF, first of all, look what's in it. Last time I looked, this was mostly. Like most of the holding was the U.S. dollar. I'm not sure if it still is, but it was always kind of historically like mostly had the dollar in it and not so much of. Let me look now. As a matter of fact, ETF stock holdings. Yeah, let's look at the holdings here. So just make sure you look at the holdings. I would just try to find one with direct exposure. And again, looking at a lot of the names that are moving today, ACB is probably one of them. I do remember that. Aurora Cannabis being one. Again, you could look. You could really take some time to look in to see which ones have direct exposure to any reclassification of marijuana and see which ones would maybe move. I think ACB is one of them. Maybe Tilray is. I know Tilray used to be. I think that was a Canadian company, right? I believe so. But you notice them making all moves today. And again, this reclassification thing has just been an ongoing story. I don't know if it happens yet. This might be a long-term hold, right? And I always think about things in that way. I have multiple accounts, as you guys know. My show account mostly is the 45-day window, sort of tasty style of trading. But, long-term accounts I think help because sometimes when you get a position like this that you are, it's going to take a longer time horizon, you don't want to be looking at it every day because the more you look at it every day, you're going to be like, you know what, I'm going to get out of this thing. I'm going to sell it. I'm tired of looking at it. So, once again, I'm advocating for having multiple accounts. I think it really helps you quite a bit. Netflix. There's rumors that Netflix might be entering the bidding war for Warner Brothers Discovery. Now, there's been a lot going on in the whole space, right? About Skydance and that situation recently. I think they're in the middle of a takeout. Warner Brothers, there was rumor of I think, I forgot which one was trying to buy them. But the point being is that it's funny how a couple of years ago, right, we were seeing all these different streaming apps come out and everybody was doing their own thing. Now is the consolidation phase. A lot of them don't even have the money or it's too expensive to keep up with it. And somebody like Netflix has been waiting in the wings for a lot of these companies to get lower in valuation to go ahead and scoop up content. That's pretty much all this is, a combination of content at this point. I don't know if there's, honestly, I would expect at some point if Netflix does buy one of these, that's going to bring down the stock price, right? It just depends on how expensive the move ends up being with whatever one it is, but keep an eye out for consolidations coming up because they're coming. Finally, potential government shutdown. That's all everybody can talk about for the next 2 days. The chorus is going to get louder and louder as you come up to it. Just remember who you're dealing with. Historically, the last government shutdown happened under Trump, and it happened for 35 days. So while a lot of times we talk about government shutdowns and people expect this quick resolution, he may just let it go on for a while and let it get figured out. And you know what the thing is about that? Last time we had a government shutdown, the market ended up, after over all of it, rallied 10%. right? Now, I will say, when it happened, I think it was like December of 2018 to maybe January of 2019, that was actually a lull period in the market. Market was kind of down some, and so I think the market was due for a bounce anyway. I think I would, what are your telltale signs here? Well, one of the reasons why we could maybe drop on it, and the reason would be, I don't know if it would be it wouldn't be because of the government shutdown, for example. Like, that's not really affecting for the most part, most stocks. That's not really affecting NVIDIA. It's not affecting the huge stocks in the market, the Apples of the world. It's not affecting them, really. But the reason we could go down, that could be a reason that people might use to sell stocks, and volatility is already low. We're ripe for an environment where we drop 2 to 3% and then volatility increases a little bit. I don't, and it'll be attributed to the government shutdown. But my point is like the government shutdown does not affect Apple, does not affect NVIDIA, does not affect those stocks in such a way where they should be down 2 to 5% because the government shut down. It just doesn't, right? So I guess I'm just saying any dips from the government shutdown, I'd probably be looking to buy, especially if I saw a 2 to 3% dip. I'd wait a little bit, be patient, and I'd get in. Leftovers. Mobile gaming is set to dominate the gaming market in 2025 and beyond. Let's move to the next slide. CGC. You're right, Dan. CGC was another one. I know that was actually one that I traded for a bit, I think. Yeah, I mean, you know what? It probably doesn't hurt to have a CGC or a Tilray in the portfolio, right? I mean, it doesn't hurt, especially at $1 and change. Those are really cheap come-ups. I might need to buy some of these and put them in the long-term account. We'll see. Yeah, but MSOS though, like I don't love that one. Again, let me see the whole. I get sidetracked sometimes when I'm hanging out with you guys. I'm looking at the holdings. Where are the holdings? Come on, give me the holdings. These damn websites, they don't always give you the holdings. Oh, let me know. What is the holdings? Yeah, there we go. Oh, okay, they've changed it some. Yeah, well, what's the percentage though? What's the largest percentage? Portfolio weight. Here we go. Trueleaf. Da. Okay, it looks like they've changed the weighting of this thing. It used to be. I just remember one point in time I looked at it and there was a decent amount of the U.S. dollar in it, but now it seems to be they are different holdings. A few better. Guys, I hear like a little thing in the sound over here, just FYI. Yeah, it seems like they've changed the holdings, so that's better. That's probably a little bit better now. You got to be patient though, and I think it's easy to just put in a different account as opposed to account that you look every day. So this is the projected growth of over the next 5 years from now of games, where games are played, right? Whether it's consoles, whether it's all these different things. So mobile gaming is expected to grow by 30%, and it's already the biggest. I mean, I feel like, my kid is playing. We just got him an iPhone. He plays on the iPad, but he also plays on his phone quite a bit. And I feel like a lot of people do nowadays, right? Like I feel like they do. But it's an area that's expected to grow by leaps and bounds over the next several years. As you can see, I mean, a 30% projected growth. Now, that pales in comparison to cloud gaming networks, which, again, I have not done. I didn't know that was a thing. And then video games, that's actually like video game physical or downloads, right? Like a lot of times now you can get stuff from an app store. You don't necessarily need the physical disc, if you will. It's not expected to grow as much. Matter of fact, the least in the group by about 20%. Online games, 26% in growth expected over the next 5 years, but still, you could see that's a distant third there by 2030. Again, cloud gaming and networks. I mean, I didn't know that this was the thing. Who's playing games on cloud? Interesting. Game live streaming. Now, that seemed like that was, that seemed like that was a big thing for a while. Game live streaming, people watching people play games. I don't know if help me understand. I don't get it. I want to play. If I'm interested in games, I want to play them because I want to play them. Now, I don't want to watch somebody else play them. Besides, I don't feel like anybody is a G like me anyway when it comes to playing a game. So there's that. Let's move to the next slide. Correlation and VIX. They always have, a correlation. When markets get volatile, the correlation goes up. And by that, basically everything moves in the same direction. usually to the downside. Right now, we're seeing very low correlation, very low VIX. So this is another thing that could be the kindling under the potential unwind of the market just a little bit. But for right now, we don't see anything on the horizon. It could be an interesting week, though. Again, I feel like I brought up the whole idea of the government shutdown because there is no reason why the market should fall because the government shutdown. Really is, in my opinion. But it doesn't mean it won't happen. Doesn't mean panic doesn't set in for whatever reason. And then there's the non-farm payroll report, which I think we're rooting for bad jobs for the market to go up. I know it sounds so twisted, it sounds so weird, but all of that being said, volatility is low right now, right? VIX might be under 15 at this point in the day. I'm not sure. No, it's still at 16. There's a little pop to it after vol getting smoked heading into the weekend. This is what you call the weekend effect coming out. The Monday after a week where they sold into the weekend, VIX pops up a little bit, and that's why you're seeing VIX up 73 cents today. But vol is low, and correlation is low. And if they pick up, don't be surprised. Let's move to the next slide. So what is up is things like this. Now, you can pull up, and I've been on the soapbox about it for the last several days. You can pull up a bunch of names that are doing this. Some have calmed down, but the Oracles of the world, the Bloom Energies, BE, ticker BE, IonQ, Oklo, I mean, hell, I got strangles in most of them. So I know. I talked myself out of putting on a strangle in SanDisk this morning. Dude, when I tell you this stock is a blast from the past, like this is a stock, this SNDK, WDC, I mean, these were names that were big at a time where computing was big. Now most of us are, using an iPad or an iPhone for most of the time and not so much sitting at a standalone computer. But these were the big names then, and now all of a sudden they've become relevant again. I've noticed. I don't know if cloud computing has something to do with that. It just so happens SanDisk and Western Digital, WDC, is moving to the upside. At the same time, a lot of these cloud computing names are moving. It's kind of wild. And volatility is going up into these moves. So I had to talk myself out of one. I wanted to sell a strangle in here. It looks right for a strangle. It looks nice, but I kind of talked myself out of it. Only because I have a bunch of exposure, bunch of names like this. You don't need too much concentration risk, right? That's another thing. And so if I already have 7 strangles, literally, in names that have volatility profiles that look just like this, I'm going to back off. But if you don't, there's one for you, just like the rest. I mean, yeah, Styx is another one. Yeah, true that. Styx is another, man. I mean, these stocks have been up and to the right. It's been wild to watch. Jeez. Let's move to the next slide. Talk about up and to the right. Gold is doing the same thing. I'm telling you, I don't know. I don't have a position right now in gold, and the reason why, after watching late last week when not only the dollar was up, but yields were up, that should be a situation where gold comes down, and it did not. And gold has been up 7 weeks in a row. And while I cheer for that, I love seeing momentum names do that. I love seeing that. It's wild to see. This is a chart that's showing you the skew ratio. So skew is basically the 25 delta put minus 25 delta call, right? Typically in that situation, it is above 1 for most things. Right now, you can see it is below 1. And that means upside skew is the thing of the day. And if you don't know what that means volatility is bid more to the upside and on the call side than it is on the skew side, which is not out of the norm, really, when you talk about gold, because gold crashes up. But right now you're seeing something that even during this bull run, this whole chart incorporates the bull run that we've seen in gold, and this is clearly some of the most upside skew we've seen. It's not the most yet. The most looks like it was sometime in May of this year, but yeah, it's up there. Let's move to the last slide. PRGS, Mountain, Jeffries, PayX, Lamb Weston, UNFI Foods, earnings. No chance I'm playing any of those. You can see if you can convince me otherwise, but those names don't interest me. Jolt's jobs report. We get the job suit coming up this week. Jolt's report's coming up on Tuesday. ADP is on Wednesday. Looming government shutdown, I guess, is on Wednesday. I really kind of think of it as a non-event, and if it ends up being an event, cool, something to do. But on a quiet, it's something to do on a day other than a quiet day like this, right? And then we got the NFP report, of course, on Friday, which I think is going to be an interesting event. Again, I asked in the chat, and I was curious what you guys thought. Just curious. because it is something interesting. When you look at the SPX straddle for Friday's move, it's only repricing in about a 1% move. Maybe a little less at this point now. I looked earlier in the day, and it was about that. It's 66 points. So, yeah, basically a 1% move. And the current, again, the average move that we've seen this year alone on the NFP reports, 8 so far, right, has been 1.6. So, basically, this thing is underpricing the non-farm payroll report. What would you do? Would you sell it? Would you buy it? Would you not trade it? You guys are such tasty traders. 31% of you say sell it. 51% say no trade, just watch. I tend to agree with that. I mean, I wouldn't want to buy. First of all, this is a hypothetical thing. I'm not trying to buy a $66 straddle. Excuse me. I'm not trying to buy that. I'm just curious, and it makes you wonder if we're really going to get a move. S&P 500 stocks above the 50-day moving average is 277. That's 55%. Let's move to the platform. Please. Please. Yeah, man. I mean, I told my kid was pretty frustrated after the football game. I told him, look, dude, it's a sign of respect. They're double and triple teaming you. That's a sign of respect. You should enjoy it, you know? Well, where do we go from here? First thing is the cannabis stocks, ACB. You know what? I really do think maybe just as something to do, maybe what would you do in one of these? There's multiple things you could do. Again, if you have, a little bit of cashola, something like this, you could buy easily, obviously, 1,000 shares. That's one way to express an opinion. This is a long, long play. I mean, you can go out to here and get more. Let's see. This is what's cool about options, right? You can get 10 of these calls, which essentially is 1,000 shares, and you can do it for cheaper than just buying the 1,000 shares. How about that? So that's another thing to do if you want, and Jan. And you can do, again, when you're doing leap calls, you always want to do in the money, very in the money for the most part, right? So, yeah, I mean, it's pretty sweet. You can get these for cheaper than if you just bought the 1,000 shares straight up. So, I don't know. I might have to do a little something. Let's see. Well, hold on. Let's see what's going on with open interest out there, by the way. Volume today and the leap stuff. I bet it's trading some. Yeah, look at that. Thousands of calls are trading right now. Let's see. What was the other one? Oh, CGC. Same deal. Obviously, $1,590 if you wanted to buy a few calls, or you could do these. 1,000 if you wanted to buy 1,000 shares. I mean, I think 1,000 in something like this, right? $1,000 basically going to work. Yeah. Again, you can do it cheaper than if you just bought the stock. So that's always the magic of options, folks. It's kind of nice. Really kind of nice. Long Ulta. What? Oh, because of eyeliners? Yeah, well, maybe. What else did I mention? I mentioned Netflix. Well, it's not so much about Netflix. It's more about these names, right? Like, again, they've already been offered a deal, but it hasn't closed yet, which means it could go higher. Do you play that? Let's see. Let's look at the vol here. Nah, I wouldn't go October. I would go. You don't want to go too far out when it comes to a deal because you never know what the price is going to be. So say you figure, okay, I want to give this deal time, give it to, give it to January. Maybe they do a deal. I don't know what the deal ends up being, right? But say you buy the 25 calls, but say the deal ends up being 25. You make no money on that, right? And so you're seeing some volume here. Look at the 20 strike. You're seeing some volume there. Let's look at implied vol. That always is your cue to if there's still some deal risk, and there is. You can see anytime you have a real deal and it's settled already or going to be settled, in this case around 19 or 20, then you would see you wouldn't see much pricing or, I mean, these have a bid to them. I'm not saying they're bid, I'm just saying they have a bid to them, right? Which you wouldn't see if the deal was expected to close at $20 this year. And I don't even remember what the number was really, but, Warner Bros. Discovery deal. Let's see. Anticipated merger. We are right. I keep getting confused. I know I even talked about these when they happened, but I'm forgetting. Upcoming plan to split. Warner Brothers. Oh yeah, they're supposed to split, right? At least that's the word. Yeah. But if Netflix jumps in and buys it, then there's no splittage happening, right? Like that's a totally different situation. 2 significant potential deals: anticipated merger with Paramount Global and an upcoming plan to split. That's right. Yeah. Wow. There's a lot going on here. It's hard to. Deal situations are hard to trade. That's why I don't necessarily do them. I just try to find other ways of doing it because it's a hard one to do. I don't know. I couldn't do it. Right now I got a bunch of strangles on. I've talked about them quite a bit. Some of them I'm thinking about maybe closing just to gain some capital back. But they're Ivy. I mean, here's what I keep looking at. I keep looking at the IVRs on them. And let's just say these are all the strangles, right? Let's go short by net liquidity. CarMax is a short put. Everything else here, everything else, 1, 2, 3, 4, 5, 6, 7 are strangles. You can see the extrinsic. That's really nice. IVRs are still all elevated. 60, 37, 87, 35, 53, 40. I mean, there's no reason to, and the pops are still pretty good, except for Oracle. Right now, this put is almost at the money. That kind of sucks. I mean, I could rearrange it. I don't know if I want to, though. I mean, I could rearrange it to the 330, 370. I mean, that works good. Does that help me some? I don't know if I love that, though, but, well, that does help some. I mean, but then I'm not collecting as much. I might give this another day or so. I could go to the 260, 330. And yeah, I'm gonna leave it for now. I mean, Oracle has dropped some. I feel like maybe we'll see. It sucks that it's starting to fill this gap, and that does make me a little bit nervous. The low side of this gap is about 260. It looks like. I mean, that is maybe cause for rearranging the strangle. I mean, it's probably a smart thing to do. I'm not gonna collect as much though. See, these are the decisions I've been going through in my head recently around some of these strangles. You gotta. I know. I'm gonna catch a charge with all them strangles. Yeah, thanks, Donald. I like the amount of credit I'm collecting in here. I want to see if the stock is going to bounce back some. But just remember, I told myself, and you guys are here to witness, that I probably should rearrange this thing to get some of the buying power back. But for the now, I believe it's going to bounce back some. I'm going to leave it for now. But again, I mean, as you can see, like, there's really not much managing to this. Now, I should probably treat this thing a little bit differently, even though I know it's only 36 IVR. It does have earnings coming up. I think this is one I should close probably, this Oklo. It's done well for me in recent days. And I think, again, I think this 36 IVR, now it's earnings vol. It's not just vol. Before it was really high implied vol, and now it's just earnings vol. So this is probably going to be one that I close, and I'll post to the trader page soon. But for the rest, I think I'm keeping them until the time being, and hopefully no government shutdown is going to wreck the market. Folks, that's the show. Thanks for watching. As always, be smart, be patient, trade them small, and trade them often. See you.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Nikki Batt, University of Kansas. Number 20, because that's how many underlines are in my portfolio.
Rick Welch, Illinois Institute of Technology. Number 23, because I'm trained 23 hours a day.
Dr. Data, Louisiana State University. Number, square root of 1 over 365, because that's the square root of time for 1 day, which is multiplied times the stock price, multiplied times the implied volatility, which gets you the projected stock price for 1 day.
I like the looks of that lineup.
Well, being mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Having trouble understanding what your trader buddies are saying? Here is what they mean when they say slippage. Every business has costs. Slippage is in reference to the cost to transact in the market and is most associated with the difference between the price you can buy and the price you can sell at for options or stock. If you can buy at $1 and sell at 99 cents, you have 1 penny of slippage. If you can buy at $1 but sell at 90 cents, you have 10 cents of slippage. The more slippage between the prices, the more likely it is to lose out on value when opening and closing positions. This adds up over time. That is why liquidity is so important.
Hello everybody, Tim Knight here. Today is going to be a very different kind of show because there's not going to be any charts at all. And I'll explain why. As I discussed on Friday, although I've been using my own chart platform ever since we started, which is like 14 years now, we're switching so that I'll be using the Tasty Trade charts to show my musings and ideas and so forth. And I wanted to use this as kind of a reset moment to reintroduce myself to you, especially if you're a little newer to my work and my show. And for those of you who have been watching me, you still might not know a few things about me. That'll be, I think, instructive to understand, like, why on earth should I listen to this guy instead of somebody else's opinion about charts? So I'll ask for your indulgence. I've just taken a few notes of things I want to talk about. I have not timed this, nor have I scripted it. It's just going to be kind of free-form sharing of my own background and experiences and what I hope to introduce to your own trading knowledge and real-time thoughts. If I run out of time, I will happily continue this tomorrow. But at some point, we will jump back into the charts. It could be tomorrow. At worst case, it'll be Wednesday. And then we'll go from there. So let's dial back the clock. I've been trading a long time. You can see a few gray hairs from this, but they weren't there when I started trading. I was a young lad in college, and the first book I got, which really just captured my imagination, was by a fellow named Stan Weinstein, called "Secrets for Profiting in Bull and Bear Markets." And that was, along with Edwards and McGee classic book about technical analysis, that was my introduction to charting. And I didn't really know this about myself, but I'm very, very visual. Tom and company are extremely mathematical and probabilistic, and they've just got a sharp mind for numbers and probabilities and structuring strategies. I'm a pictures guy. Give me a coloring book, I guess. I'm more of the sort to look at charts, which I've done literally millions and millions of times, and try to tease out what's interesting about it, which sometimes is nothing, but how has it behaved in the past? What's the personality of the chart? Are there any historical precedents for what it's doing right now and so forth? But in my earliest days trading, which began in 1987, in fact, quite appropriately, my first trade ever was on Black Monday, 1987, which is probably always kind of burned bearishness into my head. I began to observe a lot of chart information. Now, this was kind of in the Pleistocene epoch. What I subscribed to was a early publication from called Daily Charts or Daily Graphs. It was like a little phone book they sent out every week and just thumb through the charts, hundreds of pages of them. And this was my idea of entertainment at the time. But the point is that I was really into trading based on charting, based on, and I don't even really like the word technical analysis because it sounds sort of dry and cold, and I'm not really into indicators and all of this stuff. I really am into, really as more of a historian about what's going on, because a chart is really nothing more than a history based upon time and numbers. And I was so interested in all this that I decided to stop being a regular employee and start my own company. And so in 1992, I started a company called Prophet, Prophet, and created at the time a historical financial database. And the web sort of appeared back then, and I grew that into a website and charting, profit charts, which some subset of you watching me right now used, because profit charts was sort of a crown jewel. And around 1999, this guy named Tom Sosnoff showed up with his company, Thinkorswim, and needed charts, and I was more than happy to provide them. And that's how far back our relationship goes, back to the prior millennium. And so he and I continued along our merry way, Tom with his rapidly growing brokerage firm and me with my little 20-person shop in Palo Alto. And I sold it early in 2005. And Tom and I couldn't get rid of each other because the same company that bought my firm bought his, and we were all part of the same happy family. But around that time, after I sold my company, which was all about charting, I started a blog, they called it at the time, slopeofhope.com, and started to sort of redo what I'd done with Prophet, but with a lot more writing. But again, I focused on the charting, which became, as you might guess, instead of profit charts, now it was slope charts. And that's what I built way back then, and have been using and improving it ever since. So interestingly enough, although Tom and I were in different parts of the country and doing different things, we kept working together. And in 2006, roundabout, when we were all part of the same larger company, he mentioned to me offhandedly, just apropos of nothing, that he owned a domain called tastytrade.com, and he vowed that someday he was going to do something with that domain. And as you probably guessed, he did. Because in early 2011, he called me up to San Francisco, said he was in town, rainy night, up into a restaurant, went and saw him, and he told me that at long last he was doing something with a domain, and he was creating a new media company, and would I be interested in being a content provider there, which of course I absolutely was. And so with the beginning of the company, we were trying to figure out what to do with me, and at first made a bunch of documentaries, and some of you may have seen those, about the Silicon Valley and Apple and all sorts of aspects of technology that I've been mixed up in. And then we moved into a show focused on charts. And here I've been ever since then. So Tom and I go a long way back, and Tasty Trade and I go a long way back to the very, very beginning, like to the domain ownership. And so very honored and pleased to have been here for all that time. It's been a tremendous amount of fun, and will continue to be so. I had for this to sound like a farewell speech, because it's not. As I said earlier on, this is a transition. And going to keep doing what I've always done. So my own affection for charts is really based upon a search for the truth. And I've always considered charts to be the most perfect representation we can find of that balance between supply and demand of any given entity out there. And what I've made a lifetime of study around is the nature of humanity to all that wiggling in the financial world. Because in my experience, financial instruments have personalities, just like people do, and they express themselves in certain ways. And on the whole, the financial markets has a giant personality. And what's endlessly fascinating to me is everything going on in the world has some kind of effect on those markets and vice versa. Politics, the economy, obviously, technology, and I've been trading long enough, again, back to 1987, to have seen a lot of bull markets, a handful of bear markets, lots of technological change, because the world today is really unrecognizable to what I began in 1987. In fact, I just saw a little chart showing even just the number of companies out there that are public is half what it was in 1996 for a lot of different reasons. So it's a very, very different world. But I spend pretty much all my waking hours looking at charts, thinking about charts, reading what's going on in the business and the technology world. And over the course of each day, trying to put together a narrative about what's interesting out there. Because some days there's so much going on that it's impossible to fit it into 15 minutes. And there are other days when there's so little going on that I have to really pad things out because, it's sort of like talking about weather in Palo Alto. It really just never changes. And there's a mix all in between. But over the course of my own work day, because my show appears near the end of the trading day, I try to gather up a list of 30 or 40 symbols, around 30 or so, grouped in a certain way that it tells a story and maybe might provoke some ideas from you or for you. So having said all that, nothing about how I reach that laundry list of tickers is going to change. The kinds of examination I do isn't going to change. The way I study and analyze isn't going to change. The only thing that is going to change is, in the end, how I present them to you. Because instead of my own platform, I'll be using Tasty's. And it's kind of like, I guess I'm a writer at heart, and I guess the best way to think of it is, instead of writing with my right hand, I've been told I need to use my left hand. It's possible, but it's going to be a little clumsy at first. So what's going on here in terms of the thoughts and the analysis and the conclusions, none of this has changed. It's just that I'm not so good with my left hand as I am with my right. So I'm going to have to ask for your patience as I get a little more accustomed to a different platform. The charts are going to be a little more nude than you're accustomed to, because all those trend lines and ovals and circles and all that mishmash, the Fibonacci's and such, that's going to build out over time, because I'm very judicious about what I put on my charts. I like them to be very simplistic, almost Zen-like. So just understand, don't be too confused when the charts look a little on the naked side at first, and if I get a little clumsy at first. So I'm going to appreciate your patience on that. But in the end, it won't matter, because the points I'll be making will be more or less the same. But I just wanted to say all that to, again, reintroduce you to who Tim Knight is and why my opinion might have some value in your own trading, and to explain why your screen might look a little different in the days to come. So, glancing at the clock, I can see I'm getting near the bottom of the hour. So I think we'll be good to go tomorrow with the show. And I appreciate all your time and attention for all these many, many years. A lot of big changes afoot, and I'm excited to continue the journey with you. So thanks for your time and attention, and me and some charts will be along tomorrow to catch up with what's going on out there. Thanks and good night.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11, It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm, listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Mikey, my friend, we are back for the closing bell. We've got E-mini S&P 500 futures up 10. It looked like they were going to go red just a second ago. Basically at the top of the hour, 2 o'clock-ish Central Standard Time, we got to 6,700. We got actually below that. 6,696 was the low of the session, which was one tick below the close on Friday. So a little bit of weakness there in the last 30 minutes. NASDAQ up 80. You got the Dow up 30, and the Russell basically unchanged here, up 60, down 60 cents. Oil, big move to the downside, /CL 63.17, down $2.55. You have VIX futures 1783 right now. They've been ticking higher throughout the session. The low was really put in the morning. The VIX itself above 16, so definitely seeing a little bit of juice get pumped in here into the end of the quarter, which will be tomorrow. Bonds up almost a full point. They're up 24 ticks, 116 and change, almost getting into the 117 handle today. 116.30 was the high of the session. Gold futures up $46. They have been pretty steady higher throughout the session here. Silver as well, up 31 cents. Very, very strong from both the metals. And then you've got Bitcoin moving higher, basically reversing all of the move we had on Thursday and Friday of last week, up 5,000 on the futures. The spot is up 2,100, basically at the highs of the session. What say you? What looks good to you here?
Well, even though the market's up, it feels really weak because we were up significantly higher in the E-minis and specifically the NASDAQ, but that has since sold off quite a bit. Bitcoin has held its ground here, up 5K basically all day. But yeah, gold and silver just absolutely mooning. Those are the big movers that caught my eye earlier, but I'm glad the E-mini sold off because I did that one day or the weekend iron condor in SPX.
Oh yeah, you hit that this morning.
Well, it was completely in the money this morning, and then it sold off. I had a GTC order in to close it for 50%, which hit while I was on the OTC live show.
Does that go straight into a parlay or just a single bet for tonight? What are we thinking?
That's a good question. We'll have to see if there's any boosts, but I've much to Chris Vecchio's grin.
Chagrin.
Chagrin is the
it's the bad. So it's a grin.
It's a grin.
Okay.
I just don't see a way that Justin Fields doesn't smash tonight against the lowly Dolphins.
So you got Dolphins -2.5, and then
That's
you got
disgusting.
Denver -7.5. Both games at a 44.5 over under.
Yeah. I think Justin Fields rushes for at least 60 yards. And you're going to see a Garrett Wilson touchdown probably. But yeah, I think the Jets win that game.
Okay.
But yeah, I threw on another SPX Iron Condor for tomorrow.
There you go.
Cookie cutter setup, same thing. Just went to the orange bar expected move in the platform 1 day out. Short options are at 66.30 and 66.90. And then I defined risk 5 points wide. I actually collected $200 for that one. It's in like 10 cents right now, but
there you go.
Yeah, just playing for more nothing chop.
More chop.
At least if we're going to have to be forced to sit through the chop, I'd like to be paid from SPX markets to do so.
That's the name of the game. You hope so. You hope so.
Yeah.
I will say we got a couple announcements. First of all, Tom and Tony will be on the road on Friday of this week. You can still sign up for that. Where are we? In San Francisco? Los Angeles, LA.
The Fonda.
I'm kind of mixing up my spots. So you can still sign up for that. He has a couple more events, tastylive.com/events. Mike and I and Katie will be in Dallas coming up October 12th, and then in San Diego in November. So if you want to come hang out with us for the weekend, sign up.
Yeah. Dallas is going to be really fun.
Yes.
We have confirmed we're going to the rodeo.
Yes.
We're going to check out the Texas State Fair in Dallas. It's going to be quite the weekend. But join us on Sunday, Kessler Theater, tastylive.com/events.
And I'm currently inquiring about Torrey Pines. So if you have a inn in San Diego for Torrey Pines and would like to, really put me in the good graces, you can send me that info. That inside info, we'll take that.
Yeah. But yeah, a couple more events lined up for the year.
Yes.
And let's round it out with some good shows. How about it?
Yes. The other big announcement going into the end of the day tomorrow, we have about a 30-point expected move in SPX sitting at 66.50. We have those slides for the SPX Guess the Market. So we got $1,000 going to some lucky person in this batch. If we could go to the distribution chart, the first slide first, let's just look at that one. Just to give you an idea of what we're looking at here. So we've blown past the Wall Street median S&P 500 end of year target, blown past that. We're about 50, 60 points higher. They were right at 6,600 here. You can see our distribution here definitely skews to the upside in Q4. 63.85 is kind of the median upside there in Q4. And Q3, we have 6,200 from the Tasty audience here. So bullish, but not this bullish. But they have definitely leaned into it here. So jumping to the next slide, we got a couple guesses on the board from the Tasty staff. Our very own Katie McGarrigle is the closest. You're a close second on the upside. You've got an upside target there just below 7,000. It feels like it's.
I'm winning Q4.
Destiny.
Let me tell you.
Destiny is there.
Yeah.
Just to put that into perspective, let's look at the end of year. So December, the 6,700, or I'm sorry, the 7,000 is a 25 delta.
Yeah.
Dude, it makes you choke up thinking about it.
Let's bump that up to 100%. I don't see how this market doesn't end at 7,000 at the end of the year. I think for narrative's sake, it makes all the sense in the world to just pump us up to that nice round number, end this crazy year on a high note, and then see what 2026 brings. But hey, that's what I was playing for all year with my random numbers that eventually got to around 7,000.
I like it.
But I mean, we're not that far away, and like you said, the deltas.
Delta tells you what the market thinks.
Yeah, and with a delta, with that delta figure and a probability of touch of 50%, it's very, very within the realm of possibility. But yeah, a lot of open contracts at the 7,000 strike.
A nice December. Round number.
Exactly, that's what I'm saying.
Play for it. Let's go through just the next couple slides and look at just where people are at here. So you can see a bunch of round number guesses. 6,700 is definitely a hot spot. You can see a bunch of names here that are, I mean, we have 100, 200 people that are within striking distance. So I put our bounds at 67 and 6,600. So just going through the next slide here, we'll get closer to where we're at here. So we got 6,650 as our mark right now. So all these names are well inside the expected move here. You got 5 guesses at 6,650, handful of people all wrapped around here. We got Tim in Lakeview. Here we go. Chicago boy. So bunch of names on the board. You got Australia is represented in here somewhere. Bunch of people in striking distance. So it should be good.
Yeah, I just love how like
Hong
clockwork.
Kong.
Who?
We got Hong Kong.
Oh yeah.
There. 16 guesses at 6,600.
I mean, it's perfect. I love when it comes to a somewhat round number and there's just so much distribution around those numbers.
Yeah.
But as you can see, people listened when we said you got to throw in some game theory here, throw in some weird numbers.
You don't want to split $1,000 between 16 people.
Yeah, there's 16 guesses at 6,600.
What is that, like $70 a pop? 75?
Be like Bryant or Greg. Just go up or down to a random decimal, and you're going to be isolated.
And you're golden.
Yeah.
You're golden.
But yes, very excited to see where we end. And I guess even more exciting is that the expected move for tomorrow in SPX is only 28 points in either direction. So the market's not projecting too much volatility from where we're at right now. So I think all these people are well in play.
For sure. So that'll be fun. We'll do that on the close tomorrow. Remember, there is a slight runoff into the close. So we'll stick around and make sure we declare and crown our winner there.
Yes.
E-mini's up 14 here.
Any individual names catching your eye here?
I spent most of the day taking positions off, so I was just like stuff that has worked where vol has come in because Friday was a huge vol crush, so I've kind of tried to take advantage of that as much as I could today. Like I closed out of a Celsius strangle. I think that was from either did we do fast market or what's your assumption? One of the two. I think that was a trade that came from there. I closed out that EA call diagonal. Did you have that position on too?
No.
Ooh.
I did not.
You missed out on a couple bucks there, but there's buyout or take under, take over, take private.
Take under, take off.
Yeah, take off the board.
Yeah.
Rumors out there. So that stock moved. I added an AMD put. That was really my only opening trade. I closed off Natty Gas had a nice move to the upside. PayPal as well. ETH had a nice move. So I took off some money there. UAL bought in some risk on Rocket Labs. It was kind of it's tough. Like when you look at the high option volume list, the names that are flying around are kind of meme realm names. To the downside is all the quantum stocks. Then to the upside, you have Hood, AppLovin is in there.
Yeah.
Oklo, Circle.
Some movers. I think if we can pull up EA one more time, I think it's always interesting to bring this to light because sometimes you'll see this. I mean, maybe once a year we see this where there's a buyout rumor or there's a takeover or there's a delisting, and you can always tell from the options market how far along that process is perceived to be.
Yeah.
So sometimes you'll see something hit the headlines and it'll say X, Y, and Z getting bought out, blah, blah, blah.
Like when we were trading X.
Yeah, we were trading X.
Had the Japanese company like merger kind of news.
Yeah. So what you'll see, so what I'm getting at here is if there's still a question of whether the thing will go through, whatever it is, if you go to like November or December in the options market, there will still be premium around these strikes because the market is telling you that there is still implied volatility around the stock price, nothing's set in stone. Here, though, what you're seeing is the opposite. If you go to November, December, January, 100 days out in EA, these option markets are basically zero bid. Like the 210, the 200, the 200, the 195, like there's not much premium there at all. And that tells you that this is pretty far along in terms of probability of actually happening. And you can see it with the huge drop off in implied volatility too. You're looking at single digit numbers, which is why Ivy ranks significantly negative right now. So all that said, you can always look at the options market to tell you or to give you context or a more probabilistic nature of what's happening. And as of right now, given that there's no premium here in November or December or January or anywhere, it's basically done.
It's totally done. Yeah. Once these sort of announcements get put out and the market reacts and prices it in as it has here, there's not much left to do. I mean, it's pretty much over with. You're still going to have put premium here because there's a chance that it doesn't go through or that the deals change or the price changes or they do more stock, less cash, or more cash, less stock. I mean, there's those sort of risks that are still baked into the market, and that's why there will be some sort of premium on both sides of the market to some degree up until the deal is finalized and done with. But from a trader perspective, there's no point in messing around in here. And I'm glad you pointed out volatility because EA is not a stock that typically has 11% implied volatility. It typically has 40, 50, 60, 70% implied volatility.
Yeah.
So when you see that sort of volatility here, it tells you that, it's all done. There's not much left to do here. And if you do have options, whether they be leap options or spreads or whatever, that expire within the duration of with a duration that is longer than when the deal happens. So if the deal happens in 2 weeks from now and you're in November options, all those options are going to settle to whatever the deal is. If it's an all cash deal, they'll be cash settled. If it's a cash and stock deal, it'll all settle to whatever the value is. If you have a spread trade on, they'll all be, it'll all be done.
Yeah.
Because you'll be exercised and assigned on both, you'll have no position. So if you're having trouble getting out of something, chill for a little bit and, it'll trade at parity.
Yep.
E-mini's up 17, staging a little rally here. They've reversed all of the down move. Cancel crash.
Bitcoin ripping higher, up 5,400 now.
Yeah, it's a big move.
Up to 115 in the futures market. Basically the high of the session here. Love to see it.
Yeah, Coinbase having a nice little move to the upside.
Oh, yeah.
MicroStrategy as well. If you're an IBIT person, IBIT having a real nice day, 65 and change.
IBIT is lovely.
Yeah. You still got the 70 calls?
75.
75. Are you in November?
Yep. 65, 75 strangle.
Yeah.
It's a lovely thing here.
You roll down the call into that?
No. I mean,
who would even suggest such a thing?
I just want more space in case it runs up. I just would rather not be tested to the upside, and I just want to, because if I am rolling down into this move, which you can do if you want, but it just if we hit 70, I need to roll the whole thing up because I don't want to have short delta in here. So I'd rather just have like a kind of a hands-off approach at least for now. especially because I've collected so much premium through the year. I want that premium to start offsetting intrinsic value against wider strikes.
Mm-hmm.
But I mean, it's either way. You can roll down if you want to get some more premium there, but I'm gonna hold on to it. Tasty Trade has a new promo going on.
Yes.
It ends November 30th, so limited time offer, but the money match event. If you go to tastytrade.com/money match, nice little thing here. 1% cash match on any and all deposits up to $2,000 total. So if you get up to $200,000, you get a $2,000 match within your 30-day period, but also 30 days commission-free trading. So great way to test out the platform if you're new watcher or listener. But especially I always think about the 0-day options traders or the people that are in and out more often with the 30-day commission-free, because that can be a lot more than any other promo that I've seen out there, especially if you're super active. So if you've been considering Tasty Trade, check it out. tastytrade.com/money match. Yeah.
Very nice. As for earnings, the only one we really have this week is Nike. I believe it's Wednesday after the close. Oh, no, I'm just sorry. It's tomorrow after the close.
Yeah.
You had Carnival Cruise Lines this morning. The stock was up in the pre-market. It's now down $1 and change here. Big candle for Carnival Cruise.
Lovely.
Have you been hanging your hat on anything else? Anything catching your eye? I mean, despite the move we're having today in the E-minis and the range that we're having, we've only had about a million contracts traded. My Taiwanese sources are telling me nothing really off the charts in terms of volume besides Tesla. Tesla had over 1 million contracts traded today. NVIDIA had 2.2 million, 3 million in SPX. So a relatively light day here to start the week.
Yeah, we had a ton of trading activity in IBIT this morning. It's still a huge number, 45 million shares today, but it was higher than SPY, the Qs, and all the Mag 7 stocks, aside from NVIDIA and Tesla. So just interesting to see the increase in volume relative to those other huge tech names, obviously due to the Bitcoin move that we saw this morning. But yeah, I'm just shocked that gold keeps ripping. It seems it seems impossible that it can keep going, but then again, it's not. But yeah, I've got this GLD put diagonal spread, the 345, 335. So it's out of the money right now, but it's a long-term one. I bought the December option, sold the November against it. So not moving as much as maybe a November, October would have. But yeah, just looking for any kind of sell-off here, a little breather in gold, but we're not getting it.
Yeah, I have this butterfly around the 38.50 mark is my sweet spot. But when I put this on as broken wing butterfly, I bought in the risk shortly thereafter. I did not think that this was going to come into play at least this quickly. I have 29 days left until expiration, but yeah, this move in gold has been crazy. We had the slides from the Research Corner this morning, our 8 a.m. segment. I was looking at both the huge move in gold and silver, but that ratio, the gold-silver ratio, going from 105 back down to the mid 80s, because you've had this kind of outperformance of silver over the last week or so where gold has been strong, but not as strong. It's kind of chopped in that 37 to 3,800 mark, and now we're just blasting through that. So that spread is certainly widening out, with gold up 1.28%, silver only up 0.8%. That's moved a good deal today. Big position, obviously, to trade that as well.
Yeah, I think just looking at these isolated markets, I mean, obviously gold, silver, crude oil is interesting. I want to get long again in crude oil, but I want
a micro.
Yeah, but I want to see if we can continue this sell-off here closer to 60.
I'm not going to wait.
I was going to say, what was that? Here you go.
The MCL.
Yeah. I mean, I don't fault you for it.
Yes.
The last one worked out very well. But yeah, we've just been buying these MCL contracts when they get to near-term lows, we'll say. So around 62, 61, 60. or into these big red bar sell-offs too. Tasty FX, I closed
Japanese yen. Did you?
I closed that one like Friday, I think.
Oh.
But I just closed the CAD franc. I had a CAD franc on this morning. That was a small winner. I closed that.
Okay.
But yeah, the Japanese yen I closed, the British pound franc I closed this morning.
Do you still have didn't you do a put spread with Katie? That was Katie's trade idea from last week. Did you follow along on that one?
No, because I was in on the
you had the
FX position.
The spot, yeah. I still have that on, but it's nearing like 35-40% max profit position here.
Love it.
So hopefully coming off in the next couple days. E-minis up 13, NASDAQ up 100. Bitcoin staying strong at 115 on the futures spot at 114. What do you think into tomorrow, into quarter end? Chop?
I think we chop.
66.50? Is that going to be a split between 9 or 10 people?
Well, I think today was interesting because when we were up like 20, 30 this morning, we kept creeping higher.
Up like 40.
Yeah, I thought we were just going to keep going. I thought we were going to be up 50, 60. But the fact that we even sold off, I think, is a sign that maybe there is some legit resistance where when we start to creep high, there's sellers coming in. So I think it'll be a chop fest again.
Do you think volatility getting bid here is any indication of that?
The actual selling, the active selling off.
Yeah, and just but it's not like it's up a ton, but 1.5% move in vol, 25 ticks. I know everybody gets all panties in a bunch when you say percentages, but both. Little bit of a bid in volatility here.
Yeah.
After the smashing it had on Friday.
Yeah. I think we'll be chop city, but
yeah.
Just in case I'm wrong, only 5-point wide spread in SPX 0 day. We'll be fine if I'm wrong, but yeah, it feels wrong to fade a move that's projected to be so small, but we've seen this before where when we get these low levels of activity, we tend to just chop. So I don't know.
We will see, but somebody's going to make some money off the move tomorrow, so it doesn't matter if it's up, down, sideways.
Yeah.
Somebody's going to be making some money because we got a ton of guesses there. Going into the close here, E-minis up 13. You got the NASDAQ up 100, the Dow up 43, and the Russell basically unchanged today. Bonds have been strong all session. They really got bought since the open here, up 23 ticks. Volatility futures up 20 ticks, I should say. Gold at the highs, 38.57. Bitcoin at the highs. Risk on.
Risk on indeed.
Yes.
Yeah, I think it'll be interesting to see what happens with Nike tomorrow. They've had some crazy earnings reports recently. They've had some non-earnings gap downs and up. So
reversed a lot of the move that it had on the
initial.
I think that was a China pause move.
Yeah, I don't remember exactly. We could look it up.
Yeah, 90 days puts us around June.
Yeah.
I think that was the first pause.
Yeah.
Is when we had that move.
I think you might be right.
China stocks are having a nice day too. BABA was up 8 and change here near the high of the session. Baidu as well, 350. Pinduoduo as well, PDD.
Yeah.
67 cents. So those have been strong too.
But yeah, Nike, $70 stock, 5.5 point expected move. So we'll do something in there tomorrow for sure.
Very nice. Going into the close here, E-minis staging a late rally. They're going to goose them into the close, as one would say here, up 18. You got the NASDAQ up 112, Dow up 60, and the Russell basically unchanged. Volatility futures staying relatively bid, though, into the close. We'll see if that has anything to do with the move tomorrow. So good stuff.
Yeah.
Want to take a quick little 90-second break and come back and do this all over tomorrow?
Let's do it.
Perfect. We're going to take a quick little 90-second break. The overtime boys coming up next. Stick around for that. You're listening to Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade.
go up. And by that, I mean the moves in the dollar, right? The 2 straight big days in the dollar last week, and yet gold and silver were still up. Pull back today, gold and silver go up. So that's probably one of the stranger things.
It's a huge deal. I've been watching it as well, and you're absolutely right. We can go to the chart here, and we can see. I mean, the rise in gold has been absolutely relentless, and silver has been even more so. I mean, I got off the boat for gold last week. Thankfully, I stayed in silver. I did not have on my bingo card that whatever this was going to be another massive push to record highs. Here's silver. Thankfully, I'm still in this one. It just will not give it up.
Wait a minute. So there's things that you actually get long? I thought you just got short everything.
Absolutely. I'm long all kinds of things. I'm long the dollar. I'm long Brazilian stocks. I'm long metals. I'm long bonds. All kinds of things.
I just thought you were short everything, and you're like, everything's going to hell. Like, what's the point of it?
I mean, it is, but I'm not going to stand in front of price action that's moving. If you're right at the wrong time, you're wrong.
Right.
And so,
don't you think, though, Ilya, that this more than anything is a perpetuation of really a return to sort of the overriding universe of optimism more than it is anything else? That it's sort of like the Fed meeting is behind us. Whatever sort of things, it's more wall of worry-ish, and we're back on.
I mean, it could
some derivative of the supernova.
Here's what, and I think Jamal's point here is very well taken. This is a bit weird for gold and silver, because you wouldn't expect for the dollar to be going up and for them to be surging like this. Typically, one is a foil for the other. And yet, here we are. The dollar has been rebounding. It's down a little bit today. It was a little bit soggy on Friday, but the overall direction here through this period that gold and silver have been going up is for the dollar to head higher. We can see that in the dollar index here. The other thing, and just keep in your head here, that this is September 17th, this low in the dollar. Take a look at what's going on in the bonds. Here is that same September 17th. That, of course, is the Fed meeting. So since the Fed meeting, the dollar is up, yields are up. Gold doesn't yield anything, silver doesn't yield anything. They typically get walloped in an environment where gold is facing both a dollar that's rising and yields that are rising, because both of those things are kryptonite for a metal that is, and for precious in general, because they're basically alternatives to fiat. If fiat is rising, you don't need alternatives, and alternatives to yield, because they don't pay any yield. And so you look at this and you go, well, what do these things have that is taking them higher despite what should be a terrible environment? And it's tempting to say that it's sort of a rising tide lifts all boats kind of a thing, but you're not seeing it elsewhere. So here's, again, the Fed. Where have we gone? Basically nowhere. Here's the 17th right here. We're kind of still stuck.
Yeah.
And it's the same thing for NASDAQ. It's the same thing across the board. I mean, disregard this sea of lines here. I
actually kind of like that. I think that's good for healthy markets, honestly, if you get a couple of days of pullback and sideways action.
Yeah. No, there's nothing about these stocks that says that they're going to collapse. But I don't think anything about this explains what these metals are doing, if not what is sort of you can't prove this, so it might as well be this explanation, which is that we might have a government shutdown. We might have a Supreme Court that overrules the bulk of the president's tariffs at a time when the markets just spent 4 or 5 months digesting them finally. So maybe it's just uncertainty. Maybe it's just hedging.
You're saying maybe it's just uncertainty hedging that's driving the bond and metals?
That's driving metals in particular, and I would think the bond.
I mean, I guess that's why. But how do you reconcile that with the resume and the incline of the NASDAQ?
I guess I don't see what the NASDAQ is doing today as resumption so much as it is continued kind of digestion in this range. I think if you look at what's going on here on a shorter term time frame, you can see, and maybe in 8 hours a little bit more sane, what have we done here? We had a sell-off in the wake of the Fed, ultimately, on some digestion. We've come back, and we're basically retesting the underside of where the break occurred. And we tried higher today. We tried to make a run for the highs. We couldn't stick it. So we're kind of mid-range-ish here. If this is your kind of rough top and this is the bottom, we're kind of in the middle of a range, attempting to find whether whatever this was is just a pullback, yet another in a move higher, or there's really something here that's more substantive.
Well, I mean,
I wouldn't say that there's vigor in the stock market.
Yeah, and some people
I'd rather be long than short.
I agree there.
I mean, some people would say that lack of vigor is probably due to the impending government shutdown. Now, this is the point where I have to ask, and I mean this sincerely. Dylan, how often do you hear about U.S. stocks, for example, and over in Milan? I'm curious. Is it like a regular, point that this is going on, the Dow, NASDAQ, S&P, or?
No.
So, okay. Well, and is there any mention at all of a potential government shutdown in the United States?
No, there's almost no discussion of the U.S. government. Hasn't been for months. As much as possible, it's a topic that's avoided.
And that's why I find it
Ever
so funny.
Since April.
That's why I find it so
came
funny.
out with the phone board, and now nobody wants to hear anything.
That's why
Ever
I find
since
it.
April, it's a topic that's best left undiscussed, Jamal.
And that's why I find it so funny that there's all these different people that are trying to make this such a huge catalyst that the impending government shutdown is going to falter stocks, or we're trading sideways because of that. I don't believe it.
Yeah, but I feel like the
don't really
government
mind.
shutdown lives in the same world as like hurricane coverage, where it's a bonanza for the news industry, because it's like it creates a deadline and a countdown and villains and heroes. It's great content, but I don't actually know how relevant it is to the economy, other than it's like the billionth display of incompetence from the U.S. government. But that's not a new piece of information.
Yeah.
This is where it gets interesting, right? Like the actual shutdown probably isn't that big of a deal on the face of it, because to see any sort of economic impact from that would take months to actually have it visibly show up in some kind of data. And in the meantime, it's all, well, how credible of an economic hit do you think it's going to be? And that becomes a question of how credible do you think this is going to last? And what we've been conditioned to know over the past, let's call it back to the Obama administration, when this got really weaponized in the way that we know it now, and sort of went back and forth. It always finds some kind of a resolution, if not at the 11th hour, then within a day or two.
Right.
And so the economic consequences never get a chance to really be seen. And so the Pavlovian response in markets, as you would expect, is, yeah, okay, government shutdown, blah, blah, blah.
But
blah.
that's why I don't think. Do you think the discussion of a government shutdown is a real?
No, I don't think anybody cares.
Yeah, that's what I'm saying. I think interpreting pricing behavior as being related to the government shutdown, I think, is not correct.
Well, here's where I think it's always dangerous to say this time is different, but here is where this time might be different, because sometimes it is, right? Those are extreme examples, but extreme examples do occur, and when they occur in low volatility environments like this, because the spring has been coiled and the time has sprung, as it were, eventually. So does it have economic implications? Probably not. But could it be a sentiment marker? Yes. It
You're
could
saying
be a
it's
sentiment.
Maybe you're saying, but the implication being that it's a sentiment marker because it reveals a moment of a meaningfully different discounting of the competence of the American government. Like, what would sentiment shift on? I'm not buying
sense that, I mean, short answer, yes. But the reason that it would be a marker this time, maybe, and maybe it's not. We'll see. But the reason it could be a marker this time is because you're in this interesting situation where the markets are being told basically since the Fed meeting that they're not getting as much easing as they thought. And so the sort of cloak of invincibility that is cheap money is not going to be there to the extent that they want it. And the markets have, to their credit, been adjusting. It's why we have higher yields. It's why we have a stronger dollar. We've meaningfully unwound rate cut expectations for next year. In particular, for this year, things are semi-settled. There's only 2 meetings left. But for next year, that's been a live disconnect between the markets and the Fed. We still have a live disconnect. The markets are still at 60 basis points for next year. That's not what the Fed is thinking. The Fed is thinking only a single rate cut. But that's already a major shift in the sense that we were much further apart before that Fed meeting. We've had a significant adjustment in these expectations. So there is perhaps a level of sensitivity here that wasn't there before.
Normally, I would tend to agree, but the only thing that says otherwise is, I mean, just look at SPX straddle. SPX straddle for this Friday is a 1% move that it's pricing, and apparently, I just saw this today. Apparently, the average move that we've been getting around these non-farm payrolls is about 1.6% in either direction. So the fact that it's only 1%, just think about the election, right? Obviously, it was a deadline, an event. To your point, Dylan, like you said about hurricanes, I mean, it's true. I mean, if so-and-so, as soon as whatever hurricane hits the Gulf, everybody's paying attention to it. Where is it going to make landfall potentially? You get all the different patterns. You pull up the news stations. They're all talking about it. And then as soon as it takes 2 degrees to the right and it goes completely away from landfall, nobody even mentions the hurricane's name anymore. You can't even mention the last southern storm that happened, right? Tropical storm. In this situation, again, 1% move expected for Friday, and that's low compared to all 8 of the other non-farm payrolls that we've had this year. Mm-hmm. If there were really some government shutdown situation, we would see it in SPX options for Wednesday. Oh my God, the government's going to shut down. This could be an issue. I think the only way you have to even think about this potentially being an issue is if you compare it to the last time we had a government shutdown, 2018. And I just looked this up today. 35 days? I didn't even remember that being the case, but once I read it, I was like, oh yeah, that was the case. Like the government was shut down for 35 days. And again, you talk about deadlines and countdowns. I remember all of a sudden you start seeing all these different things. Oh, well, if this doesn't get paid by XYZ date, this is going to be an issue. And there's probably only a handful of stocks out of the 503 stocks that we pay attention to option wise. There's probably a handful that really would be affected by, well, they probably rely on the government for a large sum of their money, right? Like they don't be the only ones that I could think of that would affect that would be affected, and not the whole stock market. You know what I mean?
Let's just take a look at Palantir for a second when we mention companies' reliance on government contracts. Is it surging? No. Is it falling? No. It doesn't seem to care particularly about anything that's going on here. I mean, I guess you could say that for a sensitive name like this, you're maybe stuck in a range waiting for things to happen, but you're clearly not perturbed because what you've learned over the past, let's call it decade-ish, is that these things resolve themselves sooner rather than later. But again, like, it's not the actual thing that I think would be the scary thing. To Dylan's point, if this is anything, then it's some sort of a some sort of a marker of government dysfunction that ends up being a straw that breaks the camel's back, where at some point you just have so much dysfunction that you go, you know what? If the money was going to be really cheap, we could swallow this level of dysfunction because something goes wrong, money's cheap, you just lose some, borrow some more, go again. But if the money's not going to be as cheap, then the defense against dysfunction is diminished. And so you will accept less of it. Is this the dysfunction hill on which the market's going to die? I highly doubt it.
Yeah, I think that the tariff decision is a much bigger decision, actually.
Agreed.
Like, I don't think the government shutdown is relevant to the stock market's behavior in any way, shape, or form.
Yeah, I mean, if we take a look at
that said,
SR3,
though, hold on, but that said, before you leave Palantir, this is actually really interesting. Like, this is actually the example of a stock that could be affected. And I tell you, if this stock dropped $20, do you know how many people will be tripping over themselves to buy this thing at $150? A whole lot.
A whole lot.
And that would be great,
Probably.
except if it drops to 120, and then we have a real trade going on, guys. We have a real trade going on then, Palantir.
Yeah, I mean, there's a few of these names like this. I mean, I suppose you could say Tesla. There's a lot of government contracts there.
Is there? I mean, I guess so. Yeah.
I mean, as a kind of stand-in, right? You can't exactly put on a SpaceX options trade here, right? So if you're gonna look at sort of the Musk universe of government patronage, I guess this would be your vehicle. But again, there's not really anything going on here.
I like Jamal's point. I mean, I think that if Palantir sells off on perceived odds of the government shutdown, that would be a delightful opportunity for a lot of folks, I would imagine. But it just seems so unlikely. But I mean, if the stock's down, the stock's down.
Yeah, I guess Boeing, a lot of these government contractors, I forgot about that. Lockheed Martin, again, a handful of stocks.
Lockheed
like you
is
said,
the
right?
other one.
There's some interesting trading opportunities potentially. These are the ones to keep your eyes out for.
Yeah, there may be something here.
Does Intel get smoked? Does MP, these names that have recently had these big investments from the entire government?
Probably not.
No, it doesn't matter.
Have you ever seen anything like this? I mean, outside of TARP, I might be derailing things here, but have you ever seen anything like that where, you get the
not
MPs
outside
of
of
the world,
TARP.
the LAC, you know what I mean? It's incredible.
It's wild.
It's wild.
It's wild. I mean, but this is the kind of thing where if you're a student of history and you read about the South Sea bubble, you read about the railroads crash, you read about the .com crash, and you go, well, there's a lot of pattern making between these things.
Yeah.
And somehow toward the sunset days in sort of episodes like this, you start to see money chasing weirdness. And this looks a lot in a lot of spots here where money is chasing weirdness.
Never let a good crisis go to waste, right?
Well, you'd think. You look at Bitcoin here, sort of in the context of all of this. I mean, it's certainly up today. In a semi-spirited fashion, but it hasn't really gone anywhere since July. And so you'd think if we have all this buoyant risk sentiment, how come it isn't here? If this is sort of, because obviously this is not doing what gold and silver are doing. So any kind of idea that this is somehow digital gold is obviously nonsense. The price action is saying that's definitely not what's going on here. So if it isn't, then it looks more or less like risk sentiment by proxy. But it's certainly not as buoyant as, let's say, NASDAQ or even S&P either. Does this give you any kind of pause that the market is getting ready to be done being invulnerable? Because the sort of the highest beta of the betas in the risk sentiment space doesn't want to go?
Well, I think the crowded trades are like you said, the NASDAQ, the gold and silver right now. I mean, there's no reason to jump into Bitcoin. Look, Bitcoin is the cool thing about Bitcoin. I'm not saying it's not cool anymore, but the cool thing about Bitcoin initially was the whole unregulated part, right? And the fact that there was so much volatility that it would move around 10 to 20%. I mean, it just pulled back, right? In August 13th, whatever, 14th, I think is those tops there, pulled back from that. Normally, that pullback would have been 20%, 30%, right?
Yeah.
Now it's a 5% pullback because it's just matured.
And looks very regular. Looks like any other market.
I mean, that's the maturity of the product. That right there is the funds. This is what happens when you get ETFs and funds all of a sudden interested in something and they're tripping over themselves to trade it and do things with it. It calms down. The volatility of Bitcoin has calmed down. So I would say this is not unordinary. I don't expect it. I think right now it's just another asset class that people can do something with when it gets interesting, and it'll have its time in the sun again. I'm sure of it.
Right, but I mean, I think with
from a sentiment perspective, I get
sentiment indicators are detached from sentiment at the moment.
Whether so from a sentiment exactly. From a sentiment perspective, I totally get it. I mean, yes, totally. The great irony of Bitcoin was everybody was screaming, including me, and will continue to be screaming, by the way, this is not money. And the reason that this is not money, among other things, is that it's a terrible store of value. It's incredibly concentrated and volatile. And until it's more liquid, it won't be more stable and it won't be closer to money. Well, with the introduction of these ETFs, we got the liquidity. It's become more stable, but it's had to, from a regulatory perspective, give up a bunch of what made it a pretender to money. Now it's just another risk-on instrument in the sort of universe of those. And yes, all of that liquidity has made it much more stable. It's matured. It's become much less of a crazy asset. But it's still, I would think, risk sentiment on creatine, as it were. And if that's what it is, how come stocks are surging and this isn't? If we are, in fact, in this sort of environment where a rising tide lifts all boats, I think to Dylan's point, why is the tide not lifting this boat? Is it something out?
But also, what if anything drives it in any way, shape, or form? And is there a trade any which way involved with it? I think there's sort of all those layers of questions. My sense with Bitcoin, and obviously I'm not a big believer, but is that Bitcoin tends to do whatever it does based on pure speculative sentiment,
right?
And then reverses its way into a story. So sometimes it's a store of value, sometimes it's a risk-on sentiment indicator, sometimes it's a bypass mechanism for fiat currency. It sort of reaches to the available story that justifies the price action more than the story actually drives the price action. So I think it's less relevant. I also think that gold doesn't actually move. Like gold was a much more reliable sentiment indicator, but I feel like gold has really started moving based on some version of speculative demand. Maybe gold is a play on the sort of Trumpian efforts to weaken the dollar. You know, maybe there's a dollar gold. Like if you're, in order for the dollar to go, if the dollar is going to rise, gold is going to goes to that sort of that Radigan trade we were talking about, which was long gold, long dollar, short gold, short NASDAQ. Obviously, the short NASDAQ piece is not working, but I wonder the degree to which gold, like Bitcoin, is actually a sentiment indicator, or it's only a sentiment indicator when it is convenient.
Right. And so this is sort of why I'm harping on this, because I look at this and I go, okay, well, if money just wants to go to assets, if it doesn't want to sit in cash, if there is a general kind of risk on vibe, shouldn't this be going higher?
I don't know.
Lower.
Yeah.
I mean, it went higher today for for what it's worth.
Dead cat bounce kind of, right? But I mean, there's really
Yeah.
no story. And I think this is kind of
Right.
Dylan said,
There's
there's really no
there's nothing.
story right now with Bitcoin. And again, it'll have its day in the sun again, but gold and silver are way more fascinating for people to trip over themselves to keep trying to buy. The AI story isn't going anywhere. And so that part is you need the fear of DeepSeek or something else again to cause the NASDAQ to fall. I don't know how that's going to happen. But it'll come up, I'm sure, at some point or another. You know, the
Looking
gold
at
and
the
silver
mags here,
gold and silver are
while
just
we're
much
on.
more interesting. And Bitcoin is just not. Maybe, I don't know if that means you buy Bitcoin and you sit on and you wait for it to be interesting again, or you wait for another dip and jump in.
That's actually a really interesting perspective. If we say, you know what, nothing matters, what matters is the attention span of the speculative audience. And if the story isn't fun, then it's not going to go anywhere, and you're just waiting for the story to rotate back around. It's, in a sense, Dylan, a kind of endorsement of not thinking.
No, I mean, I
something
think
has
not
gone
thinking is the
sideways, you
most,
just buy it and wait.
Not thinking is the best founded investment thesis of the year.
Yes. Yes.
And I'm just wondering the degree to which even the sell-off, if you go look at the Mag 7 sell-off in this chart, you look at the NASDAQ chart, which basically is a mirror of the Mag 7 chart because of obvious reasons. I just wonder the degree to which you just have that one series, that one moment of pullback that is then, I would say the catalyst for that was not as many rate cuts as soon as we'd hoped. And all the sort of notes from the September 17th Fed meeting.
It certainly seems that.
And then it's, the heck with it, supernova.
I mean, this is sort of, I think, where we're going to have
it's not like it's not going to be that bad.
And this, I think, is sort of the critical question, right? Because eventually, like, it's not like gravity stopped existing. Eventually, this market does turn, but eventually is not a trading thesis. You can't sit in something forever.
This is the 8 billionth example of buy the dip, though.
Well, maybe. Right?
Until proven wrong at this point.
Until proven otherwise. That's right. That's right. Until proven otherwise. And I would say this top here, if you want to look at NASDAQ, is sort of the proving ground at the top. This is somewhere near the proving ground on the bottom, maybe even back down to the sort of this former high somewhere here. If you get under this, something different is occurring, just visually. And so we're kind of figuring it out. But from a risk-reward perspective, what makes more speculative sense? Not in a 10-year, the AI thing will eventually be what it is, because obviously, yes, agreed. But from a trading perspective, in a kind of 45 days in, a swing trade for a few weeks sort of mindset. In my mind, vol is really cheap, although it's not as cheap as it was last week, but it's really cheap. And it's better risk reward to be short than long. If you're looking at the indexes, again, opportunistically, not in a structural sense.
From on the index level, I really don't see. I mean, yeah, okay, fine. It makes more sense to be short than long, of course. I mean, who would want to really get long? Establish an initial position of long here? Nobody really, right? But
no, that's why if you're for, that's why I like Jamal. You don't think I was yammering on last week. Short NASDAQ, short gold, long dollar. But short NASDAQ is the weakest of my suggestions at the moment.
Yeah, because the AI story is just so strong, right? But
I think it's crazy to be against it, even though I'm against it. But
yeah,
I know. My overriding theme is the AI supernova. You know, basically paves any opposition gets paved over with thoughtless bullishness.
Wait, it's long Nasdaq, short. Short Nasdaq,
short
long
Nasdaq,
dollar.
short gold, long dollar was
Short
my
gold.
after the Fed.
So
trade.
which one would you guys see having a 5% pullback first, gold or Nasdaq? Is the real question here, right? You just need one.
I would think gold.
Because I think the dollar is going to get stronger.
I would think gold too, right? I mean, yeah. I would think gold too, because I don't necessarily know if the Nasdaq has a 5% pullback coming anytime soon. I'm not sure.
I will say this: if you want to be completely ticker agnostic, just ignore which thing is which, ignore story, ignore narrative, AI, this, whatever.
Mm-hmm.
This gold chart looks stronger than the Nasdaq chart. Because this gold chart is making higher highs. It had its pullback, digestion, whatever that minor 3-day kerfuffle was last week. Shook me out, but nevertheless, we're making higher highs and with gusto here today. Whereas if you look at NASDAQ, we're not. We had a 3-day pullback. We've erased maybe about half of it. We couldn't make a concerted run at the high today. So is it falling off a cliff? Of course not. No, it's within spitting distance of a record high. But is it showing the kind of vigor that gold is? No. So from a purely ticker agnostic, just look at the candles in front of you kind of a thing, momentum seems stronger in gold, but also would I try to fight it? No.
Mm-hmm. No, that's a great exercise, honestly, just the ticker agnostic piece of it, because that enables people, like us who charters, right? Like that can sort of look at this. Honestly, I could make a case for both of them, but truthfully, if it were agnostic, I'd probably want to be in this one more than the other one. But because the other one is peaking and it is gold, and gold has this ability to keep being a momentum play for longer than people expect, that's where the stories come in, right? Like that's where actually not being ticker agnostic works somehow, but it is a good
absolutely exercise. No, I do think thinking can be helpful sometimes.
I'm crazy enough that I can make a case for both.
At least in the reading of the ticker, it can be helpful.
Sure.
Sometimes.
I'm crazy
in very
enough.
narrow circumstances, apparently.
I'm crazy enough where I can make a case for doing both. I mean, but that's just how I like to roll at times.
I mean,
doing both what, Jamal?
Gold
Getting
was
long
a great,
both.
yeah, silver.
Long
I think
NASDAQ.
Yeah,
silver was a phenomenal.
That's not what I want to
example.
do. I'm just saying from the charts. I'm just saying. From
Yeah,
the
what
charts.
and long dollar?
No, I'm just saying from
long
the charts.
dollar, I think,
but
is one of the
long
most-
dollar. Yeah, I could. I'm into that actually. I have been doing that.
I think one of the scariest things might be that we're all on this program at this point, long dollars. That kind of consensus is a bit scary. But buying record highs, silver is a wonderful example of why you would. I mean, here was a consolidation. This broke out of that consolidation. I bought it here. And on we go. I mean, getting in the way of a trending market is probably not the greatest of all ideas.
We'll go to Jamal's point of forget trying to be clever. Own them. Don't bet against them.
Well, I mean, I think this is where,
which is obviously from a non-thinking standpoint.
This is where the momentum thing would come in.
Look,
right?
I got long, so I got long. I'm looking at this chart, and I can tell you the areas where I did. I got long in June, right, on the big pop. I'm sure people thought it was nuts then. But again, it's a momentum name. Yep, right there. It was the second time, the second one. I got long.
This guy right
those
here.
couple of, and yeah, and sorry, in that one you showed in the first candle, in the first candle, and then the 2 days after.
That's a technician's dream right there.
In the first candle that you highlighted, and then those 2 days after we were red, I was long already. I was like, damn, did I do the right thing? And then we had the next pop, boom, boom, boom.
Boom.
I got
right
out.
there.
I got out maybe as it was going in, either the day before or the day after the next big move, like the 2 days after. You roll over? No, back over where we were, but like right there. I got out the day before that, and then I was like, damn, did I get out too early? No, I didn't. And then the next time I got long it was the other big pop, and I'm like, I want to be in as soon as it had, not there actually, the one after. I did that one. And I was like, I'm going to stay until 45, but I actually stayed until 43 and I'm out. And I'm out now. And that's kind of it. And, you know, whatever. I mean, I missed
was
the next
arguing
ride.
with so I missed all of the ones that you caught here, annoyingly, because I was paying attention elsewhere. But Vecchio finally put me on the spot and goes, "Listen, ticker agnostic. What do you do if it breaks this range?" I go, well, "You have to buy it. That's it." And then
hell yeah,
and then boom, there it is. I'm like, "Well, that's it. I've talked myself into it now," and there you go. So there's nothing inherently incorrect about buying something that's breaking out to a record high. If the trend is there, it's there. To Dylan's point on the dollar, this is one of the few things I suppose you could say is relatively cheap. So here's the euro. I mean, obviously, the dollar had a terrible start to the beginning of the year, and also, obviously, since the end of June, beginning of July, it has stopped falling. So if there was going to be something that's cheap, this looks like it.
I mean, I think long dollar is one of the best trades on the board. Honestly, I think it's going to be. I don't know when we start to see like some serious. I don't want to say momentum, but you know, some serious sort of run in the dollar. I don't know when that's going to happen. I don't know how long it's going to take. You know, obviously things are a little different with currencies, as you guys know, but I think that's one of the best trades on the board, man. I really do. My current trade is in January because I know it damn sure ain't going to happen in October, November, December. Might not happen in January neither, but I think you just got to keep pushing it down the road and wait for it to happen. Because like you said, maybe a lot of us on this network are long dollar. But we all know there's been a lot of people who are still short the dollar.
Oh, the world is very short.
That tells you everything you need to know.
Yeah, the world is very short.
Here's a hypothetical for you, Ilya. Let's say the Supreme Court rules against the tariffs.
Yes.
What does that do to the dollar? If you knew the Supreme Court ruling, would you be long or short the dollar?
Long.
If the ruling was no tariffs.
Whatever the ruling is.
I think there ends up being a pullback, right? Like if they come out and say that, and that's going to be painful. But I think at some point or another, there will be the bounce that we're looking for. News
Why
is
don't
going
like the dollar either way after the Supreme Court, Ilya?
Because I don't think that I think the biggest risk with the Supreme Court is that the Supreme Court throws the situation into some manner of disarray. That what's going to happen is the Supreme Court essentially says, okay, markets, you've had since April, so let's call it the better part of 5 months, 6 months now almost, to digest all of this. And you finally kind of anchored around the idea of what these tariffs are going to be and what levels they are and et cetera. And then you say, actually, everything you thought you knew, you don't know. And it's an open thing again. And obviously, if the court decides that way, we know who the president is. He's not going to take it lying down. He's not going to say, oh, well, the Supreme Court ruled. C'est la vie. That's not what this is, I would think. So now we're going to have a protracted fight. We're going to have all kinds of fire and fury around this. Somebody's going to get fired. That's not supposed to be. That's going to create another case somewhere. But
is that dollar positive? Is that
going to be yes? I think it's going to be a dollar positive.
How is that positive for the dollar?
Because I think what we learned in April, and part of the reason why the dollar has stopped falling, despite all this dovish talk, despite the Fed resuming rate cuts, I think the reason why the dollar ultimately stopped falling is because, and the reason markets came back in April, despite the tariff thing having not become meaningfully better. I think the reason we got that extreme and a turn is the president showed his hand in that he showed he is amenable to market discipline. And this was really it. So when you got this, and I'm sort of jumping to the long bond here because I think it illustrates well
when
what we're talking about.
Capitulation.
Here's this pocket of crazy from, let's call it the beginning of April right into these lows.
It's
right
the reason
here,
that they don't talk about it in outside of America.
You've got stocks and bonds and the dollar going down at the same time here in crazy leaps.
Yeah, it's
because
asset
the market
due to wild
perceives.
government.
Yeah.
Right. The market
Oh,
goes,
yeah. They were
"Wait a
like,
second."
hey, they went to and knocked on the door and they said, Mr. President, look, we love the tariffs. We love the tariffs. Don't we, guys? Yeah, we love the tariffs, yes. But the U.S. economy is crashing right now. We just wanted to let you know. That's what that was.
Yeah, they were like, so you know that thing where the world actually starts to think if we're good for the money that we've borrowed? This is it.
And where the
We
value
need to
of
tell them that we're
everything,
good for it.
from the currency to every equity, every asset of any kind just goes down.
Right. You can't, I mean, this was the moment when the essence of the financial system's structure was challenged.
But isn't that what makes the Supreme Court decision interesting?
Absolutely.
Yes, because I think what the markets learned is that ultimately the president doesn't want to take it that far. And in the aftermath of all of this, once we kind of got through benchmarking the rate cuts for this year, the dollar stopped falling and is once again the sort of cash of choice in a risk-off scenario. When people cash out, they'll be cashing out into dollars. And I think the dollar runs, if the Supreme Court creates chaos, the dollar doesn't run because the decision is good or bad for the dollar as such. It's because there's risk aversion and stocks freak out and money goes to cash. And the most liquid cash of choice is the dollar, and they're not going to perceive it as, oh no, the dollar, because they've already learned. In an environment where, oh no, the dollar becomes a story, the White House backs up.
You know what's annoying is that it's not possible to directly trade the Dixie. I mean, I don't understand why that's.
I mean, you might as well just trade the euro.
I am. That's it.
Identical.
I just would like to be able to trade the Dixie, honestly. But yeah, you're right. I mean, I have a put spread on the euro. I turned it into a butterfly, but at some point I'm buying some of those wings back and just going to have a straight up put spread because that's the trade I really want.
What about the ETF, Celia, FXE?
I mean, you could.
Those.
You could. I think you're better off in the futures or, frankly, the spot market. You could have all of the size advantages of FXC. I mean, FXC, why would you want to have FXC? It's an ETF, so the sizing is more flexible than even the futures, and there's options. But if you didn't want to trade, let's say, the M6E contract directly, the micro future, which, I mean, I think is small enough to just buy and sell, no options. But if you wanted to have that kind of exposure, there's always spot. And we have this here on the platform. You could just go to euro dollar spot and do it that way. And the flexibility in size here is incredible. I mean, you could go down to a 1K lot. So, and this is open 24 hours a day. It's not liquid 24 hours a day, obviously. There's periods where it's more liquid, there's periods where it's less, but this is probably the most liquid financial instrument in the known universe. Spot euro USD. It's the world's top most liquid currencies pitted against each other. What is more liquid? So FXE isn't that attractive unless you wanted to do, let's say, something like a call vertical, or if you wanted to, let's say, be a seller of puts. You could look at FXC from that perspective because obviously on SpotFX there's no options structure. Here on M6E there's no options structure. So if you wanted to necessarily do it through options, you could do FXC. I'm just doing it through the futures. I'm short M6E, and on the spot side, I'm short euro dollar itself.
I think the real answer is liquidity. I mean, it looks like a total of like 150 options total traded in FXC today.
Right. You'd have to really, really want to do it with options, and then for whatever. I mean, there's nothing wrong with saying, you know what, I just want to pay up for my risk, and if I'm wrong, it'll expire worthless, and I know up front what my outlay is. You could do that. If your thinking is, you know what, I've never engaged with currencies before, I want to do it through FXC because I can have a risk-defined vertical and say, you know what, money out of pocket is there, it'll go or it won't. Fine.
I like 6E.
I don't have to manage it.
I like 6E for sure. I mean, and you just your Q is late July and August. Those moves downside. That September. Just what was that last week? I think seeing those type of movements tells me, okay, if the dollar actually has some serious bids, this thing could drop. That's what it tells me.
Yeah. I mean, you can see here where my entry is most recently on this. It's basically smack in the middle of this range. This is where I re-upped and pushed out to the Z5. I've been short this for longer, but obviously these things expire, which another fun fact about spot, it does not. It rolls over dynamically. But we're basically testing the underside of whatever this breakdown was, and we held here. So this is actually not an inopportune spot to look for a short. Even just looking at these candles here on the 4 hour, I mean, you have a clear kind of bottom of support right here. You backfill into it, and you just look at these candles, and you see these long wicks of exhaustion that attempt to get back up here and can't. And you go, well, this is what a short would look like if I wasn't already in one. And like right about here.
Does the government buying all these companies all of a sudden, you know, these companies that are happening, and you assume at some point more to come, does that have a positive influence on the dollar at some point? Is that essentially investing in America?
I don't think so. I mean, if you look at it structurally, my concern would be that it robs these companies of dynamism by essentially giving them the kind of backstop that makes companies lazy and less innovative. And the extent to which this is bad for U.S. economic growth, it means lower rates and less dollar yield appeal, ultimately. But that's a very long-term narrative.
I'm just trying to conceptualize some sneaky sort of catalyst, positive catalyst for the dollar. You know, actually, besides the Supreme Court date, which is huge.
Ruling against the tariffs very good for the dollar?
Totally. Yeah. When is that, by the way? Or are they
late October? We don't know.
Oh, okay.
At some point in October, the Supreme Court is supposed to let us all know.
I think if we had, I think that's actually one of the biggest catalysts, honestly, Dylan, like that you mentioned. It is something that,
and that's almost a binary, in my opinion. Although that's why I was fascinated, because Ilya was even suggesting that even if the Supreme Court holds up the tariffs, he still thinks a dollar benefits.
Yeah.
Yeah. No, you're right on. There's no binary. It is absolutely binary.
Yeah. I mean, I think it's more relevant in the sense that it is event risk that passes. And then the markets go, okay, we're clear of this. Now we can make a decision. Then necessarily the substance. But if the Supreme Court overrules what are these sort of national emergency tariffs, which is not all the tariffs, but this is the justification. IEPA is the law that all of this is justified on. And basically the president has latitude to declare what a national emergency in this sense is, and ostensibly the courts don't think he has quite as much latitude as he thought. And so if this gets overruled, most of the tariffs go away. But is he going to fight it? Of course. So does it create more uncertainty? I would think yes. Does that get markets to go, you know what, assets are at record levels? Maybe let's not have quite so much risk allocation when the dust just got kicked back up on this? Probably. That to me means cashing out, and cashing out is the dollar.
I wonder, are there other binaries like multinationals? Nike comes to mind. Other people that are obvious Apple sort of beneficiaries of a Supreme Court ruling against the tariffs that just have similar binary characteristics.
I would think that
Nike's struggling in general, so it's harder because Nike's got corporate problems. But
yeah, I mean, I would think that one of the things that makes this really funky is you have to be able to, I think, go and say, okay, here's the Supreme Court ruling, it will stand. I can extrapolate this forward. But can you? I'm not sure. I'm not sure it becomes settled
or
science.
On the flip side, some of those domestic American auto parts companies that are more pure play to the tariffs, that may be more binary in nature. Even if it's not a directional, but this might be an opportunity for a sort of old school tasty vol crush condor kind of situation going into this, with a November expiration.
Well, here's an interesting
30 to 45 days.
From that perspective, Dylan, here's XLE. So this is consumer discretionary. It's sitting right up against its former sort of swing high here back last year. It tried to break out and couldn't. It's kind of stuck here. IV rank is only 9. So if you wanted to take a bet, essentially saying if this is overruled, then maybe the consumers benefit because they get less of a tariff overlay and businesses can make that adjustment right away-ish. So maybe you get a little bit of a pop here. But if ultimately the Supreme Court says, you know what, the statute gives the president all kinds of leeway and we're just going to assume that the leeway's there, well, then maybe this ends up cracking lower. Either way, sort of having a kind of exposure here to basically say, okay, this thing has coiled up into some kind of a pop some which way is pretty cheap to take.
True that.
With that encouraging thought, overtime is out of time. Thank you, gentlemen, as ever. We'll be back with this show tomorrow, but don't go anywhere because in but mere moments, I'll be back for Macro Money to go over the big pitfalls that await us this week. Most importantly, of course, the U.S. jobs data. So don't go anywhere. We'll be right back.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
My most controversial market opinion is probably more political.
What's your most controversial market opinion right now?
My most controversial market opinion is that I shouldn't be following Mike and Nick. Just kidding. Love you guys so much.
The hottest take of this market? I gotta think about that. I don't know. I do like to trade the leverage, but that's not controversial. I don't know what controversy means these days. Like, I don't know. I'm sitting on cash. Like, I'm still sitting on a lot of cash, and I think that's generally seen as frowned upon, but I'm still doing it. I know market's been bouncing back up. I know things have been looking clear, but no, trust issues.
I honestly don't know if I have one. I'll say the fact that I like to trade earnings or direction as opposed to vol.
My most controversial market opinion is probably more political than it is anything else. So, I would say that, unlike others, I think the current political environment in this country is dangerous for the long term.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
And we are back to looking at these markets from a macro lens. And what do we find? Stasis. Quiet day to start the week, but plenty of event risk facing us in the coming days, culminating, of course, in the crescendo that is the monthly U.S. jobs report. This is Macro Money. I'm Ilya Spivak, head of global macro here at Tasty Live. And what we're going to do here is take a look at what awaits us in the coming days. But first, take a look at what the price action showed us last week and see if we can't surmise what the stage setting might be as this week gets underway. So Here's how the markets fared last go round. Stocks a little bit lower, but not by much. S&P down 0.4%, Nasdaq down 0.6%. So not big moves, but certainly something that is sort of on the negative side, especially relative to what we saw in the prior week, in the immediate wake of the Fed monetary policy announcement, where the markets clearly had a more positive view of what is going on here. Last week, it seemed like the markets, on reflection, had a little bit of a different perspective. We can see yields higher, in particular at the front end, but across the curve, the 10-year up, the 2-year up. What's interesting here, of course, as well, is that while that occurred and the dollar went higher, euro down 0.4%, the yen an even more convincing 1.1%. Gold continued to surge, and as did silver, which we don't have here on the table, but we can get the sense from the precious metals just by looking at gold that they don't seem to really care about the story in rates. They don't seem to really care about the story in the dollar. The stronger dollar, the higher rates should be kryptonite for an anti-fiat, non-interest bearing instrument like gold, like silver, and yet they're continuing to power higher all the same. That might give us a sense of the moment here. In addition, of course, to the kind of slight fractionally risk-off vibe in stock markets, we get a little bit more convincing of a view in Bitcoin to the extent that it is kind of risk sentiment on steroids. There you get that decline of 4.8%. So kind of a soggy thing in the way that the markets performed last week. And when we look at the way we start this week, we get a bounce in Bitcoin, though, of course, it doesn't really take us out of the near-term range. There's a little bit of a correction in the dollar. It pulls back a little bit. The euro up a tad today, as is the yen, although, of course, given last week's moves, these amount to a correction rather than anything that overtakes what we saw last week. Yields tellingly come in a little bit, the 10-year down, the 2-year down, so bonds are a little bit higher. Stocks ultimately try for the upside, but don't really get very far. S&P closes up just 1 point, or just 0.16%. That's, of course, a pittance, especially when we consider that at one point today it was up 0.6%. So this was a much more meaningful move earlier in the day. Similar story for the NASDAQ. At one point, looking at this a bit earlier, sort of from the open to the high, the NASDAQ was up over 1%. Looking at it now, of course, we get a close of just a little over 0.3%. So momentum is certainly a little bit weaker. The standout today, of course, the nearly 4% jump in crude oil. But if we take a look at this sort of in the context of where things have been, this is not an especially convincing sort of move. This looks more like something that is still, give or take, within the confines of the range that we've been looking at for the most part. I mean, if we look at, in particular, the Z5 contract, we don't really have a meaningful departure from the range. We certainly have a potent gap. We certainly have a strong start to the week, but on the whole, the story seems relatively mired still, with a bottom around 60, 61 and a top around 65. Now, with all of this in mind, we of course see that, again, crude oil aside, because it seems to be on a mission all by itself, the general sort of vibe last week and going into this week seems to have mainly come from this adjustment in Fed policy expectations. And in particular, we can see for next year. So, of course, we had a rate cut here. So whatever the tally was before that rate cut, 140 basis points, you would expect it to come in some because this cut has now occurred, but it's come in more than you would expect. So 140 minus a 25 basis point cut would give you 115 basis points. Now that we're here at 92, there's about a 23 basis point gap. That is to say, the markets have shaken out 23 basis points out of the outlook beyond just adjusting for the cut that's already occurred. So the outlook for next year in particular has narrowed at 59 basis points, as a matter of fact. This is the least dovish that we've seen the outlook for 2026 since about, give or take, June. So mid-June or so. So we're talking a little bit over 6 months. And the view for this year has been pretty well steady since before the Fed policy announcement and through it. So from basically the beginning of September, the outlook for this year has looked about as it does here. And so with that, you end up with 2 rate cuts now. Of course, the Fed has said that they're out to 3, but even the markets don't really see that as credible. And of course, we've talked a lot about how the addition of Stephen Miran on the board has kind of skewed the Fed's averages for their forecasting. We can see right here, from a base of 4.4 this year, as of September, the Fed now envisions 3 cuts narrowly. It was holding on to only 2, but only by a very, very small margin. And when we look now at what's going on for October, we can see that in October, we're at this point fully baked in for another cut, 89%. But when we look at December, it's not nearly quite so convincing. We're at about a 70-ish% chance that we're going to get this cut. It's about 70-30. But if we compare it to what this looked like even a week ago, it was more like 75 and some change. Now, it is a little bit higher than last week. Last week, we got as low as 65%. So we're sort of on the fence, but it seems clear that the markets have made a sort of adjustment in a less dovish direction, ostensibly inspired by this revision to Fed forecasts, where growth expectations were increased, unemployment rate expectations were decreased, narrowly higher inflation was marked here for next year than it was back in the June forecast, from 2.4 to 2.6 on both the headline and the core. And so the market's looking at this and saying, well, the Fed is just not looking to do that many rate cuts. They're still baking in a lot more than the Fed itself, obviously. We can see here the Fed's only got 1 rate cut for next year. The market's at 60 basis points, still see at least 2 with a strong optionality for a third. But clearly they've backed off some. And we start to see those consequences. So the S&P, we can see on reflection, has kind of stalled, to give you a sense that sentiment is anchoring here as the markets start to think about maybe there's going to be less easing than they wanted or hoped for. And the dollar has attempted to carve out something like a bottom and is trying to edge higher as things get less dovish on the policy front. Now, that's our stage setting. We open this week with a bit of economic data outside of the US, and we start in the sort of Asia Pacific space. We move to Europe, and then the big event risk out of the US hits. So we begin with China and these PMI figures. This will give us a sense for how the world's second largest economy is doing economically. It's been mired in a deflationary slump for 9 consecutive quarters at this point. And we can see that the expectation for these PMI numbers is that we're going to basically remain stuck near neutral. So as ever, PMI numbers are centered around 50. Above 50 is growth. Below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. And what we see here is that really since the beginning of this year, these official figures out of China have been hugging neutral. They've really gone nowhere fast. And it's largely because the economy is in this kind of anemic state where you can't really find any meaningful growth to speak of. And looking then, relatively speaking, to what this looks like in terms of global growth, we once again find ourselves in this sort of environment where the U.S. is the only game in town because Europe is this kind of anemic and for its own reasons, and China is expected to remain so. And so the only kind of meaningful growth that we really find anywhere on the board at this point seems to be in the U.S., giving us a single point of failure. Now, the Fed is obviously starting to cut rates because it's worried about sogginess in the labor market, perhaps giving us a point of failure, but certainly no evidence that this is any kind of an imminent danger at the moment. So for now, it looks like we're going to continue to precariously balance on the shoulders of U.S. growth, at least until there is some sort of give there. But if there was any hope that with that give would come some sort of a backstop from China, it doesn't look like we're going to see that this go around. Then we're going to get a rate decision from the Reserve Bank of Australia. They're expected to remain on hold here at 3.6% after a cut last time for the target bank rate. If we look at what the futures are pricing in here, that's the yellow line right there, we can see that's hovering around 3.3. In other words, here we are at 3.6. We're at 3.3 for the year-end expectation in the futures. So there's one more cut in this wedge here that's on the table. And so what the RBA is going to be interesting for this go-around will be a sort of barometer on global growth. They're relatively early in the supply chain in Australia, the global supply chain. And so what the central bank says about where we head from here and whether there's any more or less easing on the board and whether this forecast broadly remains, that's going to be what's interesting for markets. Then we're going to get inflation data out of the Eurozone. The expectation is that we're going to get a rise up to 2.3% on CPI. Now, that would be a meaningful increase. We can see here with the naked eye that this would be the highest in a while. Indeed, it would be a 7-month high. The last time that we were at 2.3% was February of this year. What's interesting is that when you look at the breakdown of inflation, you see that most of it seems to be in areas that the ECB doesn't have much agency over. So you have a lot of it in food, in fact, the majority of it in food. One would think that this kind of stickiness in restaurants and hotels is in large part overlapping with whatever's going on in food. And there's also this kind of lingering issue with the cost of insurance that's moving around the miscellaneous component. But the main issue clearly is an almost full 1 percentage point of inflation being contributed from food and adjacent costs. And so this doesn't seem like the kind of setup where the ECB would look and say, well, inflation is obviously getting stickier. It's obviously doing something we don't like. Maybe we should think about raising rates. That is not the likely outcome. And of course, the markets don't see it as such. Looking at what we have that's baked in for ECB policy at this point, no more rate changes for this year, no rate changes for next year. In other words, whatever the euro might have found in terms of policy support out of an inflation number going higher here probably isn't there. And that, of course, might be interesting in the sense that the dollar has attempted to bottom against the euro and is kind of begrudgingly forcing its way higher since bottoming in early July. And that's despite the fact that the Fed has resumed cutting rates and there is no scope for it seemingly in Europe to push in a dovish direction. So the euro here under fire despite what might look like an adversarial setup for the dollar, where the Fed is getting more dovish, the ECB probably isn't, and yet the euro is starting to take incoming. So if anything, this data might be significant in the sense that it allows that dynamic a touch point whereby it might be a little bit soggier going into the data. It might get the clearance to resume after the data. And so the data might be more relevant in terms of its passage rather than its substance. And then, of course, we get into the U.S. economic data flow. First and foremost, the ISM PMI report. The expectation here is that we're going to be relatively steady on the service sector front. This works just like any other PMI, centered around 50, as we were saying before. So at 52 for a second consecutive month, the service sector is not running away, but also not falling apart. The situation in manufacturing expected to give us another contraction at 49.2, but the pace seen slowing a little bit. But looking at this on the whole, of course, more of the economy is services than is manufacturing, so skewing in that direction. We're probably somewhere at a kind of weighted composite ISM level of plus or minus 50 on the dot. And so the U.S. economy on this measure is basically standing still. The story from the analog PMI data from S&P Global is a little bit rosier, but it's also a little bit more volatile. So we had this very, very potent melt up in growth rates in the second half of last year. Then, of course, around the tariffs, this fell off as those tariffs were being rolled out. This was, in fact, a big part of how you ended up with the sell-off that you had in stock markets at the beginning of the year. That, of course, is this right here. Policy expectations getting more dovish, the S&P coming off. That was, in large part, this swoon in sentiment. Since then, it's come back, give or take, to where it started. But we can see the most recent readings here for the past 3 months or so ticking marginally lower. Now, this is where things get interesting because, of course, there is still this disconnect. And if it does look like the U.S. economy is starting to get a little soggier, well, then the markets will look like their expectations in their excess dovishness make more sense. But if not, then it's going to look like perhaps there's more of an adjustment to be made here, which might be more sogginess ahead for stocks, might also be more strength up ahead for the dollar, sort of along the lines of what we've seen already, where if this continues to correct higher, this might get pulled lower, this might get pulled higher. Now, finishing out the week, of course, the all-important U.S. jobs report. The expectation here is that we're not going to get anything earth-shattering. 39,000 jobs added. The unemployment rate holding unchanged at 4.3%. Of course, the Fed made its rate cut contingent on signs of weakening or cooling, as it were, in the labor market. So ostensibly, the markets want this to be a relatively cool number because it would encourage the idea that the Fed will continue to move on easing. It would also suggest that the Fed has a good grasp on the economy and is generally doing the thing that it's supposed to be doing. If this surprise is higher, then I think perhaps the markets get a little bit unnerved, even though that's maybe good for the business cycle episodically. I think it would suggest that the easing that the markets want isn't necessarily coming in the degree to which they want it. And of course, we've seen already over the past week and some change, that's not a happy thought for risk sentiment. For what it's worth, looking at the U.S. Economic Surprise Index, it is well north of zero. And so we can see that the overall U.S. data flow here has tended to be generally surprising on the upside. And so the risk here perhaps is that this jobs data does indeed dilute these rate cut expectations and hurt sentiment in so doing. So looking at my exposure here, it hasn't changed since last week. I'm still long the dollar here against the Aussie, against the pound, against the euro, against the Canadian dollar. I am likewise here still holding this longer-term exposure in Brazil. This is until the end of next year. EWZ is the Brazilian market ETF. I've put on a little bit of a short position in stock indexes, essentially looking for this kind of sogginess that started to emerge last week to carry forward. We'll see if the risk reward here, which is how this thing ended up getting put on, ends up getting borne out. I'm still long silver, which continues to power higher, and liking more this tactical long shot I took on the bonds. They looked like they'd pulled back enough, and there was maybe a reaction bounce. We saw some of that here today with the rise of 0.8%. So still holding that. We'll see how it goes from here. And that is macro money for today. As ever, we are here Monday through Thursday right after overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I am likewise writing for the news and insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options, profit, and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Welcome back to the Tasty Crypto Show. I'm Dan Cecilia, and today I'm joined by Young Chu, CEO of Stablecoin X, the first publicly traded treasury company established to focus on the Athena stablecoin ecosystem. Young is a CFA charter holder and brings over a decade of experience in leading both traditional finance and crypto companies. Young, welcome to the show.
Yeah, thanks for having me, Ryan. Thanks for having me, Dan.
Yeah, for sure. Let's just jump into it because I think this is a really interesting topic. Stablecoins have been hot in the news, and we've integrated them on our platform. So, what drove the decision to create a treasury company specifically for the Athena ecosystem? Why is this model more appealing to investors over a direct investment approach?
Yeah, so I started this journey. I've been in crypto now for about 8 years. Before that, I was in traditional finance for over 12 years. Started my career at Citigroup. But when, as I was talking to you before, in the past, I was previously CFO of Hedera Hashgraph. Before that, I was Chief Investment Officer at Abra. But it's just wild. It's just wild how much we've progressed over the past 8 years in this space. And so recently, just about last year, a friend of mine asked me to join as CEO of TLGY Acquisition Corp, SPAC. He's also been in traditional markets in the past. He's been in SPAC world for about over 18 years. And he brought me on board to head up TLGY to look at what we can do in the crypto company with the new administration. And so we were talking late last year, and we saw what Michael Saylor was doing with strategy, obviously, what Soul Strategy, what Leo Wald was doing with Soul Strategies. And we thought we could improve on that model, right? So what those guys are doing is basically buying crypto at spot, putting it into a company, and essentially, just having that listed vehicle ride on the beta of those of Bitcoin or Solana. But coming from the layer one protocol at Hedera previously, I thought we could improve on that because a lot of these projects are looking for two things, right? I mean, they're looking for a public market advocate to help them get the word out about their protocol beyond just the crypto community. And so that's one thing that I think a lot of foundations in the crypto space are looking for. And the other thing is for investors, they're looking for a decent return, right? So being, again, historically at Hedera, we sold tokens at a discount, anywhere from 30 or 50%, OTC, and they're locked tokens. And we sold them to, investors, hedge fund managers, VCs. And we thought we could create some value to investors by being able to create a digital asset treasury company, buy these tokens at a 30 or 40 or 50% discount, and then have those investors or shareholders benefit from that discount that we're purchasing these tokens at. So that's how we came up with the idea. That started late last year. We've been talking with several foundations in the space. And when we came across Athena, we thought this would be a fantastic partner to work with. Just the fact that they are in the stablecoin space. We know that Circle is coming up with their IPO in the next several months. This is early this year. And so we saw their S1 filing. And the stablecoin narrative is a pretty simple yet very compelling narrative to give to Wall Street and Main Street. So that's how we came to where we are. We signed an LOI with the Athena Foundation back in April, and we got the definitive merger agreement with them back in July 21st.
Awesome. Yeah. And I think it's a really interesting insight. It's an awesome story, by the way, just kind of the background and how this came to fruition. And, if you're a crypto native like I am, like you are, even you're following the space, obviously Athena was kind of a big name in the stablecoin space over the last couple of years. So it's getting more traction now. Obviously, stablecoins, to your point, have been, accepted widely with this new administration. And, I'm curious, I read in the press release and doing my research, you guys raised close to $890 million in financing to go out and purchase the token ENA, which is the protocol token, USDE being the stable coin. This is a huge bet, obviously, and makes you the largest holder of ENA. So can you just walk through that ENA investment thesis for us?
Yeah. So, like I mentioned, it's there's a great shift happening in the stablecoin market, and we call this a stablecoin super cycle, right? The Treasury Secretary, Scott Bessent, he expects stablecoins to grow from, I believe right now it's just under 300 billion, right? Because there's been a massive rise in USDE over the past month or two. So now we're close to about 300 billion. And Treasury Secretary Scott Bessent expects stablecoins to grow to about 3.7 trillion by 2030. So that's a 12x increase in just the total addressable market in the next 5 years. On top of that, the yield-bearing stablecoins, they're currently about 5% of that 300 billion. And there's been research reports out there from JP Morgan that estimate in a bull case that the yield-bearing stablecoin market could grow to about 50% of the stablecoin market in the next 5 years. So you're seeing, not only you're seeing a 12x increase in the TAM of stablecoins, you're potentially seeing a 10x increase within the stablecoin market of yield-bearing stablecoins growing to be half of that $3.7 trillion market. So that's a massive compounding effect. And we think that is by the definition of what the stablecoin supercycle is. And ENA and the Athena protocol is well poised to benefit from that.
Yeah, no, it's a great point, and I think any investor, right, when they look at this asset class or they look at stable coins and they think, I want to yield, right? That's kind of what investors are looking for. And Circle, USDC, some of these traditional issuer stable coins, USDT, they don't pass that yield on. So I think that's where, if you do the research into Athena, that's where kind of it stands out. So, it's a great point and definitely something that, sets it apart. So for our audience they're typically familiar with traditional derivatives, options, futures, can you explain where that yield comes from? Can you kind of dig into that a little bit, that delta neutral approach?
Yeah, so this is a pretty common strategy that's run by a lot of hedge funds in the crypto space. It actually came from the traditional finance guys. They've actually done this with US Treasuries. And so what they do is they typically sell the futures and buy spot. And that's in TradFi. But in the crypto world, what a lot of these hedge funds have done in the past, and because there's a pretty nice premium with it, they sell Bitcoin futures and then they buy the spot Bitcoin. So they're hedged, right?
Right.
So whatever happens to the price of Bitcoin, it's always delta neutral because it's hedged. You're buying spot, but you're selling futures. And there's a premium to futures because typically people pay for that premium because they're getting leverage on those Bitcoin futures. So that's what the Athena protocol does. They sell the Bitcoin futures and then they buy the spot. And then they pass on that difference, that premium that you're earning, that you're gaining from that selling the Bitcoin futures. They pass it on to the USDE holders. And so that's what's called the delta neutral hedge position. And this is very common with a lot of the larger hedge funds in the crypto space. And this has been proven in the TradFi with US Treasuries, like I mentioned before. And so that's where the yield comes from.
Gotcha. Okay, so it's kind of like a carry trade in other words,
exactly.
And so digging that a little bit, and I think investors, a lot of them want to know how to value things, especially in crypto, right? Sometimes it's vague, especially if you're coming from TradFi. Maybe they want to value it on fundamentals, but there's not often one-to-one fundamentals with TradFi. So with this ENA stablecoin X. In ENA, what would you say you would value that on for investors? Like, is it token price? Should they look at protocol revenue? Obviously, the carry trade's a big component. Or is it just a broader bet, to your point, on stablecoin innovation and adoption?
Yeah, so for valuing stablecoin X, I mean, you got to think about it like in two different ways, right? There's the beta component, right? Basically, because we are a big treasury company of the ENA tokens. But then also there is the alpha, right? And so that alpha will determine at what sort of premium to MNAV we trade at. The NAV is going to be based on entirely by the price of ENA tokens. So that's what I call the beta component, right? And so the ENA token price is driven by a lot of things. It's driven by the growth of the USDE. It's driven by the USD users of the Athena protocol, the protocol revenue itself, and increased distributions of USD on more wallets like exchanges. Like they had a recent announcement with Binance where they're basically partnering with them to quote a lot of the cryptocurrencies in USDE. So there's all that. And that to me is what determines the MNAV. And that is the biggest component of the stablecoin X price. And that's the beta, right? But then the second component, like I mentioned, is the alpha. The alpha is really how good of a job that we do, the stablecoin X management, in terms of getting more ENA tokens per share for shareholders. And so that's things like we intend to stake our ENA tokens onto the validator network, on the Converge network when it launches. We're also looking at different ways where we can potentially earn yield by maybe even buying USDE and taking out debt so that we can, well, the debt's got to be at a lower cost than the yield we can earn on USDE. But there's things like that we're thinking about. And then also we have a collaboration agreement with the Athena Foundation. It's a 5-year collaboration agreement where we have a right of participation to participate in their future discounted token offerings that they provide to the OTC market. So we can purchase, ENA tokens. We purchase tokens at a 30% discount in our previous pipes. But going forward, we have a 5-year right of participation, continue that, buy more ENA tokens at a discount, and then that's one way we can accrete value to our shareholders. As long as we're buying these ENA tokens at a healthy discount versus then the shares that we can issue at. If we're issuing shares at a 1 times MNAV or 1.1 times MNAV, and we're buying these tokens at like a 30 or 40% discount, we're accreting value to our shareholders that way. So that's how, those are 3 different ways we can earn alpha on the ENA token so that we can trade at a premium to our MNAV.
Yeah, no, that makes a ton of sense. I appreciate the illustration and you simplified it a ton. And I'm actually interested, you're going to go out, and it sounds like you'll go out and actually try and run some DeFi strategies. So would you, to try and earn a little bit more of the yield, would you be using like Aave, or would you be going out like Pendle is another one I think is interesting, or is that kind of something you're still figuring out?
We're still figuring that out, and we have to be careful because we are going to be a listed company.
Sure.
And so some of these protocols that you mentioned don't necessarily run the right KYCs.
Gotcha.
And so we have to be careful on which particular platforms we decide to run these strategies on. But yeah, I mean, we're exploring all those different things, but we have to be mindful that we are an SEC reporting company.
Of course, yeah, for sure. So, I think when I hear yield-bearing stablecoin, I think other crypto natives, when they hear yield-bearing stablecoin and carry trade and some of that, we look at maybe, you think of like Terra Luna, you think of some of these other blow-ups from last cycle. So a lot of critics will point to like the funding rate risks of the perps markets, futures markets, exchange counterparty risk. Obviously, you pointed to the protocols not running KYC, regulatory oversight risks there. So how are you addressing these risks and mitigating them at being, the largest CNA holder?
Yeah, so I mean, we've come a long way since the Terra Luna debacle, and that was an algorithmic stablecoin. This is a synthetic collateralized stablecoin with the future spaces trade as its collateral, like I mentioned. But there's the ways that we mitigate risk is there's a lot of different things that the Athena protocol can do itself, right? And then there's the things that stablecoin X does as a participant or as one of the larger holders of the Athena tokens. But just to kind of broadly talk about those different topics that you mentioned. So the funding rate is one of the risks. It's historically been mostly positive. It's ranged anywhere from 5 to 25% over the past 3 years. But the funding rates do from time to time go negative. And the Athena protocol does have a reserve to buffer losses when rates do go negative, right? It usually happens, I think in the past, it's happened about to 10 or 15% of the time, right? So they also can close a future spaces trade and purchase USDTB to fund those, yields to USDE holders as they wait for the, funding rates to go from negative to positive. By the way, the longest that the funding rate stayed negative is about hasn't been longer than 13 or 14 days.
Oh, wow. Okay. Yeah.
So I mean, but this is something that the Athena protocol does itself to manage those risks. But we, as largest holder of the Athena tokens, we participate in the governance, right? The governance of the Athena protocol. And so we don't manage directly those types of decisions. We can basically, participate in any sorts of decisions or any sort of votes that come up where we can either, appoint or maybe, give suggestions or change some of the risk committees within the Athena protocol, but we don't directly manage that ourselves. Right.
Gotcha.
So that's, as a large Athena holder, token holder, that's how we can mitigate some of the risks. Then there's also questions about the counterparty risks, right? Because the Athena protocol is running these future spaces trades on various exchanges. Well, the exchange that they run, the biggest exchange that they run on is on Deribit. And Deribit now, as you know, is they're owned by Coinbase or merging with them, and they're going to be $80 or $90 billion market cap company when they close a merger. I think they already closed actually, so they are the counterparty risk there is pretty mitigated in my opinion. So there's various different things that are happening, but we've come a long way since those Terra Luna days, and in fact, when the funding rates do go negative, when you close those positions, there is this kind of mean reversion, right? Back up to, that's why the funding rate hasn't been negative for more than 1 or 2 weeks. So that mean reversion does allow the protocol to get back into a positive funding rate environment.
Gotcha. Yeah. And like we were talking about before the show, like we've come a long way since we both entered the space, and, liquidity, we've seen more liquidity come to the space. Obviously, with the positive regulatory environment currently in some of the, regulations passed here in the States, it makes it a more trusted environment to operate. And then Coinbase, some of these counterparties you talked about, they're well capitalized, right? So that as a participant, that makes me feel pretty good, and obviously come a long way since last cycle. So I want to get into this stablecoin super cycle narrative and dig into this a little bit, because here at Tasty Trade, we're traditional finance first. We provide access to derivatives, futures options, forex. And stablecoins was one of the big things that we've implemented and seen a huge boost with not only current clients but new clients funding. So I want to know your opinion on what's driving demand for stablecoin adoption, and then how Athena kind of fits into this.
Yeah, so as we've seen, there's a lot of institutions that have been kind of waiting on the sidelines. Banks in particular, we're kind of joking about this, like if you're old enough to be in this industry like 5 or 10 years ago, you probably had your bank account shut down a couple of times, right?
Yeah.
But now banks have been waiting for regulatory clarity. They have it now with the Genius Act, and banks and institutions are, just starting to dip in, right? That's why we've seen just in the past 2 months, man. I mean, like, the stablecoin market cap grew from 250 billion to 300 billion, 50 billion in just a couple of months. And you're seeing more and more institutional adoption. So that's what's really driving a lot of the growth in the stablecoin super cycle. And we've seen, the Genius Act was passed, this is my opinion, because the stablecoin industry participants are now the 12th largest U.S. Treasury holders in the world. And when you have a lot of these sovereigns that are a little uncertain about holding U.S. Treasuries, or a little uncertain about the geopolitics with the Trump administration and the tariffs and all that, China, I think they're not a net seller, but they're not renewing. They're not buying any more U.S. Treasury. They're not buying as much to redeem or to replenish. So a lot of these countries are starting to dip down in terms of their U.S. Treasury holdings. And you see this little industry participant called stablecoins and Tether and Circle and some others that are now going through up in the ranks of U.S. Treasury holders. And so, in my opinion, that's why I think the Genius Act was a priority for Washington. And with that, you're seeing a lot, now that you have that clarity, a lot of the companies, a lot of banks, a lot of sovereigns are paying attention to stablecoins. And so I don't think that's going to slow down anytime soon. It's going to continue. You're going to have other countries doing the same thing, passing something similar to the Genius Act, and you're going to see a lot of adoption here.
Yeah, no, it's a great point. And, obviously if you're in the finance industry and, you follow some financial media, there's always this talk about, government debt and, I guess, some of these sovereigns are reducing exposure. And then, if you're in crypto, you're realizing, oh, wow, these issuers, these stablecoin issuers, they are the buyers, and they're the big buyers. And nobody, if you're outside of the space, nobody's really paying attention until obviously this year to these issuers. So yeah, the regulations had to catch up, the laws had to catch up. So, I think it fits with that stablecoin super cycle narrative. And, you mentioned Circle. Circle was a massive IPO. I saw it here at Tasty when it went live, on the trade desk, some of that stuff, kind of how it traded, beginning during its IPO, and obviously Tether, right? And Tether just launched Plasma. It's the biggest stablecoin, US dollar Tether being. And so I'm wondering, how do you view competition from those players? Obviously Athena's a little bit different, but there's those incumbents and then the new entrants. So how do you view that competition?
Yeah, so they, like you mentioned, they are different. USDC and USDT, they don't offer yield to their holders. They keep it all themselves, right? So we don't necessarily view them as competition. In fact, Tether, they're very complementary to Athena, right? So USDT, they comprise about like 15 to 16% of the collateral, or we have, the Athena protocol has a redemption liquidity pool so that they can stay liquid and they can have people that are redeeming, they can pull their points or their cash out through USDT. So they're very complementary in that regard. So we don't really view them as competition. But there are new entrants. We encourage that. There's more innovation to come. We're just scratching the surface, right? And so even though Athena is the largest yield-bearing stablecoin with roughly about 4 or 5% of all the entire stablecoin market, there's definitely a lot of room for new entrants to come in. And so we haven't seen any other compelling other protocols, but I'm sure there's going to be some. I'm sure there's going to be others. And we have many years to runway until we get to a $3.6 trillion market, $1 trillion market cap in stablecoins, 50%. I mean, there's so much room for others participants to come in. So we welcome that.
Yeah, no, I think rising tide lifts all boats in this space in some respects, and obviously you want to keep the bad actors out, and so obviously encouraging and working with each other, like you said, Tether makes up a portion of Athena. It's good. It's positive for the space. I've been in the space since 2017. I know you've been in longer, and just seeing people, seeing the way it's developed, and seeing how these protocols kind of work together. We should welcome some of these new entrants, some of this competition, and hopefully it'll grow the space even bigger. So I guess if we look ahead, right, and you talked about, you guys are well capitalized, you have a long runway, multi-year outlook. What would need to happen in the Athena ecosystem for Stablecoin X and, what you're doing here to be considered a major win?
Yeah, so I mean, like I mentioned in the past, two things. It's the ENA token price performance. If that is our biggest driver of our stock, because that is what our MNAV is benchmarked against, right? So if the ENA token performs well, we do well as Stablecoin X. So that's one. And those things are driven, like I mentioned before, like growth in the USDE, user growth in Athena protocol revenue increasing, distributions of USDE, all that stuff is what we would love to see. And the other thing that we would love to see and would consider a win is if we increase our ENA tokens per share. That is how we get that extra bit of juice to go from just a MNAV benchmarking the ENA token price, but if we trade at a slight premium because we're able to grow the ENA token per share, that would be also another huge win.
Gotcha. Okay, so we have to look at MNAV, have to look at ENA price. Like we mentioned previously, that's kind of what we're benchmarking and what we'd like to see, what you'd like to see over the next couple of years. So, being in crypto for so long, you always get kind of the skeptics, right? Or you get, why should I buy this? Or it's, all the stories, all the critics. So what is your message to traditional investors who might be hesitant about this approach to stablecoins and crypto exposure?
Yeah, so I mean, for TradFi investors, which is the market that we're targeting, right? Primarily on top of all other crypto investors, if you want exposure to explosive growth, right, expected in the stablecoin market, there's only really a couple investments you can really make, right? So there's Circle, right? There's Circle stock, which is now trading at, I think, about 130 PE or something like that. I mean, they had a phenomenal ride. They went up to about $50 billion market cap, and now I think they kind of settled somewhere around 30 billion. But they're still, I mean, this is not investment advice, but if you ask me, it might be a little rich at 130 times PE. And so there's you can invest in that, or you can buy Stablecoin X stock. Stablecoin X stock, we haven't gone effective yet. We expect to sometime in the next several months. But when we do become effective, there's going to be now potentially two different types of vehicles or investments that you can deploy your stablecoin investment thesis into. And so we think that is going to be an interesting dynamic between, we think some of these things will probably trade at close to MNAV or maybe slightly above, but this is where investors that are in traditional finance, if they want to express that stablecoin narrative, that's thematic, there's really only a couple investments that they can make. It's Circle, the Stablecoin X, potentially in the next couple months.
Gotcha. Yeah, we'll definitely have to look at that, and I'll be following it closely as you guys progress to get listed. So we got a minute left. I just want to allow, where can our audience find you and follow along after today's show?
Yeah, so we're on X. The Twitter handle there is @stablecoin_X. We post there pretty regularly, so there's a lot of posts that we make about what's happening with the Athena protocol. We give them updates on what's happening with us particularly. So you can follow us on X. That's the best way to follow us, sir.
Awesome. Yeah. So Young, I appreciate it. This was a great conversation. Would love to have you come on again. Maybe as you get closer to listing, always down to chat. Love hearing about this. It's really interesting, and I wish you luck. And I'll definitely follow along. As you guys get closer to listing.
Thanks, Dan. Thanks for having me.
All right, that's it. We'll see you guys Wednesday. I'm Dan. Peace.